of a plan for infrastructure and markets and economy, there could be some stimulus coming in for many of these metals as well. That is what is keeping metals in good favor right now.
Okay, thank you very much for that. We will slip into a very short break. On the other side, we'll connect with Siddharth Khemka from Motilal Oswal Financial Services. Stay tuned.
Welcome back. Like we've been telling you, a whole bunch of defense stocks are going to be in focus today because the Defense Acquisition Council has once again cleared a big proposal. Actually, it's a bunch of proposals altogether totaling 79,000 crore rupees. And this includes procurement for the Indian Army, Navy, as well as the Air Force. There are certain landing systems, as you just heard Upasna, discuss earlier. And of course, the Nag missile systems as well. A whole bunch of orders will be handed out. So which stocks and which companies can benefit? That's the critical question. We have Jyoti Gupta, who tracks the space very, very closely at Nirmal Bang, joining in for some perspective. Jyoti, thank you for joining in. Season's greetings. Hope you had a great Diwali. So once again, break it down, 79,000. Who is likely to get what? And I think, our colleague Upasna was telling us the bulk of this order is going towards those landing systems. So let's start with the shipyards. Do you think they can be big beneficiaries? And what is your current call on the shipyard stocks?
Good morning, and thank you so much for having me here, and season's greetings to you as well and your family. So, of the 79,000 crores that we know, I think 50% will actually be going to Nag missiles, which will be roughly around, this is the second phase of Nag missiles, because earlier it was around 1,900 crores. So it should be under DSC around the same number, 90 to 2,000 crores. Then you have a large portion going to ground-based alien system, which be around 10,000 crores. And landing platform docks, of course, will have the major chunk, maybe around 28,000 crores. I have my doubts for 60,000, but the rest of, because there's quite a bit of items which are there in the 79,000 crores. So 50%, which will actually go to landing platform docks. You have a ground-based LN system and Nag missile system. You will have a decent number as well, could be under DPP going to your high mobility vehicles with material handling cranes. So that should be again under the DSC a little higher of 2,000 crores, because the lot of activities have shifted from Kashmir to now Surkri and Gujarat. So broadly, so the beneficiaries that I see within defense would be, because Larsen Toubro, because I think in your landing dock platforms, the key competition, Mascon is not there. We will see the competition between L&T and Cochin Shipyard, because Hindustan Shipyard has capability, but they've recently received some 28,000 odd crores for FSS. So I think that is one. The other thing is Bell will be a major beneficiary because of your ground-based ELIN system. You will have, of course, for now you will have VDL, Solar. And Paras, which will benefit, and of course, Bell will also be there, because any electronic items will be taken to Bell and Astra together.
Yeah.
And
So Jyoti, I mean, just to take it step by step, if I start with the NAG's defense system, the missile system, there you're saying it should be Solar Industries, obviously Bharat Dynamics. And I was going through your earnings expectation report as well. Actually, it is these companies, these stocks, which you expect will probably show 20% plus growth even in Q2. And on top of that, they are now set to benefit from these fresh procurement orders. So purely in terms of growth this year, FY26, and even visibility into FY27, from a growth perspective, which are the stocks to watch?
see, the numbers that you see in my annual because these orders are not going to affect your FY26 numbers. You will see a change, numbers will be affected only by fourth quarter FY27 or FY28. You don't see any production numbers coming from this orders, because this is just an announcement. The orders have yet to come. So you'll have to give another maybe 4 to 5 months for the orders to come in, and then we'll see, production. So definitely FY27, I'm not looking at these numbers. These, what you see, my numbers do not include these orders.
Okay. Now, from a valuation perspective, risk-reward perspective, how are the shipbuilders placed? Because, I mean, some have argued in the past that, in the earlier part of the year, the rally was so dizzying that they've discounted orders, worth the next 5 years or so. I mean, this is, one of the key institutional participants in a conversation with us was saying this, especially on Cochin, for instance. But shipbuilders right now, valuation, order book, etc., do they still make sense? I mean, would you look at buying anything?
I think when you look at shipbuilders, I think the name that comes first to my mind is Larsen Toubro, in terms of the kind of, because they are into various products, and shipbuilding is one of their, domain expertise as well. And then comes, of course, Cochin Shipyard. But the rest, maybe, I think not as of now.
Okay. What would your top picks be then?
My top picks still remains as HAL, which I've been saying, because you will see a surprise factor. I think you should see something like 8 aircrafts being delivered by FY26, 7 to 8. And apart from what the SU engines that they're doing. And next is BEML. Of course, second quarter may not be a great quarter for BEML again, because assembly issues. But I think fourth quarter BEML should do well. And while I remain very positive on the electronic companies like Bell, Astra, and Data Patterns, I see a surprise factor for Data Patterns. Of course, Astra is another very good company, consistently being performing, but I would rather look at some surprise factors coming from Data Patterns.
So that's on the electronic warfare systems. What about the missile and the ammunition guys, Bharat Dynamics and all the missile system guys, and how are some of the valuations here? Growth-wise, like I said, this quarter anyway, you are expecting them to outperform with the 20% growth. But what about valuations in the rest of the year?
I think Bharat Dynamics should actually surprise me with better numbers. What I've anticipated is something like a 33% growth in my revenues. This could be even higher. And as far as Bharat Dynamics numbers are concerned, I think I have next 2 years, I've taken what all production, the revenue booking has been on a very, very optimistic side. And any new orders that come will only start reflecting from the fourth quarter onwards. So unless we should wait for the earnings call to understand how the company's, any guidance, any upside guidance the company is giving. Until then, I think the numbers are what it is right now.
Okay, and very quickly, last 30 seconds, Jyoti. Yesterday, Bharat Forge announced a pretty, significant order. There was that report, right? They're getting into tie-up with Adani, and they'll be doing these carbines for the Indian Army. How significant is that? The stock reacted; it was up 4-5% yesterday.
No. So carbines that's a massive order. I think almost 90% will be done by Bharat Forge, and then there's another company called PLR System, which is a private-based company, which is owned by Adani Systems. So they will do a very small portion of the order. So I don't think that, of course, Bharat Forge is technologically very, very savvy in terms of this. So I don't know if there's a joint venture or something, but yeah, Bharat Forge. This is definitely a very positive for Bharat Forge.
Got that. Thank you, Jyoti, for joining in. By the way, it's super strong for Asia this morning. Let's pull that up. The Korean markets, Kospi is up close to about 2%. The Japanese markets up 1 1/3. Hang Seng is holding up in the green. The Taiwanese markets, I think they're shut. I saw somewhere they're shut today, but maybe that's the Taiwanese markets are down. But the rest of them, the Korean markets and the Japanese markets, are up more than about 1 to 2%. So there is optimism going into the Trump's Asia tour, and the gift Nifty is suggesting a mild positive start of close to about 25 odd points. Siddharth Khemka, head of research, wealth management, and Motilal Oswal Financial Services, is now joining in. Siddharth, thank you very much for joining in. First, if you could share your thoughts on Cipla and the deal that they've struck with Eli Lilly. It also helps the company diversify. Cipla was known for its respiratory, the drugs. And now this is an innovative way for the company to diversify marketing and partnership for one of the most, fastest growing drugs. And India is known as the diabetes capital of the world. So what have you made of this particular partnership?
Yeah, hi, good morning, Rima. I think if you look at the way Cipla has got into this agreement, I think the entire weight loss drug, the semaglutide, the GLP-1 opportunity is huge market for India. A lot of brands are waiting in the pipeline to launch their products, so waiting for approvals. And I think Cipla, it's an innovative way to tie up with one of the innovators, Eli Lilly, and launch the brand. We have already seen the Mounjaro's sales picking up in Indian market. So definitely it would add to the overall business. Right now, I think it would be a very small percentage of the overall business, but nonetheless, I think it's a positive step for Cipla because if you look at the core business, the India consumer business, the penetration, the distribution that they have, that would only enhance Eli Lilly's sale of this product in India. So we are taking this as a positive, but as I said, about 2-3% revenue and about 1.5% of profitability that could be added by this product alone.
All right. Hi, Sid. Good morning. Good to see you, Ben. Sid, what about, the aluminium stocks? Now, overnight, there are two news flows that have come in there. One is that aluminium prices, LME prices, have moved to the highest we've seen in the last 52 weeks at around $2,850. The other factor is the commentary that came in from Alcoa. They are saying that the Midwest Premier, that's moved to more than $1,500 per ton, which is more than offsetting the negative impact of the tariffs, which will be a positive read-through for Novelis. Your take on the aluminium stocks, and what do you like? Because all of them, though we term them as aluminium stocks, all are very, very different. Nalco, they have that alumina play. Vedanta, obviously, they have all those base metals in there. And Hindalco has a play both on LME prices here in India, and overseas they have, the play with regard to Novelis in terms of a converter. So your pick.
Definitely. Hi, good morning, Nigel. I think that's definitely a positive development for the aluminium companies. And as you rightly highlighted, bulk of most of the stocks, they are very different in the nature. Nalco is a pure alumina company based out of mostly a domestic story. Vedanta is a much diversified conglomerate, and I think Hindalco is the best play to get into if you are looking at aluminium. I think earnings are pretty stable, and even Q2 we are expecting a steady quarter from Hindalco, both from the domestic as well as the Novelis business. Novelis, I think the numbers are picking up. Profitability has been improving, but I think the domestic business, that is where the robust EBITDA contribution is helping them. So I think overall the medium to long term outlook for Hindalco remains strong, supported by the progressive capex plan, and even for Novelis with the surge in global aluminium prices, H2 could be seeing as a much better recovery, and hence I think of the aluminium stocks, we remain positive on Hindalco. We have a buy rating and a target price of 890.
Thank you very much for that. We will slip into a very short break on that note. Siddharth, request you to stay on. On the other side, we'll talk technicals. Shrikant Chauhan and Mitesh Thakkar will join in.
Welcome back and hope you're having a good morning. Well, let's hop across to Hormuz because it's that part of the show when he gets us all those big movers, the volumes, and how much of it was delivery based. Hey, Hormuz, good morning.
Good morning, Nigel. And a lot of interesting movers in the broader markets in yesterday's trading session. We start off with Bharti Industries, and the stock was up almost 20% in yesterday's trading session. It was the biggest single-day gain that the stock had seen in well over 4 years now. And it is up in a 3-day winning streak. It's up 33% in those 3 trading sessions. And Thursday's volumes were the highest on record for the stock. Now, close to 88 lakh shares were traded on Thursday. The 20-day average is just 4.5 lakh shares, and out of those 88 lakh shares, close to 9 lakh were marked for delivery, so almost 10%. And the 20-day average here is just under 1 lakh shares. Now, the stock with this 33% move that it has seen in the last 3 days, it is on course for its best monthly performance since August of 2024. The other one, of course, IT in the space itself was buzzing yesterday, and mid-cap IT in particular, Birlasoft was leading that pack. The stock did very well yesterday. It was up almost 8%. It's up to almost 12% now in the last 2 sessions. And Thursday's volumes were the highest that the stock had seen in almost 6 years now, in over 6 years actually, January of 2019. And close to 3.5 crore shares were traded yesterday on Birlasoft. The 20-day average is just around 6.5 lakh shares. And out of those 3.5 crore, 50 lakh shares were marked for delivery. The 20-day average here is just under 3 lakh shares. Now the stock is nearing a very important level. The next level on the upside is the 100-day moving average of 391. There's been an underperformer this year. Birlasoft is down by a third in 2025 so far and was down almost 22% in 2024 as well. And the last one is an interesting name on the list, Gulshan Polyols. That was the biggest single day gain that the stock saw since March. It's almost 7 months now. The second straight day of gains. And incidentally, the stock was up 10% on the 23rd of October 2024 as well. And it saw a similar move on the 23rd of October 2025. Now, yesterday's session had 21 lakh shares traded. 20-day average is just around 51,000 shares, and almost 4 lakh shares were marked for delivery compared to a 20-day average of around 31,000 shares. The stock has recently declined to a 52-week low earlier this month and is looking to rebound from those levels. And after 5 straight months of decline, the stock has finally turned positive for the month of October.
Thank you very much for that. It's back to Ekta now. Ekta, Laurus Laboratories numbers came yesterday. So just a quick recap of the numbers. And the conference call was post-markets. What did that signal?
Well, yes, very good numbers which came in for Laurus Labs, yesterday during markets. So it reacted to that performance during market hours. The margins, in fact, were at around 24%. There was a strong amount of revenue growth which came through, better than estimates of around a 25% growth. It was an over 30% growth. Now, in terms of the conference call takeaways, a couple of important things. They have guided for ARV sales of around 2,500 crores plus or minus 200 crores. Gross margins to remain around 60% versus the earlier 50 to 55%, to improve asset turnover from 0.9 currently to 1.1, and the margin is likely to improve further as they shift towards small and large molecule CDMO. Now, in terms of brokerages, Jefferies has an underperformed call, but they've raised their target price to 700. According to them, Q2 was a beat. ARV sales were strong. CDMO was stable, supported by the animal health supplies. Goldman Sachs has a sell call, target price of 775. It was a strong Q2. The management, according to them, is targeting that 1.1 times asset turnover in 24 months. DAM Capital has a buy with a target price of 1,083. Strong quarter again, according to them, and further margin expansion is seen, according to DAM Capital, on Laurus Labs.
Thank you very much for that. Siddharth, you want to comment on the conference call takeaways, and what is the call that you all have on Laurus?
Definitely, Rima. I think pretty strong numbers. We saw healthy momentum both in the CDMO plus the domestic formulation business. The earnings cycle, we believe, is intact. We have upgraded the earnings estimate by about 10 to 11% for this year as well as next year, and we now forecast a 50% earnings CAGR over the next 2 years. So we believe that there is an improved ARV prospect, steady uptick in the CDMO business, and higher generic business as well. So overall, we remain very positive on Laurus, and we have assigned a buy rating with a target price of 1,110. So almost 20% upside from current levels.
What happened in Birlasoft yesterday? You would have heard Hormus, 10% up move, volumes highest that we've seen since January of 2009. While there was optimism, and a feel-good factor for the entire IT space, Birlasoft was a rocket.
So Birlasoft we don't track, so I have no views on this company.
Okay, all right. Sid, you track Eternal quite closely. And the numbers, initial reaction was very good. Then a closer look at the numbers said, well, that guidance towards profitability seems to be, not top of mind. They're looking more at volumes. Now, you also have Reliance that's turning the heat on with regard to the quick commerce side of things. The commentary that's come in there. What is your view on Eternal? From the recent peak, the stock is down 10%.
So yes, Nigel, I think if you look at the numbers, eternal, the food delivery order value that came below our estimates, but I think the Blinkit contribution margins that sees a sequential improvement to 4.6%, and I think that is where the turnaround story is, and Blinkit aims to achieve 3,000 stores by the end of this financial year, by Q4 of FY26. I think the entire quick commerce space is definitely a lot more interesting and could see more competition. Reliance getting in is definitely a stamp of approval that this space is not only high growth but could be profitable in the long term. Hence, we remain positive. The kind of network that a Blinkit has built, it's a leadership position, and I think it will be very difficult to replicate, especially in the urban areas where they have not only have the first mover advantage, they have the brand, they have the user base, and they have the algorithm set in for the tight inventory control that they are setting in. So overall, we believe that it's the Blinkit offers once in a generational kind of opportunity to participate in the disruptive industry such as the retail, grocery, e-commerce through the quick commerce delivery model, and hence we believe that could continue to see strong growth. Near term, there could be pressure, but from a long term perspective, we remain buy, and for a 1 year target price is set at 410.
Sid, morning. What about the banks? The banks that are out to raise capital. Federal, I mean, we've heard from RBL Bank now. Now, let's see what Federal's plans are. I think it's today's, board meeting.
Yes.
Yeah, today, right? Yeah, so we'll know more. That's the next pot that's stirring. Your thoughts?
Yeah, I think mid-sized banks, they have started seeing the kind of growth, and even Federal for Q2 reported strong earnings base. NIM performance was healthier and better than our expectation. And I think overall, the growth that the business is, the business momentum that improves. The bank has definitely worked hard to improve to lower the cost of funds, and that is helping the NIMs going forward. So what we believe is that overall growth currently is driven by the gold and the CV portfolios. MFI has also seen some improvement, but going forward, I think a lot of the MSMEs, the business growth that will come up, and for that, the retail lending and the business growth, the bank needs to shore up the capital. So definitely, we are very positive on Federal Bank. The entire mid-size banks looks interesting in the current environment, with the asset quality now stabilizing, the cost of funds that lowering, and NIMs bottoming out already happening. So I think Federal Bank, we are expecting almost ROEs of 1.2% and ROEs of 12.8%, and we expect a steady growth going ahead. Hence, we remain positive. I think the fundraise will be a positive step to drive the growth going forward.
Okay. All right. So that we'll leave it on that note for this morning. Thanks very much for joining in. You have a good day, and we'll connect again soon. We need to take a very quick break, but on the other side, we'll have our technical experts joining in. And we also will get into a call with Abneesh Roy. Talk about some of the early FMCG numbers that have started pouring in. Lever and, of course, Colgate was disappointing. What lies ahead? We'll ask Abneesh.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग, इन एसोसिएशन विद LIC of India, हर पल आपके साथ, एंड Peps, India's favorite spring mattress. Have a happy Diwali. Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, as promised, our technical experts are with us, Shrikant Chauhan as well as Mitesh Thakkar. Good morning, gentlemen, and good to see you all in. Mitesh, go first. What's the call today? Yesterday, the call was take some money off the table. Worked well. Today, what do you think?
Morning, Nigel. So I think, the fact is that we did decline a bit from higher levels, but we have not exactly come out of the overbought position. So while the trend is on the upside, I think the selling or the profit booking, which is what I would like to call it, might see some more pullback, play out to levels of 25,800, 780 was my first target. We got a low of 25,862, but a good chance that we might see 25,800, 780. And in case you break that, even about 25,600, 650 zones could be tested. So there could be some more volatility given the fact that we are sitting on the back of a very strong 1,500 plus point kind of a rally. Some pullback is warranted.
Okay, so being a bit cautious at these elevated levels, got that. Shrikant, hi, morning to you. How's your approach? I mean, are you looking to buy the dips or would you take profits if the market rallies again today?
Good morning, Surabhi. Good morning, Nigel and everyone. So yes, I think in case if there is any rally from current levels close to 26,000, 26,100, there we should look for taking some profit on long positions or leverage long positions. The reason is because we saw spectacular rally from the levels of 24,300 to almost 26,100. And that is also within a span of just 20 days. So I am of the view that before moving towards the levels of maybe previous high of 26,300, we may see some consolidation. But yes, of course, the trend is of buy on dips. So if there is any specific buying interest in the market, then we should look for adding those long positions close to 25,700, 25,600 levels.
Okay, all right. Let's get to individual stocks then. Mitesh, come across to you first. What's in your radar?
Yeah. On the stock side, today I have a mix of buys and sell calls. On the buying side is IEX. After a big decline, the stock is showing some signs of revival. So keep a stop at 140, look for targets of 152 here. Bandhan Bank is a buy with a stop at about 168 for a target of 180. And two on the negative side, sell calls. BPCL had a very negative candlestick pattern. The indicators are slightly, on the negative side. So sell with a stop at about 337.5 for targets of 318. And CG Power is also showing signs of profit booking. So sell with a stop at 745, which is just about yesterday's high. And look for a target of 710.
Okay, got that, Mitesh. Thank you for the picks. Shrikant, what about you? Stocks for today?
I would like to go with Vedanta, and the stock has spent a lot of time, almost a year, within the range of 485 and 400. Now it is very close to its breakout level, and based on its technical formation, I am of the view that the stock is going to break the level of 485 decisively. So at current levels, or in case if there is any pullback, then close to 480, 475 levels, it's a buy with a target of 520 on the high side. On immediate basis, we may see the levels of 500. We can keep a stop loss around 470 for adding any long positions at current levels. We are also seeing some activity in capital goods space since last 2 weeks. Larsen, Cummins, Thermax, all are doing well. But in that specifically, Cummins looks really strong candidate to buy for. There we have target of 4,200 in the near term, 4,400 in the long run. Currently, it is around 4,050, 4,075. It's a buy at current levels with a stop loss close to 4,000. But target should be around 4,200, 4,250. Okay,
all right. Got that. Thanks a lot, gentlemen, for that. Let's turn the attention to the FMCG companies. And Mangalam's with us to tell us about Colgate. He already told us the numbers weren't very, very impressive, but this time around he's spicing things up. He's got a bullish and a bearish view. Mangalam, take it away.
Well, this time around, even the bullish cues have gotten a little bearish this time. But, will be very interesting to see how the stock, reacts. Largely because ICICI Securities, they have a sell call. Their rating is 1,800 rupees. And they are saying that the business remains structurally fatigued with no visible triggers for a turnaround. They expect a volume decline, or they anticipate a volume decline of 7 to 8%. And they're saying that the category leader continues to lose momentum, with innovation and premiumization failing to drive any meaningful recovery. The stock trading at around 40 times leaves little room for patience as well. And similar is the case with Nomura. They have a reduced rating, target price of 2,200 rupees. They're saying volume decline of 8.5% was actually a lot higher than what they anticipated. And even though the gross margins expanded, negative operating leverage will impact their operating margins going ahead. Jefferies, however, they are a buyer on the stock. They believe that the management has blamed transitory issues related to GST cut, which resulted in destocking across the value chain. Because the premium portfolio did well, they believe that there could be growth. They've cut their EPS estimates by 4 to 5%, and they too are saying that the stock will remain range-bound until there is a growth pickup. However, because of the valuations, they have valued the stock at around 2,700 rupees as a target price. Nuvama too have cut their target price, but the current target price at 2,870 keeps them buyers on the stock. So there are more, negative views coming in than positive views. But the ones who are positive have marginally cut their target prices and are still holding the view that this one's here for the long term.
And one of those views came in from Abneesh Roy. So let's go straight to him. Abneesh Roy, Executive Director at Nuvama Institutional Equities, joins us on the show. Hi, Abneesh. Good to see you in, as always. Colgate, even after a 40% cut on the stock price, the stock trades at roughly around 40 times. And the numbers, not very impressive. What's your view on it?
Yeah, hi, good morning. Yes, we'll prefer HUL over Colgate in terms of the two results which came. Colgate in Q3 will face the inverted duty structure. My sense is they will have to take pricing hike at some stage. Colgate, the issue is most of the raw material and obviously the advertising services are at 18% GST rate, while the end product, most of the company is now at 5%. So they will not be able to fully offset and the refund in services is not possible. So we will see margin pressure for Colgate. If the GST would not have happened, frankly, it would have been a slightly better scenario for Colgate from a margin perspective. But yes, in the LUP, in toothpaste also there is a LUP, and we will see the grammage addition there because the GST rate has been cut from 18 to 5. So on the grammage, slightly improvement will happen from November for all the GST categories where the GST rate cut has happened. But from a overall perspective, our topics will be Nestle, Britannia, Tata Consumer, Bikaji, etc. I think Colgate will be lower in terms of the pecking order. We'll prefer HUL from a Q4 perspective rather than Q3 perspective.
Abneesh, hi, morning. But, I take your point on margin and the fact that they're not getting the GST offset, and that could be an issue at the operational level. But I thought the other point in your note was very interesting in terms of just dealing with competitive intensity, because you point out in that note that Dabur's oral care portfolio is actually doing really well. But Colgate is suffering. So beyond margin and GST, is it a product positioning issue building up as well?
Three things. In terms of the MD, Prabha, definitely in terms of premiumization and focus and aggression, that initially led to a lot of benefit for Colgate. So if you remember, around 1 year back, Colgate stock and Colgate results were really good. So what happened after that was the other competitors like Dabur, HUL, Patanjali, all also copied the template. So essentially the competitive intensity, the freebies, the discounting, etc. really became common across the sector. If that happens, only customer wins, the companies don't win. The benefit for Dabur, HUL, etc., and both HUL and Dabur have done better in Q2 versus Colgate on a YOY basis. The Dabur numbers are not out, but we expect better performance there based on the business update also. So basically what has happened, clearly Dabur and HUL are more diversified, right? So they are able to absorb the competitive intensity pain and promotional pain in terms of being more diversified. But for Colgate, now with this GST inverted structure, they will have this one more challenge. My sense is at some stage, they will have to take the pricing hike. From a base perspective, the volume, sales and margins, now it is there in the base, but GST is one additional issue in terms of the margin. So yes, you are absolutely right. Competitive intensity remains a problem. I think everyone now needs to understand that it is more about innovations and differentiation. Otherwise, competitive intensity in this category is on the higher side.
Got it, yeah. So slightly, broader question, Abneesh. Now, from a market and portfolio perspective, most people we speak to, nobody's talking about buying FMCG. Everybody's buying different parts of consumption. But if I talk about the staples basket, and if you look at the second half of the year, when the GST issue is supposed to be normalized and, the demand is really supposed to pick up, purely in terms of top-line growth, in the second half, what would be the pecking order? Which are the companies that are likely to lead? Maybe if you could name 2, 3, 4 in the order of growth priority.
Yeah, good question. Two things here will work out. One is, where is the grammage addition really helping? So, for example, in Colgate, also lower unit pack will see grammage addition. But how it works is, no one is going to brush more too much just because it's lower price or higher grammage. So it will benefit the food company, because food companies, if you see biscuits, snacks, etc., or even Maggi, for example, the consumer buys a pack. So in such cases, the volume grammage addition will benefit the volume straight away. That's why Nestle, Bikaji, Pidilite, Tata Consumer will be the outliers in terms of better performance in H2 versus the rest of the pack for this reason.
Okay, Nestle, Pidilite, Tata Consumer. Probably in
Britannia.
And Britannia. Okay, so the food guys basically should do better in terms of top line growth, volume growth in the second half. Got it. Makes total sense. We don't brush more, but we can definitely eat more, and that's where the benefits should accrue. Thank you, Abneesh, for joining in. Good conversation, short one, but quite helpful. Okay, we're just approaching 9:10. The pre-open session is settled, so let's see what we've got on the board. 43 points higher on the Nifty. That's how things are stacking up, at least at this point in time. I think, we're awaiting some regulatory announcements as well in the, in the next couple of minutes. Let's pull up Colgate in the pre-open and just see what Colgate is doing. Lever had a very, very flat session yesterday after reporting its numbers. Colgate down about 2% as that disappointment plays out. Top line has fallen, EBITDA has fallen, and the profit is down about 16-17% as well. So that's something that we are going to watch out for. We have our technical experts with us. We can quickly maybe do the 9-10 calls if we have them. Yeah, Mitesh, 9-10, what's the stock?
I'll go with a buy call. That's a buy on Bandhan Bank for targets of around 180.
Okay, all right. Hold that thought, Mitesh. By the way, we have got the big news that's coming in there. On Federal Bank, the board has approved the issue of warrants to Blackstone. A couple of sessions ago, we were probing the management on this itself. They're going to be doing it via warrants at a price of around 227 rupees. Aggregate number of warrants is around 27. I think it's close to around... what's it? So it'll be around 27 crore.
27 crores. 27.29 crores.
Yes, yeah. 9 lakh 74,043 only warrants. That's the number of it. The total issue size is around 6,000 crores, if I saw that number correctly. 6,000 crores. That should flash for you on the screen as well. So
they're raising a total by this warrant placement. The total amount that the bank is raising is 6,196 crores. So roughly 6,200 crores is what Federal is raising via this placement of warrants to Blackstone.
And post this issue, post the conversion, it'll amount to around 9.99% of the company. So that's the big breaking news that's coming in there. Another big fund infusion in one of the listed banks. You already heard it on Yes Bank. You already heard it on RBL Bank. And now Federal Bank. The street was, bracing for this sort of a news. The stock has already had a big run. But now 6,000 crores, massive ticket size coming in there via warrants. Post-conversion, they will hold close to around 9.99%. For the time being, the stock is, I think, more or less flattish. But however, the pre-open rate pre-open had just shut as this hit the exchanges. So Blackstone will also get the right to nominate one non-executive director. So that's the other piece of news that's coming in there. So that's a big news coming in there on Federal Bank. One was wondering, why are they raising this? Because otherwise the ratios are pretty much in check, much higher than what was warranted. So we'll have to find out the purpose of this particular fundraise. So I think we'll have to wait for clarity with regard to this. But this is a big, big one that's coming in there. Market capitalization of Federal Bank as of now is around 56,000 crores or thereabouts. But this is a warrants issue, so that will move up as well. It's more or less being done at the current price. So we'll try to get you more details on this front. But that's the big breaking news that's coming in there.
Absolutely. And we'll try and touch base with the management as well. to talk about the purpose of this fundraise. Basically, with this kind of equity infusion, 6,200 crores comes into the bank's capital structure. Anyway, we are down to the last 2-3 minutes before the pre-open session kicks off. Federal Bank is absolutely flat, at least at this point in time. Let's look at some of the other movers and shakers. The stocks that Nigel's been flagging off, the aluminum plays, they are up and about because of this big surge in aluminum prices. Hindalco is up actually 2.5% in the pre-open. Okay, I think we've got Ekta joining in as well. Remember, Cipla is the other big stock to watch out for, given their tie-up with Eli Lilly on this big important drug, Mounjaro. Ekta, tell us more.
Well, thanks for that. You know, more than a stock-moving piece of news, Cipla's tie-up with Eli Lilly is just more of a milestone which they've possibly created when it comes to such an important MNC tie-up for the Indian market. So remember that this tie-up is basically for tirzepatide in India, and tirzepatide is basically the generic name for Mounjaro, which is Eli Lilly's drug, which they market in the Indian market as well as world over. So now this is going to be an agreement for distribution and promotion of tirzepatide in India. And what Cipla will be doing is that they will be marketing it under a second brand name. So Mounjaro will be marketed by Eli Lilly, and Cipla will be marketing it under Urpeak. What this will do is that it will enable access across different markets for Cipla where Eli Lilly does not have access to it. And Lilly will manufacture the drug, supply it to Cipla, and Cipla will be selling it at the same price as Mounjaro.
All right, Ekta, thanks a lot for that. Well, we have Gurmeet Chadda, who's joining in to react to this piece of news that's come in here with regard to Federal Bank. Gurmeet, good morning. Thanks a lot for joining in. The big news has come in there. Blackstone's going to be, getting warrants in Federal Bank, and post-conversion, it'll be close to 9.99%. How do you read this piece of news, and, what would you do with the stock from here on?
Hi, Nigel. Good morning. Extremely positive. I think the stock, the bank operationally also is seeing a bit of a turnaround once Mr. Manian joined from Kotak. Mr. Manian, as people would know, was instrumental in making Kotak what it is today as a franchisee, and change of leadership makes a huge difference. We've seen that with ICICI Bank also earlier. So operationally also, they've been doing well. Last quarter was very good. Actually, they saw a NIM expansion. CASA ratio also improved. In fact, they outgrew the industry as far as, the advances as well as retail loans are concerned. The wholesale retail mix also seems to be changing. So I think on core performance looks steady. They are diversifying from just being a South-based, Kerala-based bank to broader branches. There's some bit of a union issue, which I think will gradually get sorted as they diversify more pan-India. But this is extremely positive, Nigel. More so, I think this is a change in stance of RBI in allowing, large foreign players to own sizable stakes in the bank. And this is almost like banking sector reforms reloading. This gives access to, cheaper capital, global markets, and host of good practices, I think. And then India obviously has officially taken a stance that we want some of our top banks and top 10 banks globally. I think you will see more banking reforms getting loaded on this.
Yeah, I mean, so many foreign entrants now coming through. Emirates NBD with RBL, Mitsubishi, financial group with Yes Bank, and there's some chatter around Shriram Finance as well. So let's see. But Gurmeet, just wondering, and of course, we're going to try and get more clarity from the Federal Bank management. So they get 6,200 crores of additional capital. The bank was already very well capitalized. And when we spoke to them immediately after the earnings call, they did not lay out any specific plans in terms of inorganic growth on wealth management. I remember we asked them this. So, I mean, right now it's like anyone's guess. What's your best guess? What will Federal use the money for?
So, Sudhi, I think one is obviously they are well capitalized, but I think the way growth is picking up, especially the changes done on the corporate loan side, removing caps of 10,000 crore on corporate loan limits, allowing banks to do acquisition finance. I think not only just capital, I think the name, the expertise, some of these large players bring is extremely important, more from an investment banking point of view as well. So that's important. Second, as I said, a lot of these banks will get re-rated because RBL has had its share of issues with credit card and microfinance portfolio. Federal Bank also has been trading around book value for a very long time. And I think there's a lot of catch-up which will happen in some of these tier 2 banks. They have large presence. and it gives, as I said, access to the cost of funds has an impact. You get a name, once you have larger names joining, you join a bigger consortium when it comes to large deals. So there are multiple implications. And more importantly, I think RBI has decided post Yes Bank and other episodes that once the banks are doing well, they would want larger, stronger hands to come rather than RBI keep intervening with on a daily management issue. So broadly, as I said, you might also see Indian corporates now lobbying for increased stakes in banks. Currently, the voting rights are capped. I also think the automatic approval is 5. With RBI approval, you have 9.9% stake as the highest, as well as individual investors concerned. That might get a relook. So to me, this is broader banking reforms, as I said, getting reloaded.
Okay. All right, Gurmeet, we'll leave it there. Thanks very much for a quick comment and a quick chat there. So there you see the news finally coming through. Federal Bank gets a new investor. Blackstone is going to be checking in with a stake which is going to be just under 10%, and this is going to be happening via an issue of warrants. And in this entire transaction, Federal Bank gets in capital infusion to the extent of almost 6,200 crore rupees, just 1 or 2 crores less than that, rounding off the figures over there. But anyway, let's go back and look at the rest of the open session as well. So it's still a little quiet, it's still a little cautious. Nifty is down about 40 points at the open, and let's see where the drag is coming in. Lever is falling more. Lever is down about 3% right now. Cipla is not showing any excitement after that tie-up with Eli Lilly, 3% down over there as well. Dr. Reddy's, which reports numbers today, is down about 1%. What else? Eternal is still falling after its 3% cut yesterday. It's down about 0.5%. Actually, all of consumer is lower, actually. Tata Consumer, Titan, Eternal, Lever. Most of these stocks on the downside, Nigel.
Well, that's right. Just keep an eye out on a couple of these other names. Rubed highlighted the aluminium stocks will be in focus today, and that seems to be the trend that's playing out. So Hindalco, because it's a dual benefit. India operations gain because of the aluminium prices moving up here. And the Novelis operations gain because the Midwest premiums have moved up. And as a peer, that's Alcoa, says that the Midwest premium is enough to take care of the negative impact of the tariffs. So because of that, both those two are higher. And Vedanta, the highest amount of the share price value comes in from the aluminium business. So that one as well is up. Aluminium doing very, very well in today's trading session. From the broader markets, though, Colgate, that's the one that's getting wrapped on the knuckles. As Manglam said, the numbers that were expected were, expectations were down. Stock has been an underperformer. But till growth comes back, there's no reason to buy the stock. It's trading at around 40 times, even after correcting close to around 40% from the peak. So that stock is under pressure. The OMCs have come in for some selling. Crude oil prices have moved up a little bit. HBCL, I think, was down close to around 2%. You had BPCL as well as IOC. All those three stocks trading in the red. Saman Capital, that's the other one that I highlighted in my morning chat. It comes out of the F&O ban. So normally you see a good amount of interest out there. That's one of the big winners. It's up close to around 3% as we speak. Sagar Cement at the bottom of your screen. Well, that one's opened up in the green. Remember, volume growth is something that was good. That was close to around 17% volume growth. But profitability still needs to come about. So valuations give it comfort. So that's why below that, 230, 240 odd mark, you normally see the stock see some buying interest. But the numbers were a little bit disappointing. We'll try to get the management and get further clarity on that front as well. So Surbi, a negative start. We're down 30 points thereabouts. So from yesterday's high, we're down close to around 225 points or thereabouts.
Okay, so some profit taking at these higher levels. Let's welcome in our next guest then. Gautam Shah, founder of Goldilocks Global Research, is with us now. Gautam, thank you so much for joining in. Hope you had a cracker of a Diwali. Season's greetings to you. The market actually had a pretty good Diwali as well. But the question is back, now what? Now that we're almost at the doorsteps of the previous all-time high. I know in our past conversations, you've sounded really optimistic. But what do you make of the overall setup at the moment?
Good morning, Surbi. I don't think many people would have thought that by the end of October, we'll be close to lifetime highs, and that's what markets can do. And I think the real test of the market is always how it reacts to difficult news flow. And I think in the last couple of months, we had a lot of difficult news flow locally and globally, but the market kept respecting support levels. I think the point that I mentioned in my last interaction. And now as we speak, this move of the last 1 week, I think just has too much ammunition on the charts and tells me that this is genuine. We have indeed seen a sort of a breakout. The news flow has got supportive. The breadth is getting better. The top 100 has done a lot better. We have banks, IT, Reliance, all trying to come back at the same time. So yesterday, I think morning was slightly overly celebrated, I would say, and therefore we've seen some profit taking, but I think this is just temporary. All dips should get bought into, and I think the markets are headed for new lifetime highs and beyond. On the Nifty, I think 26,700 is our next stopover number just for the near term. But from a medium-term perspective, we stay positioned for levels of 27,500. So I think one should just ride this move. Do not overanalyze. I think the news flow is getting better. The charts are already very, very good. And I think the risk reward to enter longs, even at current levels, I think is quite lucrative.
Okay, good to see you in, Gautam. You're sounding a little bit bullish, so that's good news. And you have been saying, right, when the market chooses to look past bad news, that's the first signal that, it wants to climb the wall of worry. A couple of questions here. 27,500, I think that's the target that you have ultimately on the Nifty. What's the timeline for this target? And when does this bullish bias get negated? On the downside, what's the level you would not like to see breaking first on the Nifty?
See, a couple of points. We are coming out of a period of no return for over a year. And in this period, obviously, the government and the RBI has done a lot to propel the Indian markets and the economy higher, which I think was a very strong foundation that was laid. And secondly, in the last 3 months, we've really behaved like a pendulum, oscillating within a large band. So keeping that in mind, 25,300, 25,400 now becomes a very important support. Till this level stays, I want to believe that the market is headed higher. And we will make a sequence of higher tops and higher bottoms. When you are near lifetime highs, you don't want to focus too much on targets. You just want to focus on supports. But I do believe that between now and say January, we could be getting closer and closer to that 27,500 number. But let's not forget, in these last 10 days, it's just the top 100 that has done well. The small cap index has been absolutely flat. Mid caps have actually underperformed. So I'm batting for the comeback of broader markets in the next 1 week. And if that happens, people will start feeling the strength in their portfolios, which is currently actually not the case.
All right, that's the important part, Gautam, because yesterday, after all the euphoria and all that excitement over the last few days, people were saying markets are going on saying it's going to fresh all-time highs, and my portfolio is not feeling like that. So it'll be good to see broader market participation, because when the broader market participates, that's what makes your portfolio feel good. Tell us if you have any kind of levels on the mid as well as the small cap indices, and if you want to throw in a couple of stocks as well.
See, the mid-cap index, as we speak, is flirting with that level of 60,000, which has been a problem level for the last 6 months. And I think once that level of 60,000 is cleared, I wouldn't be surprised if you see a 3,500 point move there. So I think that would be special as and when it happens. And I think we've done a lot of hard work around this level of 60,000. On the small cap index, I think 18,200, I think, is the critical number. Once that is taken out, I'm looking at a move towards a level of 20,000, which is near the previous high or near lifetime highs. So sustenance above 18,200 on the small cap index, I think, is something that should lead to greater strength. But the last 10 days, everybody is speaking about FI selling and the long short position that they have been keeping for a while now. With top 100 making such a strong comeback, with IT making a comeback, with banks doing so well, I just get the feel that now domestic money and some foreign support could actually propel the market higher from here.
Okay, so that's on some of the leadership sectors. So where should one be, within financials, Gautam? That's the question. There's so much happening. There's so many deals happening. I mean, we just saw the federal deal get announced this morning. So there's a lot of news and a lot of noise as well within the financial space. So what looks good?
Well, honestly, we like everything. I think one can just buy the basket, one can buy the ETF. I think valuations are comfortable, charts are excellent, relative strength is immense. And I think banking has been single-handedly responsible for the kind of strength the markets have seen in the last 10 days. So I think our working target for the Bank Nifty has been about 60,000. We've been maintaining it for over a year now. I think we will get there soon. And I think we will even get past it. Because when I look at the placement of some of the top banking stocks, including the NBFCs, and some of the top NBFCs have been our favorite for a very long period of time, I think you're going to see a lot more strength. But I think the key space within banking and financial services, which I think is going to be the key highlight, is PSU banks. I think I like the top 3 or 4 PSU banks, and I think they're going to register stellar returns over the next 6 to 12 months.
All right, Gautam, let's take a break from the equity markets. What's the view on gold? Gold and silver. All that glitters in the last year was gold and silver. What are the charts telling you on both those two?
Well, we've been advising aggressive profit booking over the last 1 week. I think for the last 1.5 years, I think we've been very, very bullish on both of them. Pretty much spoke about it in every interaction of ours. But in the last 7 days, we felt that they had come to a point where the rise was parabolic. And we felt that a lot of the positives are in the price. And we also did see a lot of madness on the screen and on the charts. So I think they are going to take a bit of a cool off, maybe correct by about 10, 12, 15%, which is quite normal in the overall scheme of things. So for the time being, I think the gold and silver rally is done with. Probably even the Bitcoin rally is done with, because there are some indications of topping out. And I think the focus is going to go back into equities. So I think equities is where the bigger opportunity could be over the next 6 to 12 months. But don't get me wrong, I remain positive on gold and silver if somebody is taking a 3-year view. But if you're taking a 3 to 6 month view, these might not be good levels to add.
Okay. So we were talking about the engines that will turbocharge this market higher. One is financials. You're pretty convinced there. What else, Gautam? What else looks good?
Well, I generally don't change my sector preferences, and I think my sector preference is still metals. I think I really like the way the entire basket is shaping up. Today, you are seeing what's happened to aluminum. We've seen what happened to copper in the recent past. I think some of these charts are incredible. Valuations are very comfortable for many of these companies. I think they're under-owned. People are still not being able to make a case fundamentally. And given the positive talk with the US, I think there is a feeling that there could be a very large trend in metals on an overall basis. I mean, top metal stocks could appreciate 20-25% in a matter of 6 months is what I feel. And I think we've already kickstarted that. So metals is one space that we like. Auto we like, power and infra we like, the entire PSU bank and the entire PSE space we like, and financials we like. So these are the 5 or 6 buckets where I think capital should be committed into.
All right. Anything that's not looking good?
Well, there are too many stocks and too many sectors that have not performed in the recent past. And I think this is a market where you should ignore stocks that don't move with the Nifty. For me, in my book, FMCG, IT and pharma are still an avoid. I don't see any trend there, and I think one should just stay away.
Okay, all right. And, you briefly mentioned about Reliance Industries. Now, that's like an index by itself, right? When the big boy does well, the Nifty has got legs then to move up. So Reliance Industries, after that brief correction, it seems to be coming back into form. What are the levels you're seeking on that one?
Well, I don't have a specific view, and I do believe that the energy space, including Reliance, is going to continue to underperform. The fact that it's not falling itself is a very positive sign. I think it's going to be in a band of about 200 rupees, maybe 1400 downside, 1600 upside. But because it's such a big heavyweight, if it doesn't fall, that itself helps the Nifty. And now with IT making a comeback and banks looking good and capital goods, stocks like L&T making a comeback, I believe that's very, very favorable for the overall market.
Okay. All right, got that. By the way, I just want to point out that there's a lot of pressure on lever this morning. Not that there are any major downgrades or any big sell calls, not that I could spot one. But I think the market's just pricing in the reality that the company is going to be squarely focused on volume growth now, not so much on price. And that's what the new CEO outlined very, very clearly in the interaction post the results release yesterday. So that one's under very clear pressure.
Well, and the market believes that the deal coming should be, because the barometer normally is this Gokuldas exports, the stock. Yesterday, the stock was buzzing up. Today, in the first few minutes of trade itself, they're bidding the stock up. So hopefully the deal does come about, but that's normally been the barometer. When you get the positive sound bites coming in from Mr. Trump, then you have the stock that's up. And when he says, he's not impressed, etc., all that, sort of commentary that comes in, then the stock is under pressure. So for today, it appears that the market believes that we are closer to the deal. Let's hope that they're right, because the stock has been bid up considerably as well. Gautam, one worry, which hasn't been a worry of late, has been crude. Crude has been very, very well behaved. And you're mentioning that, the energy basket itself, maybe it underperforms a little bit. What's your view on crude oil prices? Even when geopolitical tensions come up, it couldn't get past even $75 a barrel. And that too, it held there just for a couple of days. Your view on Brent?
Typically economists start worrying about crude when it goes up too much or it goes down too much. I think that's really the debate that keeps coming in. But I think 55 to 75 on the NYMEX crude is pretty much the range. I'm very clear that it is in a downward bias. It will remain under pressure. If 55 levels were to get broken on NYMEX crude, then I think we are looking at some sort of a concern. But I think it's right now it's in a space where you don't look at it too much, and I don't think it's going to impact equity markets. So as I said, only below 55 or above 75, would there be a concern, or would there be any correlation with equity markets?
Okay, so as of now, not much of a concern. Gautam, what about global markets? Do you see anything different, anything changing? There's so many times that people have questioned this AI trade, but it continues to be as strong as ever. And how do you see the correlation playing between the US market and the India market? Because the former has outperformed in a big way in the last 12 months.
Well, I think the AI trade is here to stay. I think it's changing and disrupting our lives as we speak. And I don't think the markets have discounted it completely. But the sad part is US and China are pretty much two countries or economies which are right at the forefront of the AI trade. And I think India is way behind in that particular trade. And that's probably the reason Indian markets have not done as well. So US and China, we continue to be positive. US, I think, is looking slightly toppish in terms of large caps. So it might take a bit of a breather. But the overall global landscape for equity markets continues to be positive. But I've been maintaining this for the last 6 months. I think the next big trade, after gold and silver, is really China and Hong Kong. So I do believe that those two markets will do exceedingly well over the next 6 to 12 months and could beat every single equity market over the next, many quarters. India will do well, but it will find it very difficult, to beat returns of other markets in the world. And that's probably the reason you need to be in the small caps and mid caps for outperforming.
Always a pleasure speaking to you, Gautam. Wishing you a good day ahead, and we look forward to chatting up with you. You made some very, very relevant points, and you're sounding very optimistic on the markets as well. So happy Friday to you. We'll chat with you rather soon.
Thank you, Ranjan. See you.
Well, let's focus on the metals pack then. And aluminium stocks, well, they are surging in today's trading session. And there are two big factors that play out. One is LME aluminium prices. They've reached the $2,850 per ton mark, which is the highest we've seen in the last 52 weeks. So LME aluminium prices is at a 52-week high. When LME prices move up, then you keep an eye out on Hindalco for their India operations, Nalco because they have an element of aluminium sales. They also have alumina in there. And Vedanta because most of their share price value comes in from aluminium segment. The reason that aluminium prices itself have moved up is because demand-supply dynamics are playing out in favor out there. And there's a smelter in Iceland that has been put out of supply in the near term. That's on a temporary basis. The rough capacity over there was around 100,000 tons. Now, lower than expected supply and good demand is what is propelling pricing to move up. Also, the Fed is expected to cut rates later this month. So global monetary easing is also supporting its cause. And besides that, inventory levels have moved up. So all that explains why LME aluminium prices have moved up. But Alcoa was up more than 10% overnight. And one comment that came in from the CEO was very, very positive. He said that the current prices as well as the Midwest premium fully cover for the tariff impact. Now, this is a positive read-through for Hindalco because Novelis has exposure out there. And remember, the Midwest premium has moved from around $500 per ton. It's moved to more than $1,500 per ton. So the negative impact of tariffs seems to be getting nullified. And because of that, Novelis, their profitability may not get as hit as what was thought earlier. So aluminium stocks doing well. LME prices moving up. And for Novelis, a positive read-through coming in from Alcoa. So that's why those are the stocks of the morning, as we pointed out earlier today.
Shining bright, all the metals out there, the best performing sector of the day. Otherwise, the market continues to be fairly range bound, 27 points lower on the Nifty overall. Mid-cap index is doing better today with a gain of about 0.3%. That's the Nifty for you. Mid-caps are looking better. And the advanced decline ratio is fairly even-steven, actually so early in the morning at least. But the sector spotlight now shifts to IT. Yesterday, at least, the IT space was a big winner. We have Moshe Khatri, Managing Director, FinTech and Tech-Enabled Services Investment Banking at Wedbush Securities with us. We also have Ganesh Natarajan, Chairman of GTD Data Solutions, joining in. Gentlemen, great to have both of you, here with us. I think the market yesterday was taking note of the fact that there is some softness around this visa issue, and I think the clarifications are helping that this $100 fee is not going to apply, say, to student visas. It will not apply if you are changing your employer in the US or if you are renewing your existing H-1B visa. So those clarifications help to an extent. But the issue goes beyond that, perhaps. So, Moshe, if I could start with you, I mean, the issue is really about growth and whether large Indian IT services companies can really pivot in an era where, it's just hyper affinity for all things AI. How do you sum up the commentary that you've heard from the Indian companies so far and, how they will navigate the whole growth question?
Yeah, growth has been impacted by multiple factors, anywhere from the disruptive impact of Gen AI, the lack of funding for discretionary work, some competition that we're seeing from GCCs. So collectively, it's been pretty difficult. I just want to say one sentence regarding the H-1B visa program. Look, in general, the industry has been battle tested here. And a lot of those large companies have built a pretty scalable delivery, facilities or operations out of the U.S. So in our view, they'll be able to navigate through that. Obviously it's not 100%, but I think they're well positioned to get there. Growth is going to be challenging, at least for now. And I think the bigger issue is more about how do you position yourself to benefit from this Gen AI spending cycle? And there's a spending cycle, believe it or not. The question here is, does it impact the business? Does it cannibalize revenues, especially with some of the low-end work that gets done? I think that the verdict is yet to be made in terms of how does it impact actually the industry in general.
But what's your reading of exactly that, Moshe? I mean, a lot of Indian companies are talking about launching AI modules. Many are talking about changing the workflow systems as well internally and getting AI ready. How do you sum up some of these efforts?
I think the sector is very well embedded here. But again, the real question here is, when do you get these projects to scale? That's really the main question, and that's going to drive growth down the road. And no one really has a good answer for that. That's why we're kind of in a transitional period right now.
All right, Moshe, one more question with regard to Infosys. The promoters, they said that they're not going to be participating in the buyback. It could very well be because it's not tax efficient. But the street read it very, very positively and bid up the stock. What's your view?
Well, look, I think Infosys as a company is doing what it's supposed to do. They have two buckets of growth. One that focuses on cost cutting and running the business for their clients. That part of the business is actually growing. And then they're also repositioning the business to focus on Gen AI. So, I think management is doing exactly what it's supposed to do as we speak. And it's getting you some growth even. So it's not a bad thing.
So positive on Infosys from here on?
Yep.
All right, let's welcome Mr. Natarajan as well into the discussion. Hi, Mr. Natarajan. Good morning and good to see you win. How are you reading things with regard to the Indian companies? They seem to be turning their attention a little bit more to the AI front. How big is the opportunity and how do you think this pivot is taking place?
I think we're entering a new normal. And the discussion in the last 3 months obviously has been on the H-1Bs, etc. And hopefully, if we're entering an era of stability, I think the only category of people who need to worry are people who have maybe done their engineering in India, worked for a year, and for them, the $100,000 thing will be punitive. But apart from that, as you said, graduates, people switching from L1 to whatever. So I think all those categories are safe. Now, in that context, let's look at the market. I personally believe that in the next 2 years, you will see another big wave of growth. And that's primarily because people are moving from experimenting with point AI solutions, with Gen AI, et cetera, to much more of game-changing AI. Now, when I say game-changing AI, you are really looking at a situation where somebody will take maybe a logistics process and completely reimagine it, saying that, look, what are the AI touch points? How do I optimize the process and re-engineer it to make sure that we really get maximum advantage out of it? Now, in this context, I think the opportunity, like we saw maybe 20 years ago with Y2K, where there were these huge projects coming through, I begin to see that happen. So I think the game-changing AI, which could be multi-million-dollar projects, is one. The second, of course, I mean, you heard the TCS commentary on investing heavily in data centers. So helping our clients to really access LLMs, building small and narrow language models for enabling them to harness agentic AI. I think the canvas is really expanding. So I'm bullish. I agree with Moshe that, I mean, you can't expect any miracles in the next few quarters. But I think over the next year, year and a half, you'll see significant growth coming back to the industry.
That's good to hear, Mr. Natarajan. Morning, sir. And Infosys also spoke about this, right? They're deploying some 2,500 Gen AI projects and I think 200 agentic AI. They kind of singled out some of these numbers in these projects in their call. But if we take that longer term horizon, say over the next year and a half, as some of these projects come to fruition, what are we talking about? I mean, can some of the larger companies get back to at least high single-digit growth, if not double-digit growth?
I'm expecting, say, double-digit growth. I mean, if not in this financial year, but if you look at FY27, I think you'll begin to see companies, especially those who are nimble, who are really focused on not just generative AI, but building agentic software for large horizontal applications. I think those will go back to the 10-12% growth. I don't see any doubt about that. I mean, people who are not still kind of putting their toe in the water and not jumping in and really doing or really winning large projects, they might still be struggling at the single digit. But I don't see the industry being at single digit for a very long time.
That's good to hear. That's very good to hear. And Mr. Natarajan, what will this margin, what will this transition over the next year and a half mean for margins? Some argue that the deployment of AI is going to be margin dilutive because it's all about saving costs, and then client will want those savings to be passed on.
Well, that is true, but look at it this way. I mean, one is what you're saying, which is that clients will say that, look, I mean, you yourself are going to use AI and programmers will no longer be required. That's one dimension of it. That's the supply side. But on the demand side, see, a lot of clients, I mean, this is almost like the old situation of, people rushed into digital and hardly 20% of the projects were really game changing. The same thing is happening in AI. Everybody is experimenting with AI. There is AI literacy generally available, but AI mastery has not happened. And I think the opportunity for all of us who are building IT companies in this landscape is to become masters at specific processes for AI and make that happen. So in that context, when you're talking about a different language, when you're giving an AI strategy as well as full end-to-end implementation, I think price will not be the issue. So I don't see that as, for companies going back into the double-digit growth that we talked about earlier, I think margins will also be excellent because these will be really different projects if we're talking about maybe a year and a half from now.
A very good point, Mr. Natarajan. But let's wind this conversation down with Moshe's final comment. Moshe, your view on the Indian companies, you still have companies like Persistent, Coforge. They are, Coforge, they are growing at a very, very good rate in comparison to the larger cap names. How would you position yourself, if you're looking to buy tech here in India?
A couple of things about growth. Even today, you have companies that are getting you those double-digit growth rates. They are focusing on product development, ER&D. These are very, very strong growth areas, but I would say they're very niche-y, and not every company can actually get the job done. Regarding the question on margins, I would say two things. One, in order for companies to really survive and thrive in a Gen AI kind of mode, if you will, they have to do two things. One, they have to decouple revenue growth from headcount growth. So they have to go for nonlinear growth. That's number one. Number two, they'll have to focus more on outcome-based contracts. So deviate from the old model, move to the new models, and in our view, that actually will get you margin expansion in your business. And some companies are starting to do that, but again, I think we're very, very early in this phase, if you will.
Okay, all right, gentlemen, very helpful conversation. Thank you for all the context. Basically, we need to watch the space closely and see how this AI transition plays out for Indian IT services. Thank you very much for joining in. Well, we take a break on that note. On the other side, we turn the dial to the oil and gas sector. Q2 earnings season is upon us, so what to expect from oil and gas companies? Prabal Sen of ICICI Securities will join in.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar. Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Welcome back. Well, as promised, it's time for our special segment, Quarter Tak, where we bring you expectations from each sector. Today, Sonal joins us to tell us what do we expect from the oil and gas space. Sonal, over to you.
Thank you so much for that. Well, we are expecting a mixed quarter in terms of earnings. But let's start with Reliance Industries. Already reported its numbers, and we did see that refining performance was quite strong. Company reported strong numbers despite some moderation that we saw in the petrochemicals margins. But moving on to oil marketing companies, that's BPCL, HPCL and IOCL, they are set to report robust year-on-year growth thanks to elevated marketing margins this time around. However, those margins have softened on a quarter-on-quarter basis. On a YOY basis, diesel margins jumped 39%, ATF or the aviation turbine fuel margins were up 22%, and LPG margins, they rose 4%. Even though LPG operations continue to post losses, those losses have nearly halved sequentially, coming down to about 4,000 crore rupees. Overall, EBITDA is expected to surge sharply, 92% for BPCL, 127% for HPCL, 191% for IOCL. That is the analyst expectations. But let's talk about some gas utilities. The other hand, GAIL could see a weak quarter. Lower transmission and trading volumes are likely to weigh on performance, with EBITDA expected to decline 26% on a YOY basis. That's on the back of a 9% drop in transmission volumes and weaker trading spreads as well. For the city gas distributors or CGDs, margins are under pressure due to higher feedstock costs. Mahanagar Gas, remember, took a price hike in the second quarter to partially offset those input cost increases. In terms of volumes, IGL and MGL are expected to post 5% growth and 9% YOY growth respectively. But when it comes to profitability, EBITDA could be down 9% for IGL, 10% for MGL and 9% for Gujarat Gas this time around. So overall, while refiners and OMCs are set to deliver strong earnings, the gas utilities may continue to face near-term challenges due to rising input costs and softening demand. But of course, watching out for impact because of the sanctions that have come by on Russian oil from the US.
Okay. All right, Sonal, thank you very much for that. So let's discuss this with Prabal Sen, who tracks the energy space very closely at ICICI Securities. Prabal, thanks so much for joining in. We'll come to earnings in just a bit, but let's address the hot news in the room in the last 24 hours, these sanctions and what they mean for oil marketing companies. So let's start with the OMCs first up. Just run us through your expectations, how you were expecting refining margins to shape up in Q2, and more importantly, what happens now if oil remains elevated and some of these refineries can't source Russian crude?
To answer your first question first, I think expectations are similar to what Sonal discussed earlier. There is refining margins have been fairly healthy and are expected to increase by anywhere between $2 to $2.50 on an average for the OMCs on a sequential basis. Year on year, the number will be slightly higher because of a low base, and inventory is also expected to be favorable a little bit to that extent, and therefore numbers for Q2 look fairly healthy on a YOY basis. As far as the second part is concerned, what happens with respect to Russian crude? There have been multiple sanctions, there have been multiple moves by the EU in any case over the last year or so, which have not really had a material impact. I mean, they've increased the effective cost of procuring Russian crude, but the flows have not really stopped. I think the fear really is that if the flow itself gets stopped and you have to sort of shop around for alternative sources of crude, it would essentially increase the cost of procurement. Simple as that. Today, you have 25 to 30% of crude still coming through in our overall sourcing mix from Russia. And if you have to replace that with alternate sources, you lose out not only on the discount that you're getting on Russian, which is around $2 to $2.50, depending on who you ask, but you probably may have to also pay slightly higher to procure crude at short notice. So assuming that there's a $3 hit that you take on 30% of crude, simplistically speaking, it causes a $0.9 a barrel hit on your GRMs. What can offset it is the fact that diesel and ATF and gasoline spreads have actually improved quite a bit, at least in the beginning of this quarter. Even though benchmark margins remain subdued because of other products, for Indian refiners, the strength in diesel and ATF and gasoline is actually a fairly positive development if it sustains. So we'll really have to see and weigh. In terms of earnings impact, every $0.50 reduction in GRMs from whatever base you're looking at reduces your consolidated EPS by anywhere between 4.5% to 7.5% for the OMCs. For Reliance, the impact, while in absolute terms may be higher, but because of the consolidated nature, the impact would be in low single digits in terms of consolidated EBITDA.
Those are lots and lots of numbers, very detailed, and really gives us good context. Let me just repeat that for the benefit of for our viewers. You're saying that a shift in the sourcing mix, if we say that we drop down to zero Russian crude, and then move to alternate sources, then because we lose on the discount and the transportation cost goes up, so purely on the back of that, the hit could be $9. Right?
No,
0.9.
Sorry, it's $0.9.
$0.9. Okay, $0.9. Okay, yeah, that's what I was wondering. 9, okay, that sounded like huge. $0.9. But you're saying that it should be more than offset by diesel and the rest of the crack. So net second half, what are you expecting on GRMs? Based on the assumption that we go down to almost nil Russian crude.
Yeah, I think as I said, it probably would remain similar to current trends. As I said, one thing would offset the other. So we continue to build in reasonably healthy margins. But Reliance doesn't report GRMs explicitly, but the range is anywhere between $9 to $10 is what we are working with at this point of time. We see no reason to change it. And for OMCs, it is in the range of around $6 to $8. That is something that we will continue to live with at this point of time.
All right. Hi, Prabal. Always good to hear your thoughts. What about the city gas distribution companies? What are the expectations from those names? And what do you like from the pack?
We continue to like MGL. I really think that the volume growth coming through in a fairly strong way, with the margins continuing to be, let's say, while they're not going to hit your record levels that they hit a couple of years ago, of 12, 13 rupees of gross margins, or EBITDA margins rather. They are now looking at a more moderate margin environment, but the volume growth coming through, I think, continues to be a surprise for us, and the sustenance of that volume growth should lead to our performance. IGL also looks healthy to us right now. I think they are achieving slightly better volume growth, and with the moves that are happening on the zonal tariffs, as well as the news coming through of VAT reduction, their cost of gas should actually continue to reduce over the next few quarters. So MGL, IGL is the preferred picking order right now.
And on Reliance itself, on the oil and gas side, what would the expectations be for the second half?
So I think the EBITDA run rate, should probably continue to be in the around 14.5 to 15,000 run rate. Again, there are several countervailing forces. Petchem margins at the margin are, a bit of a mixed bag, but they have improved a little bit if I look at trends versus last year. Refining margins, as I said, continue to look strong. But again, now with this crude cost coming through, you could probably have a little bit of a dampener for the second half. So on the whole, for the full year, we continue to believe somewhere between 55 to 60,000 crore of EBITDA is eminently doable for the OPC segment. And, of course, on an overall basis, we continue to believe that earnings growth will, on a consolidated basis for Reliance, should be in the range of around 13 to 14% for this year.
And GAIL, Prabal, what to watch out for this quarter?
I think volume trends have been a little bit mixed. Power demand continues to be subdued, and therefore, overall demand has seen a little bit of a slowdown. But I think the guidance that has been given now of around 5 to 7 MMSCMD growth over last year, I think that should continue to be there. I think what is more of an important monitor is what happens to trading margins, given the way that they have behaved. I think the trend has been a little bit more muted compared to last year. In terms of the quarterly run rate that has come down to somewhere around 1,400 crore a quarter. And I think that remains the key driver for earnings. And of course, as and when the tariff order comes in, that will remain the big trigger for this year, really, in terms of how the stock behaves.
All right, Prabal, thanks a lot for joining in, giving us your thoughts. I think you were getting a couple of calls. The kids have their holiday season. I'm not sure whether it was them. Thanks a lot for joining in and giving us your quick input. But let's focus on one of the stocks of the morning. The big breaking news that came in earlier today is that Federal Bank is going to get a big 6,000 crore rupee fund infusion via warrants. Gaurav joins us to break it down for us. Gaurav?
Well, yes, a big news coming in. today was the board meeting of Federal Bank, and they have now approved investment by Blackstone of up to 6,200 crores in Federal Bank for around 9.99% stake. Now remember they are going to issue around 27.2 lakh shares, 2 lakh convertible warrants at a price of 227 rupees per piece. When we look at the total deal, now the warrants shall be exercised in the next 18 months, and the upfront cost that they will be paying is at 25% of the amount, which will be somewhere equivalent to around 12 to 1300 crores is what we are estimating. Apart from that, they also have an approval to grant one nominated non-executive director. So that is also something that we will be watching out for. And what is also a key thing to watch out for is that how they are going to infuse and invest these funds. And the reason being that when we look at the CRAR ratio, the currently Federal Bank's CET ratio and CRAR ratio are well within the guided range. CRAR stands at around 15.71, CET stands at around 14.37, which is well above what is guided by regulators. So definitely one thing that we will be watching out of is that how this investment will be utilized going ahead. Remember, they also have their Federal 4.0 when Mr. Manian said that the breakthrough phase strategy is something that they're working on. So definitely we will be watching out on that. But as of now, a big news and a big investment coming up in Federal Bank.
Thank you very much for that. And the other big story is what's happening in defense. And Upasana joins in with the details. Upasana.
Well, certainly. Now, DAC clears proposals worth 79,000 crores. Now, let us look at the key beneficiaries on the back of this, according to Elara Securities. Under Indian Army, Nag missile system, Bharat Dynamics in focus, as the estimated order value here is around 2,000 crores. Next is ground-based mobile systems. Bharat Electronics will be in focus in this segment. Now, coming to Indian Navy's land platform docks, under this, stocks like MDL, Cochin Shipyard, GRSE will be in focus, and the order size estimates here are as high as 60,000 crores. Now, naval surface gun, BHEL and GRSE in focus on the back of this. And coming to advanced lightweight torpedoes, Bharat Dynamics again in focus on the back of this, and the order size estimated here is 500 to 1,000 crores. And lastly, coming to electro-optical infrared search and tracking systems, BEL in focus. So all in all these stocks remain on our radar today on the back of this.
Thank you very much for that. There you have Midwest is listed with a mild 100 rupee premium today, and that's an uptick of close to about 8-9%. Chandan Taparia is now joining in. He's the head of derivatives and technical wealth management, Motilal Oswal Financial Services. Chandan, another flat day. Yesterday, we paired all our gains to close flat. And today also it's quiet, though there is some activity at the mid-cap index level. What have you made of the action so far, and what would the calls be for the day?
Good morning. Thanks for having me. So on last trading session, Nifty headed to 26,100 marks. However, we witnessed some profit booking at higher levels, but overall trend remains buy on decline. Even for the day, it took support near 25,850 marks, but base is shifting higher. We believe that till Nifty holds about 25,550, buy on decline could continue, and somehow the index has potential to head towards 26,000 and 26,277. There is a lifetime high for the index. So we'll continue to be with bullish stance with buy on decline stance. However, it might remain consolidative for next few hours, but I think next leg of rally cannot be ruled out given the data which we have. Now talking about Bank Nifty index, Bank Nifty has been outperforming the broader market. However, it has been consolidating in a range, but till it holds above 57,500, overall up move could continue towards 58,500 to 58,750 kind of level. So both the indices are looking positive, looking for buy on decline stance. If I look at the data setup, India VIX is at comfortable levels. Put call ratio has been holding well, and FI's long short ratio has recovered well in last 4 to 5 days. So I remain looking for buy on decline stance in the market. Now talking about trading ideas, first trade is going to be on buy on Nalco, National Aluminium. We have seen that most of the metal counters are doing well, and Nalco has given a consolidation breakout on the daily and the weekly chart. In fact, the stock is now trading at multiples month high level. We have seen build-up of long position led by put writing, so one can buy Nalco with a stop loss of 232, and this stock can head towards 251 kind of level. Second trading idea, that is buy on Chola Finance, positive on the BFSI segment, and Chola Finance is one of the strongest name. In fact, we have seen the build-up of long position. The stock is now entering towards the new lifetime high territory. So with support of 1670, one can buy for an upside target towards 1770. And last trading idea, that is buy on BL, that is from the defense spec, and I believe selective defense counter could do well. And here we have seen a consolidation breakout of last 25 days. Stock is holding well above its key moving averages and holding well above its rising trend line. So one can buy BL with support of 412, and this counter can head towards 444 marks.
Thank you very much for that. Get into a break. On the other side, Manisha Gupta will join in to talk about commodities. Stay tuned. Welcome back. It's time now to talk commodities. Manisha is now joining in and she's got her eye on base metals. Manisha, what's happening here?
Well, looks like money flowing into this segment finally, and we're looking at strong gains when you look at the last 1 week or last 1 month as well. The major trigger clearly has been the plenum meeting in China going on, where they will set policy for the next 4 years, and expectation that there could be some stimulus coming in for infrastructure, real estate, etc. So the metal price is really hoping to see something there. I'll start with copper prices, which have seen a 2% of gains in the overnight market, and with that, we are up 2.5% for the week as well. For copper, it has been series of supply disruptions clearly coming in. If you look at the news coming in from Dominican Republic, there are nearly 80 miners trapped due to partial collapse of the mine therein. That is number one. Second is the halted activity in Indonesia's massive Grasberg mine. That is two. Third is disruption also coming in for the Hindalco's LT and Tenetine mine underground. And then, of course, there are concerns coming in from various other mines in Chile as well. So wherever that you look, when it comes to major producing countries, there is something or or the other happening, and that is supporting copper prices, trading well above that $10,000 a ton mark at this point in time. But the major gains in the last couple of sessions clearly have come in for aluminum, up 2% overnight, and that brings us to 8% of gains in last 1 month when it comes to aluminum. Here as well, it is about the supply concerns. Remember, China has capped the output to around 45 million tons. That is exactly what they did last year as well. So there is those curbs in production continuing there. And then Iceland key refineries are also facing electrical issues. That is the reason we've seen gains onto that one. The markets also are looking at Alcoa shutting in their Kwinana refinery in Australia. And when you look at the stocks in aluminum, they have declined by nearly 25% in this year. Just about at 484,000 tons is where they stand. I also want to talk about zinc because we've seen good gains into this one as well. So copper, aluminum, and then zinc. Prices have gained up by 2.5% in the last 1 week, and we are trading above $3,000 a ton onto this one as well. For zinc also, while the mining zinc is available enough, it is the refined zinc which is looking at some concerns. There are persistent bottlenecks among smelting operations in Japan, in Kazakhstan, that has been leading the prices on the higher side. The refined zinc production is expected to decline nearly 2% in this year, while the mined zinc could gain up by 6.3%. So exactly as I said, there's no shortage of the core zinc here, but the refined zinc, which is the usable zinc, is not enough available. Also, when you look at the LME stocks, we've seen very sharp decline onto that one as well. 37,000 tons is where we stand right now. Vis-a-vis 230,000 tons is how we started this year on. So clearly, every fundamental factor that you're looking at in the international markets is supportive of metals at this point in time. What the street will also want to watch out for in the coming days is the US and China trade conversation that is slated in South Korea in the next week there. And then it is also about the US consumer inflation data in the US markets that is expected today. So between these two and, of course, the China plenum meeting, the markets are anticipating that we are looking at bullish cues coming in for metals.
Thank you very much for that. Slip into a break. On the other side is our special segment, Indianomics. Lata will be in conversation with a whole host of experts on Diwali sales and whether it will fuel India's GDP.
Welcome to Indianomics. The government went all out to stimulate the economy ahead of the Navratri Diwali festival season, with the lower GST kicking in bang on the first day of Navratri. Did the stimulus work? First cut anecdotal data is as follows. Tata Motors said its sales in the 2025 festival season jumped by 33% to 1 lakh cars. Auto registration data, this one compiled by brokerage Nuvama, shows the two-wheeler sales grew 20% from Navratri to Diwali over previous year. Car sales grew 17% and LCVs grew by 23%. Electronics goods data compiler Counterpoint says smartphone sales grew 10% by volume and 18% by value. Vijay Sales told CNBC it saw 20% growth in consumer goods durables sales this year versus a growth of 10% in the last festive season. And finally, brokerage sources, various brokerage sources tell us that the top e-commerce sites, JioMart, BigBasket, Blinkit and Zepto saw 65% to a 200% growth in average daily users. Now, to give us their respective experience and data, I have with me Mr. B.C. Bhartia of KEIT, or the Confederation of All India Traders. That is the brick and mortar traders. What I gave you was the app data. I also have Tarun Pathak of data aggregator company Counterpoint. I also have two economists, Abhishek Upadhyay of ICICI PD and Madhvi Arora of MK Global, to give us the top-down picture. Well, gentlemen and Madhvi, thank you very much indeed for your time. We were given to understand that electronic gadgets did very well. So, Tarun, I start with you. What numbers have you all been able to accumulate? How were the Navratri to Diwali sales compared to last year?
Thank you, Lata. So yes, very positive indicators. So the numbers are coming in, and I think we'll be coming up with the final set of numbers last week. But the early trends are indicating a very strong festive season this year, to a certain point that we are seeing a smartphone growth on volume 10% year on year, and by value even higher at 18%. So these are very positive numbers that are coming. In fact, the highest since 2020, when we have this COVID pent-up demand in 2020 festive season. And after that, this is the highest ever we have seen in a single festive season in the 5 years.
Okay. Any further data you can share on, say, specific consumer durables, non-cell phone, non-smartphone data?
Yes, we are seeing a very strong growth on TVs. In fact, 32-inch and above are growing in double digits year on year. We are seeing a very strong year on year across different consumer electronics, especially on laptops as well. In fact, the wearables also grew year on year. So overall, the positive sentiment, and this is coming across channel. It's not just the mainline versus online kind of split, but we are seeing this positive sentiments coming across different channels throughout India.
Okay. Well, let me come to the FMCG sales, the Kirana store sales. Mr. Bhartia, thank you very much for your time. Your press release very strongly said that if we thought e-commerce is taking away, or quick commerce is taking away market, that's not the case. You actually saw the reassertion of brick and mortar, sales. Can you give us some numbers first?
As per our research work, this Diwali, we can say, was a golden Diwali. In goods sector, we estimate sales 5.40 lakh crore. And in service sector, we estimate 65,000 crore rupees. This is a big number, and it is showing that consumers are coming back to market. We saw a lot of rush in all the market area. We call it as a golden Diwali. In addition to this, we see this friendship Diwali. You see, across board, we saw good sales right from rural area, right to BMW. Everywhere we saw good number of sales. This is backed by increase because of reduction GST.
Okay. No, Mr. Bhartia, 1 minute. Your 5.4 lakh crore is very impressive. But can you tell us what was the rate of growth? I mean, last Diwali mein year on year aapka kitna tha? And this year on year, what was the rate of growth? Was it 20, 25, 15?
last Diwali, we estimated 4 to 5 lakh crores. This we see jump of about 25%.
Okay.
And the jump is in all sectors. As shown by you in your screen, you can see increase in all the sectors across the board. In addition to this increase to the in the starters and
Got it. We have a problem with your audio, sir. We will fix it. But you know, if you can bring out that table which Kate put out on textiles, apparel, sweets, namkeens. I must have contributed a great deal for sweets, namkeens for sure, and textiles in a very, very big way. Not sure of the others. Well, let me come to Madhvi now. Madhvi, you know, you have a cohort of colleagues who are tracking individual companies and sectors. What is the macro picture you are getting? Are they telling you that this is a far better sale than previous years? I mean, just some comparisons.
So hi, Lata. I think there's been a very mixed trend across sectors if I look at the consumer behavior. Clearly, auto segment has been the biggest beneficiary of that. We've seen improvement across segments, be it a smaller segment of, say, of Maruti or Hero Motors, to the high-end premium cars as well. So that segment has actually seen across the board gains. But I think, beyond that, I'm not very sure whether I can really assume that this is basically a structural change per se, because see, last year the base effect was very different from what you have this year. Last year Navratris were largely in September and Diwali also was a little early. So this year the base effect also played out very well for certain companies in terms of their numbers. But beyond that, I'm not sure the discretionary space is actually showing across the board the same kind of enthusiasm. Clearly, as we were discussing, staples, for example, there's a lot of chaos in the near term because of GST like changes. Multiple MRP products are right now in the system. Distribution system and value chains are yet to be aligned. So we don't really know whether there's actually been an improvement in the staples consumption pattern. Of course, there's modern trade, which is also doing a lot of structural changes in the sector itself. Of course, QC has been over the roof. Fashion retail has done very, very well. And these segments, again, are actually, they were already doing very well pre-GST compared to other segments. Definitely, there's been some uptick in these segments, but I would still wait to understand whether this is, there is actually a trend beyond the festive excitement and the GST-led postponement of purchases that have played out in the recent 2 or 3 weeks.
Yeah, you know, that is why when we were presenting the auto data, and that will come up for you, the auto sales guys, Nuvama, for instance, gave us 2 sets of data. One, from Ganesh Chaturthi to Diwali, and another from Dussehra to Diwali. And clearly, the Dussehra to Diwali sales is brilliant. It's gone through the roof, indicating that some slack, which was not, purchases not made from August 15th to 22nd because people were awaiting the lower GST, and that got made up. So that clearly indicates that August to October is not very spectacular. It's flat, sometimes even negative. But, the September to October has been brilliant. Abhishek, I know you track, as a heat map, a lot of things. The rural incomes, for instance, have clearly remained higher. So it's not just the GST cut. It looks like the very good harvest and very low prices has also meant real incomes, especially in rural areas, remains very good. Can you, as an economist, take away a feeling that maybe GDP numbers have to be revised higher?
Lata, some of the data you mentioned on auto sales particularly is quite striking. That said, also it adds to the mixed but generally resilient data that you're seeing for Q2 otherwise also. So GST collections had started to pick up even before this demand surge happened. Also on the export side, we saw while exports to US were down 13%, overall exports held up well. So that augurs well for growth also. But I would be careful, like you alluded to also, in extrapolating this festive season demand-rated numbers going forward for various reasons. One, of course, big-ticket consumer goods demand is easy to postpone as well as prepone, and number of tailwinds likely came together to prop up these numbers. So I'll wait whether this is a trend shift in demand or not. Second, I would rather prefer to look at how mass consumer items whether the price cut from GST is being transmitted there and how demand is evolving there, because those are items for recurrent consumption and could lead to recurrent increase in or a more persistent increase in consumer disposable income. I will wait for more color on that front. Third, what we don't know from these numbers is what is happening to the services demand side. So on that front, we know one big segment is real estate services, and the news flow there has been more mixed compared to the demand for goods that we have been discussing here. And finally, for me, from growth outlook standpoint, the big elephant in the room is really when high US tariffs are going to come down. So while news flow is positive, still not clear when that will happen. So I'll wait for that also. Okay. So not changing our growth numbers for now, but bias is to upgrade them once we get the Q2 numbers.
Okay, so you've answered the question I was going to ask you. Even if you have not upgraded the numbers, there is an upward bias to your numbers, is what you're saying.
Yes, so Q2 could be tracking maybe above 7%. We don't have government spending numbers yet for September, but could be tracking above 7%. So that would mean first half growth is closer to 7.5%. If these tariffs come down quickly, then second half growth could be 6.5 to 7% rather than 6 to 6.5.
Okay.
So inclination is to revise the numbers towards 7% from current 6.7% we have, but we wait for more data.
Okay, Mr. Bharti, actually when I spoke to a lot of people who are not willing to come on air because, their results are not yet announced or whatever, they have no media policy. The retail store guys said that the first 6 months of the year, it was thanda. People weren't coming. Although there was a big income tax cut, which put 1 trillion rupees in our hands, one didn't see the impact. But there was something about the festive season and the GST cut that it triggered a flood of footfalls. Is that your experience as well? That the first 6 months were thanda, but some magic has definitely worked in the month of October. Mr. Bhartia.
Yeah, the consumers is linked to future. If we feel that future is bright, they come out.
I don't think we're not able to understand you, sir. There is an audio which we have to set right. Maybe we will put you on phone in a minute. Tarun, is that a feeling at all? That things were very quiet in the first 6 months and there was something magical post-October, a spring in the step. Did anyone tell you that? Do the numbers tell you that?
Yes, definitely. I think I fully agree to that. So when we do our consumer retail audits, especially on the electronics, we were seeing almost a single-digit decline in the first half in terms of consumer footfall, and most of the retailers were saying the same. But as we move into the second half of the year, there was positive sentiments that started somewhere late July and early August with the Independence Day sales and everything. And then the GST cuts happened. Everything was waiting for this festive season. So there was surely a pent-up demand. But the clear thing is retailers, the feedback, the collective feedback, what we are getting from the ground is not even there was more footfall, but also the incremental spending on electronics that has happened this year.
Okay.
So overall, that was a very positive for them, because compared to the last year, things were a little bit down and mainline were really struggling in terms of the offers and getting consumers into their stores and everything. So that started coming up, and that was a real positive decision in terms of electronics, especially smartphones.
Okay, that's good to hear. And as you gave a very big number, since 2020, when of course there was a burst of buying, we have not seen such a rate of growth. That is a very telling number. Madhvi, your cohorts, your colleagues, are any of them revising their earnings upward? And more specifically, the question like I asked Abhishek, are you in the front foot to have an upward revision of your GDP numbers? So both corporate earnings, are your colleagues doing anything, and your own macro number?
Yeah, so there's been clearly a shift towards some bias towards upgradation, but I don't think across the board they are doing it. As I said, auto sector has been the biggest beneficiary. Clearly, there's a case for revision on the upside. But I think for staples, they are still waiting and watching. As I said, there's a lot which is happening structurally as well as in terms of their value chain becoming much more synchronized. So I think they would wait at this point in time. In discretionary also, there's been a very mixed trend. I'm not finding excessive excitements in my analysts' view in terms of them really upgrading their thought process or their earnings at this point in time. But overall, of course, some sectors like auto, which are heavy sectors in terms of their market positioning, definitely would lead to overall upgradation in earnings for this for the Nifty. But that said, for the growth aspect, I agree with Abhishek. We would still wait and watch and understand how much is the trend coming out of this noise for us to really ascertain that consumerism actually making a massive more delayed retail therapy that we're seeing at this point in time. I'm not very sure whether the income effect has actually become so positive that we are going to be seeing this continue beyond the October-December period. There's also a base effect which is going to play out positively for October and the delayed purchases. So, of course, second quarter GDP, which will have a deflator effect, plus the third quarter, which will have the sequential gain, would augur very well for us. So maybe we will be seeing probably GDP growth actually coming out much higher than 6.5% that we are estimating for the year. But I'm still not sure whether we are in for a V-shaped recovery in India or whether it's going to be a U-shaped recovery. But one thing is for sure that consumerism, which was actually downtrending from the urban sector point of view, has at least found its trough, and it's now going to be gradually going up if things continue.
You guys have given me the big takeaway that I was looking for. That, when you enter the festival season, you did not expect the kind of bump up. Now, how much it will be is the next question I'm going to ask you after the break. How much of this can sustain? Or is this a one-time burst? That question will be after the break. Bazaar viewers, you will get to hear the whole show after market hours. For you, it will be time for Chartbusters.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
LME aluminum prices hit a 52-week high, sparkling a rally in Indian aluminum miners. Stocks of Nalco, Vedanta rise, Hindalco as well higher. Metals is top sectoral gainer today.
Stocks of oil and gas companies, they rise, particularly ONGC and Oil India, as crude oil prices surge following Trump's administration sanctions on Russian oil companies. Brent crude prices now trading around $66 a barrel.
Cipla trades higher, or rather with cuts after the company has signed an agreement with Eli Lilly for distribution and promotion of weight loss drug in India. Analysts expect a 3% addition to Cipla's revenue in 3 years.
Colgate-Palmolive trades with a cut of around 3% after the company reported a weak set of September quarter numbers. As expected, earnings took a hit and transitory disruptions with distributors as well as retailers.
Shares of Federal Bank rise after the board has approved an issue of preferential convertible warrants to Blackstone affiliate for nearly 6,200 crore rupees. Warrants issued at 227 rupees a share allow Blackstone to pick up nearly 10% stake in the company.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam. Well, Mangalam, markets a little bit nervous sitting at higher levels today yet again after trying to go above the 25,900 mark, some kind of profit taking, but I think still it'll have to be par for the course. After the kind of rally that you've seen, getting into expiry week, taking some money off the table, I think it's par for the course.
Par for the course will be seen, what upside triggers do we have right now? Because in terms of numbers, we've had the IT numbers, a large part of the IT numbers, large part of the banking numbers and Reliance. All of them are out of the way. So the next queue of triggers is something that the market will be watching out for this morning. However, the advanced decline ratio is favoring the decliner. So that's something that we'll watch out for too. 25,750 to 26,100 thereabouts. It's the broad range that we've been meandering over the last few trading sessions. But let's talk about some new listings. In an otherwise, tepid sort of market over the last two trading sessions, we've had one listing, which is Midwest, that's listed at a 10% premium to its issue price. Importantly, let's see where the company goes from here, what kind of diversification plans that they have beyond the black granite. We have Ramchandra Kolareddy, who's the promoter and CEO at Midwest, joining in. Thanks a lot, Mr. Ramchandra, for joining in. Congratulations on your team and to your team on this momentous occasion, and wish you season's greetings as well. So this Diwali has brought you some good joy and a fair amount of wealth to your investors as well, 7% to start with. But what the street would really want to know from here on, what is the scalability that you have on your revenues as well as EBITDA margins? If I look at your EBITDA margins between FY23 and FY24, there was a near 10 percentage points jump. Now it's at that 27% mark. What is the kind of EBITDA margin run rate that you can expect, which is sustainable from here on? And what kind of revenues do you believe you can post?
Sure. Most of the EBITDA has been driven by the innovation conversion from fossil fuel-based energy to green energy. We have a lot of electrification happening, so that's a one-time which is going to continue. And in terms of the largest tailwinds are going to come from our new businesses, which is quartz for engineered stone, as well as solar glass industry, which we have commenced production last quarter. And that is in the short term. And in the medium term, the growth drivers would be the heavy mineral sands project, out of which we will supply the feedstock to the titanium downstream industries, as well as the byproduct monazite, which will cater to the rare earth industry.
So what kind of margins can you post at peak, and what is the sort of revenue run rate that one can post? It's currently at around 150-200 crores per quarter. Do you see it going 250-300 crores in the very near future?
That's all the efforts are in that direction. But what I would like to highlight is our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in. We are sitting on a resource which is rare and supplies to a global feedstock in terms of the granite. And if you look at the margin profiles of similar companies, though they are not in India, outside India, for example, Iluka, which will be a reference in Australian exchange for heavy mineral sands business, their margins are upwards of It's listed on ASX, upwards of 40s. And in rare earths, you can always refer to companies like Linus Rare Earths, which is also listed overseas, and you can look at those numbers. So I think a lot of growth drivers, not only from the product point of view, but I think from the supply chain point of view, where we are at a point in history where world is looking forward for these materials, which we have gotten into a few years back right now, and they want the supply source to be outside China. I think that is what will be driving the margins also.
All right. Hi, Mr. Ramachandra, and congratulations to you, your family, as well as the team with regard to the listing. I saw the younger generation as well there ringing the bell, so always feels good. That said, trying to pull out a couple of numbers from you. You said that margins are sustainable around this 27% or thereabouts, what you've reported. What about revenue growth? You've been growing in double digit. Do you think you can do this? And if that is the case, then by FY27, you should be close to around 850 crores of revenue at least?
The growth in the granite business is sustainable. You can see the growth over the last few years. But I think biggest tailwinds are happening on the quad side for us for FY27. And I think we are looking at good growth, I would say. I don't want to throw out a number there, but we are looking at good growth.
What is your revenue potential, sir?
Revenue in terms of potential, we have a quads right now, first phase which have commenced, which is around 250,000 tons at an average of 10,000 rupees per ton is what we're projecting, and we're doubling up that capacity with the proceeds of the fund of the IPO. So, and in the long term, we are having a large resource of quads. So with the solar glass business growing at 30% CAGR, I think our challenge will be to take the growth out there more than the consolidation.
So quartz business itself, quartz business can do around 250 crores. You're saying you're doubling that, so that has a potential of around 500 crores. And the current business potential is how much?
That's right. So current business, we are growing at last year's the CAGRs. You can take those numbers, and our aspiration is to be in line with those.
Okay, so 10 to 12% is where your granite business grows. This additional kicker comes in from quartz. You said solar business as well. So at peak, say 4 or 5 years from now, you can very well be a 1200 to 1250 crore company. Would that be off, or was it fair in that direction?
More or less.
More or less. All right, take that point. And Black Galaxy currently accounts for what? Black Galaxy Granite. That accounts for about 70% of your current revenue. With all these diversifications that you are doing, where will that be in your overall revenue mix? And at the same time, what will your overall margin look like then? Because some of the international peers that you're talking about in quartz, etc., are doing 40% plus. So at over 1200 crore revenue, what will your mix look like? And at that time, will your margins be closer to 35, 36%?
That's the aspiration we have, because the peers are almost at those levels. And India, fortunately, we have a lower cost base, which helps us. And we are blessed with natural resources closer to our manufacturing plant. So these are all bulk products which have high logistic costs. So we also have advantage there. So given that, yes, if you're looking at a 3 to 4 year time frame, we will be heavier on the new verticals, which is quartz and HMS. I think that will be their tilting point.
So that will be more than 50% of your contribution? Do you have a target?
Yes.
Okay. All right. And quickly, China, I think you get around 50% of your revenue from there. Any plans on de-risking yourself from China? What would the ideal revenue contribution coming from China look like?
Right. So China is a very peculiar, and the market has supported us for the last 8 to 18 years. And China, what's happening in China is the China has become the EPC contractor for the world. So if you look at all the skyscrapers, all the malls, all the tall buildings globally, majority of the EPC companies are the Chinese companies. And their supply chain inherently lies within China. So for example, if you have a $100 million building and you need a $2 million worth of stone, they're not going to import from source of Italy or India or any of these countries. So the raw material goes from all these countries, like from us, and then they do the end fabrication and installation in any given country in the world. So that has been the tailwind. And the India is growing very fast for us. Middle East is very strong for us. So if you look at the historic numbers, China has been coming down. But at what point our aspiration as a company is to get the best value for our product because it's a unique product available only in one village, and we want to make the best of it. And since we follow mostly no credit policy, and China is no credit market, I think as a company we will take as much as we get from there. But we're seeing a lot of tailwinds in India and Middle East.
Take that point entirely. Tailwinds is what you're seeing, but will be very interesting to see, how much of that is already in the price, given the sort of pop that we've seen at the open itself. If I back calculate the numbers that you're talking about, 1,200 crore in terms of revenue by FY30, 35% margins would give you about 400 crores of EBITDA, for 20 crores to be specific. And that makes your company valued at 10 times EV to EBITDA when you look at it from an FY30 perspective as well. Interesting to see how the street reacts to that for a mining company. But thanks a lot once again.
I would just like to add that I would just like to request to look at the peer companies that I've just mentioned, and I think you can figure out the numbers.
Right, we'll do that. Thank you so much for joining in and giving us this clarity. With that, we take a short break, come back on the other side, more on the markets and a lot of stock-specific action.
Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, let's welcome Manas Jaiswal, technical analyst, who joins us on the show. Hi, Manas. Good morning. Good to see you in. Buy the dip or not?
Good morning, Nigel. So definitely, because yes, we have seen some profit booking, but if you are talking about the trend, I think till Nifty is trading above 10-day moving average, which is placed near 25,600. I think the market undertone is definitely bullish. So even at current levels, positionally, you can take a long position. Keep your stop loss below 25,600. I think the next target comes near 26,250. So for almost 400 points up move, you can take a long position here and keep the stop loss 25,600 on Nifty. Even Bank Nifty is looking good because here also we have seen some correction, but again, till Bank Nifty is trading above 57,300. I think the main trend is positive. So here also positionally you can take a long position. Stop loss should be around 57,300. And I believe that Bank Nifty has potential to test 59,000 soon.
All right, 59,000 for the Nifty. Bank positionally positive on the frontline indices. What about individual stocks? Are you going long with some of them as well?
Good morning, Mangalam. So first one is a buy call on Blue Star, where stock has given a fresh breakout. This is a black pattern breakout. The stop loss should be around 1994 and target would be around 2100. And second is a buy call on Chola Finance, where here also if you see the trend is positive, stock has been making higher tops and higher bottoms from the level of around 1500. And today's stock has given a fresh breakout. So take a long position here. The stop loss should be around 1689 and target would be around 1775.
All right, Manas, thank you so much for joining in and giving us your call on the indices as well as individual stocks. Wish you a good Friday and a weekend. With that, get you some more ideas for profit as well. This one comes in from our colleagues at Money Control Pro. And today's idea has Lekha Badlani's thoughts on that. Let's go across to her.
Stock pick is a leading auto ancillary firm, Endurance Technologies, which I think is well positioned to capitalize on the regulatory and industry shifts, particularly in the two-wheeler segment, which contributes 80% of its standalone revenue. Now, the upcoming ABS regulation, that is the anti-lock braking system, which is made mandatory for all the ICE as well as electric two-wheelers, will be effective from January 26, and it presents a significant growth opportunity for Endurance. The company aims to capture at least 25% of the 1.5 crore two-wheelers that are currently without ABS. So that is one. Secondly, Endurance is well placed for the transition to electric vehicles with orders from major OEMs like Bajaj, Ather and TVS. Even in Europe, where the overall passenger vehicle demand is soft, the EV segment continues to perform well. Now, the company is also expanding into high margin segments such as battery management system and four-wheeler suspension systems. It is also diversifying in the non-auto space and has secured a 200 crore worth solar project from a Spanish client. But to support growth, Endurance is investing in capacity expansion, especially for ABS system and EV components. It is currently trading at 32 times FY27 estimated earnings, which is in line with its historical average. Now, with strong fundamentals, diversified offerings and regulatory tailwinds, I recommend a gradual accumulation of the stock.
All right, Lekha, with that, we'll take a short break, come back, get you more on the markets and a lot of individual stocks which are buzzing around. Stay with us.
Welcome back. Market's a little bit jittery, but one space is doing very, very well are the aluminium companies. And earlier this morning, I told you that that could be the sector to watch for today. Let me tell you why. First, LME aluminium prices have breached the $2,850 per ton mark. So the stocks in focus will be Hindalco because the India business directly gets linked to the LME aluminium prices. Nalco as well, because besides alumina, they also send some portion of aluminium. So that as well as a direct beneficiary. And for Vedanta, the largest proportion of their value comes in from the aluminium business, which should get demerged in the coming few months. Why are aluminium prices moving up though? Because demand-supply dynamics have become very, very tight. In fact, there's a smelter in Iceland that has been put out of supply temporarily, which has affected close to under 100,000 tons of production. So lower inventories, demand-supply gap, and basically some of these units capacity going out for a short while. That's what's driving up LME aluminium prices. But Hindalco stands to gain as well. Besides this entire global monetary easing that's taking place, which will be good for base metal prices. The reason that Hindalco's Novelis business will be in focus is because Alcoa was up more than 10% overnight. Because Alcoa's CEO said that the current prices and the Midwest premium, they fully cover the impact of the tariff impact. So remember, the street was cautious on Novelis because they said that the profitability is going to get hit. But the Midwest premium, which was around $500 per ton, has moved to around $1,500 per ton. And since there is no breakthrough between the United States as well as Canada, well, the Midwest premium could remain elevated, which in that case, it will more than offset the negative impact of higher tariffs. So it's a positive read-through for Novelis, and that's why Hindalco. So that one as well, up 3.5%.
Take that point, Nigel. Thanks a lot for that. So explaining us why some of the aluminum stocks and Hindalco in particular is higher as well. With that, we're out of time on this edition of Chartbusters with the news that the Nifty's extended its cut a little bit more than what it was when we started the show. And the mid-cap index too has moved into the red. In fact, as we speak, flitting between red and green. Let's see where that one goes to. Thank you for watching. Out comes up next.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormis Fadakia. And today we started on the back foot. Yesterday we saw those massive gains. We could not sustain that. But today we were already in the red. And right now we are closer to the day's low as well at the 25,828 mark. Yes, it's a cut across the major indices. Mid-caps absolutely flat with some positive bias. But other than that, the Bank Nifty, that is down 0.4%. Banks continue to be on our radar. That's the big story for today as well. So we'll discuss that in greater detail. But for now, that index is at the day's low. The metal index is batting for the bulls. That is the top gainer, up 1.1%. Realty is also doing well, 0.4% higher there. But other than that, it's the FMCG pack, which is under some pressure. Media too, seeing some cuts. We have the IT index, which is lower. And the small cap index too is trading in the red right now. A lot of moving parts when it comes to earnings. We do have the trade deal negotiations which are going on as well, and those sanctions that have come in onto Russian oil companies, which has impacted crude oil prices as well. But let's talk about the big movers that we're seeing in the broader markets. Hormus has gone across to the wall. He's here to put the spotlight on top movers in the market. Hormus, tell us more.
Well, in the Friday fever today, the lots of broader market names that are doing well, and look at the volumes, and that has always been the highlight of this segment, right? Look at PTC India Financial Services, the earnings reaction and 13.5% higher on the stock. The biggest single day gain that the stock has seen since July of last year is the third straight day of gains. But even in the first couple of hours of the trading session, the volumes are already the highest since December of 2023. So volumes are already at a 2-year high when in just the first couple of hours of the trading session. And we have had almost 3 crore shares that have been traded on the stock. The 20-day average here is only 1.5 lakh. And as a result of today's move, the stock is broken above all of its 3 key moving averages. All of them were in very close range. But despite this move, the stock has been an underperformer in 2025. It's down 8% so far on a year-to-date basis. JG Chemicals, it's a recent listing, but that too is witnessing the 5th straight day of gains today, 8% higher on this stock as well. And this 5-day winning move has resulted in gains of around 12% for the stock. Even today, for this stock as well, the volumes are the highest in 3 months already and counting. We've had close to 10 lakh shares that have been traded today. The 20-day average is just 30,000 shares. And the stock is now trading above its 100-day moving average of 450. And now the next level to watch is the 50 DMA, which is at 454. So very close to both of these levels. And with the stock being, despite a recent listing, is almost more than doubled from its IPO price of 221. Metals were, as a stock, as a segment, were in focus today. And you look at Nalco, Vedanta, the aluminum linked names, look at the volumes here as well. Nalco has had almost 2 crore shares traded. Vedanta has had 1.5 crore and significantly higher in comparison to their 20-day average. And even Gravita India, 9.5 lakh shares traded. The stock is up almost 7 to 8%. And the 20-day average here too is just around about 65,000 shares, Sonal.
Okay, all right. Thank you so much for joining us with all those important stocks. A lot of them actually surging on big volumes and responding to some news flows as well. Let's talk about the big mover then, Cipla. That is on our radar. A deal with Eli Lilly to distribute and promote weight loss drug in India. Let's go across to Ekta for more details on the same. How big is this, Ekta, for Cipla?
Well, yes, an important development which has come in for Cipla because Eli Lilly and Cipla have signed an agreement for tirzepatide in India. Now, to put it into perspective, tirzepatide is basically Mounjaro. That is how the drug is branded by Eli Lilly and sold globally, as well as launched in India earlier this year. Now, this agreement is basically for distribution and promotion of tirzepatide in India, and Cipla will be marketing this drug under a second brand name, which is called Urpeak. What this will do is that it will enable access across the country beyond cities where Eli Lilly is already present with Mounjaro. So the deal includes the fact that Lilly will be manufacturing and supplying Urpeak to Cipla, and the price will be same as Mounjaro. So what Cipla will be doing is that they will be using their distribution strategy and allowing more access to Mounjaro, or rather Urpeak, in areas that Eli Lilly cannot access easily. Now, in terms of what the analysts are assuming, it could possibly add around 3% to Cipla's domestic revenue and around 1.5% in terms of EBITDA in the next 3 odd years. The GLP market itself is extremely large for the Indian market, or it could be growing to around $1 billion in terms of size over the next 4 years, and hence it is a lucrative market to be in. Also, Cipla has tied up this deal, which is expected to be an innovative deal, early on, right before semaglutide, which is basically Ozempic, Novo Nordisk's drug, which is a GLP-1 drug and competitor to Mounjaro, will be going off patent in January. So this basically comes ahead of that and possibly will allow Cipla to gain some amount of market share when it comes to Urpeak or Mounjaro, as it is branded by Eli Lilly. Also remember that Mounjaro has been gaining a lot in terms of market share in India. It's risen to be one of the top drugs in the Indian market. It's generated sales of over 200 odd crores since it has been launched.
Indeed, and stocks witnessing some profit booking today, Ekta. And the other one, of course, always in focus at the time of its earnings, as Laurus Labs. That too is witnessing some profit booking today. The numbers came during market hours yesterday, but it had an earnings call. So take us through some of the key highlights of the earnings call and what brokerages had to say about Laurus.
And here I heard my audio.
I was talking about Laurus, Ekta, the conference call and the brokerages as well.
Well, yes. Well, for Laurus Labs, I'll just concentrate on a couple of conference call takeaways. They've guided for around 2,000 crores in terms of CDMO sales in FY26. They are on track to achieve this guidance because the first half sales stood at around 970 odd crores. The management expects CDMO sales to be driven by animal health in the next few years. They've attributed the high antiretroviral sales this quarter due to timing and slightly higher demand, but they do not view ARV to clock material growth in coming years. The gross margins are expected to remain around 60% versus the earlier range of 50 to 55%. They're expecting an improved asset turnover. The margins are likely to improve further as the company shifts towards small and large molecule CDMOs. The company has announced $600 million in terms of capex over the next 8 years for their new Vizag site, and they plan to invest in modalities such as anti-drug conjugates. The company also, in fact, will be working on an anti-drug conjugate asset and will be filing an IND application soon. The likes of Jefferies has an underperformed call, and the target price, however, has been raised to 700 rupees. According to them, Q2 has beaten estimates. Goldman Sachs has a sell call, target price 775. It was a strong Q2 according to them, beating estimates as well. And DAM Capital has a buy call and a target price of 1,083. They expect further margin expansion soon.
Take that point. Thank you so much, Ekta, for joining us with all those important details. Those are some pharma stocks on our radar. But defense stocks, they are also buzzing in trade after a nod for capital acquisition proposals worth 79,000 crore rupees for the Indian Army, Navy and Air Force as well. Upasna is here with more details on this one. Upasna?
Well, DAC clears procurement proposals worth 79,000 crores, taking the year-to-date total for this financial year to as high as 2.5 lakh crores. Now, let us look at what are the key beneficiaries according to Elara Securities on the back of this. Indian Army, NAG missile systems, Bharat Dynamics will be in focus on the back of this, and the order estimate here by the brokerage is 2,000 crores. Next up is ground-based mobile system. BEL is the key beneficiary here. Coming to Indian Navy, landing platform docks, various shipbuilders such as Cochin Shipyard, MDL, GRSE will be in focus on the back of this, and the order size estimate here is as high as 60,000 crores. Now next, moving up to naval surface gun, BHEL and GRSE are the key beneficiaries here. Advanced lightweight torpedoes, Bharat Dynamics with an order size estimate of nearly 500 to 1000 crores. And lastly, coming to electro-optical infrared search and even track systems. On this counter, BEL will be the key beneficiary. So all in all, we'll be watching out for all these counters on the back of these key beneficiaries.
Upasana, thank you for that update. Defense stocks, well, they're in the green, but not as significant a reaction as anticipated. Take a short break. On the other side, we put the spotlight on the financial segment, the slew of large deals that have been taking place over there. That's our big story on the other side of this break. And we'll also be joined by former SBI Chairman Dinesh Kumar Khara and Prateek Shah from EY India to discuss Blackstone's latest 9.9% acquisition in Federal Bank. Stay tuned. Welcome back. 65 points lower on the index, but what has slumped to the lowest point of the day is the Nifty Bank. Now, the index is down over 200 points. It's now below the mark of 58,000 as well. And it's almost off around about 700 points off the record high levels of 58,577 that it had hit just a few days ago. But since we are on the subject of banks and the financial services sector, Federal Bank has now marked yet another big acquisition within this space after Blackstone has now chosen to acquire close to 10% stake in the lender, and this comes right on the heels of that mega RBL Bank deal, the deal that we saw in Yes Bank and we saw in IDFC First Bank earlier in the year as well. So what is the buzz surrounding this space? Gaurav is here with the lowdown of all of this. Gaurav.
Well, yes, when we look at the financials, it's actually raining capital is what we can say, because in the Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself. Now, it seems the wave of money isn't slowing down anytime soon, because the latest headline, the deal that we saw, is Federal Bank and Blackstone. Now, Blackstone is set to invest around 6,200 crores for 10% stake in the Federal Bank, and this will be through preferential issue of convertible warrants at a price of around 227 rupees per share. Remember, the conversion will also make Blackstone the largest shareholder of the bank, and it's not the latest. When we look at the series of other high-profile bets that we have seen in the year, let's also not forget about the recent amount of money that we have seen flowing in RBL Bank. Now, on 18th of October, Emirates NBD, now that announced a plan to invest up to 26,800 crores. Now, this is around $3 billion for 60% stake in RBL Bank. Now, again, this is through the preferential equity at a price of 280 rupees per share, and this is actually the largest foreign direct investment that India's financial service sector has ever seen, and this will also make Emirates NBD the promoter of the bank. And this is not just going in the banks, but it is also the trend seeing in NBFCs as well. Sanman Capital, for an instance, when we look at the deal earlier this month, Abu Dhabi's ICICI, that they committed around 8,850 crores for as much as 41% stake in the company, and at the same time this will also trigger the open offer for mandatory 26%. Now, this is the biggest capital infusion seen by any investor in NBFC, and at the same time with this, IHC is also set to become the promoter of Sanman Capital. Meanwhile, secondary markets, they did not fall behind. When we look at these markets, they are also reshaping the ownership pattern, because when we look at Yes Bank, we recently saw Japan's Sumitomo Mitsui. Now, that is increasing its stake almost to 24.2% after an addition of around 16,300 crores investment through open market in September. Now, that will make SMBC as the largest single foreign shareholder in Yes Bank, but it will not be marked as promoter. But at the same time, private equity firms, they are taking their bets, because let's not forget about IDFC Bank as well. Warburg Pincus invested around 4,876 crores in IDFC First Bank, and at the same time we also saw ADI infusing another 2,600 crores for about 5.1% stake in IDFC First Bank. So whether it's banks, NBFCs, the message is very clear. Global investors, now they're betting big on India's financial story. And the stock price, when we look at the stock price movement also, they are not disappointing. In fact, when we look at some of the stock prices, for the last 6 months, RBL Bank, they have delivered around 60% of the returns for investors. We also have IDFC First Bank, Sanman Capital delivering more than 30% return to the investor. Now, the question is this just a smart capital chasing growth, or the beginning of structural re-rating for India's entire financial sector? Well, whatever the answer is, it is definitely that the investments are telling one thing for sure. Sentiments around Indian financial sectors, they are becoming strong, not by just foreign investors, but also by the domestic investors, by the way that we have seen flows going in banks as well as NBFCs in this year so far.
Thank you, Gaurav, for summarizing that for us. Interesting moves in the financial space. In fact, we'll take this conversation forward. Dinesh Khara, the former chairman of SBI, and Prateek Shah, who is the partner and national leader of financial services at EY. They are joining us now. Gentlemen, good morning. Thank you so much for joining us. Mr. Khara, I wanted to understand your point of view on this. What is driving this sudden surge in foreign investments that we are seeing? And this is largely in mid-banks. From a banking perspective, what is your take to the big update that has come by in the banking space?
Well, I think when it comes to the kind of investment which you have seen, we can broadly classify them into two. One is the strategic investors, the one like the SMBCs, and also when it comes to the ENBD, they are more like a strategic investors. And they have some presence through NBFC or their local branches, branches of the foreign offices. So I think they had some flavor in terms of what the financial sector is. And they actually are trying to ride on the positivity in terms of the better managed balance sheets and also strong opportunities for growth in the Indian economy. And that is very clear considering the fact that ENBD has come in with about, they can go up to 60% of the RBL bank. And likewise, even in the SMBC also, they have come in up to 24.6% and all. So I think one, they have a flavor of the Indian market, and secondly, they are quite optimistic in terms of the growth of the real economy, which actually gives the right of growth for the financial sector also. The other investors who have come in, they are more in terms of the private equity, and likewise even in the NBFC space also, IHL, which has come in Samman Capital, even that is also about 41% kind of a stake and also becoming a promoter. They are having a long-term bet in their mind. Very clearly, it has been established. So having said that, I would say that it is nothing but a confidence in the India growth story and also the better and the stronger balance sheets of the Indian financial system, which has attracted this kind of a foreign direct investment. When it comes to the private equities, even for that matter, when it comes to Warburg Pincus having invested into IDFC, even they had invested into IDFC earlier also. Likewise, RTI investing into IDFC, even they had also invested into this bank earlier. So I think they had exited, but now they have again re-entered into this space. So again, they are seeing that the trend is positive in terms of the economy, and also it's a good opportunity for them to really have the yield on their investment. Now the recent one, which is Federal Bank, Blackstone taking stake in Federal Bank to the extent of 10%. So I think Blackstone has been there in the country for quite some time. They have worked into the financial sector, into various other entities, and it was a good opportunity. And the reason why they are all picking up stake in the mid-sized bank is that because the growth opportunity among the mid-sized bank is significantly higher. And also with the improved capital, their ability to undertake risk also goes up. And also, to my mind, there's an excellent opportunity into the SME space, which perhaps the mid-sized banks would like to really tap now. Because earlier they were all focusing on the unsecured retail lending. But to my mind, the decent opportunity into SME will probably be very, very promising various area for the mid-sized banks.
Interesting. Mr. Khara, just before we get Prateek into this conversation, you've been the head of India's largest bank, and you've seen the macros from a very close quarter. Now, with all of this, you mentioned this expresses confidence in the India growth story. Now, does this also open up doors for further deals and for further large institutions to participate in the India growth story? Because all of these investors are not small by any means.
I fully agree with you. And with the way these investors have come in now, I would say that some of them, for instance, CNBD, SMBC, etc., were having a familiarization with the Indian economy for a...
What is Blackstone saw good opportunities?
So and they could actually figure out that with those experiences and the opportunities, they actually have shown their confidence. So I would say that what you mentioned in terms of the possibility of other investors also looking at India, I would say that it cannot be ruled out. There would be, because when it comes to the India growth story, and if at all we're in a position to achieve 8% sustainable growth, I think the financial sector will be the one which will have a very decent run in a foreseeable future. And from that point of view, it would be very attractive for the foreign investors to really evaluate these opportunities.
Take that point. Let's get in Prateek Shah as well in the conversation. Prateek, thank you so much for joining in. What is your take first up on this big change or big investment that we're seeing in the banking space? And do you think this changes the competitive landscape in the mid-sized banks? As Mr. Khara also mentioned that there are more growth opportunities that we'll see in medium-sized banks versus large banks. And how does it change their balance sheet overall?
I agree with Khara Saab also. I think for Indian banks, this inflow is not merely about balance sheet expansion. It is about access to long-term patient capital that can fund credit growth, really help with technology modernization for a lot of these institutions, bring product diversification, especially at a time when domestic mobilization, has been a challenge. And obviously, the various investors, depending on whether it is a private equity or strategic investors, especially the strategic investors like ENBD and SMBC for that matter, will bring in a very different take in terms of risk management, digital capabilities, product expertise. And given wealth management as an area which is now having significant tailwind, and wealth is no longer limited to metros and other parts of the country, I do believe, there is much more opportunities. There is MSME, consumption is picking up, wealth is on a different trajectory. So I think the opportunity to arrive at that greater than 7% growth, this capital, especially patient one, is a trend in the right direction.
Prateek, just a follow-up to that, there have been the recent quarterly updates that you have seen from banks, or even the results for that matter. You have seen healthy credit growth, both in terms of at least in double digits for a major part of the private sector lenders as well. Has the trend improved on the ground? And with all of these reforms that you have seen with regards to GST and with regards to the income tax bit as well, do you see credit growth sustaining into the second half of the year and maybe into FY27 as well, and banks can capitalize on this capital that they are getting from all of these marquee investors?
I am an eternal optimist. I do believe, the worst is behind us. The way the regulator has been very prudent with the supervision, the way the governance has worked. I mean, if you look at the capital buffers, for the banking system, or if you look at corporate balance sheets for that matter, I think we are well positioned over the next coming 2 quarters, as well as the next financial year, in terms of how the credit growth will emerge in the banking space. I mean, if you look at just private sector banks from 2019 to 2025, the average ROA of the industry has remarkably improved from 0.2% to 1.2% in FY25. So there is significant shift that has happened. And again, I think a lot of this capital will help significantly, as competition emerges, as you are investing on digital, a lot of that capital will help over there as well.
It's just not banks. NBFCs have also seen that money come in. Sammaan Capital, that big investment that came by. But we have seen instances like IL&FS, we've seen DHFL. Mr. Khara, what's changing in the NBFC landscape? And do you think this is something which should continue in the NBFC space as well?
See, when it comes to the regulatory oversight on the NBFCs are concerned, it has actually gone up significantly. And when it comes to RBI, they are probably treating NBFCs almost at par with the banks, and the compliance requirements for NBFCs have gone up significantly. So I think when it comes to the board governance of the NBFCs, even that has got turned up because of the regulatory oversight which we have seen in last couple of years. So I would say that that actually is the reason why there is a confidence which is shown into these entities also by the foreign investors. And what you mentioned in terms of DHFL and LFS, they were the case studies which actually taught a lot to the financial sector. And I think the sector has learned quite well in terms of if at all they have to grow, they have to be a long-term player, they have to be trustworthy. And in order to be trustworthy, there has to be due emphasis on the board governance and the compliance culture. So I think it has been very well received by the sector. And of course, on the top of it, the oversight by the regulator has also been enhanced.
Interesting insights, Mr. Khara. Prateek, thank you so much for sparing time and joining us today to discuss this yet another large deal in the Indian financial services space. Now, thank you for sparing time and joining us today. $7.5 billion worth of investments and 3 major deals announced just this month itself. We take a short break. We get a quick chart check on the other side. Jay Thakkar from ICICI Securities joins in on the other side as the Nifty has now slumped to the lowest point of the day.
Welcome back. Some more pressure on the market, so it's a good time to get in the latest trends coming in from the F&O space. Mangalam is joining us with more insights on that. Mangalam.
Well, there is indeed some more pressure in the markets. In fact, from yesterday's high, the Nifty is corrected almost 300 points. So that's something we'll be watching out for. The Nifty Bank has been a bit of a, profit in a bit of a profit-taking mood over the last 2 trading sessions. Yesterday's market was supported a lot more by the IT index, which too is not seeing a follow-up rally. So all these factors not doing very well. The mid-cap index, however, hasn't fallen as much as the frontline index. So that's a positive. The only thing we'll have to watch out for, that the gap between the advances and declines doesn't widen further from what it is right now. Close to around 1,600 stocks in the red for about 1,000 stocks in the green right now. It is at its widest point, but that not expanding further would provide some sort of support to the bulls. The other thing we'll watch out for, how the consumer stocks are reacting. Post inline numbers yesterday, HUL saw a flattish move. Today it's seeing a bit of a decline. We are seeing some sell-off in Colgate as well. Dabur too is seeing a bit of a sell-off. On hopes of recovery in the second half, do we at some point see some buying in these names or not, would be something that I will be tracking. But nothing really to worry about given the sort of fall that we've seen from the last 2 trading sessions, largely because of the rally that we've seen in the previous 5 days. So, despite the decline, the India VIX is fairly contained. It hasn't seen a sharp spike up. And secondly, the put-call ratio is moving towards the lower end of the range at around 0.84, which compares with at around 0.7, where, the market typically indicates oversold sort of zone. So that's all a positive, which tells you that between 25,700 to 25,750, we could see some support. Why do I say that? Over and above the data points that I've mentioned, because the 25,800 put writers, they're fairly active in today's trading session for a premium for almost 60, 65 rupees or say 70 rupees as we speak. It's, indicating support around 25,720 thereabouts. And on the way up, however, we will face some congestion around that 26,000 mark, 26,000 to 26,050. That's largely because of the one sell-off that we've seen earlier. And at the same point, the call writing, which is visible at 25,900 and 26,000. A couple of stocks which are on my radar right now. Kotak is seeing some short building activity, and we are seeing Avenue Supermarts as well, which is lower in today's trading session so far. The only thing I'll be watching out for, apart from all of this, is Sammaan Capital. That stock in focus today after exiting F&O ban. Chances are it may re-enter F&O ban after the kind of move and open interest addition that it has seen.
The support levels are showing 25,783, the intraday low on the Nifty as of now, and it's been a 40-point jump from that in a matter of a couple of minutes by when Mangalam summarized the entire F&O setup. Jay Thakkar from ICICI Securities joins in for a quick chart check. Jay, good morning. Thank you for joining in. Your levels that you're watching out for on the index and your stock recommendations for the morning as well.
Hi, Hormaz and Sonal. Well, as far as Nifty is concerned, Hormaz, I would say that I think until the expiry, that is Tuesday, which we have the monthly expiry at this point of time, I think 26,000 level, Hormaz, is something to watch out for. We have seen aggressive call writing happening there. We have seen a call addition, in fact, rather happening there in the yesterday's trading session. For this series, 26,000 already had a good call base. Nifty opened gap up beyond 26,000 levels yesterday, but could not sustain higher, and we saw these additions, in fact, further, which has brought down the put call ratio now well below 1. It's at 0.75. It's not oversold, but it's not even bullish. So I think until 26,000 levels are not taken off until the expiry, Nifty might just trade within the range after having run up for almost like 1,000 points from 25,000 levels almost to 26,000, 26,100. Maybe, Nifty is taking a pause. On the flip side, I'm not even expecting Nifty to fall below 25,400 because of the first half of this financial year mainly has traded between 25,400 to 24,400. So that's the 1,000 points range within which Nifty has traded. So now that should act as a support. So we've got, support 400 points down. Beyond 26,000 levels, I think in November series or probably going into December, the next target Hormaz will come to 26,500. And that is our target as well for the short to medium term. So we remain bullish, but buy and dip should be the strategy for the Nifty. And now, FMCG and pharma has taken a hit today, Hormaz, and that contributes to almost 11% in the index. But the best part is that apart from the banking financials, which contributes 36% to the index, now the IT segment, which contributes 9% to the index, has started seeing some short covering since yesterday. So the loss of 11% due to FMCG pharma is getting covered by the IT. I think IT is heading towards 38,000 levels in the near term. So that could help Nifty to inch to beyond 26,000, probably in the November series. I have two buy recommendations, Hormaz. One is on TCS. I think TCS is heading towards 3,400 levels. One can buy November futures or make a positions in November, targeting 3,400 on the downside. I believe that 29.70 is a good support in the near term. So risk reward is favorable out there. And as I said, the banking and financials has been the flavor of this rally. The overall 1,500 points rally, and it started with the PSU and then got translated to private sector banks and the financials. Shriram Finance, which is trading at the lifetime high, now it's also the Nifty 50 stock. I think Shriram Finance looks positive. So on the current levels on the lower side, there is a good support around the levels of 690 in the near term. That would be the stop loss. 760 short-term target, 800 would be the medium-term positional target.
Take that point. Thank you so much, Jeff, for joining us. With that, we'll slip into a short break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Welcome back. Shifting focus now to the crypto space. Manisha Gupta is here with the latest.
In Crypto Corner today, we talk about on how 2025 continues to be a strong year in sense of maturity and crypto adoption therein. Well, let me start with the Bitcoin prices itself. Until the time, since the time we've crossed above $1 lakh on the higher side, it has continued to stay there. Of course, we've seen an all-time high of $126,000 therein. It has been trading. Volatility has been quite high, but it has been trading within that number there. 2025 also has been a year where we have seen the total market cap for crypto touch above $4 trillion, and that's how it is at this point in time. Also, when you look at the total number of crypto mobile wallet users, well, that's at an all-time highs as well. It is up by 20% on an year-on-year basis. People who hold crypto, well, that number has surged to 716 million people worldwide. But interestingly, the active crypto users within this 716 is anywhere between 40 to 70 million people there. Another important one that we saw in 2025 has been the real world asset tokenization. That market is now standing at a tall $30 billion, which is 4x in the matter of last 2 years itself. And the expectation is that it could grow much higher as we move forward from here, as we see more and more traditional assets like commodities, equities, finance, etc. come on-chain, on blockchain. The other one really has been about the numbers that we've seen in case of ETFs therein. $175 billion is the on-chain crypto holdings at this point in time. This is a gain of nearly 170% in last year, from $65 billion last year to almost $175 billion currently now. When you look at blockchain, well, that processes now nearly 3,400 transactions per second. This also is a 100x growth that we've seen in matter of last 5 years itself. Stablecoin has been yet another success story that we've seen in 2025, of course, with US coming out with Genius Act and stablecoins being pushed quite strongly and a framework created on that. So when you look at the overall stablecoins, $9 trillion in an adjusted form on an annual transactions is what stablecoin seems to be powering right now. Stablecoins also have done $46 trillion in total transaction value, which is, by the way, up 106% on an year-on-year basis. And a final one about meme coin. I mean, last few years it has been very, very strong in sense of prices, has given good returns as well. And we did see nearly 13 million meme coins created in the last year, but that number in this year has gone down by 54%, telling you that it's not meme coins and speculation that the street is looking at. It is more about investments. It's more about blockchain adoption, especially by retail institutions and ETFs. That seems to be doing the trick this year.
Thank you, Manisha, for getting us all the updates from the crypto space. But we'll slip into a short break. When we come back, we'll discuss the market fundamentals with Manish Jain from Central.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Best.
Welcome back. Well, there's a definite recovery which is underway, almost 80 points from the lows of the day. So the Nifty currently is at 25,850 mark. Which are some of the stocks which are leading this recovery? We have some of these FMCG names. Reliance Industries, of course, is one of them. A big weight on the index, and that has recovered from the lows of the day as we speak. The other one is Nestle India. We also do have JSW Steel, which is recovering from the lows and is leading to the recovery that we are seeing as well. Sun Pharma, ITC, TCS, all these names have recovered massively from the lows, leading to the recovery that we are seeing. Even the mid-cap index, for instance, has seen some recovery from the lows. But yes, it is absolutely flat as we speak. But let's get in Manish Jain from Centrum joining us to discuss market fundamentals and the top sectoral bets. Manish, good morning. Thank you so much for joining in. You know, so much is happening, be it on a macro level, be it on a global level. Is there any sector or any space that you think is safe at current levels and will be immune to the volatility that we are seeing globally?
So before I answer the question sectorally, let me just give you a little bit of a background in terms of how I'm reading the market from the next 5-6 months perspective. Obviously, there is a little bit of a disappointment in the markets, especially amongst the investors, largely because over a 1 year, 13-month period, the market has been largely flattish. We've seen continuous earnings cut as far as Nifty is concerned. Second quarter is again going to be inline quarter. I don't think people should expect anything great from second quarter results onwards, particularly anything. But I think the timing of the GST rate cut from a domestic consumption push perspective was a very pivotal moment, right? I mean, it was a very significant moment. And I think Q3 is going to be significantly better as compared to Q2. And this is primarily going to show up in discretionary consumption sectors. And that's where I think the focus should be from an investor's perspective, is the fact that, when you look at two of these sectors, which I think are going to do really well in the near term, in my sense, one is going to be consumption, especially more so on the discretionary consumption. Staples also, yes. But again, more so on the discretionary side. So sectors like, for example, autos or, for example, white good, brown good. And we've seen some bit of early commentary coming through on the festive season, and it has been very, very encouraging. And second is going to be banks, especially larger banks, which are all trading at, multi-year low valuations amongst, less than 1 standard deviation, negative or 2 standard deviation from a 10-year valuation perspective. Given that credit growth pickup should now start happening from 10% levels to 13-14% levels, I think these are the two sectors that I'm going to be squarely bullish on, irrespective of the global geopolitical hangover that continues to happen on the Indian markets.
Manish, good morning. Thank you for joining in. You'll be bullish on these sectors, but are there sectors where you are exercising caution, where you see some excesses? What's your view on that?
So there are certain sectors which I'm not very optimistic on at this moment. The first one amongst them that comes to my mind is primarily staples, FMCG, for example, where from a long-term perspective, if you look at fundamentally, then it's very difficult to clock in 4-5% plus kind of a growth over there. And for sector that trades at more than 50 times PE multiple, I just don't see, how a long-term investor will kind of create value over there. So that is one sector which I'm not really overtly very, very bullish on. Pharma is again another one where we are now starting to get a little bit cautious. While the sector did not get impacted any majorly as far as the tariff thing was concerned, the last announcement, but valuations given the way they are, I'd much rather start shifting weight from pharma into IT. That's where I think the things are starting to bottom out. So that's again another trade that I would kind of look to play out.
Okay, so that's on the pharma space, Manish, but banking has to be the big focus point, right? We are seeing so much happening there. Financials in general, actually, because even NBFCs have seen some big money coming in. How do you see this sector performing from here on?
So if you look at this current quarter's numbers and if you look at all the updates that have come through, I think the larger banks have started seeing a little bit of a pickup as far as credit growth is concerned. I've seen numbers like ranging 14, 15, 16% advance growths that have come in through. So there is a certain bit of pickup that has started to happen. Of course, MFI and NBFC is a sector that still kind of remains a little bit of under pressure. So, but I think if as an investor you wait for things to kind of improve and play out from there, then it'll be too late. The sector would have already run up. So my sense is that financials has a big weight in the index, 35, 37%. one of the biggest direct beneficiaries, from a cascading impact perspective of the consumption pickup is going to be financials. The credit growth is going to pick up, personal loans or, these white goods, brown goods, and all of those EMIs will kind of start picking up. And valuations are very, very comfortable. And large number of issues, whether, asset quality issues or whether it's LDR, all these have kind of played out. I think from a 12-month perspective, it's a great time to pick up these banks and NBFCs.
Manish, short conversation today, running out of time, but thank you so much for sparing time and joining us today. Looking forward to having you more often on the show. We'll take a short break, more on the markets on the other side. Stay tuned. Welcome back. It's a slight recovery from the lows of the day for the Nifty, still around about 55 to 60 points lower, but the real action is in the broader markets. You look at PTC India Financial Services. We spoke about it earlier in the show as well. That stock is up 15%. Among the defense names, well, Paras Defense has sprung up among the list of gainers now, 8.5% higher on that stock as well. And the spike has come in just the last 30 minutes for Paras Defense at the highest point of the day. What's not doing well among the losers is Uniparts India. That's down around 5.5 to 6%. But among the bigger names, Ather Energy is witnessing some profit booking. That's down 4%. Colgate is down 3%, continues to remain lower. And profit booking also coming in CEAT. That stock has had a very good run this week, and it's seeing some profit booking in today's trading session, around 2.5% lower for CEAT as well. Take your leave on this edition of Trading Hour from Sonal and me. Thank you for watching. Halftime report on the other side.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Stocks drift down with the market breadth seeing a negative tilt. FMCG, financials and healthcare the big drags, while metals and realty gain.
Blackstone has inked a deal to pick up just under 10% stake in Federal Bank via preferential issue of warrants worth around 6,200 crore rupees. The private equity giant will also get to nominate one non-executive director. The deal takes the tally of foreign investments in Indian financial sector in 2025 to $7.5 billion.
A collapse in the Dominican Republic mine pushes copper prices up. A shutdown of Alcoa's refinery in Australia boosts aluminum to a 3-year high, and bottlenecks in Japan and Kazakhstan smelters lifts the price of zinc. That means all the metals are shining today.
The Defence Acquisition Committee clears proposals worth 79,000 crores of the Army, Navy and Air Force, spelling big business for Indian vendors like Bharat Dynamics, BEL, Cochin Shipyard, Garden Reach, Shipbuilders and Mazgon Docks.
Cipla inks a pact with Eli Lilly to sell its popular weight loss drug Mounjaro in India under the brand name Your Peak. Now, while Eli Lilly will continue to sell Mounjaro in India, Cipla will help it penetrate deeper into the market.
Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Bhatra and with me is Manglam Malu as well as Vinny Motiwala. Well, it's turning out to be a session where we're seeing some amount of profit booking come through. So the Nifty is just about lower by around 65 odd points. We have the mid-cap index, which is just about flattened out and looks like it's probably going to just about move into the red as we speak. Advanced decline ratio, we could be wanting for more, but 1,000 stocks advancing to around 70. 1,700 stocks declining. That's the picture on the National Stock Exchange. Let's see whether there's any kind of improvement as we go along. On a week-to-date basis as well, the Nifties are just about gained around 0.4% as compared to the mid-cap index, which is up around 0.8%. But milestone levels were passed this week for the Nifty, for example, surpassing 26,000 on an intraday basis. But as of now, profit booking is the name of the game. Hi, guys.
Hi, profit booking indeed the name of the game, but nothing really to worry about. It's par for course right now as we're looking at it because of a couple of factors. At lower levels, the Nifty is finding some purchase. The way the option writing has been taking place right now appears that 25,700 to 25,750 could be a bit of a support for the immediate term. But more importantly, yesterday's high would be an important level to watch out for on the way up. So after this near 1,000-point rally from the lows over the last 7-8 trading sessions, Nifty is consolidating at higher levels. We'll watch out for a couple of these FMCG names which are seeing some profit booking today. So HUL, for instance, had an inline set of numbers, the top Nifty loser today, and alongside that we are seeing some decline in names like Titan as well. Remember, gold prices have come off the peak as well, so maybe some bit of sheen coming off Titan too, and at the same time we're seeing some selling in Colgate. Importantly, I'm watching out for Nestle, which so far has reported the best set, and that stock's actually outperforming in an otherwise wobbly FMCG index. So Nestle comes up for you actually at the high point of trade.
Hi, Ekta as well as Mangalam. Good afternoon. But today, while FMCG is seeing some bit of a profit booking, look at the metal space, right? Nifty metal top sectoral gainer. And in that, we have all these names that are buzzing in trade. Whether you look at Nalco, Hindalco, Hind Copper, all of them are managing to hold on to gains of around 3 to 4% in today's trading session. In the broader end of the market, we also have Shipping Corporation, which is buzzing in trade among the top movers in the Nifty 500, as well as Gravita India. This is also buzzing in trade. So let's keep an eye out on these names as well. But a whole host of other stocks are buzzing in trade, and Vivek is joining in with us to give us those details.
Well, thank you so much for that. Very volatile trading session, but in the last 15 minutes or so, certain amount of buying has been seen, and that's actually aided the kind of advance decline ratio towards favor of the advances. But like you mentioned, quite a few stocks on the radar. We have to start with the metal index, especially the aluminium names. Have a look at names like Hindalco, Nalco, Vedanta. All three of these aluminium players are doing very well in the session, off from the day's high, but still high by over 2.5 to 4%. The other set of stocks that are doing quite well is the entire NBFC pack. Have a look at a name like Credit Access Grameen, up over 5%, SBFC Finance, Samman Capital, up over 5%. All of these names doing very well. Gravita India, another name that you alluded to earlier, that particular stock, the top NSE 500 gainer, almost on good volumes too today. Bharat Dynamics, along with a whole host of other shipbuilders and other defense names, are seen as a key beneficiary of the DSE proposal clearance, higher by over 2% today. And Blue Star, this particular stock, one of the few names from the consumer durable pack that's doing quite well in the session today. On the other hand, quite a few laggards as well. Like you had highlighted earlier, the FMCG pack seeing a bit of profit booking today. HUL, after yesterday's conference call, that particular stock down over 3%. Colgate Palmolive, market share concerns over there, worries about margins going forward as well. That particular stock down over 3%. And Aether Energy, the stock did quite well in the last few trading sessions. About a profit booking is what we're seeing on this particular name today.
Okay, all right. Well, thanks very much, Vivek, for that. So those are all of the buzzing stocks at this point in time. But let's get talking about our movers and shakers segment, where we track a whole host of stocks which are buzzing in trade. First up, I'm going to address Cipla, which is in focus on account of the Eli Lilly deal that they have struck. So just to put it, just to give you the news, So what exactly has taken place is that Cipla has tied up with Eli Lilly, which is basically a global MNC, to market tirzepatide in India. Now, the agreement is for distribution and promotion of tirzepatide in India. Tirzepatide, as it is more popularly known as Mounjaro by Eli Lilly, which is basically the diabetes and weight loss drug, the GLP-1 drug, which they sell globally and which they launched in India as well in March 2025. So Cipla will be marketing tirzepatide under a second brand name called Urpeak. So Eli Lilly will continue to market Mounjaro in India, but Cipla will launch the same drug under a different brand name called Urpeak and will be selling the same drug, which is manufactured by Eli Lilly and at the same price, but just branded differently. Now, what is the advantage of that? Is that they will get more access for this particular drug. Eli Lilly has a certain amount of distribution. Cipla is much more well entrenched in the Indian system, and hence they have a better distribution strategy, and hence they will be able to market the drug better, and hence the access for this particular drug will then increase. Now, in terms of potential, the GLP-1 market could be around $1 billion over the next 4 years, according to analysts. So this could add around 3% to Cipla's domestic revenue and 1.5% to EBITDA in the next 3 years. Major players are waiting to launch semaglutide, which is basically the generic version of Wegovy in India, when it expires early next year. So this is something that the street will watch out for, that according to them, this is quite an innovative partnership that Cipla has struck. Just a couple of questions to keep in mind, which we will probably get answers to over a period, is whether or not this particular agreement is exclusive or not, or whether Eli Lilly can partner with other companies. And separately, what does this do to Cipla's plans to launch semaglutide in the Indian market as well? So as you can see, Cipla, the stock itself has run up quite significantly. It's up around 11% before the deal was struck in the past 2 weeks, and hence maybe a lot of the good news is factored in.
Take that point, Ekta. Thanks a lot for that. So that's about Cipla. Meanwhile, just watch out for Federal Bank as well. The stock on our radar for a long time. There were murmurs that the deal would happen, and the much-awaited deal indeed did happen. Gaurav?
Well, yes. When we look at Federal Bank, now Blackstone is going to invest around 6,200 crores in the bank for a stake of 10%. Remember, bank will be issuing around 27 crore convertible warrants for that, and they have got a share. They will be waiting for the shareholders' approval. Board has approved for the issuance of the warrants. Remember, after that, they will have 18 months to exercise these warrants, and at the same time, 25% of the entire deal amount will be payable at the time of issuance of the warrant. Now, what remains another key thing to watch out for is that the usage of fund. Now, when we look at the CET ratio or CRAR ratio, both the ratios are well above the guided range. When we look at CRAR ratio, it is at around 15.7%. CET ratio is at around Tier 1 ratio is at around 14.37%. So definitely one thing to watch out for is that how these funds are going to be utilized for the bank, because given the strategic growth drivers that they have given in February 2025, they are also targeting to place itself closer to next 3 or the best 3 banks. And with this, they have also said that the key focus areas will be in the wealth management, non-resident segment, corporate banking, and to become SME bank of choice. So definitely that is one question to watch out for, is that how they will utilize the funds. But as of now, big investment coming up in Federal Bank with around 6,200 crores of fresh capital from the Blackstone's investment to get around 10% equity share in the bank.
Okay, thank you so much for that, Gaurav. But Mangalam, you're also tracking Midwest, that is up almost 8%. What's happening here?
Well, Midwest is the new listing today, and it's listed about 8% higher than what the issue price was at around 1,065 rupees. It's a leading player in the natural stone industry. It's experienced in exploration, mining, processing, and export of dimensional granite, but more importantly, holds 64% share in India's export market for Black Galaxy granite, which accounts for nearly 70% of their sales. But importantly, the trigger for them would be expanding their product portfolio through extraction of branded Laser granite, grey marble, and Celestia quartzite. So their current quartzite capacity can give them revenues of almost 250 crores. But they have used these funds from the IPO to double that. So that could be another 500 crore worth opportunity. If you look at their last year's revenue, 626 crores, EBITDA margins of 27%, net profit at around 133 crore rupees. This year, first quarter as well, matches that sort of run rate. But importantly, we spoke to the management on a couple of things, and they said, the current margins at 27% thereabouts are sustainable. In fact, their aspiration is to go to that 30-35% mark. And also their aspiration is to take their revenue from 140-150 crores per quarter to about 250 to 300 crores per quarter, taking their revenue to about 1,200 crores and margins at around 35% by FY30. International peers, they say, have margins of over 40%. And that's the business for them, which will be a big contributor. In the next 3 to 4 years, they believe quartz and HMS will be more than 50% of sales versus sub 30% right now. 70% currently comes in from black granite, which grows at around 11% as a CAGR. The other businesses turn up in terms of growth as well. Let's hear out what the management, in fact, had to say to us about the growth prospects of the company.
In terms of the largest tailwinds are going to come from our new businesses, which is quartz for engineered stone, as well as solar glass industry, which we have commenced production last quarter. And that is in the short term. And in the medium term, the growth drivers would be the heavy mineral sands project, out of which we will supply the feedstock to the titanium downstream industries, as well as the byproduct monazite, which will cater to the rare earth industry. Our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in. We are sitting on a resource which is rare and supplies to a global feedstock in terms of the granite. And if you look at the margin profiles of similar companies, though they are not in India, outside India, for example, Iluka, which will be a reference in Australian exchange for heavy mineral sands business, their margins are upwards of it's listed on ASX, upwards of 40s. And in rare earths, you can always refer to companies like Linus Rare Earths, which is also listed overseas, and you can look at those numbers.
Okay, all right. So a decent listing coming in from Wintwest. The stock is up around 8% at this point. But let's move on from movers and shakers now. And here is the latest on the India-US trade negotiations. Commerce and Industry Minister Piyush Goyal says both nations are making progress in terms of negotiations for a proposed trade agreement, and he hopes the deal will materialize in the near future itself. Listen in.
We are in dialogue with the United States of America. Our teams are engaged. We recently had the Commerce Secretary visit the US, and he met with his counterparts. We continue to engage with them, and talks are progressing. We hope to work towards a fair and equitable agreement in the near future.
Okay, on that note, we're actually going to slip into a very short break. After the break, we'll get you more on the markets and connect with the management of Orkla India, as 1,667 crore rupees IPO will open on 29th of October. Stay tuned in for that conversation. Welcome back to Halftime Report on CNBC-TV18. Nifty as of now 25,840 levels, down almost 50 points in today's trading session. Nifty as of now. But let's move on and shifting focus to Orkla India. Now, the parent company of MTR Foods IPO is going to be opening for subscription on 29th of October. My colleague Rima spoke with Sanjay Sharma, who is the managing director and CEO of Orkla India, on the MTR Foods acquisition, the revenue mix, and more about the company. Listen in.
I think we Orkla entered India in 2007, as you know, through the acquisition of MTR. Our journey in India has been a quick study of the regional preferences and a deep understanding of the consumers, which led to the purchase of MTR as a company. Now, we are unlike any other multinational. We are, we don't look at India as a single country. Of course, it's a single country, but we look at it as a collection of 28 markets. And as a result of which, I think our focus has been to build regionally dominant brands. And as we progressed in our journey, I think what we did, we acquired Eastern, which was also a great acquisition because it helped us move from one state to another state and helped us acquire a very strong heritage brand in the state of Kerala, which talks to a very different cuisine than what MTR talks to.
So what's the breakup between spices and condiments? Which are the two areas you're present in?
So spices, as we have two categories, spices and convenience foods, right? Spices, as you know, is the core of Indian food. Without spice, there is no food. Spices contributes roughly 66% of our business, and the rest is convenience food, part of our business.
And if I look at the revenues, Sanjay, it's not been growing very fast. It's about a 5% CAGR. Do you see that? What explains that? Because it appears that the packaged food industry as a category grew faster than you. So were you underperforming? If yes, if you could tell us the reasons. And do you see this changing?
I'm not sure about how things have moved. I think our current performance is a reflection of, our short-term performance is a reflection of macroeconomic impacts that are there. And I think you know it better than I do. When you look at what's happened in the last 2-3 years, you've seen FMCG slowdown happening, you've seen consumption squeeze happening, you've seen inflation go up, led by food inflation, which has got by. But if you really step back and look at what has been our journey so far, when we had just MTR between 2010 and 2020, we had grown at about 13%. Then we did the Eastern acquisition in 2021. That was the COVID period. So you look at after COVID, 22-24, we've again grown at 13.2%. I think economic cycles come in and go out. I think you should look at what is the volume development in the company. And when you look at our quarter one numbers in the RHP, you clearly see that we are continuing to build the business very strongly with about 8.5% volume growth that has come through. Price growths will keep happening because inflation keeps fluctuating in the country.
And you're also on the right path when it comes to margins.
Yes.
You've, the margin improvement trajectory is very impressive, and you now stand at 18.7%.
Correct.
What drove the margin expansion, if you could give us a couple of reasons? And, are these margins sustainable, or do you see it even crossing 20%?
I think, we talked about food inflation and how or deflation in spices and how it hit our top line revenue growth. So we did see a slowdown in that. But on the other hand, our margins have expanded. So our margins have expanded at the back, I think 50% at the back of raw material price decrease. And 50% is at the back of many inside initiatives that we have taken in terms of driving, operational efficiencies up, whether it is a shift towards the sale of value-added products, whether it is outsourcing from low value-added production, whether it is digitalization that we are doing, whether it is the manufacturing rationalization programs that we have put in, and obviously the everyday black belt or cost improvement programs that we run in the company. So all of these have actually also contributed to the margin expansion. So we are on a good trajectory as far as margins is concerned.
Yes, no. Do you think margins sustain at these levels or expand?
I can't give futuristic oriented statements at this point of time. But I think we are in a good place. I think we've got great programs going. If you want to normalize our margins, you can take half the margin improvement and reduce it, and I think that's the right level for us to continue to build it from.
Got that. You made it very clear that, you all are different from the other MNC players who have this one objective that we're a pan-India player.
Yeah.
But you want to go deeper. You see yourself as a regional player, and you want to go deeper and provide more value, which also shows up in the way your revenue breakup is 70% from the south.
Right.
So take us through that strategy, and also on the international side, which is now 20% of your overall revenues.
Yeah. So let me first talk about the domestic side of the business. I think most people look at India as one country, and we've done a lot of investor meetings. Everyone talks about pan-India. To me, in foods, I think there is nothing known as pan-India. I think food is regional. You are from Maharashtra. You don't eat South Indian food every day, do you? Right? So I am from Punjab. I am running a South Indian company. So I think somewhere you have to understand that food is local. Okay, and in the 4 South Indian states, they are not one homogeneous mass. They are different cultures. The Tamil culture is different from the Karnataka culture, which is different from the Kerala culture. Different cuisines, right? And I think food is local. Brands are local, and therefore the business of food is local.
Okay.
So there is, in our minds, I think we are building our business with that philosophy in mind. It's not that we are not available all India. I'm available in Delhi, I'm available in Ladakh, I'm available in northeast of India, I'm available in Gujarat. We are available everywhere, but we are not the local food for those people. So we are the local food of Karnataka, we are the local food of Andhra and Telangana, and we are the local food of Kerala, and that is why our 70% of our revenue is set out there.
Okay, we are out of time, so I want you to quickly explain why is your capacity utilization low at 46%, and tell us about the balance sheet, because you're not doing a fresh raise, which goes in money going into the company. So very quickly explain this.
So on capacity utilization, I can tell you that when we did the Eastern acquisition, we had 4 factories in MTR, 7 in Eastern, and we had the average of that utilization ended up with 9 factories and 46% capacity utilization. I don't think that's a problem. It's a legacy that we have acquired. I think going ahead, we are the way to look at it is that we don't need any fresh capex because capacities are pretty fungible in nature. So we don't need any fresh capex going ahead. In terms of why did we do OFS and not a primary issue, I think we are a cash-generating company. We are generating 300 to 400 crores. So we have enough of capital available in the books. Our balance sheet is strong. We don't have any debt. So if you need to raise any money, we can do that very easily.
All right, so that is the management of Orkla, which is the parent of MTR Foods. With that, what we'll do is take a short break, come back on the other side. We get to market technicals. Manish Atirumani from Deen Dayal Investments joins in with some trading strategy. Stay with us.
Welcome back. Well, for the markets, it's definitely a bit of a subdued day at this point. So we have the Bank Nifty, which is down around 260 odd points. But what are the F&O cues at the end of the week? Manglam is here. He's standing by at the big wall to give us some perspective. Manglam.
Well, it is subdued, but we are seeing recovery from the low. So that's a positive that we are seeing. On the Nifty, it is lower, but it's lower now just by 28 points, which is a good, recovery of almost 60 points from the lows of today. The Nifty Bank is doing a bit of an underperformance for the last couple of trading sessions. The mid-cap index at an index level is still marginally in the green. The other thing that is a slight positive versus what we were about an hour ago was that the lines are coming closer to each other. Just an hour ago, we had about 1,700 stocks which were declining for about 1,000 stocks which were advancing. Now the advances have increased by about 100, 150 stocks. The decliners have come down by about 50 stocks as well. So that's a positive. So that basically gives you a rough range for the frontline index after this big rally that we've seen. Yesterday's high and today's low, they become an important consolidation range to track for the frontline index. So let's see where the Nifty goes from here. 26,104 on the way up and 25,784 on the way down. The other part is, despite the decline that we've seen in the last couple of trading sessions, the India VIX hasn't shown any major spike, which tells you that the street is not particularly worried. In fact, right now as we speak, the India VIX is perhaps at the lower end of today's trading range so far. The put-call ratio too has cooled off from levels of closer to 1 to levels of closer to 0.8, which tells you that there is balance which is returning in the market and the range is likely to play out. The 25,800 put writers are still fairly active, telling you around 25,750 thereabouts. There is support that we are witnessing. On the way up, however, 25,900 and 26,000 call writers, both of them fairly active for a premium of 100 to about 150 to about 50 rupees, telling you between 26,000 and 26,050 would be some sort of congestion. A lot of shorts added on names like HUL and Colgate, basically FMCG stocks which are not doing too well. But the ones which are doing well today, the likes of Nalco, Hindalco, are seeing short covering. Even IEX, for the second day running, has been seeing a lot of shorts being caught on the wrong side, and as a result of which, some short covering on IEX too. Just the final stock that I'll be watching out for today, Sammaan Capital. That stock's up 7% right now. This morning exited F&O ban, but with the open interest jump that we're seeing, it may re-enter F&O ban today.
Okay, Mangalam, thank you so much for that. Important to keep an eye out on Sammaan Capital as well going forward, whether it comes back again in the F&O ban and what is the list over there. We'll watch out for that in the second half of the trading session. But let's move on and bring on board Manish Hathiramani from Deen Dayal Investments now to talk to us more in terms of the technicals for the market as well. Manish, good afternoon. Thank you so much for joining us on the show. While obviously we've seen a bit of a pullback come back from that festive cheer, second half of yesterday's trading session, and since then we're seeing that pullback. Today also down almost 0.2%. But what are the levels we're keeping an eye out on for next week? And maybe do you think this mild pullback is something that would continue?
Good afternoon to you and to all our viewers. Thank you so much for having me on the show. Well, I don't think we should overread into this small little dip. 25,600 to 25,700 is the actual support for the market. Until we really don't break that on a closing basis, we should be looking at all dips as buying opportunities. The recent crossing of 25,700 has opened up higher targets of 26,400 to 26,500. We are currently just taking a mild breather. If I were to look at the other two indices like the Bank Nifty and Mid Cap, both of them are in line with my thoughts on the Nifty.
Okay, and what are the stocks that you would be recommending today? And in particular, what are you looking at in the financial space?
Well, I'm looking at two buy calls today. In fact, one of them is from the space that you just mentioned, which is Shriram Finance, which I feel is for a target of 740 and a stop loss of 705. This stock has made a very good base around the 550, 600 levels. Higher time frame charts are even suggesting a good technical structure, and dips can be utilized to buy into this stock. If we are able to sustain above 750, we could even go up to 800 to 850. The second one is on an M&M for a target of 3690, stop loss of 3595. The crossing of 3560 was a positive sign for the stock, which was also accompanied by good volumes. If we can get past 3595 on a closing basis, the next target should be as high as 3800.
Okay, Manisha, thank you so much for joining us on the show, giving us the detail in terms of the market that we should be keeping an eye on as levels as well as individual stocks. Thank you so much, as always. But on that note, we're going to slip into a very short break. After the break, we'll be joined by Manisha Gupta, who's going to be in conversation with Vandana Hari of Vandana Insights. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Vandana Hari from Vandana Insights. Vandana, thank you for your time. And the kind of run-up that we've seen in the crude oil price is heading for a very, very strong gains for this week. Is the reaction to the US sanctions on Russia and the European Union's 19th sanction package also on Russia. To begin with the US sanctions first, and this is directly on Rosneft and Lukoil. How are you reading this? The markets clearly have reacted. Today is a day of a bit of a pause. But how do you see it playing out?
Yeah, good afternoon, Manisha. So indeed, the reaction is almost entirely to the US's blanket sanctions on Rosneft and Lukoil, two major producers and exporters of Russian crude and refined products. Equally importantly, the only ones that were left, the only export channel that was left following previous sanctions against a host of other companies. So essentially, this is like almost slamming the door on more than 6 million barrels per day of Russian exports. In theory, I would add that caveat, in theory, of course, because the market has a lot of questions, how strictly it will be enforced and how long this will last, because the situation is very, very fluid at a very political level. It's quite clear, at least to me, that Trump is hoping that Putin will come to the negotiating table. So for all you know, Manisha, things can take another about turn in a very, very short period of time, which is why you're seeing what I would call a relatively muted reaction from crude. So yes, as you pointed out, they're up, Brent, WTI up 5% just in one day, but still not too far from their 5-month low. So, almost a disproportionate reaction if you were to look at, potentially 6 million barrels per day of supply being threatened.
Oh, absolutely. Vandana, what does it really mean for India now? Because while we already are reeling under that 50% tariffs, which can be brought down to 15, 16 is what we've heard in sense of negotiations. And then this comes in. I mean, this is directly at the origin now. How do you see India reacting to this and what does it mean for India?
Yeah, so while the previous U.S. pressure on India was not absolutely black and white in terms of leaving New Delhi and the Indian refiners, a lot of scope to push back or to basically say, sorry, no, we're just going to continue importing Russian crude. I think things are quite different this time around because of the threat of secondary sanctions. And so what that means is that essentially the U.S. has said, and said so very clearly, that any entity that deals with Rosneft and Lukoil will be liable to secondary U.S. sanctions. So this is a risk that all Indian refiners cannot take because, it essentially that means that they are barred from U.S. dollar dealings and from the U.S. capital markets, which will just be a very heavy price to pay.
Vandana, also, we do understand there's a lot of conversation going in right now. And as you said, the situation is quite fluid. And most of the market participants believe that there is some balancing act that we would see come in from India and US as well. And then almost everybody seems to be believing that there would be some way that Russian oil will find its way into the global markets.
Yes, indeed, Manisha. Good points. There are layers of complexities, which may also explain why you're seeing a cautious or, as I've said, relatively muted reaction from crude. So one of them is, of course, the ongoing trade talks between U.S. and India, similarly between U.S. and China. And we know that even before this week's actions by the US and EU, this has been one of the negotiation points. Trump has been asking both countries to phase down or phase out Russian imports. So there is some leeway, I would imagine. Of course, I'm not privy to exactly where things stand in those talks now, but I can imagine that there might be some negotiation room, like, maybe some exemptions being made or a longer phase down period being given. Right now, it's just 1 month. So basically, after 1 month, there can be no deliveries from Rosneft and Lukoil. So that is indeed possible. And the other one, also, as you alluded to, the whole idea is to get to put into the negotiating table. And I do feel, there's some differences out there amongst observers and analysts, whether Putin will buckle this time. I do feel this is a major body blow to him, especially the U.S. going against Rosneft and Lukoil. So it's entirely possible that he does something to de-escalate the situation. I'm not suggesting, find a solution. I think that's going to be very tricky. But just to de-escalate the situation enough to get this pressure off his back. So that's possible as well.
What's your sense also on the prices moving forward from here? I mean, yeah, this week is something else, but when you look at the last 1 month, last 6 months, or this year for that matter, we are trading in the negative, and this perhaps could be a third straight year of negative in that sense.
Yes, I think the overall downward trend of prices this year versus last year, so it has averaged just under $70 Brent, almost $10 lower than 2024 average. And expected to continue edging lower into 2026. I think that is just a factor of, bigger influences at play, which is, global economy is it's in growth, but decelerating growth. So that's not very good for oil demand. OPEC Plus has been unwinding and pretty quickly unwinding some cuts. So there's plenty of supply and very sluggish demand growth. So in that overall narrative, I can see prices just continuing to drift lower.
Vandana, finally, would you say that this is a bigger blow for Russia than anybody else in sense of consumers of oil globally?
I would think so. Of course, it's not a good situation for China and India either, especially for India, which has benefited from the discounted crude. And, once you've sort of built up one-third reliance for your imports, one-third of your imports are from Russia, you can rejig the supply chains, but it's just a lot of headache. Not good for China either. China has a pipeline between, getting Russian crude, almost 800,000 barrels per day. So not good for these two countries. But yes, as I mentioned earlier, I think this is, I feel that this will make Putin think harder than any of the other measures that have been taken against him previously, either by Ukraine or the Western allies.
Okay, all right. So a story which is definitely not done at this point in time. Vandana as well as Manisha, thanks very much for joining in and speaking to us and giving us all of that perspective. So Brent crude currently at around $65 per barrel. Need to take a break with the news that the Nifty is just about lower by around 48 points. Just want to point out that Kotak Mahindra Bank is one of the Nifty stocks which is losing around 2% at this point. And why exactly is that in focus is because it comes out with its numbers on Saturday. So ahead of that, that stock is weak. So Kotak Mahindra Bank down around 2%. Dr. Reddy's comes out with numbers today. So maybe we should just pull up that stock and see how that is doing, holding up with a gain of around 0.3%. We'll take a short break, but up next we'll get you more on the markets. A lot of stocks in focus. Stay tuned.
Well, moments ago, we were talking about the oil and, the energy space in general in the commodities arena. But now let's take it stock specific. In our special segment, Quarter Se Quarter Tak, we'll bring you earnings expectations from oil and gas sector today. And Sonal joins in on the big wall. Sonal, what is expected of this sector?
Thank you so much for that. We are expecting a mixed quarter coming in from oil and gas space in the Q2 earnings. Now, do remember, we did see Reliance's numbers. The refining performance was quite strong this time around. Company reported strong numbers despite some moderation in petrochemical margins. So let's now move to the oil marketing companies. That's BPCL, HPCL and IOCL. They are set to report robust year-on-year growth thanks to elevated marketing margins. However, those margins have softened on a quarter-on-quarter basis. But on a YY basis, diesel margins, they jumped 39%, ATF margins were up 22%, and LPG margins rose 4%. Even though LPG operations continue to post losses, those losses have nearly halved on a sequential basis to come in at 4,000 crore rupees. But overall, EBITDA is expected to surge sharply, 92% for BPCL, 130% for HPCL, and a whopping 191% for IOCL. This is, of course, on a YOY basis. But on the other hand, GAIL, that is the gas utility company, could see a weak quarter. Lower transmission and trading volumes are likely to weigh on performance, with EBITDA expected to decline 26% on a YOY basis. That's on the back of a 9% drop in transmission volumes and weaker trading spreads. For the city gas distributors, or CGDs, margins are under pressure due to higher feedstock costs. Mahanagar Gas, remember, took a price hike in the second quarter to partially offset those input cost increases. In terms of volumes, IGL and Mahanagar Gas expected to post 5% growth and 9% growth on a YOY basis respectively. But when it comes to profits, EBITDA could be down 9% for IGL, 10% for Mahanagar Gas and 9% for Gujarat Gas. So overall, while refiners and OMCs are set to deliver strong earnings, the gas utilities may continue to face near-term challenges due to rising input costs and softening demand.
Okay, Sonal, thank you so much for that. But, on that note, we're actually going to sip into a very short break. We'll come back with more on the markets, focus on Dr. Reddy's as well as SBI Life, which will be in focus ahead of the numbers as well. Welcome back to Halftime Report on CNBC-TV18. Nifty is where we started the show with a bit more of a decline that we've seen, because now it's down 74 points. When we started the show, it was down almost 50 points. So further decline, 25,816 is what the Nifty is at. But Dr. Reddy's, that's the one we'll keep an eye out on. They're expected to report the Q2 FY26 numbers today. What are we expecting this time? Ekta, over to you.
Well, yes, for Dr. Reddy's this time, the revenue is expected to grow around 7% this time. Margins are expected to come in at around 25.7% and a profit growth of around 5%. Now, the US sales are likely to be subdued this quarter due to a lower contribution from Revlimid generic, plus as well the price pressure in the base business. Now, the US sales estimate is wide. It ranges from around $395 million, which is a flat performance Q-on-Q, to around a 5 to 6% Q-on-Q decline as well. So the street is quite torn in terms of what they could probably report in the US. Domestic sales, however, are expected to be steady, so around a 10 to 12% growth. Expect 15% growth in Russia, led by the rupee depreciation as well. Europe is likely to grow around 7 to 8%, led by the NRT portfolio, which is basically the nicotine anti-nicotine portfolio that they have there, and the street is factoring in maybe 105 million pounds in terms of the NRT portfolio this quarter. Rest of the world is likely to grow around 2 to 3% on a high base, and the margin range is around 25 to 27%. Commentary with regards to GLP-1 opportunity, especially in Canada, US pipeline of launches, as well as the situation with regards to what's taking place in the US. So that's what we can expect in terms of Dr. Reddy's. But we do have Yash, who's joining in to tell us what to expect from SBI Life as well.
Well, SBI Life, of course, reports its second quarter results today. As far as the premium collection itself is concerned, that is expected to remain healthy, largely because of the strong performance which came in the month of September. The new business premium, as I said, expected to grow by 27%, expected to come in at about 11,077 crore rupees. The total APE is expected to grow by 9%. The number that we are expecting here is 5,865 crore rupees. The retail APE, slower growth expected here, growth of about 5%. The number that we're looking out for retail APE is about 5,206 crore rupees. Importantly, VNB is expected to see a growth of 9% at about 1,577 crore rupees. And finally, the margins expected to remain flat or about down about 1 basis points at 26.89% versus 26.9%. Importantly, 5 things which brokerages are watching out for. They expect SBI Life to deliver subdued APE growth due to a slowdown in ULIP portfolio. Margins expected to remain insulated due to shift in the product mix towards non-par and protection. Investment in distribution and GST impact may offset VNB margin improvement. And finally, SBI Life is expected to be least impacted when it comes to the GST changes, just due to low OPEX ratios.
Take that point, Yash. Thank you so much for that. So SBI Life earnings, those are the expectations. Meanwhile, as we close on this edition of Halftime Report, just watch out for a couple of stocks in the broader markets, which are actually doing a lot better than the other parts of the market. So defense is doing well, so are defense ancillaries. So Shipping Corp, for instance, up around 7%. A lot of volumes backing that stock as well this week has been good for them, up around 20% this week. The other one is metal ancillaries doing too well as well. So Gravita, which is a company obviously in the lead recycling business, that's up around 6% as well. And we are seeing some traction in a real estate company, Signature Global. The first half of this year, not particularly good for them, but the management did indicate that they are on track for launches for the second half of this year, along with collections of nearly 6,000 crores as well. So Signature Global up around 4%. With that, we are out of time on this edition of Halftime Report. You stay tuned. Business Lunch takes all the market action forward. Thank you for watching.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI, बेस्ट है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग. In association with Prakash Surya Steel Tubes and Pipes and Polycab, India's safe, happy connection.
Stocks drift down with the market breadth seeing a negative tilt. FMCG, financials and healthcare are the big drags while metals and realty stocks gain. Blackstone has inked a deal to pick up just under 10% stake in Federal Bank through a preferential issue of warrants worth close to 6,200 crore rupees. The private equity giant will also get to nominate one non-executive director. The deal takes the tally of foreign investments in India's financial sector in 2025 to $7.5 billion. A collapse in a Dominican Republic mine pushes copper prices higher. A shutdown of Alcoa's refinery in Australia boosts aluminum to a 3-year high. And bottlenecks in Japan and Kazakhstan smelters lifts the prices of zinc to over $3,000 a ton. The Defence Acquisition Committee clears proposals worth close to 79,000 crore rupees for the Army, Navy and the Air Force, spelling big business for a lot of these companies. The stocks move higher as well. And Cipla has inked a pact with Eli Lilly to sell its popular weight loss drug Mounjaro in India under the brand name Urpeak. While Eli Lilly will continue to sell Mounjaro in India, Cipla will help it penetrate deeper into the market. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. And after all the Diwali-related fireworks in this truncated week, the markets are taking a bit of a breather. That breather had begun in the second half of yesterday's trading session itself, and that continues going into the final trading day of the week as well. The Nifty currently fighting to hold that 25,800 mark, made an intraday low of 25,783, and it's finding support from those levels. Saw a bit of a rebound just a few minutes earlier. That rebound is now being sold into. So still above that 25,800 mark is the index. What's leading it lower are the banks. The Nifty Bank now almost 700 to 800 points below the record highs of well over 58,500 that the index has made. At the lowest point of the day now is the Nifty Bank, 360 points down there as well. It had opened higher, but then has seen consistent profit booking from higher levels. What is doing well though in today's session are the metal stocks. And all of those aluminum, zinc, copper, take a metal and any related proxy is doing well for itself. Vedanta has crossed the mark of 500 for the first time in 2025, and also its peers such as Nalco, Hindalco, all of them doing fairly well for themselves, gains of between 3 to 4% in today's trading session. And among the we are counting down to earnings. We're counting down to earnings from Dr. Reddy's later this evening. We are counting down to earnings from SBI Cards. And of course, we are counting down to earnings from SBI Life Insurance as well. And just before we move on, pull up Kotak Bank. Kotak Bank too was at the lowest point of the day on last check, reporting results tomorrow. Keep an eye out on Kotak Bank as well. Since we are on the subject of financials, Blackstone's 9.9% stake acquisition in Federal Bank marks yet another big investment in the Indian financial sector after RBL, Yes Bank and IDFC First Bank. Gaurav is here with more details on this.
When we look at the financials, it's actually raining capital is what we can say, because in the Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself. Now, it seems the wave of money isn't slowing down anytime soon, because the latest headline, the deal that we saw, is Federal Bank and Blackstone. Now, Blackstone is set to invest around 6,200 crores for 10% stake in the Federal Bank, and this will be through preferential issue of convertible warrants at a price of around 227 rupees per share. Remember, the conversion will also make Blackstone the largest shareholder of the bank, and it's not the latest. When we look at the series of other high-profile bets that we have seen in the year, let's also not forget about the recent amount of money that we have seen flowing in RBL Bank. Now, on 18th of October, Emirates NBD, now that announced a plan to invest up to 26,800 crores. Now, this is around $3 billion for 60% stake in RBL Bank. Now, again, this is through the preferential equity at a price of 280 rupees per share, and this is actually the largest foreign direct investment that India's financial service sector has ever seen, and this will also make Emirates NBD the promoter of the bank. And this is not just going in the banks, but it is also the trend seeing in NBFCs as well. Sanman Capital, for an instance, when we look at the deal earlier this month, Abu Dhabi's ICICI, that they committed around 8,850 crores for as much as 41% stake in the company, and at the same time this will also trigger the open offer for mandatory 26%. Now, this is the biggest capital infusion seen by any investor in NBFC, and at the same time with this, ICICI is also set to become the promoter of Sanman Capital. Meanwhile, secondary markets, they did not fall behind. When we look at these markets, they are also reshaping the ownership pattern, because when we look at Yes Bank, we recently saw Japan's Sumitomo Mitsui. Now that is increasing its stake almost to 24.2% after an addition of around 16,300 crores investment through open market in September. Now that will make SMBC as the largest single foreign shareholder in Yes Bank, but it will not be marked as promoter. But at the same time, private equity firms, they are taking their bets, because let's not forget about IDFC Bank as well. Warburg Pincus invested around 4,876 crores in IDFC First Bank, and at the same time we also saw ADI infusing another 2,600 crores for about 5.1% stake in IDFC First Bank. So whether it's banks, NBFCs, the message is very clear. Global investors, now they're betting big on India's financial story. And the stock price, when we look at the stock price movement also, they are not disappointing. In fact, when we look at some of the stock prices, for the last 6 months, RBL Bank, they have delivered around 60% of the returns for investors. We also have IDFC First Bank, Sanman Capital delivering more than 30% return to the investor. Now the question is this just a smart capital chasing growth, or the beginning of structural re-rating for India's entire financial sector? Well, whatever the answer is, it is definitely that the investments are telling one thing for sure. Sentiments around Indian financial sectors, they are becoming strong, not by just foreign investors, but also by the domestic investors, by the way that we have seen flows going in banks as well as NBFCs in this year so far.
Gaurav, thank you for that update. Now, earlier we spoke to Dinesh Khara, the former chairman of SBI, and Prateek Shah of EY India for their insights on these slew of foreign investments into Indian banks and what it means for the sector. Listen in.
The recent one, which is Federal Bank, Blackstone taking stake in Federal Bank to the extent of 10%. So I think Blackstone has been there in the country for quite some time. They were into the financial sector, into various other entities, and it was a good opportunity. And the reason why they are all picking up stake in the mid-sized bank is that first, the growth opportunity among the mid-sized bank is significantly higher. And also with the improved capital, their ability to undertake risk also goes up. And also, to my mind, there's an excellent opportunity into the SME space, which perhaps the mid-sized banks would like to really tap now. Because earlier they were all focusing on the unsecured retail lending. But to my mind, the decent opportunity into SME will probably be very, very promising various area for the mid-sized banks.
For Indian banks, this inflow is not merely about balance sheet expansion. It is about access to long-term patient capital that can fund credit growth, really help with technology modernization for a lot of these institutions, bring product diversification, especially at a time when domestic mobilization, has been a challenge. And obviously, the various investors, depending on whether it is a private equity or strategic investors, especially the strategic investors like ENBD and SMBC for that matter, will bring in a very different take in terms of risk management, digital capabilities, product expertise.
Now shifting focus to the other pocket that's doing well today, and that is the metal stocks, and aluminum prices have breached the $28.50 per ton mark. Nigel is here to tell us more on this. Nigel.
Well, that's right. Aluminium stocks, they're flying away in today's trading session. We here at CNBC-TV18 had made this point before market open that there's possibly going to be the sector of the day. Let's tell you why. Couple of reasons. One is LME aluminium prices. They have breached the $2,850 per ton, which is a 52-week high. The stocks that have direct exposure, Hindalco's India business, Nalco, they have alumina, but they also have aluminium in their business. And Vedanta, the largest constituent of their SOTP, comes in from the aluminium business. And once it's demerged, that will unlock significant value. What are the reasons? Tight demand-supply dynamics are playing out. In fact, it's a smelter in Iceland that's been put on supply, put out of supply temporarily, and that was close to around 100,000 tons. Short point is, demand seems to be strong, and supply, well, there seems to be various headwinds on that front. Besides that, later this month, we are likely to see some monetary easing. The Fed is expected to cut rates. When the Fed cuts rates, it's normally good for base metal prices as well. And inventory levels as well globally have been moving down. So that's why LME aluminium prices are holding but strong gains. The other reason that's impacting Novelis in particular and Hindalco in turn is Alcoa ended up by more than 10% overnight. And their CEO made a very, very important point. He said that the current prices, the Midwest premium, fully cover the tariff impact. Now, this will be a positive read-through for Hindalco's Novelis because remember, the big fear was they're going to be importing some part of their raw material from Canada, and that's what will hit the profitability. But if the LME prices are moving up and the Midwest premium have moved from around $500 per ton to around $1,500 per ton, that will spell good times and that could nullify the negative impact of the higher tariffs. So put all this together, aluminium is shining bright in today's trading session. Back to you, Hormuz.
Shining bright indeed, Nigel. Thank you for that. And the metal stocks doing well for themselves in today's session. Now, the other one, of course, witnessing some profit booking on the back of news flow is Cipla. And signed a deal with Eli Lilly to distribute and promote the weight loss drug Trizeptide in India. And Ekta is now joining in with more on this. Ekta.
Well, yes, an important development which has come in for Cipla because Eli Lilly and Cipla have signed an agreement for Tirzepatide in India. Now, to put it into perspective, Tirzepatide is basically Mounjaro. That is how the drug is branded by Eli Lilly and sold globally, as well as launched in India earlier this year. Now, this agreement is basically for distribution and promotion of Tirzepatide in India. And Cipla will be marketing this drug under a second brand name which is called Urpeak. What this will do is that it will enable access across the country beyond cities where Eli Lilly is already present with Mounjaro. So the deal includes the fact that Lilly will be manufacturing and supplying Urpeak to Cipla, and the price will be same as Mounjaro. So what Cipla will be doing is that they will be using their distribution strategy and allowing more access to Mounjaro, or rather Urpeak, in areas that Eli Lilly cannot access easily. Now, in terms of what the analysts are assuming, it could possibly add around 3% to Cipla's domestic revenue and around 1.5% in terms of EBITDA in the next 3 odd years. The GLP market itself is extremely large for the Indian market, or it could be growing to around $1 billion in terms of size over the next 4 years, and hence it is a lucrative market to be in. Also, Cipla has tied up this deal, which is expected to be an innovative deal, early on, right before semaglutide, which is basically Ozempic, Novo Nordisk's drug, which is a GLP-1 drug and competitor to Mounjaro, will be going off patent in January. So this basically comes ahead of that and possibly will allow Cipla to gain some amount of market share when it comes to Urpeak or Mounjaro, as it is branded by Eli Lilly. Also remember that Mounjaro has been gaining a lot in terms of market share in India. It's risen to be one of the top drugs in the Indian market. It's generated sales of over 200 odd crores since it has been launched.
Over 3% lower, Cipla witnessing profit booking after the news announcement coming in. Ekta, thank you for that update. Now, the other pocket in focus has been defence, and that is after a nod for capital acquisition proposals worth over 79,000 crore rupees for the Army, Navy and the Air Force. Upasana is here with some of the key beneficiaries of this. Upasana.
Well, DAC clears procurement proposals worth 79,000 crores, taking the year-to-date total for this financial year to as high as 2.5 lakh crores. Now, let us look at what are the key beneficiaries according to Elara Securities on the back of this. Indian Army, NAG missile systems, Bharat Dynamics will be in focus on the back of this, and the order estimate here by the brokerage is 2,000 crores. Next up is ground-based mobile system. BEL is the key beneficiary here. Coming to Indian Navy, landing platform docks, various shipbuilders such as Cochin Shipyard, MDL, GRSE will be in focus on the back of this, and the order size estimate here is as high as 60,000 crores. Now next, moving up to naval surface gun, BHEL and GRSE are the key beneficiaries here. Advanced lightweight torpedoes, Bharat Dynamics with an order size estimate of nearly 500 to 1,000 crores. And lastly, coming to electro-optical infrared search and even track systems. On this counter, BEL will be the key beneficiary. So all in all, we'll be watching out for all these counters on the back of these key beneficiaries.
Upasana, thank you for that update. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, Commerce and Industry Minister Piyush Goyal says that India and the United States are making progress in negotiations for a proposed trade agreement, and he hopes that the deal will materialize in the near future. Listen in.
We are in dialogue with the United States of America. Our teams are engaged. We recently had the Commerce Secretary visit the US, and he met with his counterparts. We continue to engage with them, and talks are progressing. We hope to work towards a fair and equitable agreement in the near future.
Now, sources say that the government's high-level panel has proposed a series of measures to ease compliance and unlock credit for the MSMEs. Shivani is here to tell us more on this. Shivani.
Well, yes, India's MSME sector could soon get a major regulatory boost. Sources tell CNBC-TV18 that micro, small and medium enterprises may see sweeping compliance relief aimed at reducing cost and unlocking credit. Now, key proposals made by the high-level central panel under Rajiv Gauba, the Niti Aayog member and ex-cabinet secretary, include expanding the credit guarantee scheme to cover medium enterprises, giving them easier access to collateral-free loans, and also the first-time compliance lapses by small businesses could now attract warnings instead of penalties, while penalty interest on delayed tax payments can be reduced to ease cash flow pressures. In another proposal, the panel has suggested to cut regulatory burdens. It's been suggested that mandatory CSR obligations for MSMEs be scrapped and the audit exemption threshold be raised to 1 crore rupees in turnover per year. If implemented, these changes could simplify operations for India's 6.5 crore MSMEs, boost formalization and free up resources for growth, a step experts say could give small businesses the breathing room they need to expand and thrive. Back to you.
Shivani, thank you for that update. And take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, in a sharp escalation of trade tensions, US President Donald Trump has ended trade talks with Canada following an Ontario government ad that used audio from former President Ronald Reagan criticizing tariffs. Donald Trump has called the ad fraudulent and accused Canada of interfering with US affairs. He also defended his tariffs as vital to the American economy. Canadian leaders are yet to respond, but the move threatens to worsen the already tense trade relations between the two long-time allies. Now, the 20th Central Committee of the Communist Party of China wrapped up its fourth plenary session in Beijing. CNBC's Elaine Yu joins in with the key details.
China's Central Committee of the Chinese Communist Party has released the communique from its fourth plan, mapping out the next 5-year plan for China. And the top priority is technological strength and tech self-reliance, as well as advanced manufacturing, innovation, and industrial upgrading, also high quality growth. So these are very much continuing on and doubling down on the earlier goals of the previous 5-year plan. And this comes as no surprise given the geopolitical tensions around tech restrictions as well as sanctions from the West. And AI will be in focus for this next phase of China's tech-driven growth. Let's take a listen from the press conference on AI and China's plans around that.
Advance the Digital China Initiative. We will develop an integrated digital market that is open, shared by all, and safe, and deepen the integration of real economy and digital economy. We will accelerate digital innovation in such fields as AI, ensure effective supply of computing resources, algorithm, and data. We will fully implement the AI Plus action to empower different sectors in an all-around manner.
What is also new and notable from the communique about the fourth plenum and the 5-year plan is a reference to tackling overcapacity. Now, they didn't use this word exactly, but they said China must maintain a, quote, reasonable proportion of manufacturing. And Chinese analysts say that this is calling for China to move beyond that subsidy-heavy, industrial-heavy playbook of expanding capacity. And Morgan Stanley said this is putting innovation over involution, and this is something we'll have to track how well it does in bringing that capacity down and boosting domestic demand instead.
Now, Piyush Pandey, the iconic Indian advertising legend, has passed away. Renowned for his creative genius and leadership, Pandey leaves an indelible mark on India's advertising landscape. As the executive chairman and creative director of Ogilvy India, he crafted some of the most memorable campaigns, inspiring generations of creatives. His legacy will continue to inspire and influence generations.
Are trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. And I try to engage people. I respect the receiver. Something that I get moist eyes every time I see it. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's was written from here. So I think these are things that one would remember always.
Co-powered by SBI, best है सबको पता है, and Bank of Baroda के संग त्योहार की उमंग. In association with Prakash Surya Steel Tubes and Pipes and Polycab, India's safe, happy connection. Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Good afternoon. Welcome to Midcap Radar. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. We are down 125 points as we speak, broken that 25,800 mark. There was some recovery at around 12 p.m., but that has been sold into, and some interesting moves in the mid-caps as well, down 0.4% as we speak.
That's right. Good afternoon, Sonal. The good part is it's the last day of,
yes.
of the week. Very truncated week, so that was the good part. But like you mentioned, a lot of selling pressure yesterday. From the day's high, we've lost quite a lot.
Almost a 350-point cut from the highs.
Yesterday morning, we were hoping that we may hit lifetime high levels, but that at this point of time, those hopes are quite far away. But we have a lot lined up on the show and some important earnings to discuss as well. So let's start off with the top headlines. Stocks drift down with the market seeing a negative tilt. FMCG, financials and healthcare are the big drags, while metals and realty gain. Mid-caps flat.
The Defence Acquisition Committee clears proposals worth 79,000 crore rupees of the Army, Navy and Air Force, spelling big business for Indian vendors like Bharat Dynamics, BEL, Cochin Shipyard, Garden Reach Shipbuilders and Mazagon Dock.
Laurus Labs in focus after the company in its con call says they expect gross margin to remain around the 60% mark versus the earlier guided range of 50 to 55%. Jefferies issues an underperform call but raises its target to 700 rupees a share. Goldman Sachs issues a sell call while DAM Capital issues a buy call as they expect further strength.
EPAC prefab gains for the second straight day after reporting good Q2 numbers. The stock has surged over 10% today after seeing a surge of around 15% yesterday as well.
Midwest lists at a 10% premium versus its issue price at 1,065 rupees a share. The management tells CNBC-TV18 that the largest tailwinds are expected from new businesses like quartz and the solar gas industry.
Okay, a lot of stocks on our radar. Today we'll discuss them in greater detail. For now, the mid-caps are down 0.5%. The small-cap index should also come up for you on the screen. That one is down to 0.2% as we speak. There's been a sharp fall in the mid-cap index. It is at the day's low, and that is the similar story with the small-cap names as well. For the Nifty, of course, that 130-point cut is what we are talking about. And banks, those are the biggest losers today. 0.9% gone there. Across the board, the markets are at the day's low, and we do have a lot of names which are leading to this fall as well. Some pressure coming in on these financial names in the Nifty pack, and also some of these IT names which are pushing the Nifty lower. And despite those big deals happening in the financial space, we continue to see that fall that come by. But yes, mid-caps are in focus.
Well, that's right. And this is our special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us through the list of mid-caps that are making all the moves as far as the broader end of the markets are concerned. Hormaz, over to you.
Well, you're looking to going into the weekend with some profits and only par for the course considering the moves that you have seen. But there have been pockets that have done well today. And the defense, not as much as you would have anticipated, but some defense ancillary is doing well. Paras defense at one point was up around 8% at around noon, but that recovery has been sold into, so still around 4% higher. Shipping Corporation of India, though, continues to move from strength to strength at the highest point of the day, 8% higher on that stock. And Idea Forge now gaining with around 3% of an up move in today's session. But the metal stocks have been shining all through the morning. They continue to shine today as well. You look at Nalco, Hindustan Copper, Vedanta crossed the mark of 500 in intraday trading for the first time in 2025. And Gravita India too, seeing gains of close to 6%. Now, earnings reactions, not as many, but look at PTC India Financial, that's up 15%. It's still holding on to those gains. Sagar Cement at the lowest point of the day, 6% lower there. And Colgate with brokerages not too enthused by the quarterly performance, still 3% lower on that stock. Now, stocks that have done well on the volumes front, and those names include likes of Credit Access, Grameen, Samman Capital, likely to enter the F&O ban again today, and SBFC Finance, mostly financial and NBFC names, gains of anywhere between 3 to 8% on very strong volumes. And lastly, On the downside, with the broader market names like Dr. Agarwal, Ather Energy is witnessing some profit booking after a very strong week that it has had. Aegis Vopak is at the lows of the day, as is Indofarm Equipment extending its losses, now down 6%. Back to you guys.
Oh, yes, a big fall that we are seeing from the highs of the day, and that is something that we'll discuss now with our technical guest. Thank you, Hormus, for joining us, though, with all those details. So let's go across to the technical guest who's joining us now on the show, Religare Broking's Ajit Mishra. Ajit, good afternoon. Thank you so much for joining in. Do you think we'll break the lows of the day today as well? We've already off quite a bit from yesterday's high. What are the charts suggesting?
Yeah, good afternoon, Sonal. Yes, we are seeing that the profit taking, which started yesterday after the phenomenal gap up start, we are seeing this decline continuing across the board. The large caps, basically where we saw strong traction, specifically in the private banking majors, are witnessing decline across the board. So I believe that it's so far a normal correction, because the way the market have advanced in the recent weeks means it was the fourth successive week where we were trading in green, and the banking index have recently made a new record high, roughly around 8% kind of a gains, something that the banking index have experienced in this recent surge. So it's a normal profit taking, and I believe that 25,650 is the area basically where we have the immediate support, which was earlier acting as a resistance. The record highs, previous record high zone. So as long as we are holding above that mark, we should continue with the buy on dips approach when it comes to the heavyweight, especially from the sectors which are showing resilience or seeing relatively less decline during this fall.
Got that, Ajit. And Ajit, any individual trading buys or sells for our viewers today?
Yeah, certainly. So Chola Finance from the financial basket, wherein we are seeing resilience. The stock is trading at the record highs. It's a fresh consolidation range breakout. So we believe that 1770 is something that the stock might test in the near future. So with stop at 1680, one can go long in Chola Finance. Bharat Forge also is something that one can consider to go long in. After almost 1.5 years of consolidation, we are seeing fresh traction. Yesterday, it was a fresh breakout. So 1410 is what we are eyeing as an immediate target.
All right, take that point. Bharat Forge is seeing that sharp slide from the highs of the day, down 1.5%. Take that point, Ajit. Thank you so much for joining us today and taking us through your chart checks and individual names as well. Well, in a falling market like this, there are a couple of stocks which are bucking the trend. PTC India Financials, that stock is up 15% as we speak. There's Utkarsh SFB, which is up 12.5% in trade right now. We spoke about EPAC prefab in our headlines as well. That stock continues to surge, up 11.5%. Canada HSBC Life Insurance, which is a new listing, that stock is also up 9%. We have Sammaan Capital, which continues its up move, up 7.5%. Jain Resources Recycling, that stock also in focus, reported numbers yesterday, was a good listing. That continues its uptick today in trade as well. But as we slip into a break now, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
investing.
Welcome back to Midcap Radar. Well, one particular stock that listed today is Midwest. This particular company managed to list at a marginal premium to its issue price and continues to trade 6.5% higher. Mangalam joins in on this particular listing. And Mangalam, you also spoke to the management earlier today, right?
That's correct. So, just to give you perspective on what the company basically does, Midwest is, a mining company which has a lot of business coming in from granite and now increasingly quartzite and HMS as well. Importantly, nearly 70% of its business comes in from dimensional granite, which is a premium granite. And importantly, they're also increasing their capacity of quartz once they get the funds from the IPO. That was the object of the issue itself. So currently, basis their capacity, they can do about 250 crores of revenue from quartz, which accounts for sub 30% of their overall sales. Their capacity on this will double, and the granite business will continue to compound at around 11%, which the company has been reporting over the last few years as well. So if you just look at their financials, last year they did revenues of closer to 650 crores with almost 27% margins, a margin jump that we've seen between FY23 and 24. And at the same time, the company believes that this run rate in terms of margin improvement can continue. In fact, their current quarterly run rate of 150 crores, the management, when they joined us, said that they aspire to take it to 250 to 300 crores, taking the total revenue to close to around 1,200 crores, an improvement in margins to around 35-36% by the end of the next 3 to 4 years. So FY30, if you look at the company, you would have about 1,200 crores of revenue along with 35% margins, which takes the EBITDA to close to 420 crores, which makes the company valued at current prices at around 10 times EV to EBITDA on a 4-year forward basis. So that's something we will have to monitor going forward. Remember, currently 30% of their business comes from non-granite, which they believe can jump to around 50% plus. And more than that, international businesses or international peers of this business do margins of over 40%. So that's something that the company can enjoy as well. So taking their blended margins to around 35-36% from 27% that the management had guided for earlier, and that would be their aspiration. So all these factors, something that the street likes. Let's see what they deliver from here on. That's what will drive the share price forward, because at 10 times 4-year forward for a mining company, the valuations do not leave much room for upside. But if they were to show higher revenue growth and improvement in margins, probably the street would like that. In fact, I heard, let's hear out from what the management had to say to us earlier on the channel.
In terms of the largest tailwinds are going to come from our new businesses, which is quartz for engineered stone, as well as solar glass industry, which we have commenced production last quarter. And that is in the short term. And in the medium term, the growth drivers would be the heavy mineral sands project, out of which we will supply the feedstock to the titanium downstream industries, as well as the byproduct monazite, which will cater to the rare earth industry. Our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in. We are sitting on a resource which is rare and supplies to a global feedstock in terms of the granite. And if you look at the margin profiles of similar companies, though they are not in India, outside India, for example, Iluka, which will be a reference in Australian exchange for heavy mineral sands business, their margins are upwards of, it's listed on ASX, upwards of 40s. And in rare earths, you can always refer to companies like Linus Rare Earths, which is also listed overseas, and you can look at those numbers.
All right, that's the management of Midwest. That's a new listing on the bourses. But let's talk about Laurus Labs. The conference call highlights that came by, the brokerage calls as well. The company reported numbers yesterday during market hours, but we got all these updates later. Ekta is joining us now with all the details. Ekta.
Well, for Laurus Labs, I'll just concentrate on a couple of conference call takeaways. They've guided for around 2,000 crores in terms of CDMO sales in FY26. They are on track to achieve this guidance because the first half sales stood at around 970 odd crores. The management expects CDMO sales to be driven by animal health in the next few years. They've attributed the high antiretroviral sales this quarter due to timing and slightly higher demand, but they do not view ARV to clock material growth in coming years. years. The gross margins are expected to remain around 60% versus the earlier range of 50 to 55%. They're expecting an improved asset turnover. The margins are likely to improve further as the company shifts towards small and large molecule CDMOs. The company has announced $600 million in terms of capex over the next 8 years for their new Vizag site, and they plan to invest in modalities such as anti-drug conjugates. The company also, in fact, will be working on an anti-drug conjugate asset and will be filing an IND application soon. The likes of Jefferies has an underperformed call, and the target price, however, has been raised to 700 rupees. According to them, Q2 has beaten estimates. Goldman Sachs has a sell call, target price 775. It was a strong Q2 according to them, beating estimates as well. And DAM Capital has a buy call and a target price of 1,083. They expect further margin expansion soon.
Thank you so much, Ekta, for joining us and taking us through all of the internals as far as the results of Laurus Labs, as well as the key takeaways from the conference call that ensued last evening. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
All right, 160-point downtick on the Nifty as we speak, very close to that 25,700 mark. We continue to get to lower lows for the day. The mid-caps are down 0.4%, and this pressure in the last couple of minutes has come in from a lot of other sectors. Grasim, for instance, is at the day's low. We have SBI, so financials, they continue to be a pressure point for the markets. We have HDFC Bank as well, which is at the day's low. Axis Bank is the other stock that should be on your radar. So a lot of pressure coming in from the financials. The Bank Nifty is down 1% as we speak. So watch out for important levels on the Nifty as we go through the trading day. But what is doing well in today's trading session is the defense companies buzzing in trade after a nod for capital acquisition proposals worth 79,000 crore rupees for the Indian Army, Navy and Air Force. Upasna is here with more details on this one. Upasna?
Well, DAC clears procurement proposals worth 79,000 crores, taking the year-to-date total for this financial year to as high as 2.5 lakh crores. Now, let us look at what are the key beneficiaries according to Elara Securities on the back of this. Indian Army, NAG missile systems, Bharat Dynamics will be in focus on the back of this, and the order estimate here by the brokerage is 2,000 crores. Next up is ground-based mobile system. BEL is the key beneficiary here. Coming to Indian Navy, landing platform docks, various shipbuilders such as Cochin Shipyard, MDL, GRSE will be in focus on the back of this, and the order size estimate here is as high as 60,000 crores. Now next, moving up to naval surface gun, BHEL and GRSE are the key beneficiaries here. Advanced lightweight torpedoes, Bharat Dynamics with an order size estimate of nearly 500 to 1,000 crores. And lastly, coming to electro-optical infrared search and even track systems. On this counter, BEL will be the key beneficiary. So all in all, we'll be watching out for all these counters on the back of these key beneficiaries.
Okay, Upasna, thank you so much for joining in with all those details. By the way, as we've been pointing out, there's a further slip in the markets. We are at that 25,737 mark. Important to see whether we go below this important crucial support as well, 25,700 that is. Now, do remember the majority of this pressure is coming in from banking names because that index is down 1%. The mid caps too are under pressure, 0.5% gone there, and the small cap index is the other one, which is seeing a lot of pressure. So the broader end of the market's not doing so well. Nifty metal index, that was up more than 1%, has come off from the highs of the day. It was supporting the Nifty, but now that's also, of course, has seen some pressure from the highs. In terms of movers in the broader markets, we do have Urban Company, which has been under pressure actually after that bumper listing. That's down another 4.5%. Ather Energy is down 4%. HUL, that's an important stock to track. It was under pressure since the numbers that were reported yesterday. Another 4% gone there. We have Colgate as well on the back of numbers, down 3%. Cipla, despite that positive news that came by, the stock is down 3.5%. So it's very large cap led, and a lot of it coming in from financials.
That's right. You spoke about Cipla, the pharma space. Look at the healthcare names. Names like Fortis are down for the second straight session running, almost 6% lower. Max Healthcare, that particular stock near the day's lowest point. Kotak Mahindra Bank, you have to look at that particular name. One of the top drags ahead of earnings, that particular stock, one of the key drags. Also have a look at HDFC Bank as well as HDFC AMC. Both of these stocks under quite a bit of pressure. And auto ancillary names like Bharat Forge, some commentary regarding the trade deal is something that's weighing in on these particular names as well. But with that, it's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग. In association with
HDFC Sky. Make money matter.
Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Markets, the slip that we saw coming in yesterday's trading session, the second half, seems like that's continued. And today, again, we're seeing a further slip coming in the last half an hour as well. Now, right now, when you're looking at the Nifty, 25,740 levels, down more than 140 around points for a Nifty 50. 0.5% of decline. Day's lowest point around that level is what the Nifty is trading at. 25,700 is an important level that we'll again be keeping an eye out on. Now, other than that, let's look at Bank Nifty. That is also under pressure today. It's down almost 1% in today's trading session. So that is something that's seeing a sharper decline. FMCG, again, that's also down and out in today's trading session. And in the FMCG names as well, we're seeing a lot of pressure coming in for some of the names that in the FMCG pack. HUL obviously was under pressure after its earnings that we saw. But today we have Colgate, Patanjali, Radico, which are also under pressure in today's trading session. Metals, on the other hand, is doing well. So Nifty Metal is among the top sectoral gainer. Keep an eye on that one. Still managing to hold on to gains of almost 1%. Hind Copper, Nalco, Hindalco among the top gainers in the Nifty Metal. But that's the look right now of the market. A bit more of a fall that we've seen coming in for the Nifty 50, the Nifty Mid Cap, as well as the Small Cap. So keep an eye out on that. But this is a show where we solve all your stock-related queries. And to do just that, we have our market experts joining in with us. Independent market expert Shaina Mukaddam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, to answer all those stock-related queries. Shaina, as well as Vaishali, good afternoon, and thank you so much for joining us. Hope you all had a great festive couple of days of off that we had as well. So hope you all had a great Diwali this time. But let's get started with the queries. First query for today is coming from Mohan Kumar, who's writing to us from Kerala. He's holding 35 shares of CAMS. The price is 3,980 rupees per share. Long-term investor, and he wants to know if he should continue to hold or look to sell this one. He's making a loss, China, on this one. But the capital market names, we've heard a lot of people quite positive on this one. What's your view coming in for CAMS?
Well, I believe that he's gotten at higher levels, but even at current levels, it's not the right time to average. Because while it has got a niche, with 85% of its revenues coming in, which is related directly to the mutual fund industry, but there the growth rate is actually softening in terms of, in the current quarters. And I believe that the other segments, which are smaller, like about 15% of revenues, are starting to contribute more. And there the average EBITDA margins are lower. Like their EBITDA margins about 25%, while currently it's about 40-45% on the existing business. So over a period of time, I think margins also will remain a bit softer. Having said that, I think in terms of valuation, it's a very, very strong platform company. But even for that, it is available at more than, if you see the EBITDA, EV, it's more than 10 times FY27 turnover, 10 times more, 10 times. So I think even for a strong platform company, it is expensive. So if I want to average, I would look to average it much lower. I would say closer to about, say maybe 10% lower levels from current levels. I would relook and review, but not at current levels.
Okay, not at current levels. You're saying right now is not the right time to average out. Vaishali, what's your view for this one, right? Since Jan, around that 5,000 market, what it touched about, slightly above that level. And then since then, it's just coming down. There's a bit of a downtrend that's there. On the charts and technicals now, what's the indication coming in for CAMS?
Hi, very good afternoon, Vinny. And yes, so CAMS, as technically from 5,500 levels, we have seen a good corrective move. Right now, we have seen a good consolidation taking place, but a prominent support lies at 3,600, 3,500 levels. So I would say since this gentleman has bought at higher levels, I would say technically it makes it right to average it out at 3,600 levels if this stock falls to that. And well, once you see the momentum and the further conviction comes above 4,000 levels. So 3,600 support, 4,000 above would get this stock back in trend.
Okay, keep an eye out on those levels over there right now for CAMS. Let's move on to the next query for today. We have Raman Khurana who's writing to us from New Delhi. He's holding 80 shares of RBL Bank, prices 120 rupees per share. Wants to know that the recent news flow, obviously, that's come in with Emirates NBD, planning to buy 60% stake in the company. Should they continue to hold or get out of this one? Shaina, your view for RBL Bank?
It makes sense to continue to hold because the money inflow that will come into the bank, this whole money, almost about 26,000 crores is going to flow into the bank. And while some amount may be set aside for capital adequacy, but the remaining quite a chunk of it is going to be used for growing the business. So I think over the next maybe 2 to 3 years, there is going to be a good growth. And this will also improve all financial parameters. Of course, maybe the return on assets will be impacted for about 2 to 3 years. But I think, still overall, the numbers will look much better on all other parameters, including the price to book growth. So I would say you continue to hold. Now he's gotten at very good levels. So hold.
Okay, continue to hold. That's the word coming in from China. Vaishali, what's your view coming in for the stock as well, right? In terms of an up move also, in the last 1 year, when you look at it, it's moved up only. There's no complaining there. But should they continue to hold, maybe book partial profit? What's your suggestion?
I would say to book partial profit, but I would say keep 300 as the stop loss because the stock has given a breakout even on a weekly chart. So that shows that there is something happening for further up move. But of course, some bit of profit booking cannot be ruled out. So if you're a short-term trader, then 300 is the level and you can book partially and buy again at the other support levels. But if time is not the problem, then 300 acts as a good support. And in times to come, this can show levels of 380, 400 also. So, in my opinion, depending on your time horizon, one should take a trade accordingly.
Okay. You can look at maybe booking partial profits, but depending on your time horizon, Vaishal is saying you can look at trade also. Let's move on to the next query. Then we have Rajesh Srivastav, who's writing to us from Noida. He's holding 90 shares of 197 Communications. This is at a price of 407. Making a profit on this one. Wants to know if she should add more shares at the current level. Shaina, what's your view first in terms of Paytm? What should they be doing?
Well, I would not suggest adding more at current levels. In fact, I would say that it is better to take some profits off the table for now, take half the profits, and the remaining half you can hold for the longer term. Because here again, I think with the fast run-up of the stock, now at current levels, it's become a bit more expensive if you're looking at maybe a 1 year period. It's now available at about 8 times the EVs, 8 times FY27 revenues. So while this looks cheaper for a platform stock overall, but here for Paytm, the margins are pretty slim, compared to the other platform stocks, which enjoy very high EBITDA margins. So because of which I think 8 times EV to turnover to EV is a bit high. So I would say that, and also competition is coming in a big way. So I would suggest take half the profits and the remaining half you can hold for the longer term because they do have things going on in terms of a new. They are working on coming up with new applications which would be for transfer of funds, etc. So you can continue to hold the rest for the longer term.
Okay. And Vaishali, what's your view for Paytm now? Last 6 months, it's managed to give 42% return. Should they maybe, book slight bit of a profit, though they're just asking whether they should add. So if you're suggesting add also, at what levels can they look to add more?
Well, I would agree with China because technically too, I think the stock has given a one-way move right from 680 to a high of 1300. So when I'm looking at the indicators also, there could be a chance of some profit booking seen at these levels. So if one has to add, I would say book partial profit. And if one needs to add, then I think accumulate in tranches, say at around 1200 to 1150 levels. The retracement cannot be ruled out to that level. So that way you can better your price and go ahead for the long run.
Okay. Let's move on to the next query then for today. This has come from Umang, who's writing to us from New Delhi, holding 150 shares of Federal Bank. Price is 50 rupees per share. They're making a profit on this one. Obviously, here also, Shaina, we had that announcement that came in the morning for investments coming in for this bank as well, preferential issue of warrants. Your view for Federal Bank on the long term?
I think that's a very positive news flow. In fact, as you mentioned, a lot of banks are getting these funds, which actually is going to really strengthen them, enable them to invest in improving in tech and improving the overall field for the customers. So Federal Bank, I think overall, if you see the first quarter numbers and even second quarter, I think the first half, the growth in turnover in the overall loan book has been a bit soft, below 7%. But now with funds coming in over the next 1 to 2 years, I think the growth will again kick off. They've got a strong partner. With now they will have 9.99% of Blackstone. I think that's a positive news. And overall, in terms of other parameters, in terms of price to book as well as in net NPS, etc., I think it is reasonably priced. So Federal Bank would be a hold at current levels. And in my view, you can also add at current levels.
Okay. Can add at also current levels and continue to hold. That's a view there on the fundamentals. On the technicals, Vaishali, levels that one should be keeping an eye out on.
Well, the stock is at all-time high, and even when I'm looking at the monthly chart, it's showing a robust up move. So in my opinion, this stock is likely to go towards 240, 250 levels in times to come. So continue holding with the trailing stop loss, or else every dip is an opportunity to add more.
Okay, every dip is an opportunity to add more. That's a word on Federal Bank. But on that note, we're going to sip into a very short break. But as we sip into the break, a quick note for our viewers. You must have noticed that there is a money control stock score just above the line graph. Now, this is a score that is assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, including current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. Welcome back to Your Stocks on CNBC TV18. We still have with us Shaina Mukaddam as well as Vaishali Parekh to answer all the stock-related doubts. Let's move on to the next query. This is coming from Mahindra, who's writing to us from Mumbai. He's holding 180 shares of GMM Pfaudler. Price is 1,320 rupees per share. He's holding it since the last 2 years. Now he wants to know, should he continue to hold, sell, or maybe look to average at current levels? Shaina, your view.
GMM Pfaudler, if you see the last 5 years or 4 years, it has been an underperformer, both in terms of stock performance as well as in terms of financials. If you look at their revenues, from maybe FY22 of 2,500 crores, I think current year they should end at about 3,500 crores. So, I mean, there's not too much of a growth. And in terms of stock price, of course, it is underperformed. But having said that, I think from now, having spent all this time consolidating, I think valuations at current levels are now becoming attractive. Also, I think there is likely to be decent numbers that they will report in the first week of next month. So I would hold the stock as of now and review it post the numbers. But I see better levels coming from here in the medium term.
Okay, better levels can come in from the medium term. Wait out for the numbers before you take a call. Right now, hold the stock. Vaishali, your view coming in. What should they do? Should they maybe look to average, hold, sell? Given that, Shaina also just mentioned the stock has seen a bit of a correction and consolidation in the last 1 year. Does it merit maybe averaging at these levels?
I would say so. Actually, the stock right from 1900, the recent high of 1900, has been so sluggish. But there is a strong bottom formation at 1000 levels. Currently, since 2-3 days, we are seeing some buying interest, increase in volume, and some pickup. So near-term resistance comes at 1200 levels. So in my opinion, if it comes closer to 1000, add, and furthermore, add more if it goes above 1200 also. Because above 1200, it confirms an uptrend going towards at least 1350 to 1400. So this is how your cost can also come down and you can see good returns.
Okay, thanks so much for that. Let's move on to the next query. This is from Nimesh Kumar, who's writing to us from Patna. He's holding 100 shares of Yatharth Hospital. Price is 390 rupees per share. They're making a very good profit on this one. Long-term investor wants to know whether they should continue to hold this one. Shaina, Yatharth Hospital, is that one of the better bets in the hospital space? And should they book out profits or continue to hold?
My topic would, of course, continue to be Apollo hospitals. But even Yatharth hospitals, if you compare it in terms of valuation, it is not expensive. Even at current levels, though it's been a very strong performer in terms of price post the IPO, which was about 2 years back. In terms of valuations, if you see on an average per bed, EV per bed is about 3 crores. So which is lower than some of its competitors, the larger hospitals. And also in terms of growth, they have got good plans for growth. From 2,500 hospitals as of now, they're talking of 3,000 hospitals in the medium term. So I would say you can continue to hold. Valuations are not very expensive. Keep a stop loss.
Okay, continue to hold. Valuations are not very expensive. Keep a stop loss. That's a word that's coming from Shaina. Vaishali, on the technicals, what is it that one should be doing now? They've already been holding it for a while, right? Seems like they bought it at 390. But now, should they continue to hold?
I would say book partial profit, because when I'm seeing the charts, I think it's just a one-way rally right from 350 levels to now 800. So no harm booking partial profit, and again re-enter at around 750, 700 levels and better your trade.
Okay, book some partial profits. That's the word coming in from Vaishali. Next query, Kamal Shukla, who's writing to us from Uti, holding 30 shares of Jyoti CNC. Price is 800 rupees per share. They're making a profit on this one. Wants to know if he should remain invested for the long term in the stock. Shaina?
I would say it's better to take some profits off the table because valuation, in my view, for this size of company is pretty expensive. And this will, in my view, limit the upside that you see. So it was a very good, listing that they had. And post IPO, even this stock has given you wonderful returns. This was about 18 months back that they listed. They are CNC machines. They have got good defense orders. But in my view, despite all that, it is expensive. So I would take profits currently and then maybe relook at it a couple of quarters down the line.
Okay, relook at it couple of quarters down the line. That's a word on the fundamentals. On the technicals, Jyoti CNC, what's your view?
There's nothing much happening. The stock is just consolidating. So now that you're holding on, continue holding with stop loss of 800. And if the stock moves above 1100, book partial profit at 1200. That's how I would do this, because there is no clarity in the trend.
Okay, that's a word on the technicals as well. Next query for today. Jinesh Jha is writing to us from Jaipur. He's holding 100 shares of Swiggy. Price is 321 rupees per share. Wants to know if he should continue to hold or switch to some other stock. Shaina, your view for Swiggy?
I would say, in terms of pure valuations, yes, Swiggy is cheaper than Zomato. If you compare it, on EV to turnover basis. But there's not too much difference. So, and I think there's a lot of competition that will still come in. There are other players that will be listed soon in the next 1 odd year. There's intense competition. So I would stick with the leader. So I would stick with Zomato. And there, I think they're really building their business well across 3 verticals. And we saw the numbers also; they were quite good. It's a profit-making business, whereas Swiggy is not as of now. So why not just be in Zomato?
Okay, stick to eternal Zomato is the word on the fundamentals. Vaishali, your view for Swiggy? 321 rupees is the buy price. Should they continue to hold this or switch to some other name?
Well, I would agree. Switch to Eternal because this is not really showing any strength right now. It's only in a consolidation. So partial holding should be in Eternal as well as and book have a small quantity in Swiggy.
Okay. That's the view coming in there for Swiggy. As of now, both the experts are saying switch to Eternal. But that was the last query for today. So Vaishali as well as Shaina, thank you so much for joining us. Hope you all have a great weekend as well. But view on the market, what is it looking like right now when you're looking at it in terms of Nifty, 25,757, slight bit off the day's lowest point. So in the last 30 minutes, maybe it's come up slight bit, very few points, but it has come up at least. Now it's down 130 points, 0.5% of decline for the Nifty 50 is what we're seeing. When you look at banks, that's also seen a bit of a recovery because when we started the show, it was down almost 1%. Now it's down 0.7 to 0.8%. So some bit of that up move that we've seen in the last 30 minutes for the markets. And in terms of the up moves that are coming in, look at Intellect Design. In the last 30 minutes, that's seen an up move. Other than that, Ipca Labs, that's also come off the day's lowest point and come up a bit more. So keep an eye out of that. Intellect Design, a sharp uptick that we're seeing coming in. And also Aditya Birla Sun Life, they reported their numbers. So keep an eye out on that one. That seems to be a bit under pressure after its numbers as well. But that is all the time we have on this edition of Your Stocks. Thank you so much for tuning in, viewers. Up next, we have Closing Bell to take you through the last hour of trade.
Co-powered by SBI, बेस्ट है सबको पता है, and बैंक ऑफ बड़ौदा के संग त्योहार की उमंग, in association with
HDFC Sky, make money matter.
Co-powered by LIC, हर पल आपके साथ. Co-powered by SBI, best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets seem to have opened up on the positive footing as well.
Both at the headline index, I'd like to see actually broader market participation. Board has approved the issue of warrants to Blackstone.
It's still a little cautious. Nifty is down about 40 points at the open.
All dips should get bought into, and I think the markets are headed for new lifetime highs and beyond.
I think the bigger issue is more about how do you position yourself to benefit from this Gen AI spending cycle.
Our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in.
We were already in the red, and right now we are closer to the day's low as well at the 25,828 mark.
Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself.
We hope to work towards a fair and equitable agreement in the near future.
We are down 125 points as we speak, broken that 25,800 mark. There was some recovery at around 12 p.m., but that has been sold into.
Well, that was the day so far. Disappointing considering the optimism with which we started yesterday's trade. The Nifty went to levels of 26,100. And from that level, we're down close to about 350 points for the day. The Nifty Sensex lower by close to about 0.5%. The advanced decline ratio is negative, 1:2. And now even the weekly gains have been erased. So in the second half of the turn, we really took a turn for the worse.
Well, that's right. This uncertainty with regard to the trade front. And I think some on the street believe that we're going to be getting a trade deal sooner rather than later. But clearly, we're getting comments coming from Mr. Piyush Goyal. And he's saying that, that it could take some more time. Yes, there is some work in progress, but don't expect us to rush into it. I think that's the sum and substance of it. And I think we started getting these sound bites an hour or so ago. And from then is when the market started, falling. I think this trade deal uncertainty is something that is weighing on the markets yet again.
It's a story that's played out in the past, right?
Yeah.
The market starts hoping and starts getting very, very excited every time there is some hint of a thaw, every time there's a tweet. And we had that when, the tweets started coming in, or the social media posts started coming in from the US president about that Diwali phone call, etc. But then it's very clear that this in-person meeting is not going to happen at this ASEAN summit. And I just want to read out the statement. We'll play out the bite as soon as, it's live with us. But this is what Commerce Minister Piyush Goyal has said. And he was speaking at the Berlin Global Dialogue. And I'm quoting verbatim. He's saying, we are talking to the US, but we don't do deals in a hurry. We don't do deals with deadlines or with a gun on our head. This is verbatim. That soundbite will come in the next couple of minutes, and we'll play that out to you. And it very clearly, lays out the India positioning, despite all the talk that we've had from, the White House, with the US president saying that he's had a conversation with Prime Minister Modi, that according to him, India will start dialing back Russian oil purchases to almost zero by the end of this year. There's no confirmation from the India side, and this latest statement from the Commerce Minister seems to suggest that, an immediate breakthrough, perhaps not right now. And the market's reacting to that. In any case, we've rallied so much. The market's up 5% in October. So this week, we have basically consolidated and given up a little bit of that gain. So some caution, because we're getting into the weekend, and the conversations are still, going on.
And conversations are going to happen with our counterparts, right? Donald Trump will begin his diplomatic Asia tour, where he will meet with the prime ministers of Malaysia, with Japan's new prime minister, with South Korea, and then end with meeting Xi Jinping. So we'll have to wait by what comes out of there. But it's consequential considering all the tariff tensions that's going around. The rest of the emerging market pack, or the Asia-Pacific region, heads are going to meet him. But at least on the India-US front, there hasn't been any headway so far. And markets appear to be a tad bit disappointed. But again, as Surbhi said, we've had a pretty good run since the beginning of October. The Nifty has been
been rallying from levels of 24,600. So keep that in context as well. Let's tell you what,
No, I was just saying, so before we get to what's on the show, just very quickly, a glimpse of where the profit taking is coming in. Let's just talk about the action right now, here and now. It's actually all-round profit taking. It's a lot of bank stocks that are shaving off gains. It's a lot of consumer stocks where numbers are not hot. And we knew they won't be very hot for the second quarter. Case in point being HUL. Down about 3.5%. Then you have a lot of the larger banks. Nifty Bank is down about 0.7%. So your Axis Bank, etc. Kotak, in the run-up to the numbers on Saturday, is also down 1.5%. So the short point is that there is not too much of a counterbalance on the green side, barring some of the metal stocks, particularly players that are linked to the aluminum price surge, and we'll ask Nigel more about that in just a bit. Hindalco, for instance, is up about 4%. There's some financials because of all the deal flutter that's going around. Shriram Finance, for instance, is still holding up. ICICI Bank is still holding up. But largely, it's a very quiet session. Saving grace for the bulls is that Reliance is not falling, at least. It had started the day on a bit of a soft note, but right now it's at the flat line. So let's see. Of course, that stock is going to play a huge part in the way this week and this session closes out. Rima, so let's
talk about
the
next 1 hour then. So far, it's been a tepid day of trade, but an action final hour coming up on closing bell. The indices have paired early gains. The Nifty stumbled below 25,800. FMCG, PSU banks, the top laggards in today's trade. Financial pack is in the news amid a surge in foreign direct investment, amplifying India's investment appeal. A comprehensive roundup coming up in just a bit. Bucking the trend today are the metal stocks on the back of surging aluminium prices. An impact analysis coming up in closing bell. And as you can see on the screen, India's Commerce Minister Piyush Goyal, optimistic over an impending trade deal with the United States, says he hopes for a fair and equitable agreement, but is not in a rush. The FMCG pack is sulking in trade today. Brokerages mount bearish calls on the likes of Colgate and HUL. You can see the stocks decline 3-4% in today's trade. Detailed analysis in just a bit. But for now, let's get to trade and how you should position yourself in the last hour of trade. Mitesh Thakkar from Bonanza Portfolio is now joining in. Mitesh, what's the trade that you've taken and where are we headed?
Yeah. So on the Nifty, we were talking yesterday that we could see a pullback about 25,800. We've kind of broken below that, so the closing is still not there. But intraday, at least that 25,800, 780 zone was violated. The gap which happened on the 20th of October, Monday, has been filled. But we're still, away from the short-term daily and 2-3 hour chart based moving averages. So I think, as I said, I think in case we remain below 25,800, this pullback or profit booking net decline could head towards 25,600, 25,550 zones. I think that should be it. To me, it doesn't appear that we might go below that. But yes, there's pullback still, because we are still in the process of coming out of overbought levels on the hourly to hourly chart. So I think that volatility, that profit booking will come in. Having said that, these are the counters: 25,600 to about 25,550 on the downside, and on the upside, 26,200, broadly give and take 30 points, I think remains the key level. On the stock side, I have one buy and one sell. That's a buy on Bharti Airtel. That's a stock which is doing well. So positive setup over here. The indicators are good. So Bharti Airtel is a buy with a stop just below levels of 2005 for targets of around 2070. And Adani Enterprise, I think that's the stock which is breaking below its, or just on the verge of breaking below its key support level. So I'll give it a conditional sell. If it breaks 2490, 2485 zone, take a shot with a stop at 2515 for targets of 2420.
Okay. All right, Mitesh, got it. Thank you very much for that. We'll come back to you for some more trading calls in a bit from now. But let's put the spotlight on really the sector of the day, you can say the week, the month maybe, and we're not talking only from a stock price movement perspective. It's the sector where all the deals are happening. And today's big announcement finally came in on Federal Bank. Blackstone is all set to acquire a 9.9% stake in Federal Bank. This is another mega investment in the Indian financial sector. And it follows a string of transactions. We've seen this play out with the RBL Bank, where Emirates NBD checked in. Yes Bank, where the Japanese giant Mitsui checked in. And of course, IDFC First Bank, which also got private equity fund infusion. Gaurav is joining in. Gaurav, Indian banks and financials suddenly becoming very hot with the global players.
Well, yes, when we look at Indian financial segment, it is becoming hot, and it is not just the deals, it is also coming up with a lot of capital. In fact, in this year itself, if you look at the major deals, at least in terms of the major deals, we have seen an inflow of more than 7.5 billion US dollars, which is almost around 65.7 thousand crores of inflow because of the deals which are happening. The latest one that we saw is the Federal Bank, where Blackstone is going to invest almost 6,200 crores for 10% stake. Now remember, this is going to be a huge deal, given that when we look at the capital ratios for Federal Bank, they're actually adequate. So it is really key thing to watch out on how they're going to use these funds. But apart from that, when we look at other financials, we have already seen big deals happening. In fact, we also saw some foreign entities being promoter entity for Indian banks in the likes of RBL Bank. When we look at the deal, Emirates NBD is going to acquire around 60% stake for a cost of 26,850 crores. Now, this marks as the largest deal ever happened in the Indian financial segment, and at the same time, they will also be tagged as promoter. When we talk about financials, NBFCs are not behind, because the same kind of deal happened in Sanman Capital as well, where we saw inflow of around 8,850 crores, and this was from Abu Dhabi's ICICI. Now, this company will also be acquiring around 41% stake in the company, and they will be also marked as promoter. Now, when we look at the secondary market deal, we did not see financials falling behind in that case as well, because in terms of Yes Bank, we saw Sumitomo Mitsui Banking Corporation acquiring almost 24.2% stake via secondary deals, and the total investment of more than 16,300 crores. When we look at the deal, now they will be the largest shareholder, but they will not be tagged as promoter. But at the same time, when we look at strategic investments, we also saw IDFC Bank's deal happening today. Not today, in this year, my apologies. When we look at the IDFC Bank deal, Warburg Pincus, they invested almost 4,876 crores for 10% stake. And ADI, they also invested around 2,620 crores for 5.1% stake. So all in all, when we look at the deals happening, it is not just a change in hand. It is also that the preferential equity that is being issued, and we also saw promoter being changed, or rather being assigned as foreign institute. So definitely it is raining deals and capital in the financial segment. How it plays out or how it is going to play out for investors is a key thing to watch out for. But for now, it seems that financial sector as a whole is at a very spotlight for foreign investors as well as domestic investors.
Yeah, absolutely, Gaurav, take that point. Indeed, it is in the spotlight and the money is flowing in. We caught up with some industry veterans and experts as well to understand where this sudden rush of capital and the sudden rush of foreign interest is coming in from. Here are views from Dinesh Khara, the former chairman of State Bank of India, as well as Prateek Shah of EY India.
The recent one, which is Federal Bank, Blackstone taking stake in Federal Bank to the extent of 10%. So I think Blackstone has been there in the country for quite some time. They were into the financial sector, into various other entities, and it was a good opportunity. And the reason why they are all picking up stake in the mid-sized bank is that first, the growth opportunity among the mid-sized bank is significantly higher. And also with the improved capital, their ability to undertake risk also goes up. And also, to my mind, there's an excellent opportunity into the SME space, which perhaps the mid-sized banks would like to really tap now, because earlier they were all focusing on the unsecured retail lending. But to my mind, the decent opportunity into SME will probably be very, very promising various area for the mid-sized banks.
For Indian banks, this inflow is not merely about balance sheet expansion. It is about access to long-term patient capital that can fund credit growth, really help with technology modernization for a lot of these institutions, bring product diversification, especially at a time when domestic mobilization, has been a challenge. And obviously, the various investors, depending on whether it is a private equity or strategic investors, especially the strategic investors like ENBD and SMBC for that matter, will bring in a very different take in terms of risk management, digital capabilities, product expertise.
Well, that's on the banking sector. But since the market weakness today partly can be attributed to the uncertainty surrounding the US-India trade deal, it will be pertinent to listen in to the big headline that came in from the Indian Commerce Minister, Piyush Goyal, where he said, "We don't do deals with deadlines or a gun to our head." Listen in.
we are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our.
Okay, so with these short-term uncertainties, markets today are consolidating and seeing a little bit of profit booking. Gurmeet Chadha of Complete Circles is now joining in. Gurmeet, just to circle back to banks and what Gaurav was telling us, so many deals happening. I mean, how have you analyzed it, and have you made any purchases in the banking stocks? And if yes, which one?
So Rima, if you see, it all started with RBI changing its stance last year with repo rate cuts. So it started with easing liquidity, lower interest rates. And I think in last couple of policy, it was more credit where, the risk rates were adjusted. And I think with these deals happening, I think there is an important pivot happening in terms of RBI, in terms of allowing foreign players to hold substantial stake. We saw that with Yes Bank. We've seen that with Samman Capital. We've seen that now with Federal and RBL. This augurs well for the industry because this brings in, cost of funds go down, access to global capital goes up, and a change in norms wherein you are allowed to do acquisition finance. You can increase now lending beyond 10,000 crores. So they announced almost 20 measures related to credit and regulatory easing. And so I think it's more a signal that more reforms are coming. And it's very important for a banking sector. These are good marquee names. And it brings the necessary growth capital. Earlier they were restricting it to banks which were in trouble, like Dhanlaxmi, like we saw the restructuring which happened with Yes Bank earlier. I think now it's a signal in terms of they are more comfortable. I also see more trends in terms of the cap on corporate investor limit going from 10%. Maybe it will get increased selectively. Something will be done with voting rights. So these are broader banking reforms voting, and very, very good. I'm a little surprised with the negative reaction today on Bank Nifty, but I think that's part of it. Probably got to do more with the trade deal news than anything else.
Okay, but particularly about Blackstone's investment of 6,200 crores in Federal Bank, what have you made of it?
Very positive. And I think Federal Bank is also showing great turnaround since leadership change. Last quarter was very good. NIMs improved, CASA improved, loan mix improved. Overall, the core operating performance was pretty solid. And this is growth capital. They are well capitalized. I think more the bank diversifies from Kerala to more geographies. There's some bit of a niggling issues with union, etc., because it's an old bank. Once they are able to get that and get the culture right, I think this bank definitely deserves a re-rating in our view. With a disclaimer, we hold it in our portfolio.
Gurmeet, all that glitters is what?
It's gold, Nigel, for now.
But for today, it's aluminium. Let me come across to you and ask you your view on the stocks. And the reason that we're focusing on all that glitters is aluminium today is because LME prices has breached the $2,850 per ton. And that's why stocks in focus today that we mentioned at the start of the trading session, a little before that, Hindalco, Nalco, as well as Vedanta. They are the direct plays on LME aluminium prices. The reasons for the kind of spike up that you've seen in LME aluminium, particularly overnight as well, is that the demand-supply gap, that's tightened a little bit. And there's a smelter in Iceland, just to cite an example, that's put off temporary supply, and that had a capacity of close to under 100,000 tons. So because of that as well, the supply is getting a little bit tighter and demand seems to be quite strong. In addition to that, later this month, there is the expectation that the Fed will go ahead and cut rates. When the Fed cuts rates, it's good news for base metals, particularly aluminium as well. So that's why, in fact, we are seeing some kind of interest on that front. And inventory levels on aluminium have gone down. So point number one is LME aluminium prices have moved up. Point number two is overnight, Alcoa was up more than 10%. But the reason that Hindalco particularly would be in focus today is because the commentary that they came in and what kind of impact it will have on Novelis. Now, the Alcoa CEO said that the current prices and the Midwest premium fully covered the negative impact of the tariff hikes. Remember, the fear was that companies like Novelis as well, they import their raw material from countries like Canada. And if the tariffs are going to be so high, then they stand to lose out. And on a quarter-to-quarter basis, there will be some hit. But the Midwest premiums have moved up from around $500 per ton to $1,500 per ton. So that's what's offsetting some part of this negative impact. Though for Novelis, you need to keep in mind that in September, there was a fire of one of their units. So the operating leverage will not really kick in. There'll be some kind of production loss. However, Midwest prices moving up is a positive read-through for Novelis and in turn, Hindalco. Gurmeet, Well, what's your take? You know, these stocks are doing well in today's trading session. Vedanta, obviously, there's always been that value unlocking possibility out there because of the demerger. Whether or not it happens, that we'll have to, see. But Vedanta has a high proportion of their SOTP that comes in from aluminium. Nalco is obviously a direct play, though there is alumina which has been struggling. And Hindalco, well, that seems to have looked up as well. Among the three, do you like anything?
So Nigel, we like Hindalco. Also, our broad view is that we are in a commodity cycle with what is happening to global supply chains. So there are two spaces which are highly cyclical, which look attractive tactically. One is obviously metals and non-ferrous more, and both precious metals. Second is refining capacity. With so much of disruption, sanctions getting, oil mix changing for different countries, I think the refining capacity has been very low. There's very little capex which has come up, so that seems to be a little more structural. Metals could be more cyclical, depending upon what's happened, news flows. So maybe part of your portfolio, 8 to 10%, you can do between commodities, non-ferrous and precious, as well as refiners. Also gives you a lot of valuation comfort. Some of the refiners are at below replacement cost. Let's say, for example, Chennai Petroleum is what, 1/3 of the replacement cost. Some of these metal names are pretty cheap. So you can play maybe 8-10% portfolio, tactically here, but don't be too greedy once you make a quick return in a market like this. Have clear filters in place, both on the upside and on the lower side.
Okay. Gurmeet, hi. Good to have you on the show this afternoon. Allow me to go back to financials, because in an otherwise slightly dull market, just look at the stocks that are moving higher. Look at Saman Capital right now, 8%. There are lots of other names as well. Actually, let me just get to that list. There's Credit Access, which is 6.5% higher. All kinds of names. Canara, HSBC, Life Insurance, about 3.5%. No, actually 7%, 8% on this one as well. So all kinds of financials, lending, non-lending, really flying through the roof. Saman also, of course, has come through in its new avatar. Gurmeet, any interest in some of these names that I mentioned, and maybe a specific word on Saman? I think everyone's looking for financial ideas beyond the obvious, easy to understand banks. Everyone's looking at tier 2, tier 3, non-lending, insurance. So what would your advice be?
So I think, Subi, one was valuation comfort. Something like Saman was, I think, half a book value, and then obviously the big investment came in, the leadership change happened, the cleanup happened. But my sense is you'll see a couple of quarters more before you start really seeing good growth with controlled credit costs. So we have RBL and Federal Bank in our portfolio, largely again for valuation comfort and turnaround happening with marquee names coming in. We have some NBFCs as well, including, which is more a consumption uptick play, which is Poonawalla, Bajaj, Cholas of the world. I think the non-financials is where probably you'll see higher growth. The AMCs, the capital market plays, the depository sector. Once market activity picks up, once you see more traction coming in, I think even the brokers will join. So I think good time to probably look at some of the capital market plays. And there's been healthy correction in CDSL or CAMS or even unlisted space like NSE. So I think that's something we are looking more at. And we already have, as I said, some of these tier 2 banks to play this. We are quite overweight as far as financials are concerned.
Okay, so you have the names in the thick of the action already in the portfolio, RBL and Federal. That's an interesting one. All right, we'll let you go to enjoy the weekend. Gurmeet, on that note, thanks very much. And once again, season's greetings. We hope you had a splendid Diwali and best wishes for a fabulous new year ahead. So go enjoy the weekend. Well, with that, let's take a quick break. Come back on the other side. We'll have Tushar Pradhan joining in with some more market perspective. Welcome back. Well, it's that time of the show where we have Hormaz joining in with all the firecrackers, the action makers and whatnot, the movers and shakers of the day. Hormaz, otherwise the bulls are a little disappointed with things fizzling out, but I'm sure you've got some patakas on your list.
Indeed, and the bulls in these stocks would definitely not be disappointed for sure. And Utkarsh Small Finance Bank tops the list today. This is the biggest single day gain and volumes that the stock has had since October of 23. It is almost a 20% up move that you're seeing on the stock now. It's gained in 3 out of the 4 sessions this week. But look at the volumes on the stock today. 10 crore shares have been traded on the stock today, and that is in comparison to the 20-day average, which is just 31 lakh shares. Of course, there is a news trigger behind this move today. The 950 crore rights issue that the company had approved has opened for subscription today. So that is one of the reasons why the stock is up almost 20%. And despite this up move, the stock remains below its IPO price, which is 25 rupees. Now, the earnings reaction that is coming in is PTC India Financial Services. And this is also the biggest single day gain that the stock has seen since July of 24. The third straight day of gains today. Volumes are at a record high with close to 6 crore shares that have been traded on the stock today. The 20-day average is just around about 4.5 lakh shares. And because of this move, the stock has moved above all of its key moving averages, but has been an underperformer this year, still down around about 8% in 2025. Now, defense and defense ancillaries were moving around today. The Shipping Corporation is one such name. The fourth straight day of gains, so it's gained every day this week, is up 8% today, but more than the 4 days this week, the stock has gained in 9 out of the last 11 trading sessions. And here too, we have had almost 5.5 crore shares that have been traded. The 20-day average here is only 50 lakhs, so 10x of its 20-day average. This is turning out to be the best month that the stock has had in 2025 and has been delivering positive annual returns right from 2018. And lastly, a weekly mover. The stock hasn't done much today, but on a weekly basis, DCB Bank has been in the spotlight all through and through. It's up for the 4th straight day today. This is up 24% this week, and this is turning out to be the best week that the stock has had since May of 2009. And over 10 crore shares have been traded this week itself. And even in today's session, even if the stock has not done much, we have had more than 1 crore shares being traded. The 20-day average is close to 40 lakh shares. It's above all of its key moving averages, and 22 analysts have coverage on this stock, and all 22 of them have a buy recommendation on DCB Bank.
Incredible, the kind of data you pull out every day, Hormaz. Thank you very much for that. Some other movers, JN Resources, we've been talking about it every day, but 7% up for the week, 16.5%. This month, it's up 70%. That's the whole duration of the company's life on Dalal Street so far. SBFC Finance, lots of NBFCs on fire. EPAC Prefab came out with numbers yesterday, was up 15, I think it didn't end with 15%, but at one point of time was up 15%. It's followed it up with another similar gain. Bulgaria Industries has been a big mover. And Industars, remember the Supreme Court verdict on Vodafone Idea is on Monday. Fortunes of Industar too are linked to.
Well, that's right. And just pull up one more stock, SpiceJet. There's a massive volume spike out there. A big underperformer. But someone's booked their ticket. It has to be a bull. Stock is up close to around 15% as we speak. Big volume burst out there. But there is some pessimism with regard to this trade deal. However, Gokuldas Exports, those investors believe there's something in the offing. That stock continues to go from strength to strength. After yesterday's run, it's up another 3.5%, and it's holding on to those gains as well. So, that should come up for you. And finally, even Idea Forge, get the stock up for you. That as well spiking up in the last few minutes. Tushar Pradhan, though, Director of Hexagon Partners, joins us on the show. Hi, Tushar. Good afternoon. Good to see you in, and season's greetings to you, your family, as well as your team. How are you feeling about the Indian markets, Tushar? Getting into that midweek holiday, the bulls were thumping the chest, and they were like, all-time highs are here. Now, that trade deal is not a done deal, and various pockets of the economy appear a little bit softish. Though the other, the bullish view is things are actually on the mend. How would you approach the Indian markets?
I think that's the consensus which is building up. And thank you very much for your wishes. The same to you, your families as well. What we are looking at is that we've had a very soft year from a market valuation perspective, in the sense that market not having gone anywhere, your earnings coming in at a relatively mild pace. It is actually coming back to fair value. And you have to remember that there's a shift happening globally where there appears to be an attraction for emerging markets. So if you've seen X of India, all the other emerging markets have posted upwards of 20% returns on an average. So the emerging market index is up almost 25% YTD. Now that does tell you that there is foreign interest in emerging markets. It hasn't trickled down to India, and that is partly because of the valuations that we had at the start of the year. I think with some adjustment in terms of what the valuation is and what the prospective year looks like, because the earnings season now is just getting started, and I think the next 2 quarters are going to be pretty significantly positive. If you put all of those two things together, I think there is reason to believe that the Indian markets can have a bit of a run because of the kind of earnings growth that we're expecting and the return of international investors back into Indian equities.
Tushar, when you speak to investors, are you sensing some sort of frustration, the fact that India is still not able to stitch a deal? You spoke about the outperformance, the interest of investors in other emerging markets. They've all outperformed. And it's been a long time, but we still haven't managed a deal. I mean, are you getting some sort of, are you sensing some sort of frustration that, on India, that India should have done something?
No, I think that is... I think something which most of the international observers, and especially investors, have kind of taken in their stride, knowing that India has a lot of initiatives, it has a lot of priorities. So it is not a very bilateral thing to just enter into a trade deal, because we have to take care of so many issues which are so critical for our economy, and not only for this year, but going forward in the next 3, 4, 5 years. So I think everybody understands that the trade deal has to be discussed. It cannot be, pretty unilateral in a sense that let's go and do a deal, because there are so many things behind the scenes which have to actually put together before, any sort of contours to such deal can happen. And I think most investors understand that. They may be frustrated by the number of months it has taken, because we were talking about this right at the start of the year. And it was very likely that India would have been the first among countries to have signed a deal. Maybe it is because of that expectation that the disappointment has been there. But I think now people are getting a better sense in terms of where we stand. And I think India's prospective chances of having a deal now much better than where they were at the middle of the year, because the geopolitics having been a little bit more on the milder side, I think there have been positive statements from each side coming through. I think there is a lot of positive expectation again building up, that not only in the speed in which the deal will happen, but it might be a bit of a win-win. I think the people have understood that this cannot be instantly done. They understand that even if there is a change in our view, it will happen over a period of time. And I think that is the biggest positive I've taken, that there has been some sort of acceptance of each of the sides' emergencies, or like I would say priorities. And I think there is a lot more positive news to expect in the next few months for us.
We hope so, Tushar, absolutely hope so. But going by the Commerce Minister's statements this morning in Berlin, things seem to be a little different, because he's again singling out, and I'm just reading out some more statements. We'll have more bites playing out in just a minute. He says that India looks long-term. It never takes decisions in rush or on the pressure of the moment. And he says that we don't think that we have ever decided who is our friend based on any other consideration other than national interest. If someone tells me I can't be friends with the European Union, I won't accept that. So he's going on to talk about how this Russian oil issue is a global issue. And he says that we are all in it together. The decision to buy a particular product from a country is something the entire world will have to take a call on. Why single out India? So some pretty straight talk coming in from the Commerce Minister in Germany this morning. And we'll play more sound bites from that conversation in just a bit. But Tushar, coming back to earnings and the other side of the picture, so the India-US trade engagement is still kind of clouded, and we need to see how it resolves itself. But earnings and the first signs, say from financials at least, are fairly encouraging. Even FMCG companies are not reporting a very hot Q2, but they're all talking about a better second half. So just from an earnings growth perspective, which are the sectors or the pockets of the market where you are pinning your hopes for not just Q2, but the rest of the year?
I think pretty much the entire capital goods side, which was actually reeling from the fact that the ordering kind of, went a little bit soft. Many of the prices had gone a little ahead of the expected volume, which was to be expected from these bookings of the capital goods kind of sector. That took a bit of a breather. So I'm very, very confident that the second half is, first of all, going to be pretty significantly positive for capital goods. I also believe that financials, which have been again under a cloud for many reasons, will come roaring back for the same reason that the first 2 quarters have been a little soft in terms of the credit growth. But as we see, the 2 major imperatives that we currently have is to increase consumption and especially discretionary consumption. And the GST regulation change has come as a windfall for most of the discretionary consumption areas. And I think the banks and the financials will actually lead it because they're the ones who are actually going to finance or really bankroll, the increased consumption in the discretionary area. And then that will follow up with, the cars and obviously the discretionary goods, which will, again, I think by the end of the year, will come up with something really significant. If you are to go with any of the early polls which have been taken by some of the people around dealers, especially car dealers or even electronic goods, they're actually talking about a very, very significant upturn in terms of purchases across the board. Now, this can encompass, even things such as payments, small transactions. You can even talk about personal finance, etc. So there's going to be a pretty significant surge in terms of volume of business going forward. And I think if we just put a finger on, 2 or 3 of these sectors, I think we'll get some very significant winners along the way.
Thank you very much for joining in, Tushar. Enjoy your weekend. Always great chatting with you. Now let's talk about futures and options. Nigel brings us the latest. Nigel.
Well, the call riders have come back into play in today's trading session. 26,000 call yet again is very active in trade today. And Given Company on the upside is at 25,900 call as well. So between both of them, the open interest build-up is massive, telling you that the call riders believe that those fresh all-time highs, we'll have to wait for a little bit longer. Just take a look at the premium. The premium has crashed on both those two by around 60 to around 70%. What's giving you some hope is that still this market is an uptrend, is that there is put writing as well that's taking place. So the 25,700 put, there's a bit of a mix of activity out there. The premium out there has moved up a little bit. From the start of today, it's moved from roughly around 40 rupees to around 46 rupees or thereabouts. So, these writers, they're expecting the lower levels to hold out. And I think this band of around 25,500, around 25,700 is extremely crucial. If this band breaks, then all eyes on the 20 DMA. But going by the options data and going by the way on our uptrend as well, this was a resistance mark. So it's important that we do protect these levels. Stocks that are in focus in today's trading session, well, Cummins, that's seen a big open interest build up out there. Massive, actually, more than 10% open interest build up. And even a market that's wobbly, that's seeing some fresh buying out there. Cipla, on the flip side, the last few days, there was some delivery-based buying. And the street was sensing that there is some news that is likely to come about. It appears, the news flow that's come about is not up to expectations. So that's why the stock is down 4% and open interest as well is massive. And there are 2 stocks actually that are on the edge. They could possibly move into the F&O band. SAIL, there's a big open interest built up out there. It's on the edge out there with regard to move into the F&O band. Maybe it has another session to move into that. But the open interest build up is there. So keep an eye out on that. And Sammaan Capital just came out of the F&O band. Well, it's seeing a surge in terms of open interest, and we had mentioned it as one of the stocks of the day since it came out of the F&O ban after a while. But that could potentially be trying to sneak its way back into the F&O ban. So I think maybe one more session or maybe today as well. Both these 2 stocks, SAIL as well as Sammaan Capital, on the verge of moving into the F&O ban. Back to you, girls.
Okay, all right, got that. Nigel, thanks very much for that. Before we move on and talk about more stocks and sectors, let's now play out some of those sound bites that I was referring to earlier. This is Commerce Minister Piyush Goyal speaking in Germany earlier this morning, talking about the way India engages with global powers and the negotiations and conversations that have been ongoing with the US on the India-US trade deal.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head. India looks long term. India never takes decisions in a rush or on the pressure of the moment. And we've accepted if there's a tariff on us, there is a tariff on us. We're looking how to overcome that. We're looking at newer markets. We're looking at a stronger demand impetus within the Indian economy. So we have a very resilient structure. Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil from the US.
This is about the Rosneft deal, sanctions, right. I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
Fiery. That's the Indian Commerce Minister, and he is not really beating around the bush at all. Very, very straightforward statements coming in over there that why is India being singled out when other countries, including those from the European Union and even the UK, are seeking out their own carve-outs from those US sanctions against some of the Russian entities there. So a very, very interesting conversation there. And what it tells us right now, till we know more, is that at least the Indian side, purely going by the body language and the statements from the Commerce Minister, the Indian side doesn't seem to be in any hurry or in any rush to quickly back down and subscribe to the American view that we need to stop buying Russian oils. This is contrary to what Mr. Trump said in the White House, describing his phone call with the Prime Minister.
But the barometer of this US trade deal, Gokul Das is still moving up. In the last 2 hours, the market has moved closer to the low point of the day and recovered. Gokul Das is saying there is a deal somewhere in the offing. The stock actually has moved to the high point of the day. Just take a look at that. It's actually moving higher, as the street doubts whether or not there is something come about.
Yeah.
That's in a world of its own.
And
the street, I think they're positioning that at some point of time that's going to come about.
Yeah, but I think a word of caution here is really warranted because, those who are obviously, use your own judgment and, your own intelligence on this, because if you just go by whatever the parlays are, we've seen this in the past, that the market jumps to imagine that the trade deal is happening tomorrow, and April to now we are towards the end of October and still counting. So let's see, it's been a long wait. But anyway, on that note, let's quickly go across to Nimesh with all the D Street chatter. Nimesh, it was a truncated week, but a hectic one, right? From Diwali to then all these banking deals and now this whole India-US trade deal. Never a dull moment. What have you picked up today?
Oh, absolutely, never a dull moment. And for the last 2 days, you've been under a bit of pressure as well. I guess a couple of reasons for it. One, of course, for today, it's a Friday factor which is playing out. But barring that, the FIs have turned net sellers again. So even in today's market, my sense is that the FI number will be on the negative side. We saw that in yesterday's number as well. That's one reason. The other reason is, the big cushion of FIs being aggressively short is not anymore now. For the last few series, the FI net positioning was 90% or more. Now it's come back to almost 75%. So clearly, the short covering rally is played out. Now for the rally to play out, there has to be genuine buying, and that's missing from the larger FI's point of view, even in today's markets. That's a short summary of the markets under pressure for the last couple of days. My sense is that now from here on, you might see a bit of outperformance in the broader markets because the big short covering rally in the Nifty is played out. Now there could be a catch-up in the broader markets, and it's slightly showing up in today's market as well. Private bank stands out. While some of the large private banks are under pressure, post this another round of PE deal in Federal Bank, most of the smaller private banks are well bid by larger institutions. So that's clearly a sector to watch going forward, and it's backed by FI buying as well. So as I said, under pressure because of FI selling, but I guess now from here on, need to watch out for a bit of outperformance in the broader markets.
Okay, and what about stocks? What have you picked up, Nimesh?
So the first name is Thyrocare. We flashed the news about the promoter selling out 10% stake. In terms of buyer, I understand some large domestic mutual funds were anchor investors in today's block deal. So it will reflect in the DI data, and of course the disclosures will come on the some large domestic mutual funds that participated in the Thyrocare block. The second name is a couple of stocks where there is selling today: Kotak Mahindra Bank and L&T Technologies. While Kotak Mahindra Bank off late has a relatively outperformed, my sense is some bit of profit booking and a bit of churn within the banking sector as well. And remember, the Kotak results are also around the corner, so a bit of profit booking there. IndusInd Bank on the other side stands out in terms of a very small buying interest, but looks like some bit of institutional interest has picked up again. And today, I understand there are limit buy orders in IndusInd Bank. And the last one is Equitas Small Finance Bank. Again, a bit of bounce back in that stock as well. But for Equitas, I understand there was a selling pressure from a leading AIF that seems to be largely over, and hence you're seeing a bit of pullback in that stock as well.
Thank you very much for that. Get into break. More on markets and technical trading ideas coming up on the other side.
Welcome back. Actually, there's a bit of a recovery from the lows of the day. So we went closer to around the 25,700 odd mark. And in the last few minutes, there's been some kind of a fight back. So that's heartening actually to see. JSW Steel was a stock that was trading in the red, I recall. That's gradually moved into the green. So good to see some bit of a fight back there. And Tata Motors as well, the listed entity, that's seen a bit of an uptake in the last few minutes. So select stocks are doing a thing of their own. ICICI Bank for one, actually that's one of the swing factors because week to date, ICICI Bank was one of the stocks that in fact, was an underperformer. But in the last few minutes, that's done a bit of a U-turn. And it's a larger weight, so it helps the Nifty. It helps the Nifty Bank as well. Midesh Thakkar from Bonanza Portfolio joins us on the show. Midesh, before we get into the weekend, what's your take on the Nifty? You've got a bit of an intraday bounce. What are the goalposts for the Nifty? And fill us in with two fresh trades.
So, Another, I think, very clearly, this is not a bearish market, but there's a market which was overbought and giving pullback. Now, we tried to figure out the levels. The first level was around 25,800, and I think, we might get a closing just around that level. And the second was 25,600. I would be a buyer on declines, but let me see, if there's a chance of reversal from these levels, 25,800. If not, then patiently wait for 25,600, 620 zones to be tested. I think, that's where some kind of buying might emerge. On the stock side, Hindalco is something, which has been strong for the day, looks very good as of yet. No signs of weakness, though slightly overbought. But BTST trade with a tight stop can be taken. Keep a stop at about 818, look for a 835 kind of a target. And the other one which I like is Hindustan Zinc, which is given a correction is trying to bounce back. So a BTST here with a stop at 482 for targets of 493.
Okay. All right, Mitesh, thanks very much for all the trading advice today and through the week. You go ahead and enjoy your weekend, and we'll connect with you again on Monday morning. For the time being, let's put the spotlight on the FMCG names. They've been under pressure actually right from yesterday. And today, Lever in particular fell quite a bit. It's been down 3.5%. And the reaction on Colgate has also been muted after what has been a lackluster quarter. Manglam's joining in with more analysis and thoughts on this. Manglam?
Well, for Colgate, it was a weak quarter that the street was anticipating. The company reported just that, a weak quarter. If you look at their numbers, 6% decline in their revenue, 6% decline in their EBITDA, net profit also declining by about 17%. Though the stock has been limited in its decline after that 40% fall for the very same reason that it had already been underperforming, was down about 40% from the peak, trading at around 39 times as against the other FMCG stocks which were trading at 45, 50, some even 60 times. So as a result of which the decline has been limited. And going forward, how the company, navigates through grammage increase after the GST transition is something that the street will be eyeing very, very closely, largely because 95% of its products now are in the 5% GST bracket as against 18%. But these numbers, they were nothing really to write home about. If you look at the company's commentary as well, they said that the performance was obviously impacted by transitory challenges because of the GST 2.0, but 3 points that they made, they've been making for the last many quarters. One, that there has been difficult operating environment and they expect gradual recovery in performance. And this implies some market share loss as well, because in the same way, and if you look at Dabur's quarterly update, their oral care business has grown in double digits. HUL as well saw only a marginal decline. In fact, some of their key products, Close Up, actually saw low single-digit growth. So all of this means that there has been market share loss for Colgate, and that's exactly what brokerages are writing as well. ICICI Securities, for instance, is a seller. They're saying that a category leader that continues to lose momentum with both innovation and premiumization failing to drive excitement in the category. And we've had Nomura as well, which said that volume decline of 8.5% was a lot lower than what they were anticipating. However, Jeffries says that premium portfolio, which is doing well, could continue to do well for them, and they are just a couple of quarters away from volume recovery, largely on account of the GST cut. So that's the sum and substance of Colgate. On Lever in particular, the numbers were largely in line. The company had said that they are looking at volume growth going forward, and there was some transition related disruption that took place, and they will expect sort of recovery coming by only in November. A few things that stood out: their margin guidance was up from 22 to 23% to 23 to 24%, and the management said that they will be focusing on volume-led growth from here on itself. The street perhaps has taken that as a pause for breath, because maybe the third quarter will not see as much volume growth. Recovery starts only in November. So let's see whether recovery starts in March quarter or not. And from then on, volume will be the key metric that everyone will be tracking, because Priya Nair has spelled that out clearly, that she is obsessed with volume growth. So a pause for breath before execution takes over.
Thank you very much for that. And the big one to watch tomorrow will be Kotak Mahindra Bank. Gaurav now joins in with what the street expects.
Well, yes, when we look at Kotak Mahindra Bank, let's see what do we know so far. Loan book growth is at around 16% and deposit growth is at around 15%. Now, when we look at these numbers, these are actually great numbers. In fact, if we compare it with the private sector banks who have reported numbers so far, these are the highest that they have been reported so far. But let's understand what happened in the last quarter. We saw last quarter net interest margins decline almost by 30 basis points, while credit costs that inched up almost by 30 basis points as well. And this was because of the stress in MFI as well as retail CV segment. And at the same time, net interest margins also declined because of the repo rate cut stress that we saw. Apart from that, now when we go ahead in second quarter, the street is expecting around 4% growth in terms of net interest income. They are expecting net interest margins to decline just by 9 basis points, and the reason being that we have already seen a big fall in first quarter. When we talk about the PPOP, which is pre-provisional operating profit, we may see an increase of around 5% on a year-on-year basis. We may see some kind of support coming up from the other income, and at the same time, when it comes to provisions and credit costs, now they're expecting 20 basis point of fall on a sequential basis in terms of credit costs. Now, when we look at the credit cost, the reported number could come anywhere between 0.7%, and as a result, when it comes to profit, we may see a flattish number. In fact, they're expecting around 2% decline on a year-on-year basis in terms of profit. But going ahead, what is important is that how the commentary is going to be on the asset quality, specifically on the MFI side, because as highlighted earlier in first quarter, MFI stress was peaked out in last quarter. So let's see if they are giving any kind of commentary on that front, as well as retail CV. Second is that the commentary of net interest margins. Is this the bottom of net interest margins, and will they expand from here on? And third is the commentary on growth. Remember, they always wanted unsecured book to grow somewhere in the range of 15%. So let's see how they are forecasting growth for Kotak Mahindra Bank. But as of now, we're expecting flattish numbers in terms of profit from the bank in this quarter.
Okay, all right. Thanks a lot for that, Gaurav. By the way, guys, before we slip into that short break, just want to focus on one stock, Jaiswal Nico. I recall, explaining to viewers what are the triggers in store at around 40-45 rupees or thereabouts, and there was a large ARC that had around 25% stake in the company. That got gradually absorbed. Now the numbers have started looking up. The EBITDA numbers moving up, cash flows are improving, and the interest costs are declining. The stock actually has been at circuit with close to around 5 lakh shares on BSE pending to buy. So the results came last week. I don't know whether that's a fresh trigger out there, but there are pending 5 lakh shares on the buy side on the BSE itself. So Street is reading something maybe the way ahead now, given that the refinancing will take place on the loans that are outstanding, and there is some debt repayment as well. So that's a stock just thought we'll spot.
Okay, Jaiswal Nico, interesting moves out there. By the way, as we take this break, just a moment to step back and remember someone who has played such an important part in taking the brands that we talk about, the companies that we talk about, taking those brands to households, to the consumer. Piyush Pandey, the Indian advertising world has lost its tallest light today. Piyush was 70 years old, and he will remarkably be remembered as the man who perhaps gave Indian advertising its voice on the global scale. Innumerable campaigns, including some for some of the biggest companies of India, whether it's Asian Paints, whether it's Cadbury's, whether it's, of course, many others, Lever, etc., several political campaigns as well. Piyush will always be remembered, and he'll continue to inspire generations of creative minds ahead in the advertising world as well. He leaves a big, big void, but his memory will always stay on.
Trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. And I try to engage people. I respect the receiver. Something that I get moisturized every time I see it. हरगत चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's written from here. So I think these are things that one would remember always.
Welcome back. Just counting down to trade, and it looks like the Nifty is going to end around the 25,800 mark. Sudeep Bandopadhyay is now joining in. Sudeep, time just for a quick question. But HUL and Colgate, these two stocks go home with deep cuts. How are you all approaching it?
I think, the challenge with these stocks, particularly HUL, is the valuation. I don't see too much of a problem as far as the performance is concerned. The commentary also has been robust. They're talking about margins going up. And of course, with the ice cream business going out, 50-60 bips will be added to the margin from next quarter onwards. But at a valuation multiple of 50 multiple of FY27 earnings, I think the margin of error is limited. So that's pretty much why we are seeing the correction. As far as Colgate is concerned, I think the market doesn't like the volume loss which they are suffering on a month-to-month basis. They need to do something about kind of protecting the market share, or rather gaining market share. And I think that's what market would like to look forward in Colgate's earnings. Let's wait and watch. I think the last quarter was a bit of a challenge. Also, the GST transition led to some confusion in the supply chain. So I would rather wait for their Q3 numbers and take a call then.
Okay, we'll have to leave the conversation here. Wrapping up this Friday and the week, the Sensex has declined close to about 320 points. The bell has gone. The Nifty ends very close to 25,800 with a fall of 94 points. Not quite at the day's low, but if you compare it to yesterday's high of 26,100, we've lost nearly 400 points on the index. Mid-cap index, small-cap index ending in the red. The advanced decline ratio stands at 2 stocks declining for 3 in the red. What put pressure is the cuts seen in FMCG names, so HUL and Colgate, and the Nifty FMCG index ending down about 3/4 of a percentage point. Banks weakened trade despite the slew of announcements. The banking index lower by 350 points, and IT came in for some amount of profit booking after yesterday's big gains. On the way up, you had strength in individual names like a Bharti Airtel, but the sector of the day was undoubtedly metals. The metal index up nearly 1%. So to conclude the trading action, 1, we did see some amount of profit booking, and 2, the uncertainty regarding India and US trade deal being struck still lingers on. There is no clarity in the statements coming in from Piyush Goyal that India does not strike deals with a gun to its head, or with respect to, if there is a deadline. I think that has dashed any hopes of an impending resolution to the, trade tariffs and the tensions. And I think that was one of the triggers for markets seeing some amount of profit booking. For the week, we're up close to about 0.5% on the indices. For the month so far, it's a good run of nearly 5%. We'll take your leave. Thank you very much for watching Closing Bell. Don't go anywhere. On the other side is a special offering, Editors Roundtable.
Powered by LIC, हर पल आपके साथ. Co-powered by SBI, बेस्ट है सबको पता है. एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग. Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Well, the market closed largely flat this truncated Diwali week, with the Nifty ending near the 25,800 mark. The Sensex closed to about 84,200. Earlier in the week, the market did see a big rise, and it came almost within striking distance of the previous all-time high. But then there were global tensions that dragged the sentiment slightly lower. This week marked the first time in 2025 that the market surged for a fourth straight week. So the bull streak is intact. The question is, can the bull surpass the previous peak and keep charging ahead? I'm Surabhi Upadhyay, and with me are editors Nimesh Shah and Nigel D'Souza. And to talk about all of these factors at play, we have with us Rajesh Kothari, Managing Director of Alf Accurate Advisors. Well, guys, you know, it's actually only a 3-day week, right? But still feels long. Actually 4, because the Murat was a trading session. So therefore,
it was working for a few of them.
Yeah, it was working for us. That's why 4 days.
Yeah, I think when you work on it, it looks like 1.5 day of work.
That's true. That's true. But Rajesh, you know, season's greetings to you. Hope you had a great Diwali.
Wish you the same.
So the market's given us some reason to feel cheerful, right?
Yeah.
We're almost at practically at all-time high levels.
Yeah.
But the question is, what from here? Is everything, all the good stuff already priced in? Or are we just about to see a breakout and, you know, a further up move?
Well, I think I'm in camp of just breakout in. I think after a long time, we are going to see double engine growth. You know, just double engine sarkar. So this time, see, because if you look at the 2022 to 2024, the consumption was under pressure. And government did huge public capex. Now, I think from the next 2-3 years, you will see consumption to continue. And even the capex will continue. So consumption, which was hit very hard, it will revive from this quarter itself, in my view, because of the thanks to GST cut and income tax cut. And at the same time, credit growth is also going to revive. So credit growth, consumption, and capex. So all engines are going to be on fire. And the valuations are still, you know, very comfortable across most of the sectors. So I think, you know, we should continue to see the upward trend in the market.
Okay, all right. Let's just take stock of what went on in this week itself. You know, we got into the week with some optimism. You know, last month itself, Mr. Trump and Mr. Modi, they had a phone call for the birthday. Then you had the Diwali wish as well. So the market was expecting, you know, us to be all guns blazing. So it was a bit of an anti-climax actually that played out, because towards the end of the week, we ended more or less flattish with a mild positive bias, both on the Nifty as well as on the mid-cap index. So it appears, at least as of now, those all-time highs are very much due. But maybe, you know, a few more sessions is what we'll have to wait for till we get some clarity on this trade deal front. And that's the one that people are looking at with regard to the animal spirits. But otherwise, you know, it was a good week for various sectors. Reliance Industries, after a while, the stock was up more than 3%. It reacted positively to its numbers. It's gone through a bit of a correction. Metal stocks did well, particularly aluminium-based stocks, you know, because globally itself, aluminium prices moved up. There's a bit of a deficit. And also commentary coming in from a big name like Alcoa. That's what spurred sentiment as well. So that stock as well did do well. And what a comeback coming in from the IT boys. You know, people were ruling them out. But a big surge is what we saw. Infosys led the way. The promoters saying that they're not going to participate in the buyback. It could probably be because of the tax angle, but the street chose to, you know, look at it other ways and believe that valuations are in line, etc. So that index as well was one of the outperformers this week. Underperformers, there were a few actually. Eternal, quietly, that stock has corrected more than 10% from the recent peak, from the, you know, post its numbers. And big boy Reliance Industries is talking about this, you know, foray into the quick commerce space. That seems to be weighing on sentiment, and that's why that stock was down. ICICI Bank as well was an underperformer, while UltraTech Cement as well, they're looking at increasing capacity, but that stock as well was under some pressure. But the good news, I think, is what Rajesh said, right? Good results are being appreciated. The street is willing to look at individual stocks and say the number is good, we like to appreciate. You know, there were a few stocks. EPAC, you know, one of those newly listed company, that one did very well. EPAC prefab stock was up, I think, more than 25-30%. Remember, there's an IPO factor as well out here. There'll be some stock that will be locked in. You had Jain Resource as well, that was up for the week. And you had Jaiswal Neko as well. Came out with a set of numbers, already rallied, but the street's appreciating good set of numbers. So I think heartening to see, right? Rajesh, any one result that stood out for you from what we've seen? A couple of, you know, names. You've had some of those positive earnings surprises as well. And earnings ultimately will drive the way.
Yeah, I think, you know, you are absolutely right. So if you look at from the banking sector perspective, which is actually the biggest weight of Nifty.
Yes.
Yeah. And the top banks' results are already out. And that is very, very comforting. because the most important is the NIM pressure, which everybody was expecting. The NIM is going to be under pressure. But both the large banks, they've actually surprised on the NIM. And the asset quality still remains very solid. So whether you look at HDFC Bank, whether you look at ICICI Bank, even Axis Bank has reported the numbers, and all three, which are the three large banks, the results are very, very encouraging. So I think the banking is one sector where, thanks to the liquidity by RBI, the NII growth, the NIM pressure probably is another 1 quarter, but after that, NIM pressure will come off. So your NII growth will come back to good double digit, and asset quality remains strong. So FY27, the big portion of the Nifty earnings growth will be driven by the banking and finance, which is 30% of Nifty.
Okay. So how are you playing the banking sector? Through large cap banks or through the private or the smaller banks? Because in the smaller banks, suddenly you're seeing a lot of deals happening. So what's your take there?
So I think it's going to be a mix, because further what we do typically from the portfolio construction perspective, we divide across various segments. So for example, housing finance is one segment which we like the most.
Okay.
So we continue to hold their NBFCs, correct? Okay. Corporate bank is going to see revival because corporate credit growth is going to revive. So the three large banks deserves the attention, am I right? And then of course even MFI space is going to see turnaround from now, because that is the worst hit segment. And I think there might be one or two very interesting plays within MFI space. So you have to look at sector by sector, each segment you need to look at it and play selectively within bank.
Okay.
You cannot just play banking as a sector, but even within that you need to be the right selective, because then you can create much higher alpha.
Yeah, but it's phenomenal, right, Nimesh? The kind of deal flow that we've seen.
Yeah.
Yes Bank, Sammaan Capital, RBL, Federal today, and who knows, maybe it's still not over.
It's still not over. It's still not over, but just to put into context on the numbers as well, $7 billion is what the banking sector has seen in terms of M&A transactions only in this year. In this calendar year, not even this year, in this calendar year. So I'll start with Federal Bank. Today's announcement, Blackstone is putting in close to 6,200 crores. They're buying 9.9% via warrants. So that was one big deal. But the mother of all deal was RBL Bank. It was speculated for a very long time. Finally, it's official. 60%, a controlling stake is bought by NBD of Emirates. So that's again a big transaction. 26,000 crores is what NBD is putting into RBL Bank. So that's a big transaction. Sammaan Capital, you've seen a big reaction and a re-rating in Sammaan Capital as well. Even there, we've seen IHC now investing close to 41%. They've announced an open offer as well. So that's a big transaction there. Almost 8,500 crores is invested. So big transaction. Yes Bank, we all know. IDFC Bank was also a very interesting deal. Couple of private equity investors got into IDFC First Bank as well at around 60 rupees. They put in close to 9.9%. So big transactions. $7 billion is the amount. But as we all have been speculating, this is not. Maybe this is just a beginning. You may probably hear some more deals in the financial space in the weeks and months to come. So, Rajesh, we briefly spoke about private banks, NBFCs, but within these 5-6 names that I mentioned, anything that stands out after the deal is announced now, and most of them are getting capital for growth.
Yeah.
For instance, RBL Bank,
True.
They were not in trouble, no asset quality issues, just pure 28,000 crores will be available for growth. Similarly, for Federal Bank, the ratios were quite strong, still they've raised money. Anything that stands out for you within these 5-6 names?
I think the biggest difference, if you look at 5 years back when the banking was really doing very well, and today when you are looking at these deals, most of these deals are between 1 time to 1.3 times price to book, which is not, in a way, it is not good. I mean, of course, there are positive side of it, but then there is a negative side of it, right? Because if you raise money at 3 times price to book, that's what people used to buy banks for, because the raw material is, getting the funding, am I right? So if you get it 3 times price to book, your ROE keeps going up.
Right.
Moment you dilute anything near to 1 time, your ROE will take very long time to improve. So of course, you get the credit line, which is huge, which is good. Your capital adequacy ratio will improve, which is definitely very good. But at the same time, for we as a shareholder, ultimately what we need ROE and ROA. And that ROE, we need to buy at right price to book.
Right, absolutely.
Right? So if your dilution is very frequent and large at a suboptimal price to book, correct? Then it is okayish kind of thing from the real shareholders' value.
Correct. I guess that is why a lot of investors were a bit disappointed with RBL banks selling a controlling stake at close to 1 time price to book.
We had Sandeep Tandon on the show the other day, and he owns close to, I think, 6.5%, right, in the bank. And he said that he felt it should have been at a higher price.
Just because it was a controlling stake, so they never asked for a controlling premium. That was
So, but if you could just kind of complete that point, because from an investor standpoint, I have a choice. I can be with the clean big banks and steady growth, right? We have ICICI as an Axis of the world. Or should I be looking at some of these tier 2 names, NBFCs and banks?
Yeah.
Because clearly the Japanese or Emirates NBD, all these, or the private equity guys, clearly they're seeing something. They're coming in at a very attractive valuation.
Yeah.
Perhaps to ride the growth ahead.
Yeah.
But you don't seem too convinced. So
No,
how should investors look at it?
I think we need to look at from the two different optics. One is look at from the investor who is investing. What is his ROE expectations? His cost of fund might be completely different. Correct? Look at your cost of fund. For example, your cost of fund is 10-year GSEC. So 8%, 9%. For them, the cost of fund might be only 1.5%.
2%, 3%.
So even if suppose they get 8% compounded anywhere, they might be happiest investor in the world. Whereas for us, our nominal GDP growth is 11.5%, correct? So we are looking for 15, 18, 20% compounding. So what has happened structurally, if you think through it, that so many banks have come in the industry. Earlier it was only top 5, top 6. Now there are so many banks, but they are not able to actually compete because the CASA is not moving up. Because if you want to have a CASA, you need to keep fixed deposit 150 bps higher. Then you can get tons of deposit, but then your NIM is gone. So the ROE is not coming through. Correct? And therefore, if you look at the largest bank of this country, the most successful, one of our largest holding, like ICICI Bank, for example, please put a disclaimer. So look at the ROE, look at the ROA. Am I right? At that size also, their growth is continuing. Correct? So when you have that kind of a tigers in your industry, as a small finance bank, they would really struggle a lot. And therefore, what generally we prefer is the large banks.
Be with the big boys.
And unique NBFCs.
Okay.
So for example, if you look at Bajaj Finance, even at that size, they are able to grow at 20% plus with the strong ROE, strong ROA, and no such frequent dilutions. That's the beauty of the NBFCs. That's why you get the model like if you look at the Chola or look at Bajaj Finance or you look at Shriram. This is the typical NBFCs who have a typical high ROE because they have created niche. Correct? So please put a disclaimer because we own
ICICI Bank is what you'll own in the banking names and in the NBFCs?
We own HDFC Bank, ICICI Bank. We own the top 3 banks. We own Bajaj Finance. We own Chola. Chola has been a large holding for quite a long time. And we continue to own Shriram. So these are the very unique business models. Each of them is market leader. So we typically go for market leadership within banking.
Rajesh, just to conclude this financial part, any exposure to the gold finances, the Muthoos?
We have exited one of them. We are holding one of the largest gold finance. But I think that current levels, we think the valuations now are kind of... See, banking, you need to be very selective in terms of the entry point and also the exit point. So I think the valuations are now... gone
the largest one is what you'll had in terms of gold. So I think Muthoot went to around 3.2 times price to book. And
it is a little bit higher.
Had a great run.
A great run. I mean, IFL Finance is 1.6 and I think even the other one, Manappuram, is around 1.8 times. So, I get that. Just one more point with regard to this banking, the kind of capital you're seeing. We debate about which bank it will be good for and which bank it won't be good, but it could be a big trigger for kickstarting the economy as well, because you're getting capital and then ultimately, that's always going to feed into the system as well. Credit growth will come about, if you have cheaper capital that's coming in, then these banks will be fully capitalized for the next couple of years, 2, 3, 4, 5 years as well, which will be very, very encouraging. All this capital that's coming in there, it'll help kickstart the economy. So the economy perspective as well.
Because it improves your capital adequacy. Indeed. So your ability to borrow now actually significantly goes up. So if you leverage, say, 5, 6, 7 times, correct? Then your ability to then improve ROE is now very high. But then you require that kind of a real, good borrowers who are willing to take it at that, because right now the corporate India is flushed with cash. And therefore corporate credit growth is kind of...
One of the themes you mentioned you like was also capex, right? I mean, that's another theme. And the last few years has been very good. The government has been doing the heavy lifting. As you said, we're waiting for the private capex actually to come about because that will be the real, the much needed punch.
Absolutely.
But from, if you have to break up capex themes, what do you like from there? What are you all playing?
So no major changes in portfolio. Like we continue to own the HVDC place.
The power equipment
the power equipment guys, the HVDC guys, the pumps guys, the pump manufacturers, the players who are into DG sets manufacturer, the largest DG set player. So basically we are playing the new growth drivers. So for example, data center is the biggest capex. So who will benefit from data center? Correct? So there are top 2-3 players will be the biggest beneficiary of data center. You are going to see significant capex on the modern railways like Tejas and Vande Bharat and all this stuff. Who will be the largest benefit, the largest supplier of transformer to those trains, correct? Similarly for HVDC technology because of the renewable, which will be the biggest beneficiary of HVDC. So then we have HVDC play. So likewise, we need to do again segmentation within the capex, and wherever the growth is going to be very large. So we are not playing roads, old railways, ports. No construction, no EPC.
On data centers, because that is the biggest sort of topic right now. You're playing that through large MNC companies who are involved in the technology, because I mean, these days, so many companies come out with press releases and some data center plans. Even real estate companies talk about just the land and infrastructure around the data center.
Absolutely.
But how are you playing it?
So basically, if you look at any data center cost, the 40% of it goes for electrification. And that electrification means transformers. So for example, like we have a holding, say, Hitachi Energy. Please put a disclaimer from quite some time. So Hitachi Energy is one of the largest player when you are talking about data center electrification. So there are only 3-4 companies which can supply their transformer. So Hitachi is one of them.
Got it. So the enablers to the whole data center ecosystem, got that point. We have to take a very quick break, but we want to talk consumer because you did mention that you like discretionary consumption as well. And after the Diwali boost, then what parts of the market are looking exciting to Rajesh, we'll find out after the break. Welcome back. You're with us on Editors Roundtable, and this week we're discussing several themes and ideas with Rajesh Kothari of Alpha Accurate Advisors. He's told us that he does like some of the, capex plays like data centers, power transformers. He likes financials. He also likes discretionary consumption. And here's where it gets really interesting, Rajesh, because, you wonder this whole pop, the GST cut, and then Diwali, and then the whole bonanza. So we've seen what's happened, say, to the auto index, right?
Yeah.
The auto stocks have run up. Some other parts of discretionary, these quick commerce plays. We've seen what Eternal has done from the lows as well.
Absolutely.
The question is this a lasting trend? Or was this just a post-GST pop that will fizzle out? What do you think, and what do you like in discretionary consumption?
So in discretionary, we look at multiple subcategories within that. So for example, automobile is one part of discretionary. Auto ancillary is second part of discretionary. Then you have a QSRs and the food kind of a category, which includes your Eternal and Swiggy's of the world. And then, of course, you have a retail play, a very large retail, apparel plays and luggage players, all those stuff. So we have, again, need to be selective. So in auto, we prefer more auto ancillaries. Please remember, because of the GST cut, actually the car price and the premium two-wheeler prices, there you are going to see much bigger benefits, correct? So I was just speaking with one of my friends, he said, when dad gives you money that, buy 1 crore Merc, correct? You are not going to say, I will buy now at 90 lakhs. No, you say, give me one more upgrade. Am I right? So that's how the premium segment works. Am I right? So that means more margins. That means more profitability. And that's where the bigger juice lies. So the premiumization trend actually will accelerate further. That's a broad theme we are playing. So play premiumization, play SUVs or play the ancillaries, play airbags. Those are the players which are the biggest bet.
That's auto.
Play, for example, Bhujias category, I think that category is doing, unorganized to organized is huge, very big trend. Unbranded to branded is a very big trend. So we continue to like that space. Luggage is an interesting space, so we are monitoring it closely. We are not owning. Earlier we used to own, but we are relooking at category. I think that category will again bounce back very strongly. There are new categories which are emerging, like for example CCTV cameras. That was not listed earlier. And 90% of it was imported. But now it is made in India. And now we have a listed play. So we bought it on the day of listing. The stock is about 40-50% from there. So we like that space. So there are many new themes are also emerging. One of the largest IPO, of course, happened some time back. So consumer durable. So, number of themes within consumer discretionary, I think, which will continue to do well.
You spoke about IPOs. You've been selective in the IPO market because not everything has done well. 1/4 of the IPOs are below the IPO price.
Yeah.
But some have done well as well. I believe you participated in LG. Anything else that you liked and you participated recently?
So we participated in one of the company which is into solar pumps. Okay. They are the EPC player of solar pumps.
Okay.
So just to give you a perspective, India has 11 crore farmers, but more than 50% of they don't have irrigation facilities. So solar pump is something very, very important for them.
Sure.
So government has a Kusum Yojana, and under that Maharashtra is one of the largest state, and therefore we are playing a company which is into solar pump, which is into EPC of it. And ROC is very high. Typically, when you look at such companies, your ROC is very bad, your working capital cycles are very bad, your cash flows are very bad. But there is a unique company which is in EPC with a healthy ROC and no working capital issues and reasonably strong operating cash flow.
Sure.
So, we bought that as anchor investors and we continue to like that company. So, be very selective. As you rightly say, in IPO, you need to be very, very selective. Probably only 10% of your IPOs are worth holding for a longer term. So, yes, you need to be selective on it.
So, Rajesh, brought up market question that, and this is a big if, right? Assuming that the India-US trade issue resolves at some point, next couple of weeks, right?
Yeah.
And we start getting this FII flow, which has been missing for the last now 12, 15 months. Now, the rest of this fiscal year, is it going to be a large cap market because we'll get that gush of foreign money coming in, so banks, large NBFCs? Yeah. Or will it continue to be a mid-cap market from here? So if someone wants to allocate capital, you've got 100 rupees to invest at these levels, index at all-time highs, how should you divide it between mid and large cap?
I think irrespective whether it's a large or mid or small, buy company with a growth. Because there are many large caps which are going to offer you 5% growth only.
Correct.
So please don't get stuck into it.
Yeah.
Because otherwise your wealth will also grow at only 5%.
Correct.
So there is a common notion that I would like to buy large cap because of the very high safety and I will continue to get reasonable 12, 12-15%. But
so for instance, banks, if I have money to invest, should it go to an ICICI, HDFC, SBI, be safe and play there, or play in mid caps and small caps?
Play both. Play right NBFC, like for example Muthoot had made big money, right? Which is not a small. People think it is a mid cap, but actually it's the largest gold NBFC company, right? Yeah. So you need to buy the right company and the right size. You buy the market leader irrespective of the market cap. So don't have that bias of the cap.
The mid and small and large.
Just look at the profit size of the companies and buy the large pool of profit size with growth. Now if you buy the growth, that's where you will make money.
Absolutely.
And coming to your observation, which even Nigel said, in fact there is recently one study which is published by Bloomberg that by not betting on whatever Trump has said, correct, they made 14% returns. That strategy has made 14% returns because there is only 28% probability that whatever he says comes true.
Actually comes true.
Yeah, only 28%. And there is a very big study by Global
Trump
Fund.
Always chickens out hope.
So don't worry too much about Trump. It's okay. Markets will be volatile, but you can't help it.
That's what I was telling you about Gokul Das, right? You have to be very, very cautious because these trades are all over the place. Deal ho raha hai, deal nahi ho raha hai, and stocks go up and down. But I think some caution there is warranted.
I think we've gone on for long enough. We'll thank Rajesh and get into the weekend.
Absolutely. Thank you so much, Rajesh. Great conversation as always. You enjoy your weekend and we look forward to the next one.
Wish you the same. Thank you.
Thank you. Thank you, Rajesh.
With that, it's curtains on this edition of Editors Roundtable. Many thanks for being with us. Stay tuned. News and updates continue on CNBC-TV18.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Presented by Standard Chartered.
Good evening. Thanks very much for joining us on Business 360. I'm Shriram Finance. The headlines that we're tracking for you this evening: the Sensex and the Nifty end in the red after a volatile Friday. Both indices managed to post marginal gains for the week. Uncertainty over the US-India trade deal keeps sentiment subdued.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head.
India does not do trade deals with deadlines or with a gun to our head, says Commerce Minister Piyush Goyal on the negotiations with the US. Asks why India is being singled out over the sanctions on Russia when countries like Germany are seeking exemptions. The White House confirms US President Trump will meet his Chinese counterpart Xi Jinping in South Korea on the 30th of October. The bilateral comes after weeks of speculation and renewed trade tensions. Trump also terminates all trade negotiations with Canada over an advertisement that's critical of tariffs. Foreign investors continue to bet big on India's finance sector. Private equity giant Blackstone to pick up 10% stake in Federal Bank for $705 million to become the largest shareholder. With this, foreign investment in finance stands at $7.5 billion so far in 2025. Finance Minister Nirmala Sitharaman tells GST and customs officers to be polite and empathetic when dealing with honest taxpayers, says the ultimate goal is to make life easy for taxpayers. Asks tax officers not to look at everybody with suspicion. Piyush Pandey, a stalwart of Indian advertising, passes away at the age of 70. He is credited with some of the most iconic ad campaigns like Fevicol, Asian Paints, Cadbury, among many others. He was honoured with the Padma Shri in 2016. At least 20 people dead, many injured after a private sleeper bus catches fire in Andhra's Kurnool district. The bus was travelling from Hyderabad to Bengaluru and caught fire after colliding with a motorcycle. Delhi's air quality improved slightly but still hovers in the poor category 5 days after Diwali. Chief Minister Rekha Gupta says the Union Territory could see its first artificial rain trials via cloud seeding next week if conditions are favourable. Stage 2 of the Graded Response Action Plan, including curbs on construction, enhanced parking fee, are currently in force. Prime Minister Modi enters battleground Bihar and projects Nitish Kumar as the face of the alliance. RJD leader Tejasvi Yadav promises to reduce the cost of LPG cylinders to 500 rupees. US President Trump pardons Shanpeng Zhao, the convicted founder of the world's largest crypto exchange, Binance. He had pleaded guilty to money laundering charges in 2023. A Wall Street Journal report says Trump family's crypto ventures generated $4.5 billion since his re-election, largely due to a partnership with Binance. Not cryptos, but let's start with the market action of the day. A volatile Friday, ending the Diwali week on the Lal Street. The Sensex and the Nifty failed to hold on to their opening gains once again, finally closing in the red. So that's this picture there for you at a 100-point cut there on the Nifty. The Sensex down about 350 points, closing the day about 350 points lower. The Nifty Bank lower by about 400 points as well, and 140-point cut there on the mid-cap index. Bank stocks also declined today in tandem with the blue chips. For the week, the Nifty did manage to post modest gains of less than 0.5%. The Nifty Bank, though, closed in the red, despite the fact that we've seen those mega deals happen in the banking space, so some profit booking there. That's the picture for our markets for the week. From equities to commodities, the price of gold edging lower, and the yellow metal is on track for its first weekly decline in 10 weeks. This is investors locked in profits after recent record highs and awaited key U.S. inflation data. Meanwhile, the prices of other metals rose on supply concerns. A mine collapsing in the Dominican Republic boosted copper prices, while a shutdown of Alcoa's refinery in Australia pushed aluminium to a 3-year high. So that's the latest on the commodity space. Foreign investors continue to bet big on India's finance sector. Global private equity giant Blackstone is set to pick up a nearly 10% stake in Federal Bank for $705 million. This will make Blackstone the largest shareholder in Federal Bank. Now, with this, foreign investment in finance stands at $7.5 billion so far in 2025. Gaurav joins us now with the slew of deals that we've seen in the banking sector. It's been a big year for banking, Gaurav.
When we look at the financials, it's actually raining capital is what we can say, because in the Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself. Now, it seems the wave of money isn't slowing down anytime soon, because the latest headline, the deal that we saw, is Federal Bank and Blackstone. Now, Blackstone is set to invest around 6,200 crores for 10% stake in the Federal Bank, and this will be through preferential issue of convertible warrants at a price of around 227 rupees per share. Remember, the conversion will also make Blackstone the largest shareholder of the bank, and it's not the latest. When we look at the series of other high-profile bets that we have seen in the year, let's also not forget about the recent amount of money that we have seen flowing in RBL Bank. Now, on 18th of October, Emirates NBD, now that announced a plan to invest up to 26,800 crores. Now, this is around $3 billion for 60% stake in RBL Bank. Now, again, this is through the preferential equity at a price of 280 rupees per share, and this is actually the largest foreign direct investment that India's financial service sector has ever seen, and this will also make Emirates NBD the promoter of the bank. And this is not just going in the banks, but it is also the trend seeing in NBFCs as well. Sanman Capital, for an instance, when we look at the deal earlier this month, Abu Dhabi's ICICI, that they committed around 8,850 crores for as much as 41% stake in the company, and at the same time this will also trigger the open offer for mandatory 26%. Now, this is the biggest capital infusion seen by any investor in NBFC, and at the same time with this, ICICI is also set to become the promoter of Sanman Capital. Meanwhile, secondary markets, they did not fall behind. When we look at these markets, they are also reshaping the ownership pattern, because when we look at Yes Bank, we recently saw Japan's Sumitomo Mitsui. Now, that is increasing its stake almost to 24.2% after an addition of around 16,300 crores investment through open market in September. Now, that will make SMBC as the largest single foreign shareholder in Yes Bank, but it will not be marked as promoter. But at the same time, private equity firms, they are taking their bets, because let's not forget about IDFC Bank as well. Warburg Pincus invested around 4,876 crores in IDFC First Bank, and at the same time we also saw ADI infusing another 2,600 crores for about 5.1% stake in IDFC First Bank. So whether it's banks, NBFCs, the message is very clear. Global investors, now they're betting big on India's financial story. And the stock price, when we look at the stock price movement also, they are not disappointing. In fact, when we look at some of the stock prices, for the last 6 months, RBL Bank, they have delivered around 60% of the returns for investors. We also have IDFC First Bank, Sanman Capital delivering more than 30% return to the investor. Now, the question is this just a smart capital chasing growth, or the beginning of structural re-rating for India's entire financial sector? Well, whatever the answer is, it is definitely that the investments are telling one thing for sure. Sentiments around Indian financial sectors, they are becoming strong, not by just foreign investors, but also by the domestic investors, by the way that we have seen flows going in banks as well as NBFCs in this year so far.
Gaurav, many thanks. Well, from one big story to the next, Commerce Minister Piyush Goyal says India will not sign trade deals with deadlines or with a gun to our head. Speaking at the Berlin Global Dialogue, Goyal said trade talks with the United States are underway, but trade deals will not be finalized in a hurry. India is currently facing 50% tariffs from the US, which is the highest rate imposed on any country along with Brazil. The Trump administration says the 50% tariff is partly due to India's oil trade with Russia. Goyal also responded to the latest US sanctions on Russian oil companies Rosneft and Nukoil. These sanctions impact India's second largest private refinery run by Nayara Energy, which is in fact a subsidiary of Rosneft. Goyal said Germany is seeking exemptions from the US sanctions as Rosneft owns 3 refiners in the country. He proceeded to ask why India is being singled out when others are looking at potential exemptions. Take a look.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head. Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil
No.
from the US.
This is about the Rosneft deal, sanctions, right. I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
Well, that's the Commerce Minister. In fact, Indian government sources say there is convergence with the United States on most trade issues and that we are, in fact, very close to a trade deal. Abhimanyu is here with the latest. Abhimanyu, what are you picking up from your sources within government on the status as far as the ongoing negotiations between India and the US is concerned?
Well, so far, government sources have indicated that both the sides are positively engaged so far, and there are discussions which are continuing on technical issues. Technical discussions are underway between India and the United States, and both the sides are converging on most trade issues and are very close to a deal. The first tranche also looks possible as per government sources. Sources also indicated that the deal has not been finalized yet, even as India is facing one of the highest tariffs since August, and they don't see any new issues arising as of now, and they are hopeful of concessions on Section 232 goods, several goods which were exempted earlier under Section 232. India is hopeful for further concessions on those goods, which will continue getting exported to the United States from India. Also, government sources have termed that this is not a conventional FTA negotiation, since the reciprocal tariffs which have been levied are not based on WTO norms. Otherwise, tariffs which are imposed by different countries on each other are imposed based on WTO norms, but government sources have termed reciprocal tariffs as something which are outside the ambit of WTO as far as the application of reciprocal tariffs is concerned. Sources also said that both the sides are bound by confidentiality to not speak about the contours of the deal till it finally gets announced, and both the sides continue to remain in technical discussions. So discussions clearly are underway. Several issues are being threshed out. No new issues are on the table as per government sources. And India is hopeful of exemptions on the Section 232 goods.
All right, Abhimanyu, many thanks for joining us. Crude oil experts and market watchers believe a complete ban on Russian imports by Indian refiners is highly unlikely. Parikshit is standing by now to give us the details. Parikshit, how can India balance its US and Russian interests?
Well, the latest analysis on the impact of US sanctions on Lukoil and Rosneft show that there is going to be near-term caution, disruption and volatility. But Indian refiners will overcome this, and Russian oil will somehow remain a part of India's energy mix. And here's why. 1.2 million barrels per day out of 1.75 million barrels per day of crude from Russia came from Rosneft and Lukoil. According to Cipla, Russian crude flows are expected to remain in 1.6 to 1.8 million barrels per day range till the November 21st deadline. That's when the sanctions come into effect. Following that, we will see oil imports from these companies declining, maybe going off altogether. After November 21st, we're told that Indian refiners, Indian oil companies, oil marketing companies will turn very, very careful about purchasing Russian oil directly. Therefore, near-term imports of Russian crude may start dipping December onwards, but there is not going to be any major change. This is what analysts are saying. Russian oil flow to India will continue via complex financial, logistical and trading structures. Nayara Energy, which has already been sanctioned, will continue buying Russian oil, according to experts. Now, what will be the impact on India's import diversification? Well, private sector refiners will have to work on a very strong diversification strategy. OMCs are already reducing purchases of Russian oil directly. Most of the oil is being bought from third-party intermediaries. They don't buy directly, so the impact on them is much lesser. But we will see purchases from Middle East, Latin America, West Africa and United States increasing in the months to come. Diversification, which is technically feasible, will happen, but it will not be cost neutral. There will be a higher cost attached to it because Russian crude was coming at a very attractive discount. Now, ICRA has said that
the diversification process and import substitution, maybe moving away from direct Russian purchases, buying oil from intermediaries or from other sources, increasing oil purchases from other sources, is going to increase India's import bill by less than 2%.
All right, Parikshit, many thanks for joining us. Now, President Donald Trump has terminated all trade talks with Canada over a television advertisement that criticized tariffs. The ad, commissioned by the Ontario government, allegedly misused a 1987 speech by former President Ronald Reagan. The Reagan Foundation says the ad selectively edited Reagan's words, adding that it is reviewing possible legal action. Trump alleged that the ad was aimed at interfering with the decision of the U.S. Supreme Court. The White House has confirmed that President Trump will meet Chinese counterpart Xi Jinping in South Korea on the 30th of October. The meeting will take place on the sidelines of the Asia-Pacific Economic Cooperation Summit. It will be the first face-to-face meeting between the two leaders since Trump's return to office. The bilateral comes after weeks of speculation and renewed trade tensions. Remember, a trade truce between the economic superpowers will expire on the 10th of November if they fail to agree on another extension. Trump has also set the 1st of November as the deadline for additional 100% tariffs announced earlier this month. Back home, Finance Minister Nirmala Sitharaman telling GST and customs officers to be polite and empathetic when dealing with honest taxpayers. Addressing a CGST event in Ghaziabad, the Finance Minister also said the ultimate goal is to make life easier for taxpayers and urged tax officers not to look at everybody with suspicion.
The next generation GST is not just about rates, it's not about slabs, it's not about simplification, it's not about just due diligence. It should make the taxpayer feel different. We are now honorably treated. We are the taxpayers of the nation. And if there are people who are bad sheep among taxpayers, you'll still have the protocol to follow and catch hold of them. But don't look at everybody with suspicion. Even if you're not going to help the country, don't disserve the country by being laid back. Be proactive. You're very good at that. That our ultimate goal is to make life easier for the honest taxpayer. I repeat, for the honest taxpayer. I do not want comfort given to the dishonest ones in any way.
Well, that's the Finance Minister. India's private sector growth has seen some moderation in October. The HSBC Flash India Composite PMI Output Index, which measures the combined performance of India's manufacturing and services sectors, eased to 59.9 as against 61 in September. This is the lowest level since May this year. Any reading above 50 indicates expansion, so we're well over that. India's leading Black Galaxy granite producer Midwest made a strong market debut, listing 9% above its IPO price. The stock closed 7% higher than the IPO price. The issue was oversubscribed nearly 88 times. US pharma major Eli Lilly has allowed Cipla to sell its weight loss drug under a new brand in India. Eli Lilly will manufacture the drug, while Mumbai headquartered Cipla will market it under the brand name Your Peak as per the deal. Your Peak will be available as a once-weekly pre-filled injector pen similar to Lilly's Mounjaro Quick Pen. The drug's price will also be similar to Mounjaro. We'll end to a break, but up next, Piyush Pandey, the stalwart of Indian advertising, passes away at the age of 70. A spotlight on his life and legacy when we return. Piyush Pandey, stalwart of Indian advertising and the author of some of India's most iconic ad taglines, has passed at the age of 70. He was responsible for some of the most memorable ad campaigns like brands like Fevicol, Asian Paints, Cadbury, among many others. He was honoured with the Padma Shri in 2016. Mangalam Malu's here with Piyush Pandey's contribution to India's advertising industry, nothing short of seminal. Malu.
Indeed, Piyush Pandey, the towering creative mind who changed the way the country was looked at when it comes to advertising, is no more. He was just 70. Born on 5th September 1955 in Jaipur, Piyush Pandey's journey was anything but ordinary. He played cricket for Rajasthan under-22, worked as a tea taster before joining Ogilvy and Mather in 1982 as a client servicing executive. Over 4 decades later, he just didn't build campaigns. He built a cultural language that India still speaks in. हर घर कुछ कहता है, फेविकॉल का मजबूत जोड़, कुछ खास है जिंदगी में, or even मिले सुर मेरा तुम्हारा. These weren't just taglines. They were emotions that stitched India together. He was honored with the Padma Shri in 2016, became the Chief Creative Officer for Ogilvy Worldwide, the first Indian to do so in 2019, and even as recently as last year, received the Legend Award at London International Awards. But beyond the words or beyond the awards, it was the wisdom and wit that made him who he was. He often said, I don't write for the client, I write for the consumer. Or when someone gives you freedom, they give you 10 times more responsibility. Or my favorite, computer mein jhankoge, data dikhega. Upar dekhoge, dunya dikhegi. That was Piyush. Curious, compassionate, connected to real people. For me, it's more than just a loss of an icon. It's the loss of a friend, a mentor, a guru. As an advertising enthusiast, meeting Piyush once would have been a dream come true, but life was kinder. I got to interview him many times, call him for advice, share countless cups of chai at his house, talking about everything under the sun. Those conversations were not just about advertising. They were about life, food, people, humor, perspective. That was Piyush Pandey. Larger than life, yet full of warmth, humility, and mischief. Partner, as he would insist on calling me, your promise of kachoris in Jaipur and more chai sessions remain unfulfilled. And while I'm thankful for all the love you've given me, also a little angry that you left so suddenly. But knowing you, I know you won't rest up there earlier. In fact, what you do is play cricket in the heavens, make music, and craft better ads for the gods. Rest in peace, Piyush Pandey. You just didn't give advertising their life. You advertised the heart of India. And as you'd often say, Bharat is as much India as India is Bharat. And those two, like Sachin and Tendulkar, are indistinguishable.
If you are trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. And I try to engage people. I respect the receiver. Something that I get moisturized every time I see it. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's was written from here. So I think these are things that one would remember always.
Well, true legend there, Piyush Pandey. A quick check of some of the other national headlines. At least 20 passengers were burnt alive when a private bus travelling from Hyderabad to Bengaluru caught fire in the Kurnool district. The flames erupted after the bus collided with a motorbike. About a dozen passengers managed to escape in time, while some suffered injuries. Prime Minister Modi announced an ex gratia of 2 lakh rupees from the National Relief Fund for the next of kin of the deceased. Telangana government has announced an ex gratia of 5 lakh rupees. Prime Minister Modi kicked off the National Democratic Alliance's campaign for the upcoming Bihar Assembly elections. While addressing a rally in Samastipur, the Prime Minister said the NDA government will return to power in the state and ensure good governance. He also paid tribute to former Bihar Chief Minister, late Karpuri Thakur, describing him as a pioneer of social equality. Samastipur has been a stronghold of the Rashtra Janata Dal since 2010. India blocks CM candidate for Bihar polls Tejasvi Yadav has promised to reduce the cost of LPG cylinders to 500 rupees if the alliance comes to power. He also said the government will increase old age pensions to 1,500 rupees. Tejasvi accused the centre of shielding corrupt leaders and criminals in Bihar and said he will ensure a corruption-free government. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Presented by Standard Chartered. Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
If you are trying to communicate something, I better engage you. If I don't engage you, then I am talking to a wall. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's was written from here. So I think these are things that one would remember always.
कौन इस मकान में अपना घर बसाता है? हर घर चुपचाप से ये कहता है कि अंदर इसमें कौन रहता है?
India is a funny country. Numbers don't show you everything. There is a heart and the number which has to be matched.
हिंदुस्तान का दिल देखा हिंदुस्तान का दिल.
The heart of incredible India, Madhya Pradesh.
What is the story behind this mustache?
Number one story is that I keep with the times, so it's totally organic.
Do you feel कि यार बस हो गया अभी नहीं कर सकते?
Why am I thinking of leaving? The other guy should leave. It's my place.
नया सेंटर शॉक च्युइंग गम हिला के रख दे.
I think I get it from the people of India. I see so much of energy around me. I think it's just one life, Shireen, and let's make the most of it.
One life and make the most of it. This is Remembering Piyush Pandey, a special show where we pay our tributes to a creative genius, a cultural storyteller, a visionary who changed the grammar, the soul of Indian advertising, and more importantly, believed that advertisements must touch hearts and souls. Padma Shri Piyush Pandey, the iconic ad filmmaker, passed away earlier this morning at the age of 70. Born in Jaipur in 1955, he began his journey far from the boardrooms of big agencies. In fact, he dabbled in cricket, under 22 in Rajasthan, tea tasting and even construction before finding his true calling. In 1982, as a 27-year-old, he joined Ogilvy India and over the next 4 decades would revolutionize how brands speak and India listens. More importantly, he just did not make ads. He crafted stories rooted in our everyday lives, from Fevicol Ka Jod to Kuch Khas Hai from Cadbury. His work just didn't sell products. It became a part of India's cultural fabric. As a wicketkeeper batsman who represented Rajasthan in Ranji cricket, Piyush had a strong grip over his understanding of the Indian society. We mourn his passing, but even more, we celebrate his legacy that will live on in every brand story that is ever told from India. As he often said, I don't write ads, I tell stories. We here on CNBC-TV18 gather to tell his story. And who better than the people that we have today to tell that story? Amitabh Kant was the former CEO of the Niti Aayog, a good friend of Piyush Pandey and his batchmate at St. Stephen's College. Along with him, Arun Lal, former Indian cricketer. Piyush had earlier mentioned that it was his friend Arun who pushed him towards advertising. In fact, Piyush first went into tea tasting because of Arun Lal as well. We also have ad guru KV Sridhar, who we all know as Pops, and our managing editor Shireen Khan, who's over the years conducted multiple interviews with Piyush Pandey, also wrote a blurb for his book. Thanks a lot, lady and gentlemen, for joining in. Well, let's start with Mr. Kant first. You were his mate in St. Stephen's. Over the years, what did not diminish was his zest for life. If you had to remember Piyush through a few moments, what would they be according to you?
Firstly, Piyush was unique because he captured really the heart and soul of India. Before he got into the world of advertising, the world of ad was all about nuanced English. The thinking process was all anglicized. When he got in, he really turned it upside down. And he never aped the West. That was what was unique about him. Secondly, I've
Never seen such great clarity of mind in a creative person. There was no clutter. Thirdly, I thought Piyush was unique because he never believed in research. He never believed in going back to the consumer. He believed in absolute hardcore instinct of the creative man. And to that extent, he was a creative genius in many ways. Fourthly, when I started working with him on the Incredible India campaign, I was a pretty young officer, but he taught me this KISS principle: keep it simple and stupid. And that is what really made him unique. This entire shift from anglicized to thinking from the heart of India, that was unique. But Piyush was also unique in many ways because he wasn't actually from the world of advertising. He started at a very low level in O&M. And he went on to rise and rise and rise to become the creative head of Ogilvy and Mather worldwide. I mean, nobody has had this impeccable rise for a man whose thinking process was in Hindi to become the global head of the largest advertising company in the world. That is what made Piyush Pandey the most unique advertising man in the world.
Right, Mr. Kant, you know, as Piyush was a great storyteller, we remember him by some of the stories. Let's go across to Shireen. Shireen, you know, you've had multiple conversations with him. We've had the, you know, pleasure of listening to his insights every now and then. And his famous line, you know, stop looking into the computer for data because upar dekhoge to duniya dikhegi. That instinct that Amitabh is talking about. Could you narrate a few stories that stay with you?
Well, Mangalam, you know, today is a terribly awful day, but it's also a very personal loss for a lot of us. And you know, for me particularly, I remember meeting him for the very first time, maybe about 20 odd years ago. I was a young reporter. There was no reason for him to spend the kind of time that he spent with me, to treat me in the manner that he did. I think Maya Angelou's words that people will always remember how you made them feel stands so true for Piyush Pandey, because he made you feel like you were the only one in the room that he was talking to. He made you feel special. He made you feel seen and valued. And over the course of the last 20 years, we've had many occasions to do interviews together, many to mark his milestones. You know, we've got that clip of him at Cannes where he was being celebrated. And of course, you know, he's been with us through so many of our events. I remember him being at the India Business Leader Awards when we were honoring Amitabh Kant, and I called him and I said, you know, sir, will you come in and surprise Mr. Kant by being up on stage? And he's like, done, partner. And he would always address me as either partner or champ. And, you know, it was always, I mean, you could get a call from him at 7 o'clock in the morning, and then he would sort of say, I have an idea, partner, I have an idea, champ, and then regale you with the ideas that he had. So he was, you know, he was so much more than just an advertising man. And I think what was perhaps the most unique quality about him is that he understood people. He understood relationships, and that reflects in every single campaign that we've seen. Why is it that these campaigns have touched hearts, are timeless, are almost immortal? Is because he understood people. He could make that connect with people. And, you know, to Mr. Kant's point about moving away from the anglicized world of advertising to really the heart and soul of Indian advertising in Hindi, and bringing in Hindi and the idiom of Indian culture into advertising. I think, you know, as he said, that we've got our culture is our biggest USP. We have stories, you know, that go over 2 continents, and why should we not celebrate that? Why should we not honor our own legacy and our own culture? And that's why I think he had his storytelling was so impactful, because it really connected with India at its very core. There's so many more stories, Mangalam, to tell, but, you know, I usually never come onto our shows as a guest, as you know, but this is an exception I made because he was such a special individual.
Take that point, Shireen, and you know what you said about partner. That's how he called everyone. That was his generosity, because you would remember it and I would remember it as well. The relationship that we had was more mentor-mentee-like. It was only his generosity that he chose to keep us as an equal and call us partner, and that's what he did with a lot of his clients as well. But you know, the one person he could genuinely call partner is Arun Lal, because we've known each other from childhood, pre-advertising days, the cricket days, and in fact so much so that he followed Arun Lal to become a tea taster, because that's what Arun Lal was doing as well. Arun, a very sad day indeed. But if you could, relive some of the older days with Piyush Pandey. We all know him as this ad genius, creative genius, this, the father-like figure for the Indian advertising community. But there's a lot more to him than that from before as well. If you could share some of those stories.
Oh, well, Mangalam, first of all, let me say that, it might surprise many of you guys who have known him for the last 20 years that, he, despite his enormous achievements and reaching the pinnacle of his endeavors and career, his career was not his ambition. His ambition actually was a contented life, a holistic life, a happy life, a helpful life. And I think if I had to pick one, number one passion of his life was his family and friends. He made the best family member. He, adored his family. He did for his family. His heart beat for his family, as it did for India and Indian advertising. And Shireen before me just said everything about him, because he believed not in numbers. He believed not in planning. He believed not so much in what you've read in the book, but go out there and experience it for yourself. Understand people and actually let your heart beat for whatever you do. So he was best friend. Like me, he was emotional. He couldn't say what he wanted to at times like this.
Completely take your emotion, Mr. Lal. We've all been feeling that lump in our throat through the day, and it's only fair that, we celebrate his life. The last time he called me in one of those calls was actually when we were doing a tribute to Zakir Hussain, and he said that, throughout the show, Mangalam, I remembered Zakir, and I was shedding a lot of tears. Today, he's meeting Zakir Hussain, perhaps in heaven as well. But let's go across to Pops, KV Sridhar. KV, known as the advertising legend, the doyen, the father figure, the Bhishma Pitama of Indian advertising, if you had to you summarize his life in a few stories or your experiences with him, how do you do that?
I think we have been contemporaries. We have known each other for more than 42 years now, which is quite a long time. We came to advertising, I came a little earlier than him, though he's a couple of years older than me, and then we always used to fight who is senior and who is older. And I think, I reflect a lot of things which Arun Lal said. He had no agendas, absolutely no agendas. Life is the only agenda he has. He lived life to the fullest. He loved, hearty love. And he always used to say that, ideas come from life. And then he really lived life. And most of the insights which he had used in advertising, they all came from personal experiences in life. So one of the things, we always used to talk about those days, people used to search for ideas in a black book, that's where all the pictures and advertising used to be. And he always used to tell people, ideas don't come from black book, they come from your life. Search your life, you will always have. And he always, found ideas from life. And whenever we met, we have been competitors. Fiercely, we used to fight for talent, for business. And at the same time, we used to collaborate. We used to work for the same clients. We worked for Cadbury together, Bajaj together, Unilever, from different agencies. While I was fronting from Lintas, he used to come from Ogilvy. So, apart from all that, he's been a personal friend for so many years because of one reason, just for life. And then the value for relationships, and then the value of really honesty and integrity, that I put above everything else. If you're pure and simple, it reflects in every work which you do. And he's just for life, he's a reflection of everything, For instance, there was one particular one, which my mother loved and then called me, your advertising has helped. I said, it is not my advertising, I'll tell. It is done by my friend Piyush Pandey. It was an ad for SBI where an old couple celebrating 50 years of wedding anniversary. The old woman, at a swimming table, and then she's stitching something. Husband comes and then gives her a gift, and it happens to be a diamond ring. And then the wife says that, what will I do with a diamond? And then the husband says, "Heere ko kya pata, pehnne wale ki umar, pehn lo." And then that made my father actually wanting to gift a diamond to my mother. And my mother called me and said, "Your advertising made your father wanting to buy a diamond to me." I called Piyush, and then he had a hearty laugh, saying that, that's what it is. And that is how simple his thinking was. And that is what has inspired. If you were to say, where will all the people who inspire people get their inspiration from? Will come from people like him. He really has inspired not one generation, but several generations of marketers, advertising creatives, above all, a nation feeling proud about itself and discovering their whole cultural role. So his role is quite enormous in everything which he did.
That's such a fulfilling story that you speak about, no malice. And, he would draw from a lot of personal experiences. That story actually happened with his own mother, Prasoon and Piyush. When they earned a little money, they wanted to give a diamond necklace to the mother. And that's where, the line came, "Hero ko kya pata, pehnne wale ki umar." These lines are what he's known for, but more importantly, tugging at our heartstrings as well. Mr. Kant, you've worked extensively with him on a lot of the tourism campaigns as well. He's known for, portraying MP in a certain way. I don't remember a better tourism campaign than Hindustan Ka Dil Dekho, or even what he did for the state of Rajasthan or the Gujarat tourism ads, etc. as well. All of that into Incredible India. So if you could, give us some of those experiences that you had with him while working with him on such of these iconic campaigns, some memories that stay with you.
So he had the important thing is that he brought in Desi idioms. He brought in Hindi slogans and, faces which looked very Indian. And he built a vernacular vocabulary for persuasion. So it was not merely tourism. From Fevicol, ka jod hai, tootega nahi, to Cadbury, Dairy Milk, kuch khas hai, or Asian Paint, har ghar kuch kehta hai. All this proves that, authenticity really connects much deeper than imported gloss. And that is what Piyush proved. So when, I'd moved from Kerala tourism to India tourism as a young officer, I got in touch with him, got him to do Incredible India. And I think India has never been captured. It's a large country, bigger than 24 countries of Europe. But he captured it in such magnificence and such beauty. He captured really the heart, the soul, the essence of India. And he brought in the drama of India. And there was no other word which could capture India better than incredible. And then later, he went on to do the Gujarat campaign. And he went on to do the Madhya Pradesh tourism. All of them were remarkable hits. But there are unique, charming stories about him. For instance, there are, Har Ghar Kuch Kehta Hai was actually meant to be said by Amitabh Bachchan. But Piyush had actually said it in his way, and then he went to Amitabh Bachchan. And Amitabh Bachchan said that it sounds much better, much sharper, much crisper in your voice than my voice. And it continued with Piyush's voice. And that was really the drama of it all. And he also, the great thing about Piyush was his instinct, his guts, his humor, all of them grounded to the Indian soil. And that is why he could get really the feel of Incredible India. That is why he could get the feel of Madhya Pradesh as Hindustan Ka Dil. And he could get the real feel of Gujarat tourism through Amitabh Bachchan. He really, really was grounded to the soil of India. And it was, he was, I would say he was one of the greatest. He's probably one of the greatest creative geniuses the world has seen in the field of advertising, but he's definitely the most creative man in the world of advertising in India.
I take that point entirely, and that booming voice. I was lucky enough to hear Har Ghar Kuch Kehta Hai with him next to me, and he's narrating that to me, and that still rings in my ear. Shireen, any other story that really stands out? For me, one of them was when we were doing that conversation with all the masters at Fevicol. It was the 60th year, and Piyush Pandey actually showed us 2 clips of the ad, actually asking us which one do we think is better. One would have had to pinch themselves to know that at some point in life, Piyush Pandey would be standing next to you, showcasing 2 pieces of an ad and then asking us for our humble opinion on what we make of whether the voice version is good or the musical version is good. That's something that I remember and stays with me.
You know, Mangalam, and what that tells you, and I think that was once again a reiteration of the humility. I mean, I think, you know, Piyush Pandey was a master class in humility. And I so distinctly remember I'd invited him to come and speak to the Young Turks at our Young Turks conclave for one of our milestone years. And what he said to all of these young entrepreneurs, all of these young startups, was don't take yourself seriously. Commit yourself to your passion. Commit yourself to what your purpose is. Commit yourself to your team. Commit yourself to a higher calling. Don't commit yourself to your own individual aspiration, because at the end of the day, if you take yourself too seriously, you're going to limit yourself. You're going to end up constraining yourself. And that's really, I think, how he lived his life. You know, the last book launch that we did was for Open House here in New Delhi a couple of years ago. And, you know, I asked him, I said, what is your trip now in life? And he said, you know, my greatest ambition today is to get young people in this country to think differently, to chase their dreams, to follow their heart. I want to basically be the compass that guides them to live the dream that they've always had. And I think that was what was motivating him. It was not about individual ambition and individual aspiration. It was about the collective aspiration of the organization. And I would dare say, I think India was his greatest love story ever.
India was indeed his greatest love story ever, which is why it was only fair that he spoke about the brands that built India and India on, you know, in itself on the 75th Independence Day. And one could see the reverence. He actually, you know, joined his hands and bowed his head when we spoke about Bharat Mata. And, you know, the OG Make in India sort of man, or the OG Bharat brand ambassador, as we would call him. As we are coming to close on this, as we celebrate his life, and obviously there'll be a lot of moments where we would remember him and perhaps get his wisdom out in our lives as well. Just to wrap this, we have to get the best advertisements that we remember Piyush by. Let's start with Arun. You know, if you could give us some of your best memory with him on a cricket field and the ad that you love the most, which was made by Piyush.
Okay, Piyush and I were playing a cricket match, actually a Ranji Trophy match. We were both very young into both our teams. He was playing for Rajasthan. I was playing for Delhi, and we were living out of my home. So we went to Firozshah Kotla in Delhi. He was staying with me. My father was posted in Delhi at that time. So the two of us went to play the match together. He was keeping and I was batting. And then, you know, it was one of those games that I was batting overnight 100. And Salim Durrani was bowling. And I thought, you know, this is my chance to take him apart. I'm going to get a double 100 the next day. And the first over, the ball, Salim was bowling down the leg side. So I moved a little towards the leg stump. The ball suddenly turned right across me and just flicked the off bail. And, you know, and I looked at him and I said, buddy, I wasn't sure whether I was bowled or not. And so I looked at him and I said, buddy, and you know what he said? That's the pavilion. So, you know, I said, hey, what's the matter with you? But the fact was that he was a fantastic cricketer. He loved cricket. You know, he equated cricket with life. He was very competitive in whatever he did, but he had a heart, and a heart that was, if you can say it, bigger than he himself. So everything ruled him through his heart. And on the cricket field, just the fact that he was unsettled about his cricket, otherwise he would have gone on to play a lot more. He was a tremendous wicketkeeper and a fabulous, fabulous batsman.
Cricket's loss was the advertising agencies or the advertising industry's gain and India's gain at large as well. Just to wrap this up, KV, you had told us that, you know, your favorite ad of his is the SBI Life ad. But if you had to celebrate him tonight with something, what would that be? That would be a glass of bourbon? Would that be a Cuban cigar? Would that be, a chai or maybe some kachori? What would that be?
I think, one of the greatest things, which both of us discovered when we were at Cannes in late or mid 90s, when Cannes was not such a popular thing and India never was at the global stage. We were sitting at the gutter bar, only a handful of us used to be at Cannes. And then, we all know that he calls everybody as a partner. And he said, come on, partner. I said, what are we partnering? And then we both looked at our glasses. Then he put his arm around me and said that, partner, now we are representing the country. Correct? We are partnering we are not from different agencies. We are from an Indian, complete Indian advertising, and we are representing the country. I think that vision is what needs to be celebrated. And ever since, where we have been the early jury members in international award festivals, and then we took upon us to really celebrate Indian culture and Indian work. If I have to celebrate is nationalistic, and then the pride of culture, enormous effort, I'll celebrate him for.
All right, we'll celebrate him for being the greatest Indian or the greatest brand ambassador and cheerleader for India, as we would for tugging at all our heartstrings through his advertisements and the stories and the memories that he leaves us with. Thank you so much, Mr. Kant, Arun, Shireen, as well as KV Sridhar, for joining in on this special tribute that we have for Piyush Pandey. I'm sure he'd be watching this from the heavens and perhaps enjoying this here as well. Partner, very, very well played. We'll miss you.
Co-powered by SBI, बेस्ट है सबको पता है, and बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI. Best है सबको पता है. And Bank of Baroda के संग त्योहार की उमंग.
Hello and welcome. You are watching Global Eye and I'm Parikshit Luthra. The US government has upped the ante against Russia in a bid to force a ceasefire in Ukraine. This week, Washington imposed fresh sanctions targeting Russia's two biggest oil companies, Rosneft and Lukoil, this week. Russian President Vladimir Putin described the move as an unfriendly act but said it won't cause much harm to the country's economy. Trump responded saying he will see how it works out in 6 months. The sanctions could have a major implication for China, which is the biggest buyer of Russian oil, followed by India. As per analysts, India imported 1.75 million barrels of Russian oil per day in October. Of this, 1.2 million barrels per day came from Rosneft and Lukoil alone. White House Press Secretary Caroline Leavitt has said that both India and China have begun scaling back Russian oil purchases. However, analysts believe that a complete ban on Russian imports by Indian refiners remains highly unlikely. Cipla estimates that Russian crude flows to India are expected to stay in the 1.6 to 1.8 million barrels per day range until 21st of November, when the sanctions kick in. Direct imports could decline post that, but Russian oil will continue reaching India through intermediaries. Indian refiners may also raise their purchases from the Middle East, Latin America, West Africa and the US, but that could increase the country's crude import bill. At the Berlin Global Dialogue, Goyal responded to the sanctions on Russian oil companies. Minister Goyal said that these sanctions impact India's second largest private refinery run by Nayara Energy, which is a subsidiary of Rosneft. Goyal also said that Germany is seeking exemptions from the US sanctions, as Rosneft owns 3 refiners in the country. He proceeded to ask why India is being singled out. Trump's move comes at a time when India is negotiating a trade deal with the United States. Commerce Minister Piyush Goyal has said that India does not do trade agreements with quote-unquote deadlines or with a gun to our head. Meanwhile, Indian government sources say there is convergence with the United States on most trade issues and we are very close to a trade deal. During their meeting at the White House in February, Prime Minister Modi and President Donald Trump had said that they would seal a deal by October or November this year. However, Trump's extra 25% tariffs on India over its Russian oil purchases had strained ties. Let's listen in to what Minister Goyal had to say.
Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil from the US.
This is about the Rosneft deal, sanctions, right. I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
All right, so how will these sanctions on Russia impact the US-India trade deal negotiations? Can the two clinch a deal anytime soon? To discuss this and more, I'm now joined by Richard Rosso, Senior Advisor and Chair on India and Emerging Asia Economics at the Center for Strategic and International Studies. Thanks, Rick, for joining us. We also have Jayant Dasgupta, former Indian ambassador to WTO, and Harsh Pant, Vice President for Studies and Foreign Policy at the Observer Research Foundation. He's also the Professor of International Relations at King's India Institute at King's College London. Thank you very much, gentlemen, for being with us. Rick Rosso, you've got Minister Goyal now questioning that why single out India? We're not going to negotiate with a gun to our heads. The point that he's trying to make is you are saying that you will block Russia's oil supplies for the rest of the world through Rosneft and Lukoil, which is about 50% of Russia's oil exports. But you're singling out India by also imposing a 25% penalty on the country. So what do you think is Trump's strategy really here?
I think the 25% tariffs that were announced at late summer, that was clearly focused just on India. And that was the confluence, I think, of two different things. One is trying to put pressure on India to get the trade agreement across the finish line. And second is when you began to see the president really sort of changing his mind. You remember earlier in the year, he seemed to almost be blaming Ukraine for Russia's invasion of Ukraine. And I think the same time that they were trying to use Russia tariffs as a way to pressure India on the trade agreement was also a time to begin raising this as a flare to also put pressure on Russia to come to the table and negotiate an agreement. So India was really quite unfairly singled out at that point, but it's because of this confluence. But now you do see the United States' approach to Russia changing quite a bit, a lot more aggressive. They do see that negotiations directly with Putin aren't resulting in anything closing in on a ceasefire. And therefore, I think the sanctions are now more broadly applied. So certainly seeing broad sanctions against Russian oil is not India's favor, but at least it's not as singling out India as much as it was as we saw late in the summer. That's how I look at the situation right now.
All right. Let me also go across to Ambassador Dasgupta. Ambassador Dasgupta, you know, there are some reports by analysts which have said that Russian oil will remain a part of India's energy mix. Some companies may do front loading before 21st of November when these sanctions come in. Do you think Indian refiners are going to take that risk, or will they start diversification immediately and they'll stop purchases of Russian oil?
I think clients has an agreement, a long-term agreement with Rosneft, under which they buy about 500,000 barrels. They have been assured 500,000 barrels per day. I'm sorry, am I audible?
Yes, sir. Please go ahead.
Yes. So that is something which will need to be, I think, restructured. The purchase of Reliance from Rosneft. The second point is about Nayara, in which, again, 49% is owned by Rosneft itself. So, barring these two, the others are all nationalized oil refiners, like Indian Oil, Bharat Petroleum, etc. Now, they will definitely, I think, try to diversify and look at other sources in the Middle East, in Africa, and maybe even in South America. So I think people will now start taking advanced action to find out possible sources of supply. Having said that, oil prices have already started showing an upward trend, and I think yesterday they rose by about $2.50 per barrel. So if the oil from these sources, Middle East, Africa, South America, they get to be much more expensive than at present, then again, that would be a second hump which will have to be crossed. And the refiners, including the nationalized refiners in India, and the two major private sector players will have to take a fresh call on that.
Right. I'm going to come back to you, Ambassador Dasgupta. Let me also get in Harsh Pant at this point. Harsh, at this point, do you think a trade deal is possible? Are we near one just yet? Is it all now boiling down to Russian oil? Will India stop completely?
Hi, Parikshit. I don't think, the political economy of India would allow a complete cessation of oil supplies from Russia. So we are going to see a gradual decline, which I think, as the other two speakers have alluded to, there is a market process that is likely to unfold. And given the kind of inflationary pressures that we are going to see, and we are already seeing, India's diversification will track that trend. But I don't think that given our investments, given the infrastructure, given India's requirements, and given India's political economy, that Russia will, to imagine that Russia will not be part of India's energy mix is also something that one should not, even engage with, because Russia will remain a part of that that mix. How important and how significant a part that will be, I think that will be contingent on a number of things. As I think President Trump himself has said, look, I'm going to see how this works out over the next 6 months. Now, President Trump is not known for consistency. So he may change his mind tomorrow and he may work out a deal with the Russians tomorrow. So there are all kinds of possibilities that exist in the short to medium term itself, forget the long term. And I think India and Indian market, India will have to hedge its bets accordingly. Indian and those buying oil from Russia will have to hedge their bets accordingly. So I think Russia will continue to remain a part, but the market pressures will also ensure that diversification gets accelerated. And I think the trade agreement, as and when it happens, will also be an important marker in terms of how this particular episode pans out. Because if there is a trade deal, let's imagine that there's a deal happening anytime soon, then I think a number of these pressure points will also get marginalized. But I do think in the short to medium term, we will continue to see Russia as an important player, relatively important player in the Indian energy.
Absolutely. Right. Rick Rosso, coming to you, there was a lot of speculation in the press that we'll possibly see a direct meeting, one-on-one meeting between Trump and Modi at the ASEAN summit in Kuala Lumpur. That's not happening. Prime Minister is participating virtually. Does this mean that trade talks could take place for a longer period of time? Do you think that October, November fall deadline can still be met?
It can still be met. I mean, we had a trade agreement that was reportedly put on the president's desk in late summer, but they felt that it wasn't quite enough and wanted to go back to the table to try to squeeze a bit more concessions from India. And of course, in that sense, it's been way too far of a one-sided negotiation where the United States is pressing for concessions, probably not putting a lot on the table on the opposite side. But, it does appear there's been these moments when we were quite close and then things get put into abeyance. We're waiting to see, is the president going to commit to the trip to visit India for the Quad leaders meeting? Is it going to happen by the end of the year? It now sounds like that maybe pushed back into early next year. And I assume that they would want to actually have this kind of agreement to be signed in person. So these moments when the leaders could get together, could actually hammer out the final details. They keep coming and going and passing without anything concrete. There was even some rumors, of course, that Prime Minister Modi might come out for the UN General Assembly opening. So we keep missing these moments. Negotiators, luckily, though, are kind of back at the table. And it seems that, the president's personal envoy, Sergio Gore, has been out to India. He's trying to get movement on this as well. So you do have somebody that has the president's ear that's gotten engaged as well, rather than just simply the trade negotiators. So it's hard to imagine and hard to see when this thing's going to be inked. But we do have some opportunities that could gestate pretty quickly when the leaders will get together and get the agreement signed.
Right. Ambassador Dasgupta, when it comes to Commerce Minister speaking in Berlin, he was speaking about both EU and US, but his comments are very significant. And explain to us whether they indicate whether we're close to a trade deal or there are some difficulties at this juncture. The Commerce and Trade Minister, Piyush Goyal, has said that India will not sign any trade deal in a hurry. He also said that India will not choose its trade partners according to the wishes of another country. He also said that we do not do deals with deadlines or with a gun to our head. What does this indicate?
I think it is a way of telling the U.S. administration that no matter how much pressure they bring to bear on the Indian negotiators and the Commerce Minister, it's not really going to pay dividends. That India will stick to its guns. And from reports that are emanating, there are issues still which remain to be solved regarding Indian dairy and other agriculture products. So that is one set of issues. The second set is about the rollback of the 25% tariffs because India is still buying Russian oil. So without that very firm commitment, I don't think there would be a conclusion to the talks. The third issue is about the 25% tariffs which India has been slapped with, whereas other countries in Southeast Asia and South Asia are getting away with 19%, 20%, etc. So India is, I think, looking at something in the region of between 10 and 15%, even 16% or so. I think India will possibly be willing to accept from the indications that we are getting. But without all these conditionalities being met, I don't think there would be a trade deal.
All right, we're taking a short break, but don't go anywhere. What concessions can India offer to the United States? We'll discuss that when we return. Welcome back to Global Eye. Still with us, Richard Rosso of CSIS, Jayant Dasgupta, former Indian ambassador to the WTO, and Harsh Pant of the Observer Research Foundation. Harsh, now there have been various reports on how India could address some of US's concerns around market access in agriculture. Reports have indicated that India may consider allowing more non-genetically modified American corn and soybean into its markets. Do you think any of that can happen? Of course, these are all speculations right now. There is no formal comment from the Indian government. But do you think there are some concessions that India can offer?
I think certainly, whatever I have heard from the agricultural specialists, they have suggested that there are, avenues available to offer the kind of concessions that perhaps even you were referring. I think the challenge here, Parikshit, is that the way Mr. Trump has conducted diplomacy through public means has made it very, very difficult for Indian policymakers to make concessions. And I think that is going to be the real challenge. The real challenge will be how do you politically sell even those concessions that at one point would have been very easy to sell, say earlier this year, when things were not this public, when things were not this disruptive in the India-US space. And I think increasingly what we are seeing in the Indian political space, that every time Mr. Trump says something, Mr. Modi gets targeted, Prime Minister Modi gets targeted by the opposition. And that means that his space for maneuverability is shrinking by the day. the more Mr. Trump speaks publicly, the more issues he brings to the table, the less space Indian policymakers have. And I think that is going to be a very real challenge, that even some of the things which may seem perfectly reasonable and logical, say the non-GM, products in the Indian agricultural sector would seem too much from a political standpoint, too much of a concession from a political standpoint. And I think that's a real navigating space that Indian policymakers now occupy, and that is the challenge that they will have to deliver. That it is not simply a negotiation between Mr. Trump and Mr. Modi, or Indian government and American government. It's also a negotiation that Indian government will have to do, or Indian policymakers will have to do, with their own domestic opposition. And I think that's the real issue that may impact the course of many of the issues that are, perhaps should be on the table and may not be.
All right, so let me take my final questions. Rick, what do you think will help clinch a deal, and are we even near one?
Yeah, it feels like we really are on the verge, but we've been on the verge for quite some time. And none of us can know exactly what kind of pot sweeteners President Trump would expect to be able to get across the finish line. But I do expect it is going to be intentionality by India to make purchases of American goods, specifically those that the government of India controls, whether it's going to be defense or hydrocarbons. Probably a number rather than specific announcements, because India does tend to avoid announcing specific, defense acquisitions. But also potentially some investments in the United States by Indian companies. And I think what was mentioned before on agriculture, which has been a sticky point, but if it comes down to market access in agriculture products the United States grows, which are not really kind of endemic to average Indian farmers, there's some space there as well. So I think there's a lot of material that we can work with as two large economies, but finding that perfect mix that the president will agree to, that's been tricky. And hopefully we can get there sooner rather than later, because the United States is such a critical market for India, and we don't want to see India's growth rates begin to shrink.
Right. Ambassador Dasgupta, at what point will India say yes?
I think if it gets a good deal. Earlier, India had said that the Trump administration also had to reciprocate by providing concessions. And one of the things which purportedly India had raised was that in some of the areas of interest to India, the tariffs should come down to below pre-Trump levels, that is below the December 2024 levels. Only then there would be some, measures of reciprocity. But that now seems to have been put on the back burner. So basically, I think the rollback of the tariffs for buying Russian oil, to no concessions by way of saying that we will not buy Russian oil, as President Trump has been saying in the past few days. That is, I don't think will get conceded by India. And third, I don't think there is any scope for conceding on even non-GMO soya and non-GM corn, etc. Maybe in some other agricultural products where there is some elbow room possible, it could take place. But the tariffs, other tariffs will have to come down much below 25%.
All right, my final question to Harsh. Harsh, just about 20 seconds that I have, but do you feel India acknowledging United States' role, Trump's role in bringing the India-Pak conflict to an end, do you think somewhere that will also have to be a part of negotiations? Somewhere India will have to do that in order to get this deal from Donald Trump, because some believe that's the only thing that's holding up things.
I don't think India can do that, primarily because people are fundamentally misunderstanding this. This is not about India, in any way putting Mr. Trump down. This is about the new balance that post-2014 India has tried to strike with Pakistan. And if India gives the credit away from its armed forces, from its deterrence capabilities to Mr. Trump, it would be giving away a lot that it has been able to build in terms of deterrence vis-a-vis Pakistan. So I think it would be very, very difficult for India to concede on that front, maybe behind closed doors. But I think if India concedes it publicly, then India would be doing some great damage to its national security credentials.
And the problem is, with Donald Trump, there is nothing behind closed doors. Everything is said on Truth Social at the end of the day. Thank you very much, Harsh Pant, Jayant Dasgupta and Richard Rosso for joining us for a very comprehensive discussions on US sanctions and where we are with the India-US trade deal negotiations. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Goodbye.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Welcome to Indianomics. The government went all out to stimulate the economy ahead of the Navratri Diwali festival season, with the lower GST kicking in bang on the first day of Navratri. Did the stimulus work? First cut anecdotal data is as follows. Tata Motors said its sales in the 2025 festival season jumped by 33% to 1 lakh cars. Auto registration data, this one compiled by brokerage Nuvama, shows the two-wheeler sales grew 20% from Navratri to Diwali over previous year. Car sales grew 17% and LCVs grew by 23%. Electronics goods data compiler Counterpoint says smartphone sales grew 10% by volume and 18% by value. Vijay Sales told CNBC it saw 20% growth in consumer goods durables sales this year versus a growth of 10% in the last festive season. And finally, brokerage sources, various brokerage sources tell us that the top e-commerce sites, JioMart, BigBasket, Blinkit and Zepto saw 65% to a 200% growth in average daily users. Now, to give us their respective experience and data, I have with me Mr. B.C. Bhartia of KEAT, or the Confederation of All India Traders. That is the brick and mortar traders. What I gave you was the app data. I also have Tarun Pathak of data aggregator company Counterpoint. I also have two economists, Abhishek Upadhyay of ICICI PD and Madhvi Arora of MK Global, to give us the top-down picture. Well, gentlemen and Madhvi, thank you very much indeed for your time. We were given to understand that electronic gadgets did very well. So, Tarun, I start with you. What numbers have you all been able to accumulate? How were the Navratri to Diwali sales compared to last year?
Thank you, Lata. So yes, very positive indicators. So the numbers are coming in, and I think we'll be coming up with the final set of numbers last week. But the early trends are indicating a very strong festive season this year, to a certain point that we are seeing a smartphone growth on volume 10% year on year, and by value even higher at 18%. So these are very positive numbers that are coming. In fact, the highest since 2020, when we have this COVID pent-up demand in 2020 festive season, and after that, this is the highest ever we have seen in a single festive season in the 5 years.
Okay. Any further data you can share on, say, specific consumer durables, non-cell phone, non-smartphone data?
Yes, we are seeing a very strong growth on TVs. In fact, 32-inch and above are growing in double digits year on year. We are seeing a very strong year on year across different consumer electronics, especially on laptops as well. In fact, the wearables also grew year on year. So overall, the positive sentiment, and this is coming across channel. It's not just the mainline versus online kind of split, but we are seeing this positive sentiments coming across different channels throughout India.
Okay. Well, let me come to the FMCG sales, the Kirana store sales. Mr. Bhartia, thank you very much for your time. Your press release very strongly said that if we thought e-commerce is taking away, or quick commerce is taking away market, that's not the case. You actually saw the reassertion of brick and mortar, sales. Can you give us some numbers first?
As per our research work, this Diwali, we can say, was a golden Diwali. In goods sector, we estimate sales 5.40 lakh crore, and in service sector we estimate 65,000 crore rupees. This is a big number, and it is showing that consumers are coming back to market. We saw a lot of rush in all the market area. We call it as a golden Diwali. In addition to this, we did a friendship Diwali. You see, across board, we saw good sales right from rural area, right to BMW. Everywhere we saw good number of sales. This is backed by increase of reduction GST.
Okay. No, Mr. Bhartia, 1 minute. Your 5.4 lakh crore is very impressive. But can you tell us what was the rate of growth? I mean, last Diwali mein year on year aapka kitna tha? And this year on year, what was the rate of growth? Was it 20, 25, 15?
Last Diwali, we estimated 4 to 5 lakh crores. This we see jump of about 25%. Okay. And the jump is in all sectors. As shown you in your screen, you can see increase in all the sectors across the board. In addition to this, increase to the in the starters and
Got it. We have a problem with your audio, sir. We will fix it. But if you can bring out that table which Kate put out on textiles, apparel, sweets, namkeens. I must have contributed a great deal for sweets, namkeens for sure, and textiles in a very, very big way. Not sure of the others. Well, let me come to Madhvi now. Madhvi, you have a cohort of colleagues who are tracking individual companies and sectors. What is the macro picture you are getting? Are they telling you that this is a far better sale than previous years? I mean, just some comparisons.
So hi Lata, I think there's been a very mixed trend across sectors if I look at the consumer behavior. Clearly, auto segment has been the biggest beneficiary of that. We've seen improvement across segments, be it a smaller segment of say of Maruti or Hero Motors to the high-end premium cars as well. So that segment has actually seen across the board gains. But I think, beyond that, I'm not very sure whether I can really assume that this is basically a structural change per se. Because see, last year the base effect was very different from what you have this year. Last year, Navratras were largely in September, and Diwali also was a little early. So this year the base effect also played out very well for certain companies in terms of their numbers. But beyond that, I'm not sure the discretionary space is actually showing across the board the same kind of enthusiasm. Clearly, as we were discussing, staples, for example, there's a lot of chaos in the near term because of GST like changes. Multiple MRP products are right now in the system. Distribution system and value chains are yet to be aligned. So we don't really know whether there's actually been an improvement in the staples consumption pattern. Of course, there's modern trade, which is also doing a lot of structural changes in the sector itself. Of course, QC has been over the roof. Fashion retail has done very, very well. And these segments, again, are actually, they were already doing very well pre-GST compared to other segments. Definitely, there's been some uptick in these segments, but I would still wait to understand whether this is, there is actually a trend beyond the festive excitement and the GST-led postponement of purchases that have played out in the recent 2 or 3 weeks.
Yeah, that is why when we were presenting the auto data, and that will come up for you, the auto sales guys, Nuvama, for instance, gave us 2 sets of data. One, from Ganesh Chaturthi to Diwali, and another from Dasera to Diwali. And clearly, the Dasera to Diwali sales is brilliant. It's gone through the roof, indicating that some slack, which was not, purchases not made from August 15th to 22nd because people were awaiting the lower GST, and that got made up. So that clearly indicates that August to October is not very spectacular. It's flat, sometimes even negative. But, the September to October has been brilliant. Abhishek, I know you track, as a heat map, a lot of things. The rural incomes, for instance, have clearly remained higher. So it's not just the GST cut. It looks like the very good harvest and very low prices has also meant real incomes, especially in rural areas, remains very good. Can you, as an economist, take away a feeling that maybe GDP numbers have to be revised higher?
Lata, some of the data you mentioned on auto sales particularly is quite striking. That said, also it adds to the mixed but generally resilient data that you're seeing for Q2 otherwise also. So GST collections had started to pick up even before this demand surge happened. Also on the export side, we saw while exports to US were down 13%, overall exports held up well. So that augurs well for growth also. But I would be careful, like you alluded to also, in extrapolating this festive season demand-rated numbers going forward for various reasons. One, of course, big-ticket consumer goods demand is easy to postpone as well as prepone, and number of tailwinds likely came together to prop up these numbers. So I'll wait whether this is a trend shift in demand or not. Second, I would rather prefer to look at how mass consumer items, whether the price cut from GST is being transmitted there and how demand is evolving there, because those are items for recurrent consumption and could lead to recurrent increase in or a more persistent increase in consumer disposable income. I will wait for more color on that front. Third, what we don't know from these numbers is what is happening to the services demand side. So on that front, we know one big segment is real estate services, and the news flow there has been more mixed compared to the demand for goods that we have been discussing here. And finally, for me, from growth outlook standpoint, the big elephant in the room is really when high US tariffs are going to come down. So while news flow is positive, still not clear when that will happen. So I'll wait for that also. Okay. So not changing our growth numbers for now, but bias is to upgrade them once we get the Q2 numbers.
Okay, so you've answered the question I was going to ask you. Even if you have not upgraded the numbers, there is an upward bias to your numbers, is what you're saying.
Yes, so Q2 could be tracking maybe above 7%. We don't have government spending numbers yet for September, but could be tracking above 7%. So that would mean first half growth is closer to 7.5%. If these tariffs come down quickly, then second half growth could be 6.5 to 7% rather than 6 to 6.5.
Okay.
So, inclination is to revise the numbers towards 7% from current 6.7% we have, but we wait for more data.
Okay. Tarun, is that a feeling at all that things were very quiet in the first 6 months and there was something magical post-October, a spring in the step? Did anyone tell you that? Do the numbers tell you that?
Yes, definitely. I think I fully agree to that. So when we do our consumer retail audits, especially on the electronics, we were seeing almost a single-digit decline in the first half in terms of consumer footfall, and most of the retailers were saying the same. But as we move into the second half of the year, there were positive sentiments that started somewhere late July and early August with the Independence Day sales and everything. And then the GST cuts happened. Everything was waiting for this festive season. So there was surely a pent-up demand. But the clear thing is retailers, the feedback, the collective feedback, what we are getting from the ground is not even there was more footfall, but also the incremental spending on electronics that has happened this year.
Okay.
So overall, that was a very positive for them, because compared to the last year, things were a little bit down, and mainline were really struggling in terms of the offers and getting consumers into their stores and everything. So that started coming up, and that was a real positive decision in terms of electronics, especially smartphones.
Okay, that's good to hear. And as you gave a very big number, since 2020, when of course there was a burst of buying, we have not seen such a rate of growth. That is a very telling number. Madhvi, your cohorts, your colleagues, are any of them revising their earnings upward? And more specifically, the question like I asked Abhishek, are you in the front foot to have an upward revision of your GDP numbers? So both corporate earnings, are your colleagues doing anything, and your own macro number?
Yeah, so there's been clearly a shift towards some bias towards upgradation, but I don't think across the board they are doing it. As I said, auto sector has been the biggest beneficiary. Clearly, there's a case for revision on the upside. But I think for staples, they are still waiting and watching. As I said, there's a lot which is happening structurally as well as in terms of their value chain becoming much more synchronized. So I think they would wait at this point in time. And discretionary also, there's been a very mixed trend. I'm not finding excessive excitements in my analysts' view in terms of them really upgrading their thought process or their earnings at this point in time. But overall, of course, some sectors like auto, which are heavy sectors in terms of their market positioning, definitely would lead to overall upgradation in earnings for the Nifty. But that said, for the growth aspect, I agree with Abhishek. We would still wait and watch and understand how much is the trend coming out of this noise for us to really ascertain that consumerism actually making a massive more delayed retail therapy that we are seeing at this point in time. I'm not very sure whether the income effect has actually become so positive that we are going to be seeing this continue beyond the October-December period. There's also a base effect which is going to play out positively for October and the delayed purchases. So, of course, second quarter GDP, which will have a deflator effect, plus the third quarter, which will have the sequential gain, would augur very well for us. So maybe we will be seeing probably GDP growth actually coming out much higher than 6.5% that we are estimating for the year. But I'm still not sure whether we are in for a V-shaped recovery in India or whether it's going to be a U-shaped recovery. But one thing is for sure that consumerism, which was actually downtrending from the urban sector point of view, has at least found its trough, and it's now going to be gradually going up.
Yeah, Madhvi, you're telling me exactly what I wanted to hear from the experts, that you are on the front foot to possibly upgrade the growth. Now, the next question that I want to ask all of you is this sustainable? That question after the break. Welcome back. This is the last day of the festive week, the Diwali week, and we have a bunch of experts to tell us how good was the festival season. And we have two economists to tell us whether they would upgrade the numbers. The key takeaway is that, yes, they see Abhishek Upadhyay of ICICI Securities, PD, and Madhvi Arora of MK, both economists are on the front foot to upgrade the GDP number. They're just waiting for final numbers. Tarun Pathak of Counterpoint told us that this has been the best Diwali since 2020. And Mr. Bharti of Kate was giving us the big number of 5.4 lakh crore of sales, which was much higher than about the 4 to 5 lakh crore, which they probably did last Diwali. Mr. Bhartia, Tarun, Abhishek, Madhvi, thank you for your patience. Mr. Bhartia, the point I wanted to ask you is what your press release speaks about employment. You say that about 50 lakh people more were employed if you look at, transport, logistics, delivery, retail. Do you think this is sustainable, or was this a one-time burst?
No, you see, this has given a new boost to employment sector also, and the liking of customers regarding packing or home deliveries, this has increased a lot. And it has given direct employment opportunity down the line. Now we will be facing wedding season, which will continue. Same thing will continue in wedding season also.
Okay.
So now a new trend is being set up.
Okay.
And instead of ready-made packed material, people are taking fancy packing.
Okay.
Homemade packing.
Okay.
So this has increased a lot.
Okay.
And then Swadeshi. You see, we should not forget that Swadeshi is also one of the employment generation activities.
Yep, you're absolutely right, sir. We have seen an upscaling of the packaging element as well. The other personal anecdote that I wanted to share is that one of my relatives said that on Swiggy he was trying to place an order of 10 hampers or 12 hampers for some friends of his, and they couldn't deliver. They just said, no, we have only 2 left. They were giving only 2 per piece, which means clearly the demand was more than what the retailers and the e-commerce guys were estimating. Abhishek, on that note, do you fear that a rate cut from the Reserve Bank may not come if the growth numbers are as good as the retailers are telling us?
I think the bar for rate cut in December is quite low, Lata. It is possible growth data will surprise positively, and RBI will need to revise up the growth numbers for this year and next. But although that is more contingent on whether trade deal is signed or not, because RBI has assumed high tariffs all through their forecast horizon. It is likely that inflation this quarter is going to surprise much lower compared to what RBI has assumed.
Yes.
RBI forecast for October-December is 1.8%. We are tracking close to 1%. So last cut could just come from there. But yeah, if growth is picking up, clearly that should be the end of rate cuts, and subsequent focus should be on ensuring favorable liquidity conditions in the banking system for transmission of these cuts and for overall easy monetary conditions.
Okay. Yeah, the bar is low for a rate cut because the governor explicitly said that the low inflation gives us space to support growth. And now the low inflation is lower than what they estimate. But then the growth is also higher than what they estimate. I was only wondering whether there'll be a postponement of the rate cut. So, Madhvi, 3 very quick questions to you because I'm out of time. One, do you think that there is a chance of a postponement of rate cut? And secondly, what Mr. Bhartia said, this triggering of employment, do you think there is a longer-term impact of the complex of things that happened in this festival season? Do you think there is a sustainable growth?
So with regard to Reserve Bank, Lata, as Abhishek also said, I think a bit low at this point in time. The policy focus, the primary policy focus obviously is inflation, which is likely to be undershooting dramatically compared to Reserve Bank's current forecast. I think we could see as low as 2% or below inflation for the year as a whole, and even the next year would see at least 50 bips lower than what the RBI is currently forecasting. So there could be a possible reason that RBI could probably lower rates in December policy. But more importantly, the policy focus is now also move to improving the microstructure and competitiveness of the banking sector, to improve the overall financial conditions of the economy in general, and to ensure that the transmission of rate cuts is actually much more deep compared to the past cycles. I think that is where the focus lies at this point in time. One rate cut or probably two rate cuts won't make a big difference in terms of the growth story per se, but how well it is penetrated across the economic value chain is also very important, and which is where they're actually working towards improving the microstructures of the banking system and non-banking system, ensuring that the NBFCs are also able to reach out to MSMEs of the world. That's one part. And secondly, as you were asking whether
sustainability of growth,
employment dynamics are going to change the growth story for us. See, it's a circular story in the end, right? All this while all we were talking about is that the investment cycle was not kicking off because consumerism was not having a very durable outlook. Companies were saying that they're not really seeing private consumption in sight, and thus they are delaying their investment. So to some extent, somewhere the circular loop is going to be completed if this continues. Of course, if there is a consumerism which sustains beyond just the festive noise, we will see that eventually play out in the demand cycle, and eventually which will lead to a investment cycle which has been long delayed. So of course, we'll see how that pans out, and there's going to be other players as well in the equation, which is obviously the tariff impact, which we don't know how deep it would be in terms of the growth.
Unfortunately, I'm sorry I'm hurrying you. I'm sorry I'm hurrying you.
The U-shaped recovery is underway. Yeah, the U-shaped recovery is underway, but V-shape is still not visible to me.
Okay, there is a very good chance that this becomes a sustained recovery and is not a one festival wonder. I mean, there's a very good chance. We will have to see, of course. There could be positives in terms of the trade deal being signed and global growth being not as bad as feared, US growth being not as bad as feared. Perhaps that will mean a continued growth momentum, a growth loop, a positive virtuous cycle in India for 2026. Thank you very much, Abhishek, Tarun, Mr. Bhartia and Madhvi, for giving us your view of the festive season and for actually engendering some optimism in our thinking. Wrap up on Indianomics. More news and updates await you.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। presented by Standard Chartered.
Good evening. Thanks very much for joining us on Business 360. I'm Shriram Finance. The headlines that we're tracking for you this evening: the Sensex and the Nifty end in the red after a volatile Friday. Both indices managed to post marginal gains for the week. Uncertainty over the US-India trade deal keeps sentiment subdued.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head.
India does not do trade deals with deadlines or with a gun to our head, says Commerce Minister Piyush Goyal on the negotiations with the US. Asks why India is being singled out over the sanctions on Russia when countries like Germany are seeking exemptions. The White House confirms US President Trump will meet his Chinese counterpart Xi Jinping in South Korea on the 30th of October. The bilateral comes after weeks of speculation and renewed trade tensions. Trump also terminates all trade negotiations with Canada over an advertisement that's critical of tariffs. Foreign investors continue to bet big on India's finance sector. Private equity giant Blackstone to pick up 10% stake in Federal Bank for $705 million to become the largest shareholder. With this, foreign investment in finance stands at $7.5 billion so far in 2025. Finance Minister Nirmala Sitharaman tells GST and customs officers to be polite and empathetic when dealing with honest taxpayers, says the ultimate goal is to make life easy for taxpayers. Asks tax officers not to look at everybody with suspicion. Piyush Pandey, a stalwart of Indian advertising, passes away at the age of 70. He is credited with some of the most iconic ad campaigns like Fevicol, Asian Paints, Cadbury, among many others. He was honoured with the Padma Shri in 2016. At least 20 people dead, many injured after a private sleeper bus catches fire in Andhra's Kurnool district. The bus was travelling from Hyderabad to Bengaluru and caught fire after colliding with a motorcycle. Delhi's air quality improved slightly but still hovers in the poor category 5 days after Diwali. Chief Minister Rekha Gupta says the Union Territory could see its first artificial rain trials via cloud seeding next week if conditions are favourable. Stage 2 of the Graded Response Action Plan, including curbs on construction, enhanced parking fee, are currently in force. Prime Minister Modi enters battleground Bihar and projects Nitish Kumar as the face of the alliance. RJD leader Tejasvi Yadav promises to reduce the cost of LPG cylinders to 500 rupees. US President Trump pardons Shanpeng Zhao, the convicted founder of the world's largest crypto exchange, Binance. He had pleaded guilty to money laundering charges in 2023. A Wall Street Journal report says Trump family's crypto ventures generated $4.5 billion since his re-election, largely due to a partnership with Binance. Not cryptos, but let's start with the market action of the day. A volatile Friday, ending the Diwali week on the Lal Street. The Sensex and the Nifty failed to hold on to their opening gains once again, finally closing in the red. So that's this picture there for you at a 100-point cut there on the Nifty. The Sensex down about 350 points, closing the day about 350 points lower. The Nifty Bank lower by about 400 points as well, and 140-point cut there on the mid-cap index. Bank stocks also declined today in tandem with the blue chips. For the week, the Nifty did manage to post modest gains of less than 0.5%. The Nifty Bank, though, closed in the red, despite the fact that we've seen those mega deals happen in the banking space, or some profit booking there. That's the picture for our markets for the week. From equities to commodities, the price of gold edging lower, and the yellow metal is on track for its first weekly decline in 10 weeks. This is investors locked in profits after recent record highs and awaited key U.S. inflation data. Meanwhile, the prices of other metals rose on supply concerns. A mine collapsing in the Dominican Republic boosted copper prices, while a shutdown of Alcoa's refinery in Australia pushed aluminium to a 3-year high. So that's the latest on the commodity space. Foreign investors continue to bet big on India's finance sector. Global private equity giant Blackstone is set to pick up a nearly 10% stake in Federal Bank for $705 million. This will make Blackstone the largest shareholder in Federal Bank. Now, with this, foreign investment in finance stands at $7.5 billion so far in 2025. Gaurav joins us now with the slew of deals that we've seen in the banking sector. It's been a big year for banking, Gaurav.
When we look at the financials, it's actually raining capital is what we can say, because in the Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself. Now, it seems the wave of money isn't slowing down anytime soon, because the latest headline, the deal that we saw, is Federal Bank and Blackstone. Now, Blackstone is set to invest around 6,200 crores for 10% stake in the Federal Bank, and this will be through preferential issue of convertible warrants at a price of around 227 rupees per share. Remember, the conversion will also make Blackstone the largest shareholder of the bank, and it's not the latest. When we look at the series of other high-profile bets that we have seen in the year, let's also not forget about the recent amount of money that we have seen flowing in RBL Bank. Now, on 18th of October, Emirates NBD, now that announced a plan to invest up to 26,800 crores. Now, this is around $3 billion for 60% stake in RBL Bank. Now, again, this is through the preferential equity at a price of 280 rupees per share, and this is actually the largest foreign direct investment that India's financial service sector has ever seen, and this will also make Emirates NBD the promoter of the bank. And this is not just going in the banks, but it is also the trend seeing in NBFCs as well. Sanman Capital, for an instance, when we look at the deal earlier this month, Abu Dhabi's ICICI, that they committed around 8,850 crores for as much as 41% stake in the company, and at the same time this will also trigger the open offer for mandatory 26%. Now, this is the biggest capital infusion seen by any investor in NBFC, and at the same time with this, ICICI is also set to become the promoter of Sanman Capital. Meanwhile, secondary markets, they did not fall behind. When we look at these markets, they are also reshaping the ownership pattern, because when we look at Yes Bank, we recently saw Japan's Sumitomo Mitsui. Now, that is increasing its stake almost to 24.2% after an addition of around 16,300 crores investment through open market in September. Now, that will make SMBC as the largest single foreign shareholder in Yes Bank, but it will not be marked as promoter. But at the same time, private equity firms, they are taking their bets, because let's not forget about IDFC Bank as well. Warburg Pincus invested around 4,876 crores in IDFC First Bank, and at the same time we also saw ADI infusing another 2,600 crores for about 5.1% stake in IDFC First Bank. So whether it's banks, NBFCs, the message is very clear. Global investors, now they're betting big on India's financial story. And the stock price, when we look at the stock price movement also, they are not disappointing. In fact, when we look at some of the stock prices, for the last 6 months, RBL Bank, they have delivered around 60% of the returns for investors. We also have IDFC First Bank, Sanman Capital delivering more than 30% return to the investor. Now, the question is this just a smart capital chasing growth, or the beginning of structural re-rating for India's entire financial sector? Well, whatever the answer is, it is definitely that the investments are telling one thing for sure. Sentiments around Indian financial sectors, they are becoming strong, not by just foreign investors, but also by the domestic investors, by the way that we have seen flows going in banks as well as NBFCs in this year so far.
Gaurav, many thanks. Well, from one big story to the next, Commerce Minister Piyush Goyal says India will not sign trade deals with deadlines or with a gun to our head. Speaking at the Berlin Global Dialogue, Goyal said trade talks with the United States are underway, but trade deals will not be finalized in a hurry. India is currently facing 50% tariffs from the US, which is the highest rate imposed on any country along with Brazil. The Trump administration says the 50% tariff is partly due to India's oil trade with Russia. Goyal also responded to the latest US sanctions on Russian oil companies Rosneft and Nukoil. These sanctions impact India's second largest private refinery run by Nayara Energy, which is in fact a subsidiary of Rosneft. Goyal said Germany is seeking exemptions from the US sanctions as Rosneft owns 3 refiners in the country. He proceeded to ask why India is being singled out when others are looking at potential exemptions. Take a look.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head. Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil
No.
from the US.
This is about the Rosneft deal, sanctions, I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
Well, that's the Commerce Minister. In fact, Indian government sources say there is convergence with the United States on most trade issues and that we are, in fact, very close to a trade deal. Abhimanyu is here with the latest. Abhimanyu, what are you picking up from your sources within government on the status as far as the ongoing negotiations between India and the US is concerned?
Well, so far, government sources have indicated that both the sides are positively engaged so far, and there are discussions which are continuing on technical issues. Technical discussions are underway between India and the United States, and both the sides are converging on most trade issues and are very close to a deal. The first tranche also looks possible as per government sources. Sources also indicated that the deal has not been finalized yet, even as India is facing one of the highest tariffs since August, and they don't see any new issues arising as of now, and they are hopeful of concessions on Section 232 goods. Several goods which were exempted earlier under Section 232. India is hopeful for further concessions on those goods which will continue getting exported to the United States from India. Also, government sources have termed that this is not a conventional FTA negotiation, since the reciprocal tariffs which have been levied are not based on WTO norms. Otherwise, tariffs which are imposed by different countries on each other are imposed based on WTO norms, but government sources have termed reciprocal tariffs as something which are outside the ambit of WTO as far as the application of reciprocal tariffs is concerned. Sources also said that both the sides are bound by confidentiality to not speak about the contours of the deal till it finally gets announced, and both the sides continue to remain in technical discussions. So discussions clearly are underway. Several issues are being threshed out. No new issues are on the table as per government sources. And India is hopeful of exemptions on the Section 232 goods.
All right, Abhimanyu, many thanks for joining us. Crude oil experts and market watchers believe a complete ban on Russian imports by Indian refiners is highly unlikely. Parikshit is standing by now to give us the details. Parikshit, how can India balance its US and Russian interests?
Well, the latest analysis on the impact of US sanctions on Lukoil and Rosneft show that there is going to be near-term caution, disruption and volatility. But Indian refiners will overcome this, and Russian oil will somehow remain a part of India's energy mix. And here's why. 1.2 million barrels per day out of 1.75 million barrels per day of crude from Russia came from Rosneft and Lukoil. According to Cipla, Russian crude flows are expected to remain in 1.6 to 1.8 million barrels per day range till the November 21st deadline. That's when the sanctions come into effect. Following that, we will see oil imports from these companies declining, maybe going off altogether. After November 21st, we're told that Indian refiners, Indian oil companies, oil marketing companies will turn very, very careful about purchasing Russian oil directly. Therefore, near-term imports of Russian crude may start dipping December onwards, but there is not going to be any major change. This is what analysts are saying. Russian oil flow to India will continue via complex financial, logistical and trading structures. Nayara Energy, which has already been sanctioned, will continue buying Russian oil, according to experts. Now, what will be the impact on India's import diversification? Well, private sector refiners will have to work on a very strong diversification strategy. OMCs are already reducing purchases of Russian oil directly. Most of the oil is being bought from third-party intermediaries. They don't buy directly, so the impact on them is much lesser. But we will see purchases from Middle East, Latin America, West Africa and United States increasing in the months to come. Diversification, which is technically feasible, will happen, but it will not be cost neutral. There will be a higher cost attached to it because Russian crude was coming at a very attractive discount. Now, ICRA has said that the diversification process and import substitution, maybe moving away from direct Russian purchases, buying oil from intermediaries or from other sources, increasing oil purchases from other sources, is going to increase India's import bill by less than 2%.
All right, Parikshit, many thanks for joining us. Now, President Donald Trump has terminated all trade talks with Canada over a television advertisement that criticized tariffs. The ad, commissioned by the Ontario government, allegedly misused a 1987 speech by former President Ronald Reagan. The Reagan Foundation says the ad selectively edited Reagan's words, adding that it is reviewing possible legal action. Trump alleged that the ad was aimed at interfering with the decision of the U.S. Supreme Court. The White House has confirmed that President Trump will meet Chinese counterpart Xi Jinping in South Korea on the 30th of October. The meeting will take place on the sidelines of the Asia-Pacific Economic Cooperation Summit. It will be the first face-to-face meeting between the two leaders since Trump's return to office. The bilateral comes after weeks of speculation and renewed trade tensions. Remember, a trade truce between the economic superpowers will expire on the 10th of November if they fail to agree on another extension. Trump has also set the 1st of November as the deadline for additional 100% tariffs announced earlier this month. Back home, Finance Minister Nirmala Sitharaman telling GST and customs officers to be polite and empathetic when dealing with honest taxpayers, addressing a CGST event in Ghaziabad. The Finance Minister also said the ultimate goal is to make life easier for taxpayers and urged tax officers not to look at everybody with suspicion.
The next generation GST is not just about rates, it's not about slabs, it's not about simplification, it's not about just due diligence. It should make the taxpayer feel different. We are now honorably treated. We are the taxpayers of the nation. And if there are people who are bad sheep among taxpayers, you will still have the protocol to follow and catch hold of them. But don't look at everybody with suspicion. Even if you're not going to help the country, don't disserve the country by being laid back. Be proactive. You're very good at that. That our ultimate goal is to make life easier for the honest taxpayer. I repeat, for the honest taxpayer. I do not want comfort given to the dishonest ones in any way.
Well, that's the Finance Minister. India's private sector growth has seen some moderation in October. The HSBC Flash India Composite PMI Output Index, which measures the combined performance of India's manufacturing and services sectors, eased to 59.9 as against 61 in September. This is the lowest level since May this year. Any reading above 50 indicates expansion, so we're well over that. India's leading Black Galaxy granite producer Midwest made a strong market debut, listing 9% above its IPO price. The stock closed 7% higher than the IPO price. The issue was oversubscribed nearly 88 times. US pharma major Eli Lilly has allowed Cipla to sell its weight loss drug under a new brand in India. Eli Lilly will manufacture the drug, while Mumbai headquartered Cipla will market it under the brand name Your Peak as per the deal. Your Peak will be available as a once-weekly pre-filled injector pen similar to Lilly's Mounjaro Quick Pen. The drug's price will also be similar to Mounjaro. We'll end to a break, but up next, Piyush Pandey, the stalwart of Indian advertising, passes away at the age of 70. A spotlight on his life and legacy when we return. Piyush Pandey, stalwart of Indian advertising and the author of some of India's most iconic ad taglines, has passed at the age of 70. He was responsible for some of the most memorable ad campaigns like brands like Fevicol, Asian Paints, Cadbury, among many others. He was honoured with the Padma Shri in 2016. Mangalam Malu's here with Piyush Pandey's contribution to India's advertising industry, nothing short of seminal. Malu.
Indeed, Piyush Pandey, the towering creative mind who changed the way the country was looked at when it comes to advertising, is no more. He was just 70. Born on 5th September 1955 in Jaipur, Piyush Pandey's journey was anything but ordinary. He played cricket for Rajasthan under-22, worked as a tea taster before joining Ogilvy and Mather in 1982 as a client servicing executive. Over 4 decades later, he just didn't build campaigns. He built a cultural language that India still speaks in. हर घर कुछ कहता है, फेविकॉल का मजबूत जोड़, कुछ खास है जिंदगी में, or even मिले सुर मेरा तुम्हारा. These weren't just taglines, they were emotions that stitched India together. He was honoured with the Padma Shri in 2016, became the Chief Creative Officer for Ogilvy Worldwide, the first Indian to do so in 2019, and even as recently as last year, received the Legend Award at London International Awards. But beyond the words or beyond the awards, it was the wisdom and wit that made him who he was. He often said, I don't write for the client, I write for the consumer. Or, when someone gives you freedom, they give you 10 times more responsibility. Or my favorite, computer mein jhankoge, data dikhega. Upar dekhoge, duniya dikhegi. That was Piyush. Curious, compassionate, connected to real people. For me, it's more than just a loss of an icon. It's the loss of a friend, a mentor, a guru. As an advertising enthusiast, meeting Piyush once would have been a dream come true, but life was kinder. I got to interview him many times, call him for advice, share countless cups of chai at his house, talking about everything under the sun. Those conversations were not just about advertising. They were about life, food, people, humor, perspective. That was Piyush Pandey. Larger than life, yet full of warmth, humility, and mischief. Partner, as he would insist on calling me, your promise of kachoris in Jaipur and more chai sessions remain unfulfilled. And while I'm thankful for all the love you've given me, also a little angry that you left so suddenly. But knowing you, I know you won't rest up there earlier. In fact, what you do is play cricket in the heavens, make music, and craft better ads for the gods. Rest in peace, Piyush Pandey. You just didn't give advertising their life. You advertised the heart of India. And as you'd often say, Bharat is as much India as India is Bharat. And those two, like Sachin and Tendulkar, are indistinguishable.
If you are trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. And I try to engage people. I respect the receiver.
Something that I get moisturized every time I see it. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's written from here. So I think these are things that one would remember always.
Well, true legend there, Piyush Pandey. A quick check of some of the other national headlines. At least 20 passengers were burnt alive when a private bus travelling from Hyderabad to Bengaluru caught fire in Kurnool district. The flames erupted after the bus collided with a motorbike. About a dozen passengers managed to escape in time, while some suffered injuries. Prime Minister Modi announced an ex gratia of 2 lakh rupees from the National Relief Fund for the next of kin of the deceased. Telangana government has announced an ex gratia of 5 lakh rupees. Prime Minister Modi kicked off the National Democratic Alliance's campaign for the upcoming Bihar Assembly elections. While addressing a rally in Samastipur, the Prime Minister said the NDA government will return to power in the state and ensure good governance. He also paid tribute to former Bihar Chief Minister, late Karpuri Thakur, describing him as a pioneer of social equality. Samastipur has been a stronghold of the Rashtra Janata Dal since 2010. India blocks CM candidate for Bihar polls. Tejasvi Yadav has promised to reduce the cost of LPG cylinders to 500 rupees if the alliance comes to power. He also said the government will increase old age pensions to 1,500 rupees. Tejasvi accused the centre of shielding corrupt leaders and criminals in Bihar and said he will ensure a corruption-free government. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Presented by Standard Chartered.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. OpenAI buys Software Applications Incorporated, a company that built an artificial intelligence interface for Apple computers. Post the deal, all 12 members from the company will join OpenAI. This comes weeks after OpenAI acquired StatSig, a product development startup.
Uniphore, an AI company, has secured $260 million in a Series F funding round at a valuation of $2.5 billion. This investment will help support its innovation strategy, particularly focus on its AI and data platform, business AI cloud, and further expansion of ecosystem of enterprise clients.
Zomato founder and CEO Dipinder Goyal launches a $25 million self-financed fund under his initiative Continue Research. It aims to support scientists studying the fundamental mechanisms of human aging. He describes the endeavor as a multi-decadal journey.
Anthropic and Google officially announced their cloud partnership, a deal that gives the artificial intelligence company access to up to 1 million of Google's custom-designed tensor processing units. The deal, worth tens of billions of dollars, is expected to bring a gigawatt of AI compute capacity online by 2026.
IPO-bound fintech startup BharatPe has roped in former Paytm Senior Vice President Ajit Kumar as its new Chief Technology Officer. This comes months after previous Chief Technology Officer put down his papers. Kumar is set to spearhead the company's tech strategy and innovation.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. From a Chennai startup pioneering voice automation to a Palo Alto-based business AI powerhouse, Unifor's journey captures the global rise of enterprise AI. Unifor has just raised $260 million in a Series F round, backed by tech giants NVIDIA, AMD, Snowflake, and Databricks, taking its valuation to $2.5 billion. As AI moves from pilots to production, Unifor says it's ready to power what NVIDIA calls the agentic enterprise. To take us through what this fundraise means and what's next for Unifor, joining me now is Umesh Sachdev, the co-founder and CEO of Unifor. Umesh, welcome back to Startup Street. $260 million Series F round, one of the largest this year in the AI enterprise space. Walk us through what this raise means for Unifor, especially given the mix of investors like NVIDIA, AMD, Snowflake, and Databricks, and how strategic is this beyond just capital?
Shruti, always a pleasure to be back on the show with you. Obviously, this is a very exciting milestone for Unifor, but I would say a very exciting milestone for, in general, the adoption of business AI for the whole globe. What we are seeing with this funding round is not just a validation of Unifor's growth and how prominent we are becoming with the Fortune 500, Fortune 1000 companies, but also a big validation that the whole ecosystem needs to come together to drive AI adoption. And that's why we are seeing participation in our Series F from NVIDIA, AMD, Snowflakes, and Databricks.
Sure.
And I think it's a very exciting moment.
All right. This round, like I mentioned before, values Unifor at $2.5 billion. Umesh, can you unpack what this integration could look like for clients? How is Unifor going to truly enable agentic enterprises, as NVIDIA described, further ensuring Unifor's growth is built on real enterprise adoption, not just AI buzz?
Well, if you think about what is driving the adoption of agentic AI in some of the biggest businesses, Unifor's customers, over 2,000, happen to be some of the biggest banks, telecom companies, insurers. The CIOs in these companies, as they look to adopt agentic AI, first and foremost, they want optionality. It is not one size fits all. For very high reasoning use cases, they want a big LLM, a big GPU. For cases, let's say in finance or HR, where the latency can be pretty high, you don't need real-time responses, a small model and a smaller GPU can work. This is what Unifor delivers. We are at the tip of the spear. We bring together the GPU infrastructure, the data infrastructure, and the agentic infrastructure, and we provide all the options to these enterprises. That architecture, Shruti, is what's driving the growth.
All right, Umesh, when we last spoke in September, you had announced the acquisitions of Orbi AI and Autonomate, bringing in top talent from DeepMind and Google to supercharge the business AI cloud. Tell us, how have those integrations strengthened Unifor's capabilities?
Well, it's hard to believe those acquisitions are less than 2 months old for us, and we're still heads down trying to integrate them. But already our top 50 clients are using in 3 different ways the capabilities from Orbi, Unifor, and Autonomate put together, even before we managed to fully seamlessly integrate the technologies. With Orbi, what we gained was an agentic process discovery, where we can go into a company and without the company having a documentation for themselves, we are able to discover their current manual work and then agentify it for them without them having to do anything. So I think we are delivering an end-to-end automation in a sovereign and open manner. And this will only accelerate next year as we fully integrate those acquisitions.
Sure. Like you mentioned, you now count over 2,000 clients. Where are you seeing the fastest adoption of Unifor's platform? Is it customer experience, internal operations, or decision automation? And where does this multimodal AI take your business next? Emotion recognition, video intelligence, or autonomous decisioning?
Well, if I think about my customer base, there are 4 industries which are leading the charge as far as our customers are concerned. Financial services, insurance, telecom, and retail are the 4 highest adopters of agentic AI in our customer base. Use cases around internal automation, reasoning, these are taking fold. 2-3 examples: claims automation in insurance, billing automation in telecom. Or for a big 4 firm, a consulting firm in the world, every industrial domain that they work on, they're now agentifying and delivering their consulting services through an agentic architecture.
Sure.
This, Shruti, is a full rewrite of the tech stack in the enterprise.
Okay. Umesh, as you scale globally, where does India fit into Unifor's roadmap in terms of talent, innovation, or enterprise market opportunity?
Well, as you know, India is where the roots of Unifor were. We're an IIT Madras incubated company before we moved the headquarters to Palo Alto. India is a huge talent market for us. We have our AI innovation hub in Chennai. We have our engineering centers in Bangalore, and those continue to scale for us. India continues to also be an opportunity for acquisitions. Autonomate, as we announced a month and a half ago, was a Chennai-based company. As far as the enterprise markets are concerned, vast majority of our revenue are between the US and Europe. And Asia, starting with Middle East, India, Australia, are beginning to show early promise of agentic adoption.
Okay. One final question before I let you go, Umesh. You've now got capital, strategic partners, and product market fit. What is the next big milestone? Are we looking at an IPO on the horizon?
Well, really what we're focused on for the next 12 to 15 months is how do we grow our customer base from 2,000 to 4,000 to 8,000. We really want to keep our growth rates high. We see a huge opportunity, and our customers are telling us that they're beginning to see big ROI with us. As that happens, Shruti, as you rightly said, we are now a Series F company.
Yes.
The total capital we've raised is over 850 million. So at some point in the future, becoming a standalone publicly traded company would be what we'd like to do. But right now, we're just really focused on that customer adoption.
All right, so you've not given me a timeline, but on that note, it's time for me to wrap up our conversation. Umesh, as always, it's a pleasure speaking with you. Thank you so much for joining us on Startup Street.
Thank you for having me.
Well, and what else is brewing today? Chara Technologies, a homegrown deep tech startup developing rare earth-free motors designed, engineered and built entirely in India, recently raised 52 crores in a Series A round that was led by Arkham Ventures. Founded in 2019, the company is betting that magnet-free motor systems can make EVs both more affordable and geopolitically resilient. With the fresh funding and plans to scale production fivefold, it is now testing whether India can not only assemble EVs, but innovate the powertrains that drive them. For more on this, joining me now is Bharti Airtel, the founder and CEO of Chara Technology. Bharti, thank you so much for joining us here on Startup Street, and congratulations on your fundraising. Before we get to that, you were founded in 2019 when the EV industry was still in the nascent stage. What gap did you see back then in the supply chain that made you believe, rare earth-free motors can be a viable alternative?
Thank you for having me here on the show. Much appreciated. When we started Chara about 5 years ago, there were three main goals. As we are transitioning from a hydrocarbon economy to an electron economy, we need to build efficient and sustainable motors. The only way to build an efficient motor today is to use rare earth magnets, usually called PMSM motors. And rare earths have this few problems. They're expensive. They're difficult to mine and extract, both economically and environmentally. And the last but not the least, our friendly neighbor, China, has 90% control over the supply chain. And that's why we wanted to build a sustainable, made in India, rare earth-free motor, which are completely free of critical materials on foreign sources. And potentially build a cheaper motor to enable our transition to an electric future.
And, Bharti, now that you've got this 52 crores, how are you going to deploy that to scale this, powertrain platform you're building?
So before going there, where we are today is we have developed the technology, we have the products, we have the customer traction, we have about 100 plus customers. We're shipping the initial lot of motors to be deployed in a variety of applications. The infusion of capital, we're using it for the following three purposes. One, to scale up our deployment, both in India and outside India, develop newer products, our next-gen products, which are higher speed, larger capacity, and lighter motors. And the last one is to increase all our operational capacity to support this deployment and newer products.
Okay, you have these plans to increase production fivefold to 100,000 units annually. Just take us through what the biggest challenges in scaling deep tech manufacturing in India really are today and how are you addressing them?
So we have found like three problems probably. One is, number one is talent. It is difficult to find core engineering talent in India. We have to train them or we have to get graduates from foreign universities. Or the top tier universities. That is problem number one, finding talent. Problem number two is the capital. We need patient capital for a deep tech company to go from R&D to manufacturing. And the last one is the market acceptance of a new technology. We find a lot of reluctance to use our reluctance motors by a lot of our customers because it's so new. And fortunately, with the tailwinds of the geopolitics, there is a lot more affinity to use our motors in their products.
Well, Bhakta, you've outlined the challenges, talent, patient capital, and the acceptance of new technology. What did you really do to overcome these to get where you are?
Patient capital, solving it through patience, passion, perseverance. That is the only way to say it. We took 5 years to develop this product, kind in the world, and as you guys are mentioning, fully certified by the certifying agencies in India. But at this point, I would like to say that there is now capital available for seed round and pre-series A round and potentially series A round for deep tech companies in India. That thing has changed positively in the last few years. The talent, we have two-pronged approach. One is that get engineers from the Indian universities, various tiers, tier 2, tier 1, tier 2, tier 3, and train them. And try to attract talent from foreign universities. We now have graduates from, like large universities like Carnegie Mellon, Vienna University. I think those are the two approaches we have taken to solve our talent problem. In terms of making our customers adopt newer technologies, again, two approaches. One, we have tried to work with smaller customers who are more hungry, who are more ready to adopt new technologies. And the one is the tailwinds we got from geopolitics is making us a favorable.
Sure. Bhakta, quickly before we let you go, a 6-fold revenue jump by FY26 is what you're targeting. What's going to drive that growth and how will you balance this aggressive expansion with the long product validation cycles, which you also spoke of, typical of automotive tech?
Yes. So we have already started on the journey of the validation. We have secured customers last year, and they're all ramping up now. We now have the manufacturing capacity installed in our factory in Pune, north side of Bangalore, which can do about 25,000 motors a month. And fully validated, that gives customers the comfort that this is a product that works. And there is a bunch of customer validations, both inside and outside India. And I already told this 2 times. The tailwind of the geopolitics will help us accelerate much faster.
And quickly, you're also eyeing North America and Europe next. What will be the go-to market strategy for these markets, which are believed to be highly competitive regions?
The go-to market strategy, before we go to Europe and US, we first want to deploy about 10,000 motors in India across applications. So we have the proof that these motors work in the field. And then in terms of go-to-market strategy, we will initially target what we call as the off-highway applications, like agricultural equipment, in-campus vehicles, where the competition is a little bit less fierce and the sales cycles are much faster. And then we move on to the usual traction motor applications.
All right, Bhakta, we'll have to leave it at that. But thank you so much for your time here today on Startup Street, and we wish you the best with your venture. Thank you.
Thank you for having me here. Thanks.
On that note, it is time for us to head into a short break. But coming up on the other side, Artha India Ventures has announced the launch of its 500 crore rupee Artha Venture Fund 2 with a strong 250 crore rupee first close already secured. Backed largely by Indian investors, we speak with Aniruddha Damani, the managing partner of Artha Venture Fund. On the other side, stay tuned. Welcome back. You're still with us on Startup Street. Artha India Ventures has announced the launch of its 500 crore rupee Artha Venture Fund 2 with a strong 250 crore rupee first close already secured. Backed largely by Indian investors, this new fund builds on the success of Artha Venture Fund 1, which was ranked #1 in India and #2 globally for its stellar returns and category-defining bets like Agnikul, Cosmos, Lendon Club and Everest Fleet. With India's early-stage ecosystem seeing a funding reset, Artha is doubling down on high-conviction seed stage investments, focusing on premium consumption, fintech infrastructure, applied AI and deep tech. The goal to back resilient founders, building capital-efficient, scalable businesses that can power the next decade of India's startup growth story. Joining me now to discuss this further is Anirudh Edamani, the managing partner at Artha Venture Fund. Anirudh, it's great to have you on the show. Thank you so much for joining us today. You know, Artha India Ventures has now crossed 1,500 crore rupees in AUM, and you've announced AVF2 at 500 crore rupees. What does this milestone mean for the firm and for India's early stage investing ecosystem?
First of all, thank you so much for having me on the show. And I think it's quite surreal to be sitting here and talking about Artha Venture Fund 2. Because when we started Artha Venture Fund 1, we were India's first and only early stage micro VC. But I think the model of being a small size fund, having high ownership stakes, and being able to double down on your winners, the family offices and Indian investors have really taken to it, and which is showcases in the fact that we've had such a strong first close, and we're looking at probably closing out the fund by the end of this financial year, and with a green shoe probably by June. So that all this tells us is that we're doing something right. The returns are there for everyone to see. We've backed category winning companies in Fund 1, and we've also continued to back those winning companies even through Artha Select Fund in those B and C rounds. And the results are for everyone to see.
Absolutely. So hoping to close this round out by the end of this year and the green shoe option by June of next year. You've already raised this 250 crore rupees in the first close, right? So what kind of investor confidence or momentum are you seeing, especially from, domestic LPs, which make up 90% of your base?
I think the confidence has been quite stellar, to be fair. We were hoping that this would have a lot more participation globally since we were setting up our GIFT City structure as well. But before we could do that, the check sizes we received from the Indian family offices have truly been astounding. Some of the family offices that were in Fund 1 have come back with check sizes 5 to 10 times higher than what they put in Fund 1. We've had new family offices. Some of them have put in check sizes that are actually larger than our own check size in the fund, which was really heartening and really gave a strong boost of confidence to the entire Artha team that has been working diligently on building category-winning companies in India.
Absolutely. And, through this fund too, right, how many startups are you looking to invest in? What are going to be the check sizes? And have you already deployed any of these funds in companies?
Absolutely. So I think this is a great time to be investing. We talked last time as well about the graduation rates, how they have fallen. The graduation rate for us is, in a defined period of time, how many startups, raise the next round of capital. And I think usually in the seed to Series A conversion over 3 years is roughly 13 to 14%. Right now, that conversion rate is as low as 5 and 6%. So it tells you that obviously the ecosystem has had a major hit after the boom years of 22-23. Therefore, we've deployed even before the first close. We started warehousing companies. We've finished 5 investments so far. 3 have already been announced. We'll announce another 2 shortly. We have another 6 companies in the pipeline. We were looking to close them by the end of December. So we're hoping to finish 36 seed investments from this fund, 36 seed investments, average check size of between 4 to 5 crores. And then we'll double down in those same companies in pre-Series A with, between 8 to 10 crores, and Series A will be between 16 to 20 crores, incrementally giving more and more capital to the founders so that they don't have to worry about capital as long as they're building a fantastic company.
So 36 startups on the radar there, and you're going to announce another 6 more soon. You're focusing on premium consumption, fintech infrastructure, applied AI, and deep tech, right? So what's driving your conviction in these 4 themes, and where do you sort of see the biggest breakout potential?
I think a lot of this also drives from the way we ended Artha Venture Fund 1, and I think Bhakta was talking earlier about how the funding scenario for deep tech in India has changed. We're not the deep tech guys. We're not the guys that completely understand the technology, but we're the people that understand the dhanda behind the technology. And that's what we've really discovered our niche or our knack for with Agnikul, obviously in Fund 1. We've discovered in Fund 2, we've done Take Me to we did Take Me to Space, which is already getting ready to launch its satellites for creating data centers in space. And we're looking at space tech and semiconductors being a very important theme, both as a country, both the China plus one strategy geopolitically. But we also feel that we have the requisite talent and the requisite infrastructure to create world-beating companies when it comes to space tech and semiconductors out of India. DLI schemes, IDEX, the fund created by the government for space tech, all of these are boosters, as well as in space. All of these are boosters, and they're creating a fantastic platform to see deep tech companies that will get to commercialization faster in India for the globe. And then on top of that, we think fintech infrastructure, just the fact that Indian consumption story is really just getting started. We need more credit cards we need more credit cards, we need more consumer credit loans. And for that to happen, the banking infrastructure has to improve. Most cooperative banks or most small finance banks don't issue credit cards. They don't probably have the technology for it. And those are the places where we see fantastic opportunities for fintech infrastructure companies to come and really work with these banks and NBFCs to flow more credit through the economy. And lastly, I think premium consumption, to us, Indian consumption story is a 20-year play. But in that, we see that top 6%, the people that are earning between $15,000 to $20,000 a year, that ecosystem itself has a very different consumption pattern than the rest of the economy. And they typically have much higher margins over there. So we want to focus on both consumer products or consumer services, just catering to that top 6% of the economy. And I think there's a pot of gold for founders to make, especially in that top 6%, the affluent Indian economy, as you would call it.
Absolutely. So a couple of big bets that you pointed out, especially the sectors. You also mentioned earlier there was a drop in seed stage activity, right? Fewer than 100 deals a month this year. In this sort of challenging environment, what made you feel that this was the right time to launch the new fund?
I think this is one of the... So when you've invested for 12 or 13 years, and obviously the family history of around 45 years in the capital markets, you realize the best investments are made in bear markets, right? Because valuations temper down and the real founders come out, in my opinion. Like the tourist founders are gone because it's difficult to raise capital. The due diligence timelines are much longer. A lot more questions are being asked. People are asking founders to tighten their belts. In this kind of a environment, the best founders actually are the ones that have pure passion driving them, and they really have a need to solve. It's not all the bells and whistles that are driving them to become founders. I think this is the sort of timing that we've made a lot of money in, even in the last, maybe 2016, 17, again, when a similar situation arose. Funding velocity went down, the graduation rate went down. We made fantastic investments in those years, right? We found Karda technology in those years, and it made a fantastic exit for us. We were able to get much better valuations, spend a lot more comfortable time with the founders doing proper due diligence, and the founders were more focused on taking revenue from customers than taking funding from VCs, which is the perfect scenario for VCs who do not like to get diluted too much.
Absolutely.
All of those things combine, and that's the timing that we've been waiting for.
All right, Anirudh, thank you so much for taking time out and being here with us on Startup Street.
Thank you so much for having me.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Hello and welcome to this Diwali special Market Cafe Sambat 2082. I'm Nigel D'Souza, and with me, my co-anchor today, Nimesh as well. Well, Nimesh, it's been a difficult year for the markets.
Absolutely.
But we have an elite panel with us today.
Oh yeah. So happy, festive greetings to you, to your family, to all the viewers, and to the distinguished guests as well. All our seasoned fund managers nobody needs any introduction. First question will be an open question to all three of you. Anybody can answer, or all three can answer. From last Diwali to this Diwali, Nifty is flat, the returns have been quite muted. Did you all expect that India will be a rank underperformer in the last 1 year? And what was the key reasons for this underperformance? I'll start with Anish first.
So, well, two reasons for the underperformance, right? One is that earnings growth slowed down and multiples were high to start with. And more importantly, there was a lot of supply of paper, right? So a lot of the argument last year, the people who were extremely bullish were making was that there's a lot of demand for paper. But what hadn't been anticipated was that there was a lot of supply for paper. So while the retail investors might be disappointed, the promoters, the private equity, the investment banking world has done quite well last year because they've managed to put out a lot of paper in the markets.
Vishnu, what's your take?
Right. I think part of the reason, as Anish also pointed out, is expectations were very high, right? But we had also started getting into a zone where economic activity had kind of cooled off again. If you go back, say, about 12, 15 months back, the Reserve Bank of India had kind of clamped down on lending into, subprime, MSME, etc. So that was one source of funding issues. And then you also had fiscally very little stimulus and support coming to consumption. Over the course of the last 9 months, I think a lot of those have kind of got addressed, right? But the relentless supply of paper and, of course, the curveballs of Mr. Trump and what he tweets on X, keeps us on our toes. So I think a combination of both of these is where the markets are where they are.
All right. Pankaj, I want you to come in it. Over the last 1 year, we have interacted numerous times. And you normally look at the brighter side of things. So could it be that sort of a pitch the last 1 year, which was bouncing around, it was turning, and yet we managed to hold our wicket at least? Do you think it's that sort of year? Because look at the challenges we've had on the global front, on the valuation front, on the supply of paper front as well. So do you think India as a batsman has done pretty okay, given the kind of challenges in the last 12 months?
So apart from what Anish and Harish said, they spoke about domestic side. But we should not ignore that we have seen about almost $20 billion of FI selling.
Yes.
And that's because India was seen as an AI loser. And a lot of money from India flowed out to Taiwan, Korea, China. And there's an AI frenzy for the last 12, 15 months, which is happening in the globe right now.
Yes.
In the midst of that, we had domestic challenges, as they said. And last, if you look at indices, they are not portraying the right picture. Indices may be down by 5-6% from their all-time highs. But when you look at the median constituents and the drawdown of those median constituents, it ranges between 15 to 25%. And when you speak to HNI, retail, their portfolios from an all-time high perspective are any which ways down by 20-25, which is the correct portray of the things. So I think along with time, I think you have seen price correction in the broader market space also. And from those challenges perspective, I think a lot is getting priced in now. And I think it is healthy. For a large part of the year, if you remember, Nigel, we were very cautious, saying that valuations are not making sense to us. From March, April onwards, we started to get constructive. And I think a large part of those concerns are priced in. Incrementally, I think we should front load our equity investments as you move ahead in the next 1 to 2 quarters, is my thought process.
Pankaj, you spoke about AI not being the big theme. In fact, India has been seen as an anti-AI. In that context, if globally there is an AI bubble, you think this year could be in a way a blessing in disguise for India that we are not in that AI bubble so far?
I think so. And all the data points are flashing absolutely red. We don't know the timing because markets always test you. It's 6 months, 12 months, 18 months. But look at the data points, just 4 of them. The concentration is the highest ever. If you plot the S&P 500, equal weighted index versus market cap weighted index, it's at its lowest point today. That means 490 stocks on one side, 10 stocks on the other side. It's always a risky part. The second is NVIDIA is now 15% of US GDP. Remember 2000, internet was invented. People said Cisco is the only company which will provide hardware. It became 5% of US GDP. And from there, how many years that Microsoft took to come back to the original price. I'm not saying AI will not be there. It will be there for the next 15, 20, 25 years. But the financial market I think is pricing far more things. $10 million company getting a valuation of 20 billion. Last 4 years since ChatGPT was announced, you saw 80% earnings growth, 90% capex coming from AI companies. And there's just a frenzy going on. I don't know when the party will stop, but you need to be at the last at the last door to get it out. I think in that respect, India could be a beneficiary where it's a diversified market. Look at Taiwan, TSMC is 55% of MSCI Taiwan, one stock index. Samsung, 30% of MSCI Korea, one stock index. So when this party will stop, I think a large part of that money will come into diversified markets, which are much more sustainable and structural in nature, which I think is India.
All right, Harish, let me come across to you. The other problem has been the FI selling, right? I mean, we talk about them selling $20, $23 billion just in the last 12 months or so. But if you look at the primary market, actually, they're put in close to around $5 billion approximately. What about this IPO frenzy? Everyone talks about it, it's sucking some liquidity as well. But is most of that now a known devil? We had a couple of big IPOs that people were worried about, which have gradually got digested. And thankfully, getting into Diwali, at least those that got LG will be a little bit happy, because at least it's giving some kind of positive rub-off, you know. Your take on this IPO frenzy as well?
Right, so India is one of the unique markets which globally is seeing a lot of new listings coming through. Most of the rest of the world, the IPO market is pretty much dead, right? So that is one unique aspect. The second unique aspect, especially in the IPOs that we are currently seeing, is that there are a lot of scale companies which are very, very differentiated, which was not there, even 6 months or 9 months back. So while yes, the number of issuances, etc., are large, the type of businesses that we are kind of encountering now are very, very new and do not have, in many cases, a parallel to what is already present in the market, right? Now, of course, valuations is in many cases nosebleed level, okay? But given the fact that there is something unique and differentiated that these businesses bring at scale, I would imagine that, you know, a lot of the legacy holdings of many FIIs, you know, which have been traditionally in the banking or the IT services, or maybe in the last 5 years, a lot of money has gone into the industrial theme, which has done very well. I think those will be the areas that, you know, people may want to kind of reallocate and move into this. So that is one key aspect that's coming through. The second key aspect is in terms of sheer number, just to put it in numbers, currently we are kind of selling, supply of paper is roughly about 2% of market cap if we were to quarterly annualize this number. This number, the last time we saw such huge numbers was in 2017, okay? And we all know how 2018-19, you know, we had to digest all of this along with expectations running very high in 2016-17. So I suspect that, you know, it's not that, you know, we are at the tail end of the IPO digestion problem. I think it will continue to be coming through in the course of the next 6-7 months, and which means, in my opinion, even though the fundamentals are stacking out much better, it does appear that it's going to be a grinding market. The sheer supply of paper is going to keep a lid on any kind of a very big kind of a move up, but we think that, you know, there are markets when, you know, consolidation is a good thing, because especially when the fundamentals are improving, and that therefore is a great place to allocate and to accumulate very good quality equities at this point of time.
Anish, you know, my first question was on what went wrong and, you know, why India underperformed. You highlighted some of these concerns. Let me just ask you on the 4 big concerns, and you give your view. Are they behind? Is the worst over? What is it in terms of earnings, in terms of valuations, in terms of global headwinds, or whichever the key headwinds were for last year? Your take on all the 4-5 concerns, and are they now behind us? And what is the take now?
See, of these, the most important for me is earnings, right?
Is earnings?
Earnings, right? I think earnings should pick up momentum. Okay. What had happened was that, one, the economy slowed down a little bit, and two, what we had seen, right, was that 2 years prior or 3 years prior, what had happened was earnings growth had outpaced revenue growth, which happens when capacity utilization is improving, you're getting operating leverage, and that obviously tapers off. So that tapering off also happened, and demand was weak.
So net on earnings, you're comfortable that now there is going to be a pickup?
I'm reasonably comfortable on earnings. I'm expecting the economy to...
FY27 going to be a good year for earnings?
I think FY27 for large cap stocks should be a good year for earnings. Sure. Now, I would caveat that. Actually, what I worry about is that in the small and mid cap space, there's a lot of paper that has come on the market, not just primary, but secondary also, which has come on the market with very poor quality of earnings. Right? Okay. If you look at the balance sheets of those companies, they've been, I feel, very flattered. Those earnings will disappoint, right? So I would not say that there's a uniform improvement in earnings, because the poor quality of earnings will I say there's hardware, there's software, there's vaporware. The vaporware will vaporize. So that part you have to be careful of, but the economy should regain momentum and earnings should pick up.
Point taken. On earnings, which are the other concerns which you feel now it's turning around?
No, I think for me the most important concern is earnings. I don't think like tariffs are a big issue. Our current account deficit is in good shape, and as long as the current account deficit is in good shape, you know, a few specific sectors which are not very big, like textiles experiencing some problem, doesn't change the shape of the overall market. And I'm not worried about you know, tariffs being put on the bigger sectors like pharmaceuticals or IT. I don't think the US economy can absorb putting a tariff on those.
All right, so I think we have consensus that the last 1 year was challenging, but now we're gradually getting more constructive that the next year or so will be fairly positive. Talking about these tariffs issues, Pankaj, let me come across to you, you know, because economically it may not be having a big impact. However, those animal spirits to come back, you know, for people to get more excited about the markets, you'll want to have a deal with Mr. Trump. You know, how important is that? And do you think now we have faced bulk of that music, he'll have to come up with something new now to scare us? 25% became 50%. On the tariff front, do you expect some kind of a breakthrough to come through, given the time that we have seen, and also given the kind of commentary, which, to be fair, is a little bit heartening, a little bit more positive?
So, to be honest with you, any speculation is above our pay grade, right? We all thought that in April we are first in the queue. And suddenly what happened that we are last, and with a 50% tariff, which is one of the highest, right?
Yeah.
What will change also, we will not know.
But hopefully the worst is behind.
Worst is behind. That's what the sense we are getting, right? And the sound bites which are coming are quite positive.
Hopefully.
We are building in that the penal tariff will be out, reciprocal tariff remains, but there are certain section of market which has started to believe that that final tariff could settle between 18 to 20%.
Yeah.
If that happens, I think market is still not pricing in that. Sure. And that will be a very, very positive outcome. But let me give you a real ground situation. You speak to textile guys in pain. Yeah. You speak to gems and jewelry guy in pain. So there are certain sector, pockets of economy which are really, really badly hit. And they are employment generators.
Right.
So I think we need to solve this issue sooner than later so that the animal spirits are back both in economy and markets. Today, when you speak to exporters, they don't know what is happening. Right. And the consumer confidence, the CEO confidence index which we track, it is at the lowest point ever been in the last many, many years. So I think it's for the global economy, local economy, that tariffs issues get resolved. And I think it will. Don't forget, next year is midterm election. Yeah. And he wants a good image for himself as well.
Got it. Harish, let me get you in. You know, I recall when the markets were far more brittle. Now we're in a better space, and we had met at our office in our studio, and you were sounding very optimistic. You said, you know, things may not be working out according to plan, but on the fiscal work is being done. On the monetary side as well, work is being done. We have fired quite a few bullets now. GST 2.0 is here. Rate cuts have come about as well. And both the government as well as the RBI are pro-growth. Do you think bulk of the action on that side is done, both on the fisc as well as on the monetary front? Or do you expect more action? Because the economy, we need to admit it, it's still softish. Hopefully it's going to recover in the second half of the year.
No, so I think the heavy lifting that the government and the RBI has done has been quite significant in the last 12 months. And, you know, incrementally, of course, there could be support to the exporters, maybe some kind of a credit guarantee scheme. Our current line of defense is in the form of rupee depreciation, which is the dollar itself is weakened against all major countries in this year. Yeah. We weakened further against the dollar. So that's been our primary line of defense for now. Yeah. But clearly there needs to be more sector-specific packages that need to come through. The second is, of course, optically, the announcement on investment, because there's been a kind of a pivot to move from investment that the government was doing significantly in the last 4-5 years to something which is more consumption focused. So it shouldn't be that, this shift is coming at the expense of investment. So that is something, again, I think, in the budget, etc., when they clarify, which I think they will, I think that should put a lid on that worry. But from a market point of view, we do think that, consumption is an area which is still significantly under-owned. Expectations are still running reasonably low compared to the investment side, where in the last 5 years, a lot of good things have happened, but expectations are possibly running far, far more elevated. Ownership levels are running far, far more over there. So that's the other key aspect over there. So I would think that, bulk of the work they have done, it is now up to the private sector to reciprocate. And for that, more than anything else, I think some of these uncertain environment that is there, if it were to kind of reduce a bit, it is for the benefit of everyone. The last point I want to make is, private capex has been, a bit patchy.
Yes.
There have been some groups which have been on the front foot, but many others have been waiting for demand to come back. The sense that we get is that, over the course of the next 12-18 months, as the domestic economic activity kind of improves, you're going to see actually the demand also coming through, which was the single largest concern for private capex to come through. So I think that is the other key leg that is likely to move on. So it is the making of, a very virtuous kind of a cycle that is going to come through, is our sense over the course of the next 2-3 years. The only spoiler is our own expectations. As long as we have got low expectations, I think the economy, the government, all of that will fall into place.
Just to take your point forward, Krishnan, I had seen, Pankaj, your tweet as well. And that's been the experience in the market, right? When the first 4 years, the government's focus was on capex, all the capex-related stocks did phenomenally well. First year in this budget, there was a shift towards consumption. And I guess there was a bit of discussion as well. Should be a time for now to move from capex to consumption as a theme, from an investor point of view. Pankaj, you can guide us. Is this a time now to move from capex to consumption? And within consumption, what would be your top bets?
So let me give you a data point.
Yeah.
Last 5 years, you look at the BSE Industrial Index, it's 5x almost.
It's 5x, yeah.
Look at the consumption index, it's about 1.5 times.
Correct.
So obviously, industrials have outperformed massively. Because of the government-led capex, which grew at 30% CAGR for the last 4-5 years. Our sense is that that number will be in single digit, and a part of that will be diverted towards new areas. I don't know, it got unnoticed by the markets or by the media also. The total R&D spend in India is 0.6% of GDP, 1.5 lakh crores. Out of that, 110,000 is by government, which is DRDO, ISRO and others, and only 40,000 crores is by private sector. In that 45,000 crores, 25,000 is by pharma companies, and the rest 15,000, $2 billion is non-pharma. Government has devised a body which will fund 1 lakh crores of R&D expenditure across battery chemicals, semiconductor, EV, you talk about it. And that's headed by a person, very eminent person from Bay Area, and who was the ex of IBM as well. So I think the entire thought is that road, railways, we have done enough. I think we need to now shift our gears from a expenditure on government side to other areas, which is defense, which is R&D, which can have multiplier effect, which could be far, far more. So government expenditure, we have to think very differently from an industrial perspective. And I'm very positive on consumption. I think auto, QSR, retailing, and on footwear. I think these 4-5 things are looking very good on discretionary consumption, not so much on staples. I don't think by GST cut, you will start using more shampoos or soaps or things like that. So I think more discretionary in nature rather than staples in nature.
All right. Anish, your take on consumption versus capex argument?
See, I've always been of the view that, look, the economy will do well if house building does well.
Yes.
Right? It's my one-line view, and if economy will do poorly if house building does poorly. I would tend to hold that view. And I think house building is a big driver. A large part of the private sector capex is actually house building. And I also feel that this distinction between consumption spending by the government and investment spending is a bit overstated. The idea of spurring consumption is that it increases demand in the economy, spare capacity is then used up, and that then triggers investment spending. I mean, as as Harish was saying, that investment spending by the private sector will happen after their capacities are fully utilized. They will not spend if they've got spare capacities. So my view is that, like any other cycle, right? If the economy regains momentum, if demand starts picking up, investment spending will come back. I mean, you can't consume if you don't produce. So you have to set up, and to produce, you need to invest. So that it's not either or. I mean, eventually both will grow. It's not as if our consumption to GDP ratio keeps rising and investment to GDP keeps falling, then longer term growth will slow down, right? So you can't be bullish on consumption alone. The stimulus might have been directed there, but it doesn't end there. It's supposed to set up a virtuous cycle.
So Anish, if you were to give us a theme then, if a theme that you would be relatively more bullish on.
I've been, if you look at our business cycle fund where we express our sector preferences, right? We have been bullish on cement, auto, industrials and capital goods and segments of financials. Auto and cement have already done well. I do think that industrial and capital goods should regain momentum. They lost a lot of momentum over the last.
Okay, all right. Harish, coming to you as well for your big theme, but I think let's get another guest.
Let's invite our last guest as well, Vikas.
Vikas, welcome.
Thanks for coming.
Welcome.
And happy Diwali. Please.
Happy Diwali.
Vikas, if I can start with you, you've been very bullish on India infrastructure, and I guess it was infrastructure which because of which you are late. Your take. Largely on infrastructure, I mean.
There are two ways to look at it. One is the opportunity in that space itself, like there are two things, infrastructure owners and infrastructure builders or enablers. Both are different. But more importantly, I think the second order effect of that is far, far higher, and you'll have efficiency getting built, and a lot of enabling cost of logistics comes down. So those things have far more multiplier impact. And it's one way to think about it, very much like in US when they had railroad in 1800s where big investment happened, and that had a huge multiplier impact on the GDP growth for decades to come. So we'll see similar kind of things happening in India.
All right, and on the market on the whole, you've been a bull. You believe that bad news is thrown at us and you look to get in. So you're quite constructive that the next year is going to be much better?
Absolutely. I'm quite positive. I think the markets, given the fact that, think about it, our economic growth is reasonably good. Your RBI, very big, if you see across in last 1.5 years, all policies are supporting the growth in terms of interest rate cutting down. Last week's policy was boosting the credit growth, and the government is trying to do, in terms of tax rate cut, direct tax with indirect tax, infrastructure spending is happening. So all those things are boosting, towards the growth. So I personally feel that, we will see a very good growth coming in the earnings in second half of this year. And once the tariff uncertainty, which is supposedly a big thing, which I don't think is a very big thing, but markets are worried about it, that once settles down, I think, markets will do very well. And more importantly, a lot of people are positioned negative, sitting on a lot of cash, there's shorts in the markets. So I think as markets see growth panning out, you will see markets doing well. And that's what is happening in the last couple of, days or so. I think you will see more of that in next 6 to 8 months.
All right. Well, gentlemen, I think we're bracing for better times on earnings, on growth as well. And hopefully Mr. Trump is on board as well. And with those FIs underweight, hopefully they come back. I'll tell you what, we'll slip into a short break. Come back. We've got lots more to ask our guests.
In fact, after the break, we're going to grill all 4 of them on the key themes and where to make money next year. So we'll ask you about the key themes and stocks to focus on.
It's wonderful to have you with us today, Tanuj. Thanks so much for joining us here this evening, and it's great to see you back in India. You've spent the last few days touring a little bit, so what's the first read on India now that you're back here?
I was just saying to the minister, hence I was a few seconds delayed, that I'm disappointed he's leaving because I was going to tell him a very pro-Chennai story in what
I can call him back.
I've given him the headlines in what Standard Chartered is doing. But look, it's great to be back. I've been in Mumbai, Delhi, came in this afternoon, and India is shining. Business is doing very well. Standard Chartered is doing very well. I've come here to open our new center in Chennai. We are inaugurating the center day after tomorrow, which is our biggest GCC in India. So massively excited.
Well, kudos to you on that. So let's talk a little bit about this center that you're opening in Chennai, which is going to be your biggest GCC in India yet. But I also want to talk about this from the prism of where things started for Standard Chartered in India, going back to 2001 as far as the GCC story was concerned specifically, and where you are today and the evolution.
No, look, you're right, Shireen. We opened our first GCC in India, in Chennai, in 2001. And for those of you who were around at that point in time, it was called Scope. Scope International is where our origins come from. Chennai is, we've got now centers in other parts of India. We employ 22,000 people. We employ 28,000 people in Standard Chartered in India, 22,000 in our GCCs. And Chennai continues to be our biggest center. You're absolutely right. It started off with, servicing standard operations. We used to call it back office in those days.
There was no GCC concept then,
absolutely.
Right?
It was service centers, back office centers. I was speaking earlier on our table, and things have changed so much over the last 25 years. So it started off with centralizing operations. So, the first step in our journey was centralizing operations significantly, but then has been moving up the value chain. So, just to give you some examples, if I look at our center in Chennai, that manages all of our retail and investment banking products globally. That's done out of Chennai. I've got colleagues of our finance organization here. I remember when it...
Co-powered by SBI, बेस्ट है सबको पता है, and बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Hello and welcome. You are watching Global Eye and I'm Parikshit Luthra. The US government has upped the ante against Russia in a bid to force a ceasefire in Ukraine. This week, Washington imposed fresh sanctions targeting Russia's two biggest oil companies, Rosneft and Lukoil, this week. Russian President Vladimir Putin described the move as an unfriendly act but said it won't cause much harm to the country's economy. Trump responded saying he will see how it works out in 6 months. The sanctions could have a major implication for China, which is the biggest buyer of Russian oil, followed by India. As per analysts, India imported 1.75 million barrels of Russian oil per day in October. Of this, 1.2 million barrels per day came from Rosneft and Lukoil alone. White House Press Secretary Caroline Leavitt has said that both India and China have begun scaling back Russian oil purchases. However, analysts believe that a complete ban on Russian imports by Indian refiners remains highly unlikely. Cipla estimates that Russian crude flows to India are expected to stay in the 1.6 to 1.8 million barrels per day range until 21st of November, when the sanctions kick in. Direct imports could decline post that, but Russian oil will continue reaching India through intermediaries. Indian refiners may also raise their purchases from the Middle East, Latin America, West Africa and the US, but that could increase the country's crude import bill. At the Berlin Global Dialogue, Goyal responded to the sanctions on Russian oil companies. Minister Goyal said that these sanctions impact India's second largest private refinery run by Nayara Energy, which is a subsidiary of Rosneft. Goyal also said that Germany is seeking exemptions from the US sanctions, as Rosneft owns 3 refiners in the country. He proceeded to ask why India is being singled out. Trump's move comes at a time when India is negotiating a trade deal with the United States. Commerce Minister Piyush Goyal has said that India does not do trade agreements with quote-unquote deadlines or with a gun to our head. Meanwhile, Indian government sources say there is convergence with the United States on most trade issues and we are very close to a trade deal. During their meeting at the White House in February, Prime Minister Modi and President Donald Trump had said that they would seal a deal by October or November this year. However, Trump's extra 25% tariffs on India over its Russian oil purchases had strained ties. Let's listen in to what Minister Goyal had to say.
Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil from the US.
This is about the Rosneft deal, sanctions, right. I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
All right, so how will these sanctions on Russia impact the US-India trade deal negotiations? Can the two clinch a deal anytime soon? To discuss this and more, I'm now joined by Richard Rosso, Senior Advisor and Chair on India and Emerging Asia Economics at the Center for Strategic and International Studies. Thanks, Rick, for joining us. We also have Jayant Dasgupta, former Indian Ambassador to the WTO, and Harsh Pant, Vice President for Studies and Foreign Policy at the Observer Research Foundation. He's also the Professor of International Relations at King's India Institute at King's College London. Thank you very much, gentlemen, for being with us. Rick Rosso, you've got Minister Goyal now questioning that why single out India. We're not going to negotiate with a gun to our heads. The point that he's trying to make is you are saying that you will block Russia's oil supplies for the rest of the world through Rosneft and Lukoil, which is about 50% of Russia's oil exports. But you're singling out India by also imposing a 25% penalty on the country. So what do you think is Trump's strategy really here?
I think the 25% tariffs that were announced at late summer, that was clearly focused just on India. And that was the confluence, I think, of two different things. One is trying to put pressure on India to get the trade agreement across the finish line. And second is when you began to see the president really sort of changing his mind. You remember earlier in the year, he seemed to almost be blaming Ukraine for Russia's invasion of Ukraine. And I think the same time that they were trying to use Russia tariffs as a way to pressure India on the trade agreement was also a time to begin raising this as a flare to also put pressure on Russia to come to the table and negotiate an agreement. So India was really quite unfairly singled out at that point, but it's because of this confluence. But now you do see the United States' approach to Russia changing quite a bit, a lot more aggressive. They do see that negotiations directly with Putin aren't resulting in anything closing in on a ceasefire, and therefore I think the sanctions are now more broadly applied. So certainly seeing broad sanctions against Russian oil is not India's favor, but at least it's not as singling out India as much as it was as we saw late in the summer. That's how I look at the situation right now.
All right. Let me also go across to Ambassador Dasgupta. Ambassador Dasgupta, you know, there are some reports by analysts which have said that Russian oil will remain a part of India's energy mix. Some companies may do front loading before 21st of November when these sanctions come in. Do you think Indian refiners are going to take that risk, or will they start diversification immediately and they'll stop purchases of Russian oil?
I think Reliance has an agreement, a long-term agreement with Rosneft, under which they buy about 500,000 barrels. They have been assured 500,000 barrels per day. I'm sorry, am I audible?
Yes, sir. Please go ahead.
Yes. So that is something which will need to be, I think, restructured. The purchase of Reliance from Rosneft. The second point is about Nayara, in which, again, 49% from is owned by Rosneft itself. So, barring these two, the others are all nationalized oil refiners, like Indian Oil, Bharat Petroleum, etc. Now, they will definitely, I think, try to diversify and look at other sources in the Middle East, in Africa, and maybe even in South America. So I think people will now start taking advance action to find out possible sources of supply. Having said that, oil prices have already started showing an upward trend, and I think yesterday they rose by about $2.50 per barrel. So if the oil from these sources, Middle East, Africa, South America, they get to be much more expensive than at present, then again, that would be a second hump which will have to be crossed. And the refiners, including the nationalized refiners in India, and the two major private sector players will have to take a fresh call on that.
Right. I'm going to come back to you, Ambassador Dasgupta. Let me also get in Harsh Pant at this point. Harsh, at this point, do you think a trade deal is possible? Are we near one just yet? Is it all now boiling down to Russian oil? Will India stop completely?
Hi, Parikshit. I don't think, the political economy of India would allow a complete cessation of oil supplies from Russia. So we are going to see a gradual decline, which I think, as the other two speakers have alluded to, there is a market process that is likely to unfold. And given the kind of inflationary pressures that we are going to see, and we are already seeing, India's diversification will track that trend. But I don't think that, given our investments, given the infrastructure, given India's requirements, and given India's political economy, that Russia will, to imagine that Russia will not be part of India's energy mix is also something that one should not, even engage with, because Russia will remain a part of that mix. How important and how significant a part that will be. I think that will be contingent on a number of things, as I think President Trump himself has said, look, I'm going to see how this works out over the next 6 months. Now, President Trump is not known for consistency. So he may change his mind tomorrow and he may work out a deal with the Russians tomorrow. So there are all kinds of possibilities that exist in the short to medium term itself, forget the long term. And I think India and Indian market, India will have to hedge its bets accordingly. Indian and those buying oil from Russia will have to hedge their bets accordingly. So I think Russia will continue to remain a part, but the market pressures will also ensure that diversification gets accelerated. And I think the trade agreement, as and when it happens, will also be an important marker in terms of how this particular episode pans out. Because if there is a trade deal, let's imagine that there's a deal happening anytime soon, then I think a number of these pressure points will also get marginalized. But I do think in the short to medium term, we will continue to see Russia as an important player, relatively important player in the Indian energy.
Absolutely. Right. Rick Rosso, coming to you, there was a lot of speculation in the press that we'll possibly see a direct meeting, one-on-one meeting between Trump and Modi at the ASEAN summit in Kuala Lumpur. That's not happening. Prime Minister is participating virtually. Does this mean that trade talks could take place for a longer period of time? Do you think that October, November fall deadline can still be met?
It can still be met. I mean, we had a trade agreement that was reportedly put on the president's desk in late summer, but they felt that it wasn't quite enough and wanted to go back to the table to try to squeeze a bit more concessions from India. And of course, in that sense, it's been way too far of a one-sided negotiation, where the United States is pressing for concessions, probably not putting a lot on the table on the opposite side. But it does appear there's been these moments when we were quite close, and then things get put into abeyance. We're waiting to see, is the president going to commit to the trip to visit India for the Quad leaders meeting? Is it going to happen by the end of the year? It now sounds like that maybe pushed back into early next year. And I assume that they would want to actually have this kind of agreement to be signed in person. So these moments when the leaders could get together, could actually hammer out the final details, they keep coming and going and passing without anything concrete. There was even some rumors, of course, that Prime Minister Modi might come out for the UN General Assembly opening. So we keep missing these moments. Negotiators, luckily, though, are kind of back at the table. And it seems that, the president's personal envoy, Sergio Gore, has been out to India. He's trying to get movement on this as well. So you do have somebody that has the president's ear that's gotten engaged as well, rather than just simply the trade negotiators. So it's hard to imagine and hard to see when this thing's going to be inked. But we do have some opportunities that could gestate pretty quickly when the leaders will get together and get the agreement signed.
Right. Ambassador Dasgupta, when it comes to Commerce Minister speaking in Berlin, he was speaking about both EU and US, but his comments are very significant. And explain to us whether they indicate whether we're close to a trade deal or there are some difficulties at this juncture. The Commerce and Trade Minister, Piyush Goyal, has said that India will not sign any trade deal in a hurry. He also said that India will not choose its trade partners according to the wishes of another country. He also said that we do not do deals with deadlines or with a gun to our head. What does this indicate?
I think it is a way of telling the U.S. administration that no matter how much pressure they bring to bear on the Indian negotiators and the Commerce Minister, it's not really going to pay dividends. That India will stick to its guns. And from reports that are emanating, there are issues still which remain to be solved regarding Indian dairy and other agriculture products. So that is one set of issues. The second set is about the rollback of the 25% tariffs because India is still buying Russian oil. So without that very firm commitment, I don't think there would be a conclusion to the talks. The third issue is about the 25% tariffs which India has been slapped with, whereas other countries in Southeast Asia and South Asia are getting away with 19%, 20%, etc. So India is, I think, looking at something in the region of between 10 and 15%, even 16% or so, I think India will possibly be willing to accept from the indications that we are getting. But without all these conditionalities being met, I don't think there would be a trade deal.
All right, we're taking a short break, but don't go anywhere. What concessions can India offer to the United States? We'll discuss that when we return. Welcome back to Global Eye. Still with us, our Richard Rosso of CSIS, Jayant Dasgupta, former Indian ambassador to the WTO, and Harsh Pant of the Observer Research Foundation. Harsh, now there have been various reports on how India could address some of US's concerns around market access in agriculture. Reports have indicated that India may consider allowing more non-genetically modified American corn and soybean into its markets. Do you think any of that can happen? Of course, these are all speculations right now. There is no formal comment from the Indian government. But do you think there are some concessions that India can offer?
I think certainly, whatever I have heard from the agricultural specialists, they have suggested that there are, avenues available to offer the kind of concessions that perhaps even you were referring. I think the challenge here, Parikshit, is that the way Mr. Trump has conducted diplomacy through public means has made it very, very difficult for Indian policymakers to make concessions. And I think that is going to be the real challenge. The real challenge will be, how do you politically sell even those concessions that at one point would have been very easy to sell, say earlier this year, when things were not this public, when things were not this disruptive in the India-US space. And I think increasingly what we are seeing in the Indian political space, that every time Mr. Trump says something, Mr. Modi gets targeted, Prime Minister Modi gets targeted by the opposition. And that means that his space for maneuverability is shrinking by the day. The more Mr. Trump speaks publicly, the more issues he brings to the table, the less space Indian policymakers have. And I think that is going to be a very real challenge, that even some of the things which may seem perfectly reasonable and logical, say the non-GM, products in the Indian agricultural sector would seem too much from a political standpoint, too much of a concession from a political standpoint. And I think that's a real navigating space that Indian policymakers now occupy, and that is the challenge that they will have to deliver. That it is not simply a negotiation between Mr. Trump and Mr. Modi, or Indian government and American government. It's also a negotiation that Indian government will have to do, or Indian policymakers will have to do, with their own domestic opposition. And I think that's the real issue that may impact the course of many of the issues that are, perhaps should be on the table and may not be.
All right, so let me take my final questions. Rick, what do you think will help clinch a deal, and are we even near one?
Yeah, it feels like we really are on the verge, but we've been on the verge for quite some time. And none of us can know exactly what kind of pot sweeteners President Trump would expect to be able to get across the finish line. But I do expect it is going to be intentionality by India to make purchases of American goods, specifically those that the government of India controls, whether it's going to be defense or hydrocarbons. Probably a number rather than specific announcements, because India does tend to avoid announcing specific, defense acquisitions. But also potentially some investments in the United States by Indian companies. And I think what was mentioned before on agriculture, which has been a sticky point, but if it comes down to market access in agriculture products the United States grows, which are not really kind of endemic to average Indian farmers, there's some space there as well. So I think there's a lot of material that we can work with as two large economies, but finding that perfect mix that the president will agree to, that's been tricky. And hopefully we can get there sooner rather than later, because the United States is such a critical market for India, and we don't want to see India's growth rates begin to shrink.
Right. Ambassador Dasgupta, at what point will India say yes?
I think if it gets a good deal. Earlier, India had said that the Trump administration also had to reciprocate by providing concessions. And one of the things which purportedly India had raised was that in some of the areas of interest to India, the tariffs should come down to below pre-Trump levels, that is below the December 2024 levels. Only then there would be some, measures of reciprocity. But that now seems to have been put on the back burner. So basically, I think the rollback of the tariffs for buying Russian oil, no concessions by way of saying that we will not buy Russian oil, as President Trump has been saying in the past few days. That is, I don't think will get conceded by India. And third, I don't think there is any scope for conceding on even non-GMO soya and non-GM corn, etc. Maybe in some other agricultural products where there is some elbow room possible, it could take place. But the tariffs, other tariffs will have to come down much below 25%.
All right, my final question to Harsh. Harsh, just about 20 seconds that I have, but do you feel India acknowledging United States' role, Trump's role in bringing the India-Pak conflict to an end, do you think somewhere that will also have to be a part of negotiations? Somewhere India will have to do that in order to get this deal from Donald Trump, because some believe that's the only thing that's holding up things.
I don't think India can do that, primarily because people are fundamentally misunderstanding this. This is not about India, in any way putting Mr. Trump down. This is about the new balance that post-2014 India has tried to strike with Pakistan. And if India gives the credit away from its armed forces, from its deterrence capabilities to Mr. Trump, it would be giving away a lot that it has been able to build in terms of deterrence vis-a-vis Pakistan. So I think it would be very, very difficult for India to concede on that front, maybe behind closed doors. But I think if India concedes it publicly, then India would be doing some great damage to its national security credentials.
And the problem is, with Donald Trump, there is nothing behind closed doors. Everything is said on Truth Social at the end of the day. Thank you very much, Harsh Pant, Jain Dasgupta and Richard Rosso for joining us for a very comprehensive discussions on US sanctions and where we are with the India-US trade deal negotiations. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Goodbye.
Co-powered by SBI, बेस्ट है सबको पता है, एंड बैंक ऑफ बड़ौदा के संग त्योहार की उमंग। Presented by Nuvama. Let's do it right. Co-powered by Seat Cross Drive. Grip you can trust.
Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head.
India does not do trade deals with deadlines or with a gun to our head, says Commerce Minister Piyush Goyal on negotiations with the United States. Asks why India is being singled out over sanctions on Russia when countries like Germany are seeking exemptions. Sensex and Nifty end in the red after a volatile Friday. Both indices managed to post marginal gains for the week. Uncertainty over India-US trade deal keeps the sentiment subdued. Wall Street rallies at opening bell as inflation springs a positive surprise. Consumer price index at 3% is below expectations. This bolsters the belief among investors about a potential rate cut by the US Fed next week. Foreign investors continue to bet big on India's finance sector. Private equity giant Blackstone to pick up 10% stake in Federal Bank for $705 million to become the largest shareholder. With this, the foreign investment in finance now stands at $7.5 billion so far in 2025. White House confirms US President Trump will meet his Chinese counterpart Xi Jinping in South Korea on the 30th of October. The bilateral comes after weeks of speculation and renewed trade tensions. Trump also terminates all trade negotiations with Canada over an advertisement critical of tariffs. European Union targets Facebook's parent Meta and TikTok for its handling of illegal content, charges both companies for failing to provide a simple mechanism to users to notify illegal content like sexual abuse of children and terrorist material. Piyush Pandey, a stalwart of Indian advertisement industry, passes away at the age of 70. He is credited with some of the most iconic ad campaigns like Fevicol, Asian Paints, Cadbury, among others. He was honored with a Padma Shri in 2016. At least 20 people are dead and many injured after a private sleeper bus catches fire in Andhra's Kurnool district. The bus was traveling from Hyderabad to Bengaluru and caught fire after colliding with a motorcycle. Delhi government trials a cloud seeding experiment to clean up the air post-Diwali. If successful, Delhi will see showers on the 29th of October. The national capital remains the world's most polluted city. Prime Minister Narendra Modi enters battleground Bihar and projects Nitish Kumar as the face of the alliance. RJD leader Tejasvi Yadav promises to reduce the cost of LPG to 500 rupees a litre. Well, let's begin with a quick look at the day's market action. A volatile Friday to end this Diwali week on Dalal Street. The Sensex and Nifty failed to hold on to opening gains. Once again, to end in the red, the Sensex falls nearly 350 points and the Nifty lost nearly 100 points. The mid-caps and the bank stocks also declined in tandem with the blue chips. For this week, Nifty managed to post modest gains of less than 0.5%. The Nifty Bank Index, meanwhile, ended in the red. And well, speaking of markets, Wall Street opened higher after a rise in the US. Inflation was lower than expected. Consumer prices rose 0.3% in September, which brought the annual rate of inflation from 3%. The number is also below the US Federal Reserve's projections. This bolsters the belief among investors about a potential rate cut by the US Fed next week. However, the rate of inflation is the highest it's been since January. And from equities to commodities now, the price of gold edged lower and the yellow metal is on track for its first weekly decline in 10 weeks. This as investors locked in the profits after recent record highs. Meanwhile, the prices of other metals rose on supply concerns. A mine collapsing in the Dominican Republic boosted copper prices, while a shutdown of Alcoa's refinery in Australia pushed aluminium to a 3-year high. Well, the big story this evening, Commerce Minister Piyush Goyal says that India will not sign trade deals with deadlines or with a gun to our head. Speaking at the Berlin Global Dialogue, Goyal said that trade talks with the United States are underway, but trade deals will not be finalized in a hurry. India is currently facing 50% tariffs from the US, which is the highest rate imposed on any country along with Brazil. The Trump administration says that 50% tariffs is partly due to India's oil trade with Russia. Goel also responded to the latest US sanctions on Russian oil companies, Rosneft and Lukoil. These sanctions impact India's second largest private refinery run by Nayara Energy, which is a subsidiary of Rosneft. Goel said that Germany is seeking exemptions from the US sanctions as Rosneft owns 3 refineries in the country. He proceeded to ask why India is being singled out when others are looking at a potential exemption.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head. Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil from the US.
This is about the Rosneft deal, sanctions, right. I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
Well, the Indian government sources, meanwhile, tell us that there is a convergence with the United States on most trade issues and that they are very close to a trade deal. Abhimanyu Sharma is joining us now with the latest. Abhimanyu.
Well, so far, government sources have indicated that both the sides are positively engaged so far, and there are discussions which are continuing on technical issues. Technical discussions are underway between India and the United States, and both the sides are converging on most trade issues and are very close to a deal. The first tranche also looks possible as per government sources. Sources also indicated that the deal has not been finalized yet, even as India is facing one of the highest tariffs since August, and they don't see any new issues arising as of now, and they are hopeful of concessions on Section 232 goods, several goods which were exempted earlier under Section 232. India is hopeful for further concessions on those goods which will continue getting exported to the United States from India. Also, government sources have termed that this is not a conventional FTA negotiation, since the reciprocal tariffs which have been levied are not based on WTO norms. Otherwise, tariffs which are imposed by different countries on each other are imposed based on WTO norms, but government sources have termed reciprocal tariffs as something which are outside the ambit of WTO as far as the application of reciprocal tariffs is concerned. Sources also said that both the sides are bound by confidentiality to not speak about the contours of the deal till it finally gets announced, and both the sides continue to remain in technical discussions. So discussions clearly are underway. Several issues are being threshed out. No new issues are on the table as per government sources, and India is hopeful of exemptions on the Section 232 goods.
Reliance Industries has released a statement on the sanctions imposed on Russian oil by US and the European Union. In a statement, the company spokesperson said, and I quote, "Reliance is currently assessing the implications, including the new compliance requirement. We will comply with EU's guidelines on the import of refined products into Europe." The spokesperson also added, and I quote again, "Whenever there is any guidance from the Indian government in this respect, as always, we will be complying fully." The statement went on to add, and I quote once again, "Reliance will address these conditions while maintaining the relationship with its suppliers. Reliance is confident that its time-tested, diversified crude sourcing strategy will continue to ensure stability and reliability in its refinery operations for meeting the domestic and export requirements, including to Europe." End of quote. Now, Russian President Vladimir Putin has said that Moscow will never bow to pressure from the United States. Speaking to reporters, he said that the sanctions on the two of Russia's largest oil companies would not impact the Russian economy, but conceded that there could be certain consequences for the countries involved. US President Donald Trump has terminated all trade talks with Canada over a television advertisement that criticized tariffs. The ad commissioned by the Ontario government allegedly misused a 1987 speech by former President Ronald Reagan. The Ronald Reagan Foundation said that the ad selectively edited Reagan's words, adding that it is reviewing possible legal action. Trump alleged that the ad was aimed at interfering with the decision of the United States Supreme Court. The White House has confirmed that the US President Donald Trump will meet Chinese counterpart Xi Jinping in South Korea on the 30th of October. The meeting will take place on the sidelines of the Asia-Pacific Economic Cooperation Summit. It will be the first face-to-face meeting between the two leaders since Trump's return to office. The bilateral comes after weeks of speculation and renewed trade tensions. Remember, a trade truce between the economic superpowers will expire on the 10th of November if they fail to agree on another extension. Trump has also set the 1st of November as the deadline for additional 100% tariffs announced earlier this month. And foreign investors continue to bet big on India's finance sector. Global private equity giant Blackstone is set to pick up nearly 10% stake in Federal Bank for $705 million. This will make Blackstone the largest shareholder in the bank. With this, foreign investment in finance now stands at $7.5 billion so far in 2025. My colleague Gaurav now joins us with more details on the slew of deals in the banking space so far. Take a look.
When we look at the financials, it's actually raining capital is what we can say, because in the Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself. Now, it seems the wave of money isn't slowing down anytime soon, because the latest headline, the deal that we saw, is Federal Bank and Blackstone. Now, Blackstone is set to invest around 6,200 crores for 10% stake in the Federal Bank, and this will be through preferential issue of convertible warrants at a price of around 227 rupees per share. Remember, the conversion will also make Blackstone the largest shareholder of the bank, and it's not the latest. When we look at the series of other high-profile bets that we have seen in the year, let's also not forget about the recent amount of money that we have seen flowing in RBL Bank. Now, on 18th of October, Emirates NBD, now that announced a plan to invest up to 26,800 crores. Now, this is around $3 billion for 60% stake in RBL Bank. Now, again, this is through the preferential equity at a price of 280 rupees per share, and this is actually the largest foreign direct investment that India's financial service sector has ever seen, and this will also make Emirates NBD the promoter of the bank. And this is not just going in the banks, but it is also the trend seeing in NBFCs as well. Sanman Capital, for an instance, when we look at the deal earlier this month, Abu Dhabi's ICICI, that they committed around 8,850 crores for as much as 41% stake in the company, and at the same time this will also trigger the open offer for mandatory 26%. Now, this is the biggest capital infusion seen by any investor in NBFC, and at the same time with this, ICICI is also set to become the promoter of Sanman Capital. Meanwhile, secondary markets, they did not fall behind. When we look at these markets, they are also reshaping the ownership pattern, because when we look at Yes Bank, we recently saw Japan's Sumitomo Mitsui. Now, that is increasing its stake almost to 24.2% after an addition of around 16,300 crores investment through open market in September. Now, that will make SMBC as the largest single foreign shareholder in Yes Bank, but it will not be marked as promoter. But at the same time, private equity firms, they are taking their bets, because let's not forget about IDFC Bank as well. Warburg Pincus invested around 4,876 crores in IDFC First Bank, and at the same time we also saw ADI infusing another 2,600 crores for about 5.1% stake in IDFC First Bank. So whether it's banks, NBFCs, the message is very clear. Global investors, now they're betting big on India's financial story, and the stock price, when we look at the stock price movement also, they are not disappointing. In fact, when we look at the sum of the stock prices for the last 6 months, RBL Bank, they have delivered around 60% of the returns for investors. We also have IDFC First Bank, Sanman Capital delivering more than 30% return to the investor. Now, the question is is this just a smart capital chasing growth or the beginning of structural re-rating for India's entire financial sector? Well, whatever the answer is, it is definitely that the investments are telling one thing for sure. Sentiments around Indian financial sectors, they are becoming strong, not by just foreign investors, but also by the domestic investors, by the way that we have seen flows going in banks as well as NBFCs in this year so far.
Now, India's private sector growth saw some moderation in October. The HSBC Flash India Composite PMI Output Index, which measures the combined performance of India's manufacturing and services sectors, eased to 59.9 as against 61 in September. This is the lowest level since May of this year. Any reading above 50 indicates expansion. And market regulator SEBI has barred mutual fund schemes from participating in pre-IPO placements of equity shares and related instruments. According to a money control report, a letter to the industry body AMFI noted that its MF schemes are allowed to participate. They may end up holding unlisted equity shares in case the issue is not concluded. Further, SEBI has also clarified that in case of IPOs of equity shares, mutual fund schemes can apply only in the portion reserved for anchor investors or in the public issue. India's leading Black Galaxy granite producer, Midwest, made a strong market debut, listing 9% above its IPO price. The stock closed 7% higher than its IPO price. The issue was oversubscribed nearly 88 times. Finance Minister Nirmala Sitharaman has told GST and customs officers to be polite and empathetic when dealing with honest taxpayers. Addressing at a CGST event in Ghaziabad, the Finance Minister also said that the ultimate goal is to make life easy for taxpayers and urged tax officers not to look at everyone with an eye of suspicion.
The next generation GST is not just about rates, it's not about slabs, it's not about simplification, it's not about just due diligence. It should make the taxpayer feel different. We are now honorably treated. We are the taxpayers of the nation. And if there are people who are bad sheep among taxpayers, you'll still have the protocol to follow and catch hold of them. But don't look at everybody with suspicion. Even if you're not going to help the country, don't disserve the country by being laid back. Be proactive. You're very good at that. That our ultimate goal is to make life easier for the honest taxpayer. I repeat, for the honest taxpayer. I do not want comfort given to the dishonest ones in any way.
In Earnings Corner, pharma major Dr. Reddy's Labs posted a mixed performance in the second quarter. Net profit was in line, rising 7%, while revenue rose 10%, surpassing expectations. However, operating performance was weak, with margins missing estimates. Revenue from Europe and India showed strong growth. However, DRL's North American's operations remained a weak spot, with revenues falling 13%. And US pharma major Eli Lilly has allowed Cipla to sell its weight loss drug under a new brand in India. Eli Lilly will manufacture the drug, while Cipla will market it under the brand name Your Peak. As per the deal, Your Peak will be available as a once-weekly pre-filled injector pen, similar to Lilly's Mounjaro Quick Pen. The drug's price will also be similar to Mounjaro. Now, Piyush Pandey, a stalwart of the Indian advertising and the author of some of India's most iconic ad taglines, has passed away at the age of 70. He's responsible for some of the most memorable ad campaigns for brands like Fevicol, Asian Paints, Cadbury, among many others. Born in Jaipur in 1955, he began his journey far from boardrooms of big agencies. He dabbled in cricket, tea tasting, and construction before finding his true passion. In 1982, as a 27-year-old, he joined Ogilvy India, and over the next 4 decades would revolutionize how brands speak and India listens. He was honored with a Padma Shri in 2016. Here's a look at the life, times, and legacy of the advertisement stalwart.
trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's was written from here. So I think these are things that one would remember always. और इस मकान में अपना घर बसाता है. हर घर चुपचाप से ये कहता है कि अंदर इसमें कौन रहता है. India is a funny country. Numbers don't show you everything. There is a heart and the number which has to be matched.
The heart of incredible India, Madhya Pradesh.
What is the story behind this mustache?
Number one story is that I keep with the times, so it's totally organic.
Do you feel कि यार बस हो गया अभी नहीं कर सकते?
Why am I thinking of leaving? Otherwise I should leave. It's my place.
नया सेंटर शॉक च्युइंग गम हिला के रख दे.
I think I get it from the people of India. I see so much of energy around me. I think it's just one life, Shireen, and let's make the most of it.
Well, coming up on India Business Hour, with Delhi's AQI hovering in the poor category, the police has set up checkpoints at busy crossings to inspect vehicles for valid PUC certificates. A special report in just a bit. And you can also catch all CNBC TV18's news and updates on YouTube, Facebook, Instagram, X, and Jio Hotstar. Do subscribe to CNBC TV18 Access for exclusive stories and special shows like The Editor's Playbook and many others. Here's a quick look at some national headlines. At least 20 passengers were burnt alive when a private bus traveling from Hyderabad to Bengaluru caught fire in Kurnool district of Andhra Pradesh. The flames erupted after the bus collided with a motorbike. About a dozen passengers managed to escape.